3,167 crore for development of Banhardi coal block in Jharkhand. This project is being undertaken by PVUNL, which is a JV between NTPC and Jharkhand Bijli Vitran Nigam. Apart from that, All Cargo reported its December update, wherein total volume saw an uptick of 10.8% month-on-month and an uptick of 7.6% year-on-year. Adani Green's arm has commissioned 57.2 megawatt of wind power component of its wind-solar hybrid project at Khavda, Gujarat, and with this, the operational capacity has now increased to 11,666 megawatts. Morpin Labs has approved hiving of the medical devices business to Morpin Medtech. And lastly, keep an eye out on J&K Bank. They've received administrative order from SEBI pertaining to appointment of Amitabh Chatterjee as the MD and CEO of the bank.
Okay, Vamakshi, thank you so much for that. On that note, let's go across to Sudarshan, who's joining in with us to tell us the important cues in the world of FNO. Good morning, Sudarshan.
Good morning, Vinny. So amid continued FI selling, we saw a recovery in market for Sensex and Nifty. We saw a minor recovery on both the major indices, closing with minor gains. But it was a major recovery for mid-cap index, which saw recovering majority, or say half of the losses that it saw on Monday, and it closed with gain of nearly 3%. For today, GIFT Nifty covering all the cues, indicating a subdued start. Talking about the flows, FIs continue to remain on the sell side. Yesterday, they have sold almost $1 billion, but of the similar amount, DIs have bought, and they have bought nearly 7,900 crore. In the future side, two FIs have sold nearly 458 crore, but they have added long positions of more than 7,300 contracts, but also they have added short contracts of 6,980. With this, FI's long exposure now increased to 16.6%. On the client side, long exposure remains healthy and remains around 72%. On the options front, on the call side, 23,400 and 23,400 strike rates were active, and on the put side, 23,200 and 23,000 strikes were active. With this, support for Nifty is now seen somewhere around 23,000 and resistance is at 23,300. Two stocks that will be in focus, one that has entered the band is Angel One, and one stock that has come out of the band are Manappuram Finance.
Okay, Sudarshan, thank you so much for giving us the update that will be happening in the world of FNO. But on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll bring you more news and updates.
There are going to be nearly 250,000 ticketed guests attending the inauguration. In addition to that,
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now, the RBI has actually announced a reshuffle of the Deputy Governor portfolio following the retirement of Michael Patra. M. Rajeshwar Rao has been appointed to lead the critical department of monetary policy. And this is just ahead of the upcoming Monetary Policy Committee meeting that is scheduled for 5th of February to 7th of February. The Financial Market Operations Department has been assigned to Deputy Governor T. Ravi Shankar, and the RBI has also said that the distribution of portfolios among the deputy governors will be effective today. So let's keep an eye out on the reshuffle on the RBI governor's front. The deputy governor's front. Let's move on and also talk about what's happening to JP Associates. Now, what sources are telling CNBC-TV18 that NARCL has emerged as a loan suitor to acquire JP Associates loan from lenders. Ritu is joining in with us to give us more details on that.
Thanks for that. The National Asset Reconstruction Company, or the NARCL, has emerged as the single suitor to acquire the stress loans of Jayaprakash Associates from its lenders after a Swiss auction that was conducted by its lenders did not see any participation from any other potential suitors. Now, we have been reporting that NARCL had offered about 12,000 crores to acquire the loans of Jayaprakash Associates from its lenders, and that had triggered a Swiss auction process whereby lenders had invited counter bids, keeping 12,000 crores as the base price. But we've been given to understand from sources that given one, that lenders had required 100% upfront cash payment in this auction, and two, the account itself is quite complicated and undergoing insolvency and bankruptcy proceedings, led to no real suitors coming forward, even though initially as many as 6 ARCs did show an interest. So that leaves the NARCL as the single suitor. As the next step, we've been given to understand that banks will seek individual board or committee approvals as required to sell the loan to NARCL to transfer this asset. And this offer of 12,000 crore would translate to about a 23% plus recovery, but not all of it will be in the form of cash. About 15% will be the upfront cash payment from this 12,000 crores if approved, and the remaining 85% is going to be in the form of security receipts. Remember, Jayaprakash Associates is undergoing insolvency proceedings and is facing claims of more than 52,000 crores from more than 2 dozen lenders led by State Bank of India.
Thank you so much for that, Ritu. But let's move on. And the industry has flagged off multiple concerns over the draft data protection rules. Most stakeholders have called for a detailed guidelines to implement parental consent for those aged below 18. Ashmit is joining with us to give us more details on this one.
Well, stakeholders like industry, academicians, advocacy groups, think tanks were here in full strength as they expressed their concerns on the recently released DPDP rules to the IT minister. Amongst the core concerns that have emerged is what about the personal data of existing users, of legacy users. For that, companies such as PhonePe and Paytm pointed out that giving individual notices for collecting all this data that has already been collected will be a long, tiresome process, will be a cumbersome process. The solution that they've given is that one comprehensive notice be issued to legacy users, to existing users, and unless the user chooses to opt out, the company should be at liberty to go ahead with processing of personal data. Another concern that emerged was with respect to parental consent. The DPDP rules provide for children to access online services only after getting parental consent. Number of questions raised about the mechanics of this. How will it function? What if children falsify their age? Will their access to online services be limited if the parents are not digitally aware? All these questions requiring answers. CII flagged concerns about how there's only a limited window of just 72 hours to flag the issue of data breaches before the Data Protection Authority. There were questions raised about what ideally should be defined as reasonable safeguards for security deployment for protecting this data, and also questions being raised about data localization. So clearly a whole host of issues. The minister assuring that they are fully invested in having extensive consultation, also hinting at perhaps a 15-day extension to the February 18th deadline for inviting public comments.
Thank you so much for that, Ashmit. But now moving on and speaking at CNBC-TV18 and EY's AI Forward Summit, the Secretary of Ministry of Electronics and Information Technology revealed that it has been receiving feedbacks from electronics industry players that imports of capital goods from China was being constrained and held up by Chinese port. Companies like Foxconn have had capital equipment being held at the ports in China for several months now. Industry feedback also revealed that while the delays were not yet hampering the production, further disruptions could jeopardize future production and expansion plans for these companies. Okay, on that note, we're going to slip into a very short break, and up next we'll talk and give you the updates coming in from Israel and Hamas that are inching closer to a ceasefire deal. We'll get you more details after the break.
that are showing up to participate in a number of demonstrations that will be in the downtown area. The biggest threat, I think, for all of us remains the lone actor. Just in the past week, while President Carter was lying in state, we had 2 lone actors show up at the Capitol, one trying to bring in knives and a machete, another one who was trying to, what I believe, to disrupt the proceedings by setting their car on fire down in the Peace Circle area. U.S. Capitol Police were able to interdict these folks before they had a chance to do any harm. But that threat of the lone actor remains the biggest justification for us being on at this heightened state of alert throughout the next week.
More than 30 miles of anti-scale fence will be used for the inauguration, more than any other NSSE ever before. The Secret Service's comprehensive security plan will continue to use drones as part of our protective posture. Do not be alarmed if you see these assets during the inauguration or in training in the days ahead. The Secret Service will bring agents and other specialists from field offices across the country to provide a full slate of visible and invisible security measures. We work side by side with our partners throughout the process as everyone plays an equal part in safeguarding this event.
Welcome back, and you're watching Power Breakfast on CNBC-TV18. And let's get to the latest update that is coming in on Israel and Hamas front. They are inching closer to a ceasefire deal, even as the IDF continues to pound Gaza. Outgoing U.S. National Security Advisor Jack Sullivan, who attended the talks in Qatar, Doha, has said that the deal may be signed by the end of this week. Incoming U.S. President Donald Trump has also hinted at a truce deal by the end of the week. Take a look.
We also discussed a possible hostage deal.
Israeli Foreign Minister Gideon Sa'ar on Monday said negotiations toward a possible release of hostages in exchange for a ceasefire in Gaza had progressed. That comes as an official briefed on the negotiations described to Reuters a midnight breakthrough in talks between the sides in Doha. The official said the text for a ceasefire and release of hostages was presented by Qatar. The session included envoys of both outgoing U.S. President Joe Biden and U.S. President-elect Donald Trump.
Israel wants a hostage deal. Israel is working with our American friends in order to achieve a hostage deal. And soon we will know whether the other side wants the same thing.
We are close to a deal, and it can get done this week. I'm not making a promise or a prediction, but it is there for the taking, and we are going to work to make it happen.
A Hamas official who asked not to be named told Reuters on Monday that discussions over some core issues for a ceasefire deal in Gaza had advanced. The United States, Qatar, and Egypt have worked for more than a year on talks to end the war in Gaza, so far fruitlessly. Trump's January 20th inauguration is now widely seen in the region as a de facto deadline. The president-elect has said there would be, quote, hell to pay unless hostages held by Hamas are freed before he takes office, while Biden has also pushed hard for a deal before he leaves.
We're pressing hard to close this. The deal we have structured would free the hostages, halt the fighting, provide security to Israel, and allow us to significantly surge humanitarian assistance to the Palestinians who suffered terribly in this war that Hamas started.
The warring sides have agreed for months broadly on the principle of halting the fighting in return for the release of hostages held by Hamas and Palestinian detainees held by Israel. But Hamas has always insisted a deal must lead to a permanent end to the war and Israeli withdrawal from Gaza, while Israel has said it will not end the war until Hamas is dismantled. Israeli Finance Minister Bezalel Smotrich, a hardline nationalist who has opposed previous attempts to reach a deal, denounced the latest proposals as a, quote, surrender and a, quote, catastrophe. Angry family members of Israeli hostages confronted him at a Knesset session on Monday, accusing him of abandoning their loved ones. Bloodshed continued in Gaza on Monday, where medics said Israeli military strikes killed at least 21 people. That number includes 5 killed in an Israeli strike at a Gaza City school sheltering displaced families.
Now, getting you some updates on the Los Angeles wildfire now. Millions of people across Southern California faced the new wildfires warnings on Tuesday, and thousands saw their power shut off as strong winds blew across the region of Los Angeles, where 2 massive blazes have been burning for a week. Santa Ana winds that have been gusting and began gusting over the mountains were forecast to continue with enough force to carry fire-sparking embers from miles and bringing new outbreaks. The wildfire have now claimed lives of 24 people at least and destroyed more than 12,000 structures. And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.
The fire is 23,713 acres with 14% containment, 5,123 personnel that are assigned.
Over the last 36 hours, we have seen very little fire growth on this incident, which is a positive. However, it's important to remember, as was just stated, we are still under a red flag event, and we will continue to surge resources to the priorities around this fire.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. The middle of the week, Wednesday morning, we are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. Markets are looking a little better, and hopefully they will look even better as compared to yesterday, which was a day of some recovery. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning. And I think the winter's coming back to Mumbai, is it?
No,
it's looking good.
This is wearing the outfit before the winter goes away. You know,
okay.
Because we're halfway through January, and what a half it's been. You know, the bulls, they have been quite jittery. But it's the attire is to say goodbye to the winters. We're almost done with it. I think we had a few days of Mumbai winter because
I don't know about Mumbai winter. There was no Mumbai, by the way, today, because those of us who come from the western suburbs, you couldn't see Worli. You can't see anything. It's haze. It's grey. Yeah. I don't know where the city is.
Well, Mumbai is upgrading. So I don't know if we'll upgrade by the time, during our working lives. But of course, the situation is bad in terms of just the pollution, and I think the weather also plays a role in that sense. The markets have had quite a bit of a ride. And this was all supposed to happen after the 20th of January, right? Once Trump takes over. Well, markets, of course, are forward-looking creatures, and maybe a fair bit is in the price. So I just want to, before I get down to the cues from last night and then kind of tie in the levels, etc., just 3 points I want to highlight, which should come up on your screen. And this is probably the broad way that you should, at least I am looking at things, because, the macro and top-down is important, right? First is, as a base case, one assumes that Trump will be pragmatic. And this is something that we were discussing yesterday, that, what we are seeing now is peak Trump. And once he's president, it'll not be peak and it'll be somewhere in the middle. It won't be dramatic. He'll be pragmatic, businesslike, and he essentially would want world markets higher, not lower. Remember, if you even want the US higher and at the expense of the rest of the world, eventually it feeds back in. So he's got a good team, people who've been in the markets for decades. So that's number one. Second, has the dollar peaked? Broad dollar peaked. So you look at the dollar index, for example. So again, something we said yesterday, last night, dollar index was down about 0.6, 0.7%. But this is for now. If tariffs slowly start to sort of come in and deficits expand, the dollar, we'll see. Oil strength may not sustain. I think this is the relatively easier of the call. There is the push towards renewables. At the same time, Trump, of course, wants to drill, baby, drill. And he generally wants lesser geopolitical conflict. So that premium may actually go out of oil prices. So if this is these are three things at a top-down, high level which play out, this is certainly very good news for emerging markets. This is not the consensus at this point in time. Now, let's quickly run you through the individual cues, which is a little bit here, a little bit there, nothing blowout one way or the other. S&P was up, NASDAQ was down. The 10-year, it hit 4.8, but then cooled off a little bit to about 4.78 by close. Dollar index, as I said, about 0.75% lower. We're at about 109.21. Oil prices were down about 1% as well. And again, this is basically, there were reports from, I think, Bloomberg, which suggested that the incoming president, Trump, is preparing a raft of executive orders aimed at boosting energy supply. Well, why not? He's, of course, campaigned on this. Lower energy costs for Americans, lower oil prices overall. Now, U.S. producer price index numbers came. They were slightly softer than expected. Today, you get the CPI numbers, and consensus sees the core CPI, ex-food, energy, etc., growing about 0.2% month on month. So this is going to be important, especially because the last jobs data was blowout. So that's the cues, right? It's certainly much more positive. Oil is down, dollar is down, and equities are not sending a very negative signal our way. So where does it leave us in terms of levels? So we saw a bit of a recovery yesterday. Markets had been extremely oversold. They still remain oversold, so there is room for bounce. So I'll just put out the upside targets, upside targets, and these are all hourly averages, 23,261, 267. It's just changed a little bit, the 20 hourly average. The second is the 40 hourly exponential average, which is 23,398. Very, very near-term levels for the Nifty. And of course, on the downside, yesterday's low comes in at 23,047. Bank Nifty's immediate resistance is the 40 hourly. Remember, it took out the 20 hourly yesterday and it closed above it. So 40 is 49,105. And then 49,227 is the next level on the upside. And again, for the Nifty Bank, yesterday's low becomes a bit of a pivot point, 47,898. So that's the setup. GIFT Nifty will come up on your screens. I'll give you a sense of how we're likely to start. About 16, 17 points higher. Lots of individual stocks are moving around. Lots of stocks have corrected. Opportunities will emerge. It's essentially going to be, a market which will give you lots of opportunities through the course of the year. But immediately in front of us in the next few days is going to be President Trump and those 25 executive orders, which as Reuters said, perhaps is coming our way on day one. But if you believe that, the incoming administration will be pragmatic and businesslike and it won't do anything to crash markets, I think that's something that one can live with. So I think that's broadly what I'm going with. We just have to work it through day by day because one thing is certain, it will be quite volatile. So on your screen, 16 points, higher start. Surabhi.
Oh, Prashant, absolutely. I completely concur with that view that whatever happens, we know that here's a man who wants Wall Street higher. The bottom line is just that. So perhaps whatever is needed to change in his own stance and maybe the rhetoric or maybe the commentary, he will do it. Perhaps that's the hope and faith with which the markets are working. In fact, if you want to be an optimist, you may want to read a little bit into the fact that he's actually going to be attending the World Economic Forum, though it's going to be through, I think, VC. Through the digital medium, not in person, but at least he's going to be attending. At least he's going to be engaging, because earlier, there was a lot of chatter about how he's very dismissive about, any sort of a mega, pro-globalization, come together of the world sort of a setup. Anyway, now to come back to the cues over here, the fact that the producer price index, the producer level inflation data, was cooler than expected. That is what really spurred the excitement on Wall Street. Having said that, yesterday's trade was again about rotating away from tech stocks into some of the other names as well. And we saw that because the NASDAQ was down while the other indices managed to pull up higher. The number was 0.2% versus expectation of a 0.4% increase. That's on the PPI. Today, of course, we'll look out for the CPI numbers. Also, Wall Street is going to watch out for the big bank earnings because the season is kicking off and the expectations are running very high. Today's a very heavy day. You've got JP Morgan, Wells Fargo, Goldman Sachs and Citi. So in the real sense, the big guns fire up today, and let's see if they will keep Wall Street's excitement intact. Also on the sidelines, never a dull moment. Mr. Musk manages to find his way into the headlines, and yesterday's news is that he's being sued by the SEC for allegedly, not disclosing early on the fact that he had started building a position in Twitter back before the acquisition of the social, network. So that's on the sideline. Anyway, to come back to cues closer to home, Asian markets are slightly mixed. There's a lot of chatter out of South Korea again. The political events over there. The former president has been finally arrested. That's the big headline. And markets are a little all over the place. Asia is not giving a very clear directional cue, but largely trying to build on to some of the positivity that Wall Street has given. Now, for us here, despite the fact that we had a pretty decent session, we had green on the screen, and the market ended closer to the highs of the day. If you were expecting any relief from FPIs, well, guess what? Look at the extent of the selling on a daily basis. 8,000 crores. If you're an optimist, you'll say our market is deepening because they can sell 8,000 crores, we can buy 8,000 crores, which is what happened again yesterday, almost offsetting the entire FPI selling number. But that's a picture that hasn't stabilized. No taking away from that. A lot of result reactions. We'll go over some of the names today in just a bit. Sula has come out with numbers. Shopper Stop's numbers look very good. Sula has been a little on the weak side. So we'll talk about those numbers as we go forward. Today is an interesting day. HDFC Live, CEAT, Oracle Financial Services. This is, of course, L&T Tech. And this Bank of Maharashtra. Remember, Bank of Maharashtra is among the 5, PSU names which have gotten the green signal for a dilution of the government stake. And some of those stocks are flying yesterday. So let's see. We'll hear the management as well over the next 24 hours. I just want to end with, a news development that's important, which our colleague Ritu brought us, after market hours yesterday, which is JP Associates. If you look at the JP Associates 1-year chart, in between there was a lot of flutter and excitement, and the stock went all the way up to, I think, 25-30 rupees. Then it's again cooled off to almost just about $5 here or there. And the story is out. There are no bidders. It's only the National Asset Reconstruction Company of India. They were the lone bidders, and they have bid about 12,000 crores, which was the reserve price. But there's no one else. So maybe lenders have no choice. The total claims admitted were over 52,000. The NARCL is offering just about 12,000. So that's the extent of the haircut. But maybe this is the way the story goes. Right now, no hot interest in JP Associates and a real more meaningful takeover, which maybe explains why the stock completely, that rally on JP Associates fizzled out. Anyway, that's on a side note. But Nigel, I guess the bulls will hope for a little more green today.
Well, that's right. And I totally agree with that point that Prashant made with regard to Trump being more pragmatic, because he's a businessman before being the president. So I think the moves will not hurt the economy. So he'll make those pragmatic moves is my best guess on that front. Let's get to the top global cues though. The Troika, they are better behaved this morning, which is very, very good news from a bullish perspective. The dollar index is softer, crude oil prices a little bit lower, and the US yields, well, they haven't moved too much. So all those three well behaved. Well, if I look at the net institutional number and I see the Nifty reaction, it clearly was that invisible hand, so to call it, that was hurting the markets in the last few days. Because yesterday, we did have a negative number and the markets ended higher. And the last few days, the institutional numbers were not too worrying. The problem was that so-called invisible hand that was hurting the broader markets in particular. For the time being, that invisible hand seems to have played its part, and most of that selling seems to have got absorbed. So that's one factor. Moving to the futures data then. In yesterday's trading session, there was some mild short covering that we saw on the Nifty and a bigger one on the Nifty Bank. In fact, on the Nifty, you had the premiums that moved up a little bit on the Nifty futures, that is. So mild short covering. But from the FIs, that wasn't the case. They added some longs, they added some shorts as well. They continue to remain net short, but close to around 83% of their positioning on the short side. And as we have been saying, both of them are at extreme ends. The clients as well as the FIs. Clients are net long, the FIs, well, they are net short as well. Moving to the options data then. Before we get to that, the short covering from the FIs wasn't seen on index futures, but it was actually seen on stock futures because they covered some shorts and they added some long positions. So that could be one of the reasons that you saw the broader markets as well did quite well. Moving to the options data then, you have the FIs. Well, on index options, they bought more calls than puts in the ratio of close to around 2:1, which brings both the active strikes up for you on the screen. 23,200 call, 23,000 put. Extremely crucial marks. Take a look at the premium as well. And just punching in the numbers and going by the technical levels, we're getting a broad range. On the upside, 23,350, that's going to be a bit of a resistance zone and a very, very crucial mark. The bulls will want to take out this level. And the extremely crucial support is at around this 22,800 to around 23,000 odd mark. One positive yesterday clearly was the Nifty Bank. After a while, it made higher high in yesterday's trading session. It's been making lower highs and even it made a higher low in yesterday's trade. And you'd like this trend to continue. So for the Nifty Bank, very, very important that it gets past that 49,000 odd mark. But since the Nifty Bank showed signs of coming back to life, I'm going with a financial and a financial name. Yesterday, you had Shriram Finance that after seeing a 30% correction, the stock ended at the high point of the day. And it came on very, very good volumes and good amount of delivery as well. So that's a stock that I'll look at from here on. Massive volumes in yesterday's trade.
The invisible hand. I quite like that. That's a nice terminology for this clutch of investors and traders who are not represented on the institutional side. And they're the ones who've been moving the market, off late in the last couple of days. So absolutely. Let's get to the equity call of the morning. Sayan Mukherjee of Nomura says that the start of 2025 presents macro uncertainty with unprecedented divergence in growth, inflation and rate expectations across key economies. He says this can drive the risk premium higher, impacting valuation multiples. He recommends being highly selective and avoiding richly valued stocks. He says they are overweight on financials, consumer staples, that is FMCG, oil and gas, pharma, telecom, power and internet, along with the real estate. They are underweight on consumer discretionary, autos, capital goods, cement, hospitals, and metal stocks. He sees a nifty range of 21,800 on the downside to 25,700 on the upside by 2025 end, which means no fresh highs. At least Nomura doesn't see them coming soon.
Okay, well, Jahangir Aziz is now joining us. He's head of emerging markets economics research at JP Morgan. Jahangir, good to have you with us here. Thank you very much for your time. By the way, as we are coming to you, Jahangir, I don't know if you saw, but incoming President Trump has posted on the social media platform Truth Social. He's saying that, well, there is the Internal Revenue Service in the US collecting taxes from Americans. He's going to create the External Revenue Service, and it's going to come alive on the 20th of January, responsible for keeping tabs on tariffs and who owes how much to Americans, and essentially, a collection agency from the outside for the outside world. Yeah, I mean, I began by saying that maybe one should. It's kind of what we're seeing now, and till the 20th of January is kind of peak Trump, and things perhaps will settle down once he actually is in office. Is that too much of a stretch to expect, Jahangir, or you think it's possible?
Look, the way we are looking at our, we've been tracking this since the election was over. And, it is possible that President Trump comes out to be very different from his rhetoric during the campaign. I'm neither brave nor imaginative enough to try and second guess President Trump. So we are taking him literally. And as far as taking him literally is concerned, we think that the tariffs and immigration will be changed and changed dramatically. And then later on, both tax policies and deregulation. So on tariffs, our view is that China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Why 60%? That's because President Trump, during his campaign, mentioned 60% several times. As I said, we are going to take him literally, and not try and second guess. I think the news reports, etc., that has come since the election suggests that that may not be the only objective of the tariffs. Tariffs could also be driven by the objective of raising revenue, such that the tax cuts that he is proposing can be funded. Now, if that's the case, then our sense is that on January 20th or that week of 20th, you're probably going to get many, many more countries under the tariff umbrella than just China and Malaysia and Vietnam.
Okay, Jahangir.
So we just one thing. Jahangir, you're saying that Chinese imports will be tariffed at 60%. I just wanted to make that clear.
That's a baseline. That's a baseline. Its current effective rate is 20%. We expect 20% to go to 60%. But as I said, that was our view back probably in December. I think the news flow since December suggests that perhaps it may not be 60%, maybe a tad less. But many other countries will be brought under that tariff umbrella. So tariff will be imposed on many of the countries, simply because that's the only way in which you can actually raise any reasonable revenue.
And you're saying other countries may also see these countries, especially from where China was using as points from where to send things into the US to avoid this tariff, right? Mexico, etc.
That was Malaysia, Vietnam. So this is going to be, our suspicion is that if you're going to raise revenues, you have to now impose tariffs on countries which were seen to be alternatives to China. You need to block that off. And therefore, many more countries will be brought under the element.
So Jahangir, I mean, I'm hearing you loud and clear. You're not in the camp that's expecting that, this will ease out, and, maybe it's all been rhetoric and more a bark than a bite. Take your point, take your caution on board. But my question is that hasn't much of this, even if it plays out literally as what he's been saying, hasn't this been priced into the market with the dollar rushing to 110? I mean, have we already seen the worst of the market interpretation and the mayhem?
Really? I mean, more to go. You can at best take dollar euro, for example, or DXY. You at best can get about 6-7% of tariffs being priced in. That's it. 6-7% of tariffs is, I mean, any kind of FX arithmetic, if you break it down between the growth differential between US and the rest of the world, the interest rate differential, even after, especially after the change in the Fed call that we have done after the non-farm payroll came out last week, if you take those two factors, which are the usual drivers of dollar strength, at best you can say that the market is pricing in maybe 6-7% of tariff increase. That's the extreme.
Ooh.
The 6-7% tariff increase on what? On China? On China?
No, the average effective
tariff increase.
Tariff increase by the U.S. So the tariff right now is about 2.3%, right?
I see.
So 2.3%, you add about 6-7%. That's about all that the dollar is pricing in this point in time. It could easily be significantly larger than that.
This is scary, but we need to understand, the full import of what you're saying, Jahangir. So you're saying average tariffs are 2.3%. The markets are right now with the dollar at 110, they've priced in maybe 6 to 7% increase. So China may be at 60%. What is the average overall increase that you're expecting, taking him literally, taking Donald Trump at face value at what he's been saying? And how much more than for the dollar to go? 115 more? The DXY.
I mean, you can easily add another 10 to 20% tariffs on the rest of the world. So 10 to 20% tariff on the rest of the world, that's the number that he's talked about, along with maybe not 60% of tariff on China, maybe slightly less tariff on China. That could well be what we see in next week.
Okay.
So what does it mean for the dollar then? The DXY?
I don't think any of my strategists are willing to price that.
Okay.
See, all right.
These are scary numbers. So obviously,
I can imagine.
Indeed. Let's look home at our own currency then. The Indian rupee has weakened. We are at around that 86, 87 odd. Many were projecting by the end of this year we'll be at 87, 88. We're already there. We're 15 days into the calendar year. What happens to the Indian rupee? If you could, tell us how do you see that move? And also, what are you pricing in with regard to the RBI, Jahangir? Because, earlier we were factoring that maybe in February we see some kind of action, which could get pushed back a little bit. Your take?
Yes. So I think, there are two parts to it, right? The one part of it is that the real effective exchange in India has gone up significantly over the last 2 years. So there is the need for the exchange rate to depreciate in order to bring back the real exchange rate back to more normal levels. So that's one driver of that. Obviously, oil prices, current account deficit, etc., are the other driver. The outflow of foreign portfolio outflows is the other driver. But I think that in the event we do get these kinds of tariffs being imposed, we really don't know what it is. If you go literally by what President Trump has said, it is going to be a pretty large number of pretty high rate on the rest of the world as well as on China. So it would what happens in the Indian rupee depends almost entirely how dollar CNY reacts. If dollar CNY reacts by, let's say, depreciating another 5% or more from here onwards, then the rupee is appreciated even more against its biggest trading partner, which means the real effective exchange rate gets appreciated even further, making the need for a nominal depreciation even that much greater. Therefore, the pressure on the rupee to depreciate becomes even greater.
Right.
Look, I won't be able to tell you what the number is, but that is the direction of travel.
So, I mean, if tariffs on Chinese imports are not 60, but even 40, whatever, I mean, dollar CNY goes to 8, and then currency here in India, which also, I mean, I think, as you say, depreciates, right? Will have to.
That's correct.
So, just a couple of things I wanted to clarify, Jahangir, if you can. One is, there was a report which said that, and there was no pushback to it. Usually, I mean, press reports something and Trump tweets or something and says, well, this is all rubbish. But there was this report which said that gradual tariff increases, not at one go. If that were to, so far, 48 hours, we've not seen any pushback. If that were the way it is implemented, do you think that is more desirable?
I mean, look, it depends on what is the objective, right? If the objective is, I'm going to use euphemism over here, to improve U.S. competitiveness, right? Then you can talk about a gradual increase in tariffs. You negotiate, things from the other side so that U.S. competitiveness, quote unquote, improves, right? If that's the sole reason, which was the reason as to why we said only China and the transshipments through Vietnam and Malaysia would be targeted. But if the objective is to raise revenue, then then there is no real negotiation, right? Then there is no reason for you to have a, sliding scale. You want $250 billion of tariffs. U.S. imports is about 3.6 trillion. To get that, you need a tariff rate pretty much around that, 8, 9, 10% rate. And I'm talking about the average effective tariff. Now, how you distribute that across China, across other countries, that's a matter of choice.
Got it. Now, let's talk about impact on, say, tariffs go up. So average tariffs on imports into US is 2.3%. You're saying that goes up to what in your base case?
So we don't have that. We do not have a baseline where we say, we just had a baseline which says that only China will be targeted. The risk is it's going to be far more extreme than that.
Okay. What is the, so I'm just trying to see what's the feed through to inflation? And then
on the US?
On the rest of the world. US inflation. What happens to
the
interest rates in the US?
Right. So you're asking a very difficult question. Okay, let's start with the first question, inflation. In order to minimize the impact of inflation, chances are that whatever increase they have, this universal tariff increase, is not going to be uniform across all goods. Consumer goods, the tariff will be less. Intermediate goods, the tariffs will be much higher. So in order to get, let's say, a 10% average effective rate. That minimizes your impact on inflation. So that's the way we think it will be played out, if indeed you're getting a universal tariff. It's not going to be uniform 10% on everything. Consumer goods less, intermediate goods more. So I think that's such a move can, at least in the first rounds, before the second round effects take place, that can minimize or limit the amount of increase on inflation in the US.
So pragmatic, pragmatic in that sense, Jahangir, at least in terms of effects on inflation, US inflation.
Right.
So just to complete that, just to complete that point, what does the Fed do then? Rate cut bets have disappeared. Is there a chance that there could be a rate hike, or you think that's extremely unlikely? One of your
we think the rate hike is extremely unlikely. You really need the core PCE to move above 3 and remain there and things like that, which looks unlikely. On the other hand, we have already taken out all rate cuts for the first half of the year. We just have 2 more rate cuts, one in June, the other in September, and that's it. So that the terminal rate is 4. Not too long ago, we were talking about terminal rates around 3. This was probably 3 months back. So there has been a significant shift. Now, what does the Fed do? If you look at the minutes of the December meeting and the median SEP, there is already in December itself, there was already a sense that the Fed members the FOMC members were already looking at the impact of these tariff increases, immigration. We didn't even talk about immigration, which could be another hit on inflation, already there. So just to give you a sense, if you look at the SEP in 2025 raised growth just by 0.1, 2 to 2.1. Sure. They reduced unemployment just by 0.1, 4.3 to 4.2, and raised inflation almost about 0.5.
Jahangir, so now I'm coming to whether, we've seen some sort of at least a near-term peak in the US 10-year, whether a lot of this has been priced in the fact that it will only get at best 2 rate cuts, like you're saying, maybe not a rate hike, but at least 2 rate cuts. Whether the US 10-year has priced, and then very quickly a move on India, because everyone's trying to second guess now what the RBI will do here, given the external environment and our local issues. I mean, we had an inflation print that came down, CPI inflation, but look at what crude is doing. It raced away 5% thanks to these sanctions. So just quickly, your expectations on the US 10-year as well as the path ahead for the RBI.
So on the US 10-year, I think the business cycle part of it has already been priced in, i.e. that the Fed is only going to go at best to 4, and that you're not really going to get a rate cut more than 2 rate cuts for the rest of the year. I think that part has been priced in. What has not been priced in is the impact of tariff on inflation, the impact on immigration and inflation, and more importantly, the size of the tax cuts and therefore the size of the fiscal deficit. Those haven't been priced. So I think that if you have, negative shocks on those three things, you could see the 10-year move up, and 10-year has been moving up.
Yeah.
So that's on the 10-year. On India, look, very quickly, we have been arguing about a rate cut for a long time, given that we had expected the growth to slow down significantly, inflation to come down. Core inflation already has been languishing for a very long time. So there is no reason not to have a rate cut. We do have a rate cut in February, and we're still sticking with that there will be a rate cut in February. Obviously, if there is a turmoil in the FX market, then the rate cut gets pushed off. So far, I don't think a 3% depreciation is enough to take away that rate cut, but a depreciation higher than that, possibly the February rate cut gets pushed up, but we do have a rate cut in February. In fact, we have 100 basis points of rate cut in 2025 price for the RBI.
Got it.
Wow.
Got it.
100 basis points rate cut by the RBI, irrespective of further currency in 25.
In 2020.
And the average depreciation the rupee has done in the last many years is about 3%. Given what you described on tariffs on the dollar, you're baking in 100 basis points of rate cut with how much rupee depreciation in India this year?
Probably another 2% if we don't have very bad tariffs. If you have very bad tariffs and you have dollar CNY moving very, if dollar CNY moves very dramatically, obviously those calculations are off. Again, the basis in which we are calling for these rate cuts is simply because the economy is going to slow quite appreciably, as will inflation.
Jahangir, just one last, very, very quickly. India does not export too much to the US. Services is another matter, doesn't import too much. It's relatively insulated, right? A second order, third order effects aside, all these tariffs, etc., which you say could be draconian, India remains a little sort of insulated in that sense?
Again, it depends entirely on what China does. If you go back to 2018-19, China lost a significant amount of market share in the US. And China recouped all of that lost market share by moving into emerging Asia and Latin America. If that playbook is repeated, we could again see China do exactly the same thing. And in that event, in order for that not to happen, I think India will probably need to think about not just FX policy, but things even beyond that.
Got it. All right. It's a very, very good conversation, Jahangir, and you've sort of patiently laid out many, many, many points, and I'm going to go back and hear it again. So thank you very much.
And hopefully I'm completely wrong on Jahangir.
Well, we'll see. And yeah, from a market point of view here in India, we do expect that you are wrong. But let's see. We'll find out. And hope to hear more from you over the next couple of days, because it's going to be fast moving and lots of news flow, etc. So would be lovely to have that perspective. We'll take a quick commercial break here, but let me just quickly tease out what's lined up here coming up over the next 2 hours or so. 9 o'clock, you'll be joined by the head of research at Elara Securities. Well, it's all macros, right? So the rupee depreciation, who benefits, who gets hurt. 9:20, Jonathan Garner of Morgan Stanley is our market master of the day. That's a big global voice. 9:30, you'll have the management of Angel One, third quarter earnings performance. We chat with the management of JSW Energy. Stock was up, a big winner yesterday. There's news flow there. 9:50, we'll have Praveen Sahai of Prabhudas Lilladher, and we talk about how the third quarter is stacked up for the consumer durable players. And at 10:15, it's the economy. Latha in conversation around the topic of power sector, power sector asks from the union budget. So that's the discussion coming up.
Right, but we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Shopper Stop, IRFC, Home First Finance, Premier Energies, Wellspun Corp, Cipla, and Ask Automotive. All of them will be reacting to positive news flow, while you have Sula, Network 18, as well as Hathway Cable that will be reacting to negative news flow. Stay with us. We get into further detail on the other side.
Welcome back. So the setup across Asia is a little mixed, pretty much like what we saw on Wall Street, where the Nasdaq was down, the other indices were up. The implied open has been suggesting that maybe we'll kind of build on to yesterday's recovery and see some, green as we go forward. There you go. Those are the regional markets, and they are in between red and green, but the implied open is more green than red right now. So what about individual stocks? As always, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let's start with some of the earnings that we got from the consumer space after market hours, Mangalam. Shoppers Stop looking good. Sula, not so much?
Absolutely. So, if you look at Shoppers Stop, seasonally strong quarter, festive season. So the company reported double-digit growth in both revenue as well as the EBITDA. That's good. There was an element of higher other income, and as a result of which the net profit surged by 41%. So if you look at their revenue, there was an 11.5% growth out there. Margins at around 17.8%, telling you the EBITDA grew by 13.8%. And the other income, which surged from 3.5 crores to about 22 crores, led a big surge in the net profit as well. The good part was like-for-like growth at around 4%, volume-led growth at around 9%. Beauty was slightly weak at around 3%, but then again, Beauty for Nykaa did a lot better this quarter. And they too, like Trent, have gotten into the value fashion segment with Intune, which has now reported 63 crores of sale this quarter. However, what hasn't reported good sales this quarter is Sula Vineyards. They've come up with their third quarter update. And remember, the company has been calling out softness in demand for the last few quarters. And this quarter in particular was led lower by Maharashtra elections as well. So the net revenue was down 0.7%. Their own brands business saw a revenue growth of just 1%, whereas wine tourism saw a growth of 11.5%. Yes, elite and premium are doing well with a 6% growth, but the overall impact of a negative sales growth or sales decline is something that the street may not like. The stock opens in the red, but the key question to ask is that could there be some sort of buying at the lower levels? Largely because one, going forward, this quarter is strong when it comes to the Sula Fest, etc. The stock is already corrected about 45% from its highs, and it's near its IPO price of 357.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about IRFC and Home First Finance. Abhishek?
Well, to begin with, IRFC, they have emerged as the L1 bidder. This is for the coal block in Latehar district of Jharkhand. The estimated financing opportunity is about 3,167 crores. The project is undertaken by Patratu Vidyut Utpadan Nigam Limited, which is a joint venture between NTPC and Jharkhand Bijli Vitran Nigam Limited. It's for a captive coal source. The coal will be transported to Cheta station and then to, Patratu Vidyut Nigam's project site using the Indian Railways. Now, Home First Finance is in focus given the fact that Government Pension Fund Global has sold part stake in the company, about 0.8%, 13.4% of their total existing, stake that they have in the company. The deal size was about 76.8 crores that took place in market hours yesterday. The stake now declined to 5.4% from 6.25% that they held earlier. Back to you.
All right, Abhishek, thank you very much for that. So that is Home First Finance. Let's talk about Network 18 and Hathway Cable in focus. Reported numbers. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Network 18 is in focus on the back of its numbers. Revenue saw a downtick of almost 23% year-on-year, coming in at 1,360 crores. The EBITDA, has the losses have narrowed down from 171 crores to 21 crores, but the company reported a net loss of almost 1,399 crores as compared to a net loss of 102 crores, and this is mainly on account of an exceptional item of 1,426 crores, which relates to derecognition of subsidiaries on account of the scheme of arrangement. Overall, when we look at the numbers, they were subdued mainly on account of the advertising environment, because that continued to be lukewarm. Advertising volumes for the TV news industry as a whole saw a marginal uptick on a quarter-on-quarter basis, but was down nearly 11% on a year-on-year basis. So therefore, going with a red for Network 18. Hathway Cable is the next one that I'm talking about, and that is because the revenue saw only a marginal uptick of 1.3%, coming in at 511 crores. Margins were flat at 16.3%. Resultantly, the EBITDA too saw only a marginal uptick of 1.3%, but the net profit was down nearly 40% on a year-on-year basis, and therefore going with the red for this counter on account of subdued set of numbers.
Okay, all right, Vamakshi, got it. Thank you very much for that. So we'll keep those stocks on the radar. Vivek is back with us this morning. Vivek, you're watching out for some more names. Tell us about them.
Good morning. Quite a few names that will be in focus today on the back of news flow. First on the list is Premier Energies. Some positive news flow. Company, along with its subsidiaries, have received multiple orders Total worth of these orders is a little over 1,460 crore. These orders have been received from 2 large independent power producers as well as other entities. Orders include 1,041 crores for solar modules, and the other set of orders are close to 420 crores for solar cells. Remember, at the end of November 2024, order book was a little over 5,700 crore. Welspun Corp, that's the other company in focus. The company has signed an MOU with Saudi Aramco. Now, this is at the forum and exhibition that Saudi Aramco is holding currently. They are going to go ahead and set up a 350 lakh, talking about tons per annum, greenfield LSAW pipe facility in KSA. Company says the plant will commence operations by mid-2026. The other stock in focus, Cipla, positive read-through coming in over here. The tax remand that the Income Tax Department had raised, this is for the assessment year 2015-2016 to 2022-2023. It has been revised downwards. So now the revised number stands at 559 crore versus the earlier claim of 773 crore. And lastly, ASK Automotive is in focus. The company has started or commenced commercial production at its manufacturing facility in Karnataka, primarily to cater to the demands of OEM customers in South India.
Okay, thanks for that, Vivek. Well, here's a quick recap of all the top stocks. Stocks with positive news flow include Shopper Stock, IRFC, Home First Finance, Premier Energies, Welspun Corp, Cipla, and ASK Automotive. While stocks with negative news flow include Sula, Network 18, and Hathway Cable. Well, we'll slip into the short break. When you come back, we'll get into further analysis. Deven Choksi, the MD at DR Choksi FinServ, joins us for some fundamental stock talk.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important.
Welcome back. Hope you're having a good morning. As promised, Deven Choksi, the MD at DR Choksi FinServ, joins us on the show. Hi, Deven. Hope you're feeling good this morning. Well, we've got a lot of stocks to analyze. Let's start off with a couple of updates. We got an update coming in from Sula, which didn't look too good. And Shopper Stop as well did deliver their numbers. Any view on either of these stocks?
Hi, Nigel. Good morning. Well, Shopper Stop numbers are pleasantly surprising. I think the numbers and the growth that I have seen, definitely I think he's suggesting that a lot many things probably will be happening for the kind of growth that they have produced in this particular quarter. I haven't picked up with the commentary from the management, yet, but I think soon it is going to be. So certainly that will be, I think, a meaningful dialogue thereafter. But on that front, I think if you are looking at, I think most of the retails should have had, I think, this particular quarter, the third quarter, as a favorable quarter. And it would be interesting to watch out for Vedanta, which is the largest one, as far as their performance is concerned going forward tomorrow. So certainly keep an eye on the largest company as far as I think their announcement of the retail business is concerned.
Okay, all right. Devin, hi, morning. What are you liking in technology? Because the market's also taking a very different approach, right? TCS was saluted because of market positioning. HCL was hit very hard yesterday, though the numbers weren't that bad. Today we have L&T Tech. What views on any of the large caps, or if you like any mid-cap play, IT?
Yes, a very good morning. Well, I think the large cap companies we have been avoiding for some time. I think because we probably always knew that these companies have a long way to go as far as the change of the business model is concerned. And as we hear, I think most of the global majors are also basically, I think, in the process of changing the business model. Most of them are expected to, I think, convert the software solution provider from that to cloud computing. And at the same time, I think the providing platform as a service going forward using the AI. So certainly, in my viewpoint, I think that's the change in the model which is being asked for from most of the global companies. So we've been avoiding the larger companies. However, our preference has remained with the companies which are only into engineering and the R&D space with the technology at the forefront. The likes of Tata Technology, the likes of LTTS, KPIT, they appear good names to us, and we have always been saying that they are expensive. Today, with the correction in the stock prices, I think they have become far less expensive. And at the same time, I think the entry point is quite near in many of these cases. So certainly, we have been picking up some of these counters in our portfolio in recent times during this particular fall.
Right, and I've got that. Devin, BSC, there's a lot of interest around this name, and you know the BSC as well as anyone, been associated there with so long. So basically, since the changes in weekly options, etc., got implemented, now what's happening is people are looking at data for the first 10 days, right? How revenues on index options are panning out. There is traction, definitely, on BSC if you look at these numbers. I think there was a call from Jefferies yesterday, and I think there's a call from Nomura this morning. Your thoughts on this one? Ended about 5.5 higher yesterday.
Hi, Prashant. Good morning. Well, we have been, I think, liking this particular company, largely also from the point of view that one of the largest, I think, the participation of corporates in the listed space is with BSC. So on one side, I think there is always a good potential to monetize the data part of it, but let this be aside for a while. The larger part of the product change game, which is now happening, is due to the changes that they have made, the tweaking that they have made in offering the products on the option sites. Now the settlement date has been shifted to Tuesday, and in the process, I think they are trying to corner some part of the volume. Though I agree that I think most of the active traders, I think, would probably use this particular opportunity to do the arbitrage between the two exchanges in the options market. But to a greater extent, I think that gives them the opportunity to trade on the BSE exchange, which up till now has been missing on this particular market depth. Generally understood that whenever you create the market depth, I think you invite a lot of traders onto the platform. And that's what BSE is doing right. And I'm happy that I think this particular process is yielding the result for them. Maybe I think the market share gain that they're talking about in the options market, I think is something which needs to sustain. Should it remain, then probably I guess that this is a long story that one can possibly hold on to. In our view, the stock in the near term may be fully priced, but I think the opportunity that they provide as far as I think the large platforms that I think on the option side as well, along with the mutual fund where they are number one undoubtedly, I think is giving a good amount of opportunity to investors to make money, maybe in the long term, if not in the near term.
Okay, all right. Devin, I wanted to ask about Vedanta. You know, we had some news at the bottom of the screen that now that demerger hopefully sees the light of day and it gets the approvals of all the lenders as well as creditors. What's your view on the stock? You know, the stock had a one-way move, 250 rupees, I think, January last year. It briskly went to 450 rupees, and from there it hasn't done much. What's your view on this? That demerger will unlock some value, but for the time being, the street is considering, that things are still a little sketchy. We don't know what's going to happen with China. Would you buy the stock at current levels?
Yeah, Nigel, I think the downside risk is protected in the price. The valuation-wise, it's not expensive in my viewpoint. Maybe I think this particular company has had the tendency of consolidating everything, and then subsequently, I think through the corporate transaction and demerging it, I think they are once again doing it. But this time, probably I think they're doing it for better and for permanence, as I see it. The demerger of respective business units, I think, which they have in the metal space, in the oil and commodity space as well. I believe that I think they're inviting, I think, good amount of new investment interest into this particular company, both the strategic financial investors as well as the minority shareholders. For all of them, I think the proposition sounds, I think, really attractive. In my viewpoint, I think if they sustain on this particular path and allow this particular activity to continue on a sustenance basis, probably I think re-rating on Vedanta should be expected post the demerger process gets completed. If you believe that somewhere in the first quarter of next financial year, one should get the news on the demerger side.
Okay. All right. Devin, interesting sort of thoughts there, and thank you for that. But you might want to listen into some of the global opinion coming in as well, because that is, of course, also top of mind. Ruchir Sharma, chairman at Rockefeller International, spoke about his expectations from Trump's second term. You heard from Jahangir earlier. Ruchir believes investors are overestimating this development. Well, it's kind of sort of opposite of what Jahangir told us. He believes that the anti-China sentiment has reached its extreme, already reached its extreme. Listen in.
Well, I'm in the camp which thinks that we're overestimating the importance of the next president, and also the fact that the way that he will his policies will play out, I think that that is also being misread. Just two reasons why. One, that if you look back at his first term, it's worth keeping in mind that even though he had so much negativity against China, the best performing equity market in the world during his first term was the Chinese market, if you look at the MSCI China. Secondly, that when he came to power in 2017, just before that, after he won the election, a lot of the financial community was very negative about what he would bring. The initial knee-jerk reaction was the equities sold off, and people expected a lot of volatility. Instead, what we got was one of the least volatile years in history for the US stock market in 2017. I've been a big bear on China, as you know. I've written so extensively about, the fact that, why I'm bearish on China, given the problems of demographics and problems of debt. But what I find very curious now is that those very arguments that I have laid out all these years in my writings and in books, those arguments are now being quoted back to me and have become so mainstream. And my point here is not the fact that the Chinese economy is set to revive in any big way, but the fact that the negativity about China has become almost extreme. And that's also reflected in the equity market valuations in China. That just look at a stock like BYD, which is one of the leading producers of EVs around the world, that it trades at a fraction of the valuation of, let's say, a Tesla, even though BYD sells many more cars than Tesla sells and has a profitability that is higher than that of Tesla. So the negativity about China, is just that being a case in point, to me has become extreme. And I'd say that there are diamonds to be found in the rough.
And when you ride there, when you stand, and people, when they look up to you, they also need to understand that, yes, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare, and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right. Yeah. When you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life, but I think to get till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I
All right, welcome back. There's about 5 minutes to go for the pre-open session. How should you navigate today's trading session? That's the question. 18 points uptick is what the GIFT Nifty is indicating right now. Mitesh and Sudarshan are with us to tell us exactly that and help you trade things and make money. Gentlemen, good morning. Great to have both of you here. Mitesh, we had a bit of a bump. Is there more left, or it's already starting to look a little bit on shaky ground? What's the sense?
Morning, Prashant. So I think, this still looks like a mild pullback to me. I believe there could be more purely because yesterday we kind of bounced back from extremely oversold levels, and the half-hour charts, 1 hour charts are still, suggesting that it could be slightly, it could see a slight extension on the upside. But unless until we cross 23,350 odd zones, give and take 20-30 points, I think the market will remain in a downtrend. So the idea is that if you had shorts, if you've taken profits, which is what I advocated yesterday, I think try to get into shorts again closer to about 23,300, 350 zones with a 70, 80 point kind of a stop. Likely that we might retest the lows, even break below them. Only on a close about 23,350 would I change my stance to slightly on the positive side. Though I think with yesterday and today we are trading with positive bias, but you have to be slightly nimble given the fact that you are playing what looks like a counter trend kind of a rally.
Yeah, fair. So 23,350, that's the important pivot. Anything up until that, you'll simply short the rallies. Above that, you'll think of a long trade. Got that, Mitesh? Sudarshan, morning. Same question to you. Index, what's the call?
Yeah, good morning. See, the markets usually go through cycles of contraction and expansion. We had a big expansion. The Nifty fell 1,000 points. Now again, the markets are likely to move sideways. So that sideways move is primarily the buy on dips opportunity, sell on rallies. But the trades are not easy to catch, but that's what the trade will be. So as of now, because we have fallen a lot, the chances are we can get the buy on dips trade for at least intraday trading. I don't think we should carry any positions. With a stop under 23,000, look to buy intraday dips and exit by the end of the day. Let the market consolidate. Then we'll know the next step where the Nifty wants to go. For the time being, expect intraday trades only on the buy on dip side.
All right, fair enough. Got that, gentlemen. That's the call on the overall market, the index approach. We need to take a break. Come back on the other side. We'll get you stock-specific trading ideas as well. We'll have the pre-opening rates, and we will connect with Bino Pratampalli of Elara Securities and talk about the impact that the rupee depreciation is having on several export-oriented sectors. Back with that in just a bit.
Is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time. And it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently I think, not recently but Tokyo I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know.
Welcome back. 14 minutes to go. The first of the pre-open rates are trickling in. I think maybe the bulls will want to believe this is going to be otherwise, because right now the Nifty is down about 75. Sensex is up almost 1,000, so it's a little all over the place. Let's wait for these rates to settle down. Still down, yeah, now 42. Now we've got a positive rate on the Nifty, about 60 to 70 points up, which seems more in step with what the implied open was indicating. So that's the pre-open. Let's go back to the technical experts to get some stock-specific trading ideas for the day as well. Mitesh, what stocks are you going with?
One should be, I have more of buy calls today. Bajaj Finserv is a buy with a stop at 16.99 for targets of 17.50. Disclaimer that I have long positions over here, so there is vested interest. DV's Lab is a buy with a stop at 5,900 for a target of 6,200. Escorts is a conditional buy. Yesterday it gave a breakout. It needs to clear the pivot of 34.60. It's closed at about 34.40. So buy if it clears and stays above 34.60. Keep a stop at 34.14. 35.50 is my target zone, and one sell call and HCL Tech. That was the buzzing story yesterday. Gave a big breakdown. So on a mild pullback of 10, 12, 15 points, sell around 18.25, 18.30. Keep a stop at 18.56. Likely that we'll see a level of 17.70.
Sudarshan, what about you? What are your trades?
Well, I'll start with the same stock that Mitesh was talking about, HCL Tech. That's an intraday short with a stop above 18.55. Others are all buying ideas. AU Bank is a buy with a stop under 5.65. Berger Paints, again, that theme, you know, defensive start going up and do well when the markets are down. Berger Paints is a buy with a stop under 4.55. And JSW Steel is a positional buy with a stop under 8.95.
Okay, all right. The rupee, by the way, is also opening up. I mean, it is a strong sort of start for the currency, for the rupee, and the dollar is lower. So the broad dollar has been lower overnight by about 0.6% and is showing up here as well. So about 11 paise stronger on the rupee against the dollar this morning, 86.51. Yesterday, of course, it went to about 86.70. There was that wire report which came that, and this is towards in the second half of the session, which basically said that the RBI is more comfortable with rupee depreciating in line with regional peers. So there was a quick jump higher on dollar rupee to 86.70, and then of course it left off. There was a pairing of those moves, and we left off at about 86, about 7-8 paise from there. And this morning we are strengthening even from yesterday's closing levels. So that's the action on the currency side. Rajesh Palviya is Vice President, Technical and Derivative Research at Axis Securities. Rajesh, good to have you with us here. So how is positioning looking, and what can we take from the positioning data right now with regards to what the market may do near term? Indices first.
Morning, Prashant. So looking at the data, the range which we are observing now is 23,000 to 23,500 based on the put call concentration area. In the previous day, we have seen that, you know, there is an addition in 23,000 put as well as in the 23,100 put. So that clearly shows that, you know, some comfort at 23,000, 23,100 strike from the put writers base. On the call front, the major writing is placed at 23, 400, 500 strikes. So that area is likely to act as a major supply zone for near-term perspective. Looking at the broader market in previous day, we believe that some more recovery trade we may witness in the coming days. Possibly Nifty may attempt to move higher to 23,300 to 23,400 zone. That's the area to again watch for in the near-term perspective. So to play this up move, I think one should focus on 23,200 call option, which was closed at around 110 rupees. If you get opportunity to buy this call option in range of 110 to 95, that's the range where you can deploy some buying action in this call option. And with the stop loss of 60 rupees on the higher side, we are projecting target of 165 to 170 for this call option. In the Bank Nifty has shown very smart recovery in the previous day from its oversold trajectory. Looking at the recovery, especially in the PSU space, we believe that some more traction we may see on the higher side. 49,200 is the immediate hurdle for the Bank Nifty. If at all Bank Nifty crosses those levels, then we may witness some short covering action in Bank Nifty also. But looking at the recovery in the previous day, we believe that some positive trade here also one can go for with stop loss of 48,500. That's the stop loss one needs to keep for the Bank Nifty. On the stocks front, Bajaj Finserv is looking attractive. In this volatile market, stock is comfortably holding above all its near-term, short-term moving averages. Long built-up is there. So we believe that Bajaj Finserv can extend its gain. Possible target towards 1780 to 1820 we may see. So one can buy with stop loss of 1675. The second stock is from the automobile space on the buy side, that is Escort. This is the fourth consecutive week where the stock is making higher high-low formation. That clearly shows that some sign of buying action is already there in Escort Kubota. So Escort can be looked at for buying side. Upside target we are projecting towards 3,600. Keep your stop loss at around 3365. And the third stock is from the pharma space, that is Divi's Lab. Stock has taken the support from its 100-day moving average and very strong pullback in the previous day. We believe that some more continuity of upside we may see in the today's session also. We are projecting target towards 6150 to 6200 for Divi's Lab. So one can buy this stock with stop loss of 5940.
Got it. Thanks very much for those calls. We'll keep them in mind. Thank you, Rajesh. Let's quickly move on. By the way, we had the rupee rates come through, and the start is at least a little positive. I think the rate was closer to 86.50 is what we've got on the rupee. So slightly better compared to yesterday's close. Yeah, about 11 paise higher. Well, the rupee's been really getting all the headlines. It's center stage. The question is that from a market perspective, which are the export-oriented sectors that perhaps stand to benefit the most? And should you be looking at any specific plays based on this currency depreciation, which seems to be a theme that's here to stay, at least for some time? Well, let's discuss this with Elara Bino Pathiparampal. He's the head of research at Elara Securities. Bino, thank you very much for joining in. Of course, you yourself, have been tracking the pharma space for so long. So let's start there. Typically, this kind of depreciation of the rupee, does it really, aid earnings to an extent, or do most of the pharma companies anyway have hedges in place because there's cross-currency impact? I mean, the traditional wisdom of IT and pharma being a very clear play on the weakness in the currency, does it hold in your view?
Hi, good morning. So definitely the depreciation of the rupee is going to help the pharma, IT, and maybe other export-oriented sectors, maybe the smaller sectors like auto ancillaries, textiles, etc. To some extent, these companies do hedge their exposures, but the hedge is for a period of 6 to 12 months or maximum 18 months. But as a continuing business, they do benefit from a weaker rupee against the US dollar. So I do expect benefits to flow through in the coming quarters, and it definitely helps the margins of these companies.
And in pharma, Bino, where do you think this will show up the most? I mean, could it be companies like, say, Sun Pharma or Dr. Reddy's? I mean, Sun has a massive presence in the US, right? Could it be the large generic players? And within that space, I mean, while currency is obviously a big tailwind, You have to look at the basic fundamentals of the business as well. So within the space, what would you pick at this point in time?
Sure. The depreciation in rupee is going to help almost all the players, especially the large players who have big presence in the US. So that includes Sun, Dr. Reddy's, Zydus Life, Lupin, Aurobindo, and the likes, and maybe some of the CDMO players with exposure to the US as well. But our topics, considering all at this moment, are Dr. Reddy's and Zydus Life Sciences.
And why is that? Just very briefly. Why Reddy's and Zydus over, say, something like a Sun or the others?
We believe that there is more upside to the stock because of the expectations that are built in are below what the companies will achieve. So as we go along, we expect earnings upgrades in FY26 and 27 names in these two stocks.
No, absolutely, and that's an interesting sort of view. Bino, sort of any other sort of stocks which are on your radar as you look ahead into the next sort of couple of months? One view which is largely emerging, and this is the backdrop is very strong, sustained gains over the last few years. So that is one. So valuations generally are very rich. And second, you're entering a period which is going to be a little more volatile, right? And to 2025 and beyond, largely because for global reasons more than anything else. So you've got to be a lot more nimble, a lot more tactical. So I just wanted you to weigh in on that as well.
Sure. So the current bout of volatility in global markets, not so much in the US, ex-US global markets, is primarily driven by the regime change in the US, the incoming Trump 2 administration, and uncertainties about the kind of policies that new regime will adopt. This volatility could stay for a little bit. I would think 3 to 4 months before the new administration in place and their policies are come out clear to the world overall. This has led to a lot of flight of capital back into the US because there are worries of tariffs coming in, worries of around backshoring of a lot of activities into US from other countries, etc. These worries will moderate as we go along, as the world comes into terms with the policies of the new regime, and I expect the volatility to come off over the next 3 to 4 months, beyond which the fundamentals of the economy will take the center stage. Indian economy continues to be a very strong economy. Our position, our fiscal position, our capital flow position all remain intact, and it is one of the best growing economies in today's world. So the current bout of volatility led by capital outflows will come off, and things will stabilize.
Okay, well, let's hope so. Binu, thank you very much for your time. It's a great conversation, and thanks for joining in. Let's focus on mutual MFIs, that is microfinance companies, and there's data which has come through. Abhishek is standing by with that. Abhishek, morning.
Morning, Prashant. So Jefferies has written on MFI, they say that the data from credit bureau, that is CRIF, suggests that Q2 FY25 have seen disbursements cut by 29% YOY by lenders, which has resulted in 4% decline in their AUM on a sequential basis. So number of borrowers and ticket size of loans have fallen after many years. Overdue loans have risen from 2.7% in June to about 4.4% in September. Asset quality may take time to normalize and loans may unwind, leading to pressure on earnings going ahead. So Utkarsh, small finance bank, Spandana as well as Credit, they have higher share of more than 4 loans to a customer, and Bandhan can fare better. Even GS, that is Goldman Sachs, has written on Credit Access Grameen, they have a sell rating target price of 577. They say that bureau data which has been analyzed are not showing any signs of recovery in MFI, which is encouraging for them. So incremental bureau data points that 37% of MFI borrowers overlap with retail loans, have seen both loans being under pressure, so representing $18 billion of retail loans and about $10 billion of MFI loans. So if you take a look with respect to 52-week low, Credit Access Grameen, Equitas and Spandana Spurti are off the lows by 12% to 20% range. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, we have a few stocks as well that will be focused because of initiating coverage reports. HSBC on Allied Blenders, they have initiated with the buy rating, target price of 502. So we'll keep an eye out on Allied Blenders. Dixon Technologies, MK has come out with a note. They have initiated coverage with the target price of around 20,000 rupees. And Macquarie has come out with a note on restaurants. They have initiated coverage on Yum India, and their preference includes Devyani, Westlife. Then you have, Sapphire and Jubilant. So we'll keep an eye out on all these stocks. We'll get you further details with that. For the time being, Devyani has started off well in the green.
All right. Let's just look at BSC. I think it's starting higher, right?
Yeah, 2% up.
2% up after yesterday's 5.5% pop that we saw yesterday. We've got market open coming up at this point in time. The first rates are starting to appear. About 1/3% higher on the Nifty is where the pre-open left us with. So yeah, it's 1/3% higher start, 23,256. The Bank Nifty is starting about 0.2% up, 4850. And I think you'll have more stuff up on your screens as we begin the session. 1,300 stocks are higher, 270 stocks are lower. Sensex is up about 0.4, IT index is up about 0.16. And you got what, 40 odd names which are higher and about 10 stocks which are starting in the red. So it's broadly in the green, and we'll have some of these initiation and coverage notes that Nigel was mentioning coming up at the bottom of the screen just to keep track of how they are starting. So should see a reaction at least in a few of them. Surabhi.
Look at Maruti. Maruti is in leadership position, 2% higher. There are a lot of reports indicating that the launch pipeline ahead for Maruti is looking very, very good, and lots of launches in the SUV space are turning on the heat finally after many years. And it seems there's some position building that's already started in the stock. It's been a good January for this one. 2.5% up on Maruti. NTPC, BPCL are number 2 and number 3 on the Nifty. IndusInd Bank is continuing its forward march from yesterday, about 1% higher there as well. There's Kotak Mahindra Bank, that's also looking quite okay. The other major movers and shakers on the upside, HCL Tech, after yesterday's major drubbing, is up about 1%. L&T is up about 1% or so. Reliance, 0.5% higher. And then there's State Bank of India, 0.5%. And then it completely starts fizzling out. The Nifty is up just about 70 points. Now, pressure from the downside is coming in from the likes of an Axis Bank, Shriram Finance from the BFSI space down about 1.5%. And consumer stocks again are sluggish this morning. Nestle, Tata Consumer, they are on the way down. Look at the interesting play between M&M and Maruti. M&M is down about 0.7%. Maruti is up about 2%. Interesting. M&M obviously has been the star of the PV space for well over a year and a half now. So those are the trends, the early trends on the Nifty, just about 50 points higher. Let's see if the bulls can defend this, because remember, you also heard this from Mitesh. A lot of savvy traders are looking to short any counter trend bounces. And that is something that the Nifty could be suffering from as the day progresses. Let's see.
Well, some of the stocks that put on good weight in the last hour of trade, that's some of those PSU banking names, they are pulling back big time. UCO Bank is down 6%. IDBI Bank as well. All of them were up 15-20% in yesterday's trading session. IOB is down 6%, and Central Bank of India as well as Bank of Maharashtra. So all those stocks come up for you on the screen, giving back bulk of what they put on in the final hour of trade on those capital raising plans. So we'll have to see how that goes and whether or not this dip gets bought into. So keep an eye out on those names. A few more notable movers. You have Premier Energy that won a large order that Vivek was telling us about. So that stock, in fact, has opened up with a gain of close to around 3%. It's been a little bit jittery of late, but now this order win, large one, gives them some confidence out there. Welspun Corp as well. They have an MOU that they have signed with Saudi Aramco. Remember, this is for their ELSO facility, and this company could be one of the beneficiaries of Trump's policy because it's located, this unit is located in Saudi, which in fact there's an FTA with the United States, so could be a potential beneficiary. So it's announced earlier, but this MOU is signing gives them a further pathway into that market. So that's good news. Zomato has seen a sharp correction from the top in terms of volume movers. That's up close to around 2%. Vodafone Idea as well is up close to around 2% as we speak. And NTPC, that's the other one that's getting into it today. So a 50-60 point uptake. I'll tell you what, the bulls will take it. They'll want to get past the 23,350 odd mark and build on from there. For the time being, that's the line in the sand. Prashant.
Okay, well, 60 points on the Nifty for now, and we're at about 23,230 odd, so 55 odd points in the green. and a lot is happening, a lot is moving at this point. 4:1 basically is the advanced to decline ratio. By the way, the Adani, at least I can spot Adani Green, and maybe there'll be more. Yesterday was a big day for that group because they'd all been beaten down quite a bit. They all came back between 8 and 20%. Adani Green is the second largest volume traded gainer with about a 3.5% pop. But there's a lot more, and we've highlighted many here, and we'll highlight more as we go along. Well, we've got a very special guest joining us, Jonathan Garner of Morgan Stanley. He'll be with us. He's ready with us, but we just want to set the context. And you know, the number one question to Jonathan, of course, is going to be on foreigners and what they will do from here on, because they've been big sellers here in Indian equities. So to set that context, here's a quick soundbite of Uday Kotak of Kotak Mahindra Bank in conversation with my colleague Shireen Bhan. This is, of course, slightly dated. But this is Mr. Kotak warning about FPI selling, which perhaps is going to be a big theme over the next couple of months as well. Listen in.
I think these are cycles. We have to respect markets. You want demand and supply to determine, of quality paper, of course, to determine how valuations happen and how the marketplace develops. But the market is getting larger. You're getting more and more supply, more and more demand. That's the way to go for the future. But we have to be ready for a global shock. A $900 billion stock of FPI is not a small number. And we have to be ready to be able to absorb that if that moves. And the supply of paper has to be commensurate with the supply of money.
You're saying the probability of that kind of an exit is a real one today?
No, I don't think $900 billion goes.
No, obviously not 900 billion, but a significant part.
But can a few $1 billion go? Can 5-10% go? We should be ready for it.
Well, a few $1 billion has left. I mean, that is Mr. Kotak about 2 months ago. A few $1 billion has indeed gone out from the market since then. But what from here is the question. Jonathan Garner is Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley. Jonathan, it's always a pleasure having you with us here. Thank you very much for joining us here on CNBC-TV18. So exactly that question, Jonathan. How much more selling, according to you?
Well, I do think we need to unpack this a little bit. The Indian market has been outperforming other EM quite dramatically in the last 3 or 4 years, and particularly outperforming China. And so what's happening is the weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. And so what you're seeing actually is that the selling that foreigners are doing is just simply about that maintaining a quite large holding in India into a market that has been performing well. It's not some kind of problem that's going on here. It's actually a problem of success. And if we're right, our target for Sensex is 93,000. We're overweight the market. We're well above consensus on earnings growth. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past. And we see that a lot, being asked to arrange the first investor trips for global investors who really haven't looked at India historically. Historically, it's obviously been large within the EM bucket, but not for global investors. So it's quite a complicated situation that's unfolding.
So just to complete that point, and you look at this data very closely, so India's weight in MSCI Asia ex Japan is about just under 20%. FII ownership of India is now, I mean, there's a significant underweight, right? Relative to that 19.8, I think, should be closer to 16%, Jonathan? I mean, what's the number now?
It's actually quite close to benchmark weight, but I think the reason that you're so aware of this, let's say, and people in India are aware of it, is that if you go back a decade ago, global EM investors were double-weighted India, double-weighted. In other words, they realized that India was about to do very well, which is what we've seen. So this is this selling into strength story that I'm trying to get across to you within the EM investor group. But what has yet to take place, and we're so excited about, is truly global investors. Now these stocks are so large. We think about names like Reliance Industries or ICICI Bank, those two like mega caps, names we tend to like, they stand a chance of finding their way into global portfolios, which is a much, much larger superset, the entire global equities universe. And if you think about the US, that's ballpark, let's say 75% of all country world index, India's knocking on the door of around 2% now at a global level. Okay, so 2% of global equities. Once it gets to 3 or 4%, you can't ignore it anymore as a global investor.
Jonathan, of course, we read your notes and, of course, what Rhythm puts out here. And it really stands out as the most bullish voice on India right now, around where a lot of people are still circumspect despite the correction that we've seen. What do you think will turn, what will get that FPI interest back? Because they've just been rushing to the exit door, not checking anything. Are valuations still the biggest sort of impediment? Is it growth? When earnings revive, is that when you expect the buying to return?
Yeah, again, I wouldn't describe it as rushing to the exit door at all. I mean, if you look, for example, at market that performed very poorly, that's also a large EM market last year, Korea, the Indian market dramatically outperformed the Korean market last year. So you have to look at the totality of the situation. But to try to be looking forward here, what's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and that we get this kind of compounding of earnings at 15 to 20% per annum in rupee, which the market is able to do way above earnings growth everywhere else. And as that happens, India will continue to rise in the EM index, in the global equities indices. It'll continue to outperform. And the domestic bid is going to remain strong. And as I've said, at the margin, we're going to get a different type of investor in India, the truly global investor, rather than just the dedicated EM investor.
The earnings, Jonathan, that's what really stands out, because you folks have remained with the earnings projections being rock steady, like you said, 15 to 20% compounding earnings. A lot of people here, domestic sort of, money managers also are kind of questioning that, at least in the near term. So do you see this whole debate around a slowdown in India? I mean, how do you view it from your standpoint?
We're well aware of that and have written extensively on it. And we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong. But we don't think we are. So our colleague Rhythm and then Upasana, who's our economist, fairly sure that they've identified the cyclical factors behind the downturn late last year. And, next up is, of course, the budget, where we expect the primary deficit essentially to be set around 0. And I do think that with the strength of the US dollar and the uncertainty over the Trump administration, that will gradually resolve itself. And as it does, I think it'll be dramatically in India's favor relative to some of the other markets we cover, most notably China. India has a lot of optionality in the Trump administration, which some other large EM geographies lack.
All right. Hi, Jonathan. Good morning. And, very encouraging to hear about a different kind of global investor coming into India, because as of now, the flows that come into India, more than 90% comes via the emerging market flows. But if you get a dedicated India flow, that'll be extremely encouraging. So we'll, look forward to that. But Jonathan, you gave us your upside target on the Sensex. I think that's close to around 18% away from current levels post the recent correction. On the downside, what do you think? At worst case, do you expect the markets to pull back maybe 10% from here at worst?
Well, we always publish bull, base, bear targets. I don't have the bear case right in front of me at the moment, but I would say that you could expect in a scenario where, for example, the S&P 500 enters into a bear market, some kind of early US recession, then you would get that kind of decline and maybe even larger than that. But I would say that at the moment, we're quite confident in the base case forecast that we have. I mean, bear in mind, the backup in yields in the US is to some extent because nominal GDP growth remains very strong in the US. And though the Indian market is not as correlated with the US as in the past, ultimately, all markets have some degree of correlation to the US market.
Okay, all right, got that. Jonathan, I also wanted to ask you about earnings. Since you briefly spoke about that, we have tech numbers that have started trickling in there. And, besides the earnings reactions, the stock price reactions, the broad outlook is that things are getting better for tech. Your call on tech from here on, they've already seen a good run. Valuation-wise, not very, very cheap, but at least you have some visibility on growth out there.
Yeah, so again, this is an interesting point. So whereas we're overweight India, for example, we're underweight Korea and Taiwan. So in Korea and Taiwan, tech means tech hardware, semiconductors. And there you've shifted from what we call the AI enabler or infrastructure rollout phase to what's now the adopter phase. And in the adopter phase, India is really quite advantaged versus those tech enabler infrastructure build. And so the kind of way that the corporate sector will be using AI lends itself to a lot of the kind of software services names doing well this year. So yeah, India would fit into that theme.
Jonathan, slightly pulling back a little bit, right? Bringing in the new incoming sort of president and the implications of that. You guys at Morgan Stanley over the years have published a fair bit about how we're moving to a multipolar world, etc.
Yes.
For an economy like India, I mean, we export very little to the US. Services, of course, aside. Import, I mean, in terms of from the US. So in that sense, we're kind of insulated, all this tariff talk, etc. Not completely. There will be some effects, or second order, third order. But on the external side, does India, is 2025 to you looking a lot more adversarial? Or you think one should kind of keep that aside?
Yeah, we've made multipolar world yet again a key theme for the year at Morgan Stanley, and you are going to see a slew of tariff and non-tariff actions, and that's going to be an issue for the more trade-dependent and US-exposed markets in Asia. We actually have a theme of liking domestic demand in places like India and Southeast Asia that are more like ring-fenced from that and more influenced by underlying domestic economic growth. And so that's an advantage. However, all that said, one other aspect of multipolar world dynamics is that corporates are relocating manufacturing out of China, and India's benefiting from that. And private equity and portfolio equities, but particularly private equity flows, are much more diversified than they used to be. And there is a boom in private equity interest in Japan and also in India. And so actually within the multipolar world framework, we often make the point that India is probably the most advantaged geography, the way that things are panning out between the US and China in particular.
Okay, all right. Just quickly, final word. We're approaching the budget. You are extremely optimistic on the economy and the markets here, Jonathan. What are you expecting from the RBI over the course of the next couple of months? And would you want to see anything more decisive by the government? Your budget expectations or recommendations for India?
Well, to some extent, monetary policy tightened, arguably, from the mid-year last year. We think some gradual easing is appropriate, but obviously that depends on the inflation outlook. And then on the budget side, we'll see, but there's been a very big focus on capital expenditure infrastructure delivery. Maybe there's some opportunity to loosen elsewhere. We are in a cyclical slowdown in India, but India has plenty of firepower on the monetary and fiscal side to lean into that cyclical slowdown. So it's not something to be concerned about.
Jonathan, we'll leave it there for now. Thank you very much for joining us here on CNBC TV18. Great conversation as always, and we'll touch base again soon. Well, we want to talk about individual stocks, right? I mean, lots of initiations, lots of activity from the sell side. BSC is getting lots of coverage. Dixon is the other one. Hormuz is standing by with these notes. Hormuz, morning.
Morning, Prashant. There are 4 initiations actually today, one being on the restaurant space, the other one being on allied blenders. But we'll get to the 2 big names first up with BSC, as you mentioned, continuing to get more coverage. And Nuvama this time has initiated coverage there, a 67.30 rupee price target, which is a 24% upside from yesterday's close. They're saying that the key derivatives segment, and that will continue to grow despite the changes that have been made by the regulator and the challenges that it currently continues to face. Now, they are forecasting a revenue and an adjusted profit CAGR of 39.9% and 70.8% over FY24 to 27. And they also say that the clearing charges, once the lot size increases, the clearing charges will come down significantly, and that will aid BSE's margins in the long run, is what they're saying. And the BSE also has multiple levers in place to boost its revenue growth. So that's what Nuvama is saying. Initiation there, bullish call, 24% upside there. And recently as well, they've come out, BSE has received coverage from Goldman Goldman Sachs as well. Jefferies had recently upgraded the stock to a hold, but most of the stock is already trading above their respective price targets. The other one is, of course, Dixon, the fourth analyst now on the street who expect the stock to cross 20,000 or more. MK is that one, a buy rating there at 20,000 rupee price target. They say that there is further legs to this growth story. They're seeing a sales and EPS CAGR of 20 to 40% over FY25 to 35. Now, it's a 10-year time frame that they have given, and they're also seeing sustained ROCE and cash flows for Dixon going forward as well. And their FY27 EPS estimates are 17% above consensus because they expect continued share gains for Dixon in the smartphone space, and of course the benefits that they get from the backward integration facility. So another positive call for Dixon. The stock though not doing well, but it's run up quite significantly, but BSE though is up and above in today's session.
Thanks a lot for that, Hormuz. Well, let's focus on the next management, Angel One. We have with us Mr. Dinesh Thakkar, the Chairman and Managing Director of the company. Hi, Mr. Thakkar, good morning, and thanks a lot for joining in. Well, you've mentioned in your con call that the impact on the top line, because, for a raft of reasons, it's going to be around 18 to 20%. That's higher than the 13-14% you guided for earlier. You've also taken some price increases earlier to mitigate some part of their impact from true to label charges. But it was not enough, clearly, right? So if such an impact continues, what is the quantum of price hikes you may have to take from here on, sir?
See, there are two things on previous guidance. After that, we were of the view that maybe a monthly expiry, the way it was getting expired on different days of week, will continue. But when clarification came that there will be only two expiry, one expiry per exchange, that created an additional impact of around 3 to 4%. And on price hike, you're able to hear me?
Yes, sir. Go ahead. On price hike, how much are you going to take?
Yeah. On price hike, what we took, there is a gap of around, say, like 2 to 3% maximum on true to label. But there can be more because of market condition also. If you look at this quarter, all kind of an worst thing which can really dampen sentiment and reduce volume had happened, which includes FII selling, US election, our government spending being low, economic growth being low. So if I remove all that noises, I think we would be fairly in the range of all-inclusive impact of regulatory changes to the tune of 18 to 20% impact on our top line. But now over here, what is important is that kind of like growth that we are seeing in customer base, that is not slowing down. So our customer base is growing at the rate of 40-45%. So this impact, what we are seeing, it is just a one-time temporary impact. But if I factor in growth that is going on in this industry, especially for digital players, that is in the tune of 40-45%. So it is a matter of maybe 2-3 quarters that we would be able to offset this kind of a hit. So I don't see any impact. Yeah.
Sir, but that's exactly the question, right? That you've quantified the revenue impact was about 80-odd%. Now, the question is how much of a price hike, I don't know if you've already taken some measures, how much of a further price hike will you have to take to mitigate the revenue and the profitability impact of these true to label norms and the other changes?
Surabhi, what I was saying is that, okay, in a digital kind of like industry, there's a fixed cost. And if we get additional customer on the same fixed cost, and if we are able to improve our margin based on increment in customer base, there is no need for a price increase. So we will wait for 1 or 2 quarters before we decide on any price hike if it is needed. But my gut feeling is that looking at the growth that we are seeing in this industry and looking at kind of like participation from customer, we would be able to recover our cost and maintain this margin of OPM of 50%. So we will take 1 or 2 quarters to decide whether further price hike is needed or not.
Got it. Dinesh, hi, good morning. Prashant here, and good to see you here on the channel. We've spoken about this many times in the past, actually over the last few months now. So some are highlighting that industry-wide option volumes have fallen sharply, right? Now, within exchanges, there is market, some are fall is not so sharp and others fall is slightly sharper. But that's a different conversation. You, of course, work with everybody. Could you tell us where do you expect this to settle? Because option volumes were 80% out there of overall volumes. So just some sense with some, because I mean, you know, we've seen activity at least for 10, 12 days this year and last year as well.
So Prashant, what happens when a customer is entering in the market? He would look out for few areas where he can trade, he can invest. So option being bit kind of like easy to enter, they were using option as a vehicle to trade and invest. But if you look at what happens is that if at all there is a change, big change in kind of like market offering, they try to focus their attention to other kind of like areas like cash delivery or maybe commodity or some other area. So it is not that customer will go away from market. They will come, if they're not trading in option, they'll find out some other kind of an alternative where they will continue to trade. But if you look at last 8-10 years, maybe they are on the sidelines because people who were doing one kind of like contract, they have to check that what other alternative they have in the market. My experience, past experience of last 20 or 30 years, starting from way BSE had Badla, they banned, then automated lending system in NSE, and then future kind of a trading, then again focus went to cash market. When peak margin came, they focused again back to option. So they will find out some alternative to trade. I'm not seeing any drop in terms of their activity in the market. Wallet share of customer that is dedicated towards trading and investment continues to be same.
Okay, all right. Now, for Angel specifically, you've appointed some senior people and in some of the new businesses you're building out, wealth, for example, Dinesh. Could you tell us what should investors expect? By when do you start to see, I mean, these businesses starting to scale up, size up, and any numbers in terms of roadmap will help here?
Yeah, see, wealth business, we just recently got licenses, PMS and all other things, licenses which are needed to start distribution and do our kind of an advisory service and portfolio management services. So this quarter, we would disclose numbers on what we have achieved. I'm talking about our current quarter, because we have just started activity just a few weeks back. So we are very hopeful that kind of like opportunity which is there in the market, where middle belly, I would say, emerging HNI haven't got a kind of same kind of service what is available to HNI and ultra HNI. So we would like to use technology so that we are able to create more efficiency in terms of serving customers who have a kind of ticket size of 1 crore to 10 crore. So apart from being present in ultra HNI and HNI, we would like to use technology to create efficiency and create better products offering on our app. So it is too early to say right now, but we would like to aim for a leadership position in this area.
All right, Mr. Thakkar, you briefly mentioned about OPM going to 50%, if I heard that correctly. So margins get back to 50% in the next 2 to 3 quarters. Is that correct?
Yes, that is correct. So that is what I mean, that we have that levers. So if you're able to get this kind of an OPM, there is no need for price hike and all that.
So you're considering going to that 50% even without a price hike, at least as of now. That is your plan, or you're factoring in a price hike to get to the 50%?
No. Without price hike, I'm confident we can get to 50%.
Got that. Next 2 to 3 quarters, we'll have to hold you to that one. What about market share? For the month of December for equity, it declined for the second straight month. F&O as well, it slipped a little bit. How is this expected to move?
No, our market share, overall equity market share is improving. Plus or minus a bit, that is, I think, can depend on what kind of participation we are seeing in the market. But overall, if you see our market share across all sectors like equity, commodity,
it slipped a little bit, sir. Mr. Thakkar, you know, as per the data that we have in equity, it slipped by 30 basis points, but a small slip out there. You're saying you're holding on to market.
30 basis point,
is par for the course.
3-4 quarter, it is continuously growing. Few kind of a month or a day, you will see a blip. Maybe participation from HNI increases, so our market share may appear to be lower. But because retail is not participating, people who are doing one contract, they are not participating right now. But if I look at acquisition market share, active market share on NSE, so we are seeing it is continuously rising.
So, Mr. Thakkar, just to sum it up, and I just want to ensure that we have the right understanding, what you're saying is that you may not have to take price hikes at all, and your margins will go back to 50% even without a price hike. And all of this hinges on the fact that the sheer number of people coming on the platform, the number of customers will increase, And that will offset everything, even the volume decline, because the volumes have dipped as much as 70% in the F&O segment, right? Because of the weekly expiries being reduced. So number of customers will make up for all of it?
You are right. When volume drops, you are just looking at F&O segment, but our revenue comes from cash segment, commodity segment. So what happens, as I said, that customer will switch to some other segment. We are seeing those kinds of trend emerging. Not that customer will totally get out of the market. And in digital businesses, there is a fixed cost. So additional customer is straight away going to contribute to bottom line, which will help us to come back to OPM of 50% without tweaking prices for any services.
Dinesh, we'll leave it there. Thank you very much. Good conversation as always. Appreciate
Thank
your
you.
time here on CNBC TV18. And good luck to you and the Angel team. Now, JSW Energy is the next company we're going to focus on. It's acquired KSK Mahanadi Power under insolvency process. The total bid amount is about 15,985 crores. We have Mr. Sharad Mahendra, Joint MD and CEO of the company, to take some questions. Thank you, sir, for joining us. You plan to reach 20 gigawatt generation capacity by 2030. With this acquisition, where do you reach? You have mentioned that thermal generation capacity also increases to 7.5 gigawatts.
See, as we have said earlier, you rightly said that 20 gigawatt by FY30. But then with the change in environment which we observed, the demand growth, the opportunities, return accretive opportunities which started coming in last 1 year, we started our entry into the bidding space in renewable energy. And with the acquisition of this KSK Power, for which we have received the LOI, and the process is now, it's a IBC route, so NCLT will take its own course. We don't expect too much of time. With this total capacity of 3.6 gigawatt KSK capacity, out of which 50% is operational, our overall logged-in capacity reaches to 28.2 gigawatt with this. 3.6, out of which 1.8 gigawatt is operational in case of KSK.
Okay, got that, sir. So how much do lenders get back? We understand that your bid is around 16,000 crore rupees and total dues after the payment done in August by KSK stand at around 26,000 crores.
See, we will be right now, we are staying away from the numbers because we have just received the LOI and ultimately the decision has to come from the NCLT, the final approval. But the COC has approved our offer and that is how we have received the LOI, and then it is being now sent to NCLT. But yes, in terms of the whatever the bid they have amount they have been able to get through the bidding process, but there have been other cash surplus which was there in the company, because this has been a very high quality operating asset generating good EBITDA, good revenue, everything, because the 1800 megawatt operational capacity, which is almost 98%, is tied up with the states of Uttar Pradesh, Tamil Nadu, and Chhattisgarh under majority in long term and some is medium term capacities. So it has been a going concern operating very, very well. So those numbers we'll be talking once the process gets completed, and we definitely will be making when we are making the payment. But from our side is the number what you have said is around that only.
All right, so the street clearly likes this acquisition that you have done, but I wanted some analysis from you. Build versus acquire. Can you compare the cost, especially for this kind of a bid like which you have made for KSK?
The thing is, we have to remember this 1800 megawatt operational portfolio, the value for which for what the value has been given, and then balance 1800 megawatt is to be built to take this to 3600 megawatt. Then just to tell you that this is a configuration of 6 into 600 megawatt units, out of which 3 are fully operational and running very well. Fourth unit, more than 40% of the work is already completed, which is an added advantage. And also for entire 3600 megawatt, the balance of plant is fully ready. And also the water evacuation, the transmission line for power evacuation, which are two very important aspects of the business, are fully ready for the entire 3600 megawatt capacity. This will give us two advantages. One, The completion cost of 3,600 megawatt will be significantly lower. Whatever capex we will be doing for to take this to 3,600 megawatt will be very, very significantly lower than building any new plant of this size. And second is that all the approvals in place, everything in place, balance of plant, everything. So this is going to, the timelines also will be much faster. A standard thermal plant, if someone has to build, we all know that it is maybe a 5-year project. So this will be definitely lower than this time period also. So these are two key advantages also, and a very, very high quality asset close to the coal mines, which means that whenever we are going for the capacity expansion, when happens, and the power purchase agreements which the states are now looking for thermal power, seeing the demand growth and especially the evening peak supply challenges coming in, which is going to increase only. In merit order dispatch also, this will be a very, very cost effective power supply for any of the buyer. So those are the advantages which we clearly see in tying up the balance capacity also.
Okay, sir, give us some more insights with regard to funding of the project.
See, this is a bit early to exactly tell, because it depends on how much time it takes for NCLT to complete the process. So we have made plans accordingly, depending on what is the timeline we'll be deciding. But yes, this will be a mix of internal accruals plus we'll be raising the debt, is how we have planned.
Also, recently there was news of CERC not adopting proposed tariff of BESS projects, which were won by you from SECI. Do you plan to take this forward, and what's the reason for CERC cancelling it? Because the bid was won fair and square, right?
We have to remember and recall that when this bidding happened, there were many big participants which were there, including the PSU, large PSU and other companies, and there was a reverse bidding, competitive bidding, wherein we took a calculated call and we were the lowest, significantly lower at L1 when we were awarded, and that was only that enabled us to reach that level at that time only because of our efficiency in building a greenfield project, low cost. So that helped us. But yes, it is a 2.5, 3 years time now. The things have been dynamic. One thing we have to remember, that 50% of the capacity which was to be tied up, out of that total 50% capacity, already the PPA has been signed, the BASPA has been signed, the Gujarat regulator has approved also the tariff. It is the another 50% of the capacity which was to be tied up was there which was with NLDC, which went for tariff adoption. And we strongly feel that there are many precedences of such cases. It can be other way around also. If we recall what happened during those solar tariffs at Badla, famous 2 rupees tariff, that wherein the IPPs faced challenges because then the cost increase happened significantly. This time it is other way around, and it is an old project which is with the work which has started. So we are definitely going for making a representation which is supported by many such past cases which have happened. Because if any evolving technology, we have to remember that BESS has been evolving technology. Any evolving technology, the initial power times period which are there, the costs are high, buying cost is high, project cost is high. And then as and when the technology matures, more innovations take place and the cost starts coming down. That is exactly what is happening in this space. So it is not right to compare today's cost with 2.5, 3 years back, the assumptions on which the bidding took place. And also not only we, there were so many participants in that, as I told you, the PSUs and all, and they were not able to come to that level. So that clearly justifies. So we are making a representation for this, and we are confident that this definitely will be heard, and we expect a positive outcome on this.
Okay, all right, sir. Thanks a lot for joining in and filling us in with all the details with regard to this acquisition, how you see things panning out as well. Well, for the markets, we're up closer around 35 points, which is good news. The only thing is that the advance decline ratio has come a little bit closer to each other, though you still have more number of stocks that are advancing. We'll slip into a short break. You come back, we'll focus on the consumption theme. We'll have Praveen Sahai or Prabhudas Hiradhar to discuss what's expected from the consumer durable players. Stay with us.
Welcome back. Here with us on Bazaar Morning Call, and the market is continuing to flatten out. Very, very quiet. 30 to 40 points higher on the Nifty. The mid-cap index is already showing a tinge of red at this point in time. Let's see if the large caps can hold on. Well, earnings season has begun, and we are bringing you the next in our special series, Quarter Se Quarter Thug. The spotlight is on the consumer durables space this time around. Praveen Sahai, Vice President, Institutional Research at Prabhudas Lilladher, is with us to talk about his expectations from the companies in the third quarter. Praveen, good to have you on. So, let's start with the broad, big picture, expectation, given that there's a lot of chatter around a slowdown in urban discretionary demand as well. And traditionally, this is not the hottest period, right, for air conditioners, coolers, etc. This is seasonally not the strongest period. What are your expectations?
Yeah, hi, Survi. Good morning, everyone. So for a consumer durable space, we are expecting a similar kind of a quarter like of a last quarter, Q2. Like a last quarter, around a 17% of a growth for a durable space in our coverage we had seen. A similar kind of a number this quarter as well. Again, that's driven by the cable companies. So wire and cable companies continue to deliver a strong growth and driven by the cable business, not from the wire. Similarly, in the FMEG space, we are expecting some subdued quarter, as you had already mentioned, Survi, that the season is not the season for especially for the cooling product, but also festival was gone by. So if I look at our channel check, festival to festival, YOY growth, that's also quite subdued. So secondly, on the RAC side also, we are expecting the similar kind of a growth as of last quarter, Q2, to continue. Even there is a channel inventory space, we are expecting there is some improvement there as well. That's driving the primary sales for the RAC companies. So I can summarize that this third quarter is similar to that of a last quarter, Q2, driven by the cable and the RAC companies to continue, and the FMEG segment continue to be soft.
So Praveen, put a number to that. Praveen, just put a number to that in terms of either top line growth or just let's talk volumes.
Yeah.
For FMCG, what is the growth, and also festive, festive over festive? What was the uptick, since the sentiment was fairly muted? What was the festive over festive growth? And also give us the total top line growth that you're going with for your coverage universe.
Yeah, sure. So for our coverage companies, we are expecting a growth of around 13% in the top line, and as well as there is some 80 to 100 basis point improvement in the margin front, and in the profitability also we are expecting. So the similar kind of a growth to come in. So some around 30% odd growth in the profitability, and that's largely because of last year, your same quarter muted numbers, especially from the Voltas. So adjusting for that, definitely that's a 20 to 24% of a growth we are expecting in the bottom line. Season to season for FMEG, we are expecting quite a flat, and for FMEG as a portfolio for entire coverage, we are expecting around 9% of a growth. Also, we have to consider that the last year the Crompton has given a very strong number in the ECD portfolio of 18.5% of a growth. So that's also to factor in. While season to season, what our channel check has indicated, that's not so great season to season for FMEG growth has been quite flat, especially on the offline segment. So, yeah.
Right. Praveen, one thing I've heard from a couple of people now on the fund manager side is towards the end of this year, you'll have a lot of real estate possessions which will happen across companies. And at that point, you may actually start to see demand for, especially on the FMEG side, which perhaps may start to pick up a little bit. Is that have you looked at that? Is that a factor at all?
Yeah. So I'll, related to the real estate, I'll talk on this wire. So wire, which has been quite muted for this quarter as well. That's expected to improve in the Q4 onwards with the real estate deliveries. That is the one. And also in the FMEG space from the last a couple of a quarter, fan segment is not performing, especially the Havels or Crompton. The fan division is quite a flat. That also expected to come back, but definitely that's also there is a factor of a seasonality in that as well. But as you ask, related to the real estate, fourth quarter is expected to come with a wire demand to come in. And also to highlight here, just to highlight here that the copper, which has been quite flat in the Q3 as well as now, so that is also drive the uptick in the wire demand for a Q4.
So, since you mentioned copper prices, let me come back to margins, because you did say that there will be some margin expansion, at least year on year. If you could revisit that number, just break down margins for wire and cable separately, what you expect there, and for FMEG separately, what is the margin performance this year and what's the trajectory going ahead on margins for both of these segments?
Yeah, definitely. So wire and cable segment expected to see an improvement on the YOY side, on the even to some extent the sequential numbers improvement in the margin, because copper and aluminum prices, if I look at on average basis, 1% increase in the copper prices sequentially and around 8 to 9% for aluminum, and that was a quite stable or in the upward trend. So we are expecting sequential improvement of nearly 100 basis points for a wire and cable companies. Whereas on the FMEG segment, if I look at the FMEG segment, especially in the ECD portfolio, that is a sequential improvement we are seeing, but a YOY is still that is quite down on the margin front. So say example of a ECD portfolio of a Havels, we are expecting still YOY around 200 basis point lower number, and Crompton is also in a similar like a 50 basis points a lower number in the ECD portfolio. So because the demand is not so great, and especially in the fan, that also led to the contraction in the margin for the FMEG portfolio.
All right, Praveen, we'll leave it there. Thank you very much for joining us and running us through your expectations for these spaces in the third quarter. A bit of commentary here as well. Interesting news flow at the bottom of the screen. Tata Power has essentially submitted bids in the privatization efforts in the UP government, 2 discoms there. And this is source-based information which is coming through. So Tata Power at about 362. We'll take a quick commercial break here. We're going to come back more on this story and commodities in focus, of course, as well on the other side.
Just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning. And obviously, I just gave my 200% and I got that bronze back. So,
right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
We'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is, I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play? Is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports?
Welcome back. That news flash at the bottom of the screen, Tata Power submitting bids for privatization efforts at the UP Discom level. Vivek is here. He's getting that information. Vivek, over to you.
Well, that's right. This is a very interesting and an important development as far as the power space is concerned. After quite a while, we are seeing efforts being made towards privatization of state discoms. What we understand from sources that in the recently put out tender by the UP Discom or by the UP state, Tata Power has evinced interest participating in the privatization. Remember, there are 5 discoms in the state of UP, out of which 2 discoms are going in for privatization. So Tata Power submitting bid, interested in privatization for 2 discoms. We reached out to Tata Power. At this point of time, they did not have any comments to offer to us. Remember, this particular process has been aided by the fact that Tata Power, which recently acquired a discom in Odisha, has been able to go ahead and reduce the AT&C losses quite significantly and materially in that particular state. That has also aided the efforts as far as privatization of discoms is concerned. Now, talking about which are the 2 discoms in focus, the first one is Dakshinachal Vidyut Nigam Limited, and the other one is Purvanchal Vidyut Vitram Nigam Limited. These are the 2 discoms out of the total 5. Now, when you're talking about what's exactly transpired in the last couple of sessions or last couple of days, the Uttar Pradesh has invited bids via tender. This is for privatization, as well as PPPs, public-private partnership via JVs of 2 state discoms. They have taken the initial steps towards enabling private-public partnerships in this particular space. And remember, this particular tender that has been put out in the public is inviting consultants as well as transaction advisors. The tender aims to go ahead and enable public-private partnership. And along with that, what needs to be seen is the nature of this particular partnership. We understand that 49% will be continued to be held by the UP State Discom, and the remaining 51% will be held by the private company, whichever company goes ahead and manages to win this particular bid. It's an important development, and it'll be interesting to see how long this particular process takes. Remember, there has already been a certain amount of pushback for privatization of this particular discom itself.
Okay, that's an important story, Vivek. Thank you very much for getting us those exclusive details. And by the way, I should add that apart from Tata Power, which of course is reacting to that individual development, in general, power stocks are seeing an upward bid today, whether it is NTPC power and power related, sort of the supporting infrastructure as well. So whether it's a power grid, NTPC, look at BHEL, look at even the financiers, PFC, REC, all the stocks are up and about. Adani Power also is slightly higher. So power as a space is charged up. But now let's look at autos, because a couple of auto stocks are also finding some traction today. So Darshan, what are you picking up?
So BofA Securities has today come out with a note releasing its theme for FY26 or CY 2025. So first, talking about the overall growth for the entire auto subsegment, it's seeing a growth in CY 25 in the range of 5 to 7%. For passenger vehicles and trucks, it sees a growth in the range of 4 to 5%. It says that after a slow FY25, it sees a minor pickup in FY26. For two-wheelers volume, it believes that it might pace down. In FY26, it sees a growth in the range of 6 to 7%. Against 11% that sector recorded in FY25. For tractor segment, it sees mid-single-digit growth for second consecutive year. Now, in the key theme, it has mentioned 5 sources of growth. In the first, it's exports. It says exports are well poised for low to mid-teen CAGR for both two-wheelers and passenger vehicles. And Africa and Latin America boost will be for two-wheelers, and that will be driving strong rebound for both Bajaj Auto and TVS Motor. Second is electric. It says 2025 can be an inflection year for electric for passenger vehicles, and M&M's launches are looking promising as for BofA Securities. Third is economy. It says mass segment recovery in passenger vehicles is long overdue, and affordability is starting to ease now with softening car prices. Fourth, alliances and value unlocking. It says India is a rare growth and scale auto market globally, and it sees global tie-ups strengthening further going forward. Also, it believes that after Hyundai's listing, it paves way for more listing by global players in Indian market. And last, it believes that global exposure to weigh down for suppliers like auto ancillaries and EU weakness, China EV competition and tariff uncertainty are risks galore. Now talking about the stocks, first is Maruti. It has upgraded the stock to buy from neutral and target is rupees 14,000 per share. Amongst two-wheelers, its key buy is Bajaj Auto, and here target is around rupees 11,000 per share. And amongst auto ancillaries, it has downgraded Bharat Force to underperform and target is rupees 1,100 per share.
All right. So thank you very much for that. There is in the broader market some recovery which is visible. 1,400 stocks are higher and about 1,000 stocks are lower. For the Nifty, though, it's just 30 points. Mitesh is with us to run us through what he's making of the trade. First hour, Mitesh, and any new recommendations?
Yeah. So, Prashant, the market, has been slightly choppy and not giving a directional move. I have one buy and one sell. UPL is something which I like. So UPL is a buy with a stop at about 539 for targets of 560. While Bata India is on the sell side. I recommend selling here with a stop at about 1337 and a target of around 1285.
Okay, all right. Got that. Thanks very much, Mitesh, for the call. So we are going to take a quick break on that note. Come back on the other side, and the power sector is really charged up, like I was saying a while back, and that's exactly what Lata discusses with the panel of experts on Indianomics. She will be discussing what lies ahead, what the expectations and asks from the budget are. Nikhil Nigania of Bernstein, former Coal Secretary Anil Swaroop, and former NTPC Green CEO Mohit Bhargav, as well as Sabyasachi Mazumdar of CareEdge Ratings.
And making sure we do better at Olympics year after year. Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues like these will definitely help them to come up and think that yes, we also have something to actually look up to.
Hello and welcome to a special Indianomics on the power sector and what it can expect from the budget. Actually, our sister channel CNBC Awaz last week broke a story that the government may come with a new power policy along with the budget or as part of the budget. The key issues that need addressing in the power sector, of course, are, as always, health of DISCOMs And then new ones like tweaking the rooftop solar scheme if needed, import duties on solar modules and solar cells, which are going to become very important because of President Trump, battery storage, that's with battery prices crashing, nuclear power, the new baby that the government will have to take interest, and green hydrogen, whether the old juices still remain. Today we have with us an elite panel to discuss what should a power policy contain, if indeed there is a new policy. Joining me are Mr. Anil Swarup, former Secretary, Government of India, handled, of course, coal, the most high profile. Mohit Bhargava, the Senior Advisor, IECC, University of California, but more importantly, former CEO at NTPC Green Energy. Nikhil Nigania, the Director and Senior Analyst at Bernstein. And Sabyasachi Mazumdar, the Senior Director, Care Edge Ratings. Gentlemen, good morning. Thank you very much indeed for joining me. Well, you know, we are expecting that there may be a policy. These are, of course, usual pre-budget news breaks. So I don't want to give the impression there is one, but there could be one. Let me start with Mr. Mohit Bhargava. Mr. Bhargava, inevitably, distribution has to be attended to. For all the efforts of the last 30 years, the losses continue. ATC losses are actually mounting. So what would you expect if there is a policy on distribution?
Thank you, Ms. Lata, and thanks for having me. And good morning to everyone else on the panel. Yeah, policy is expected, as you said, but honestly, we really don't know because the government operates in its own ways. If you permit, I'll just take a few seconds on IECC. IECC is actually India Energy and Climate Center at University of California, Berkeley, is actually helping the top government officials and policymakers to take decisions for economic growth and make it more sustainable. And in this, we have been supporting various departments, including earlier the coal ministry also, and we continue to do so. The fact remains that while...
Yes, sir. Go ahead, we could hear you. Well, I think I'll get Mr. Anil Swarup on the matter. Mr. Swarup, in your career, not just in coal secretary, but perhaps also in Uttar Pradesh, you would have seen this unending problem of distribution. They're not going away. If there is a policy, what will you expect?
I hope there is no policy. We don't need policies now. We need action plan.
Okay.
I remember meeting Mr. Modi in 2014 when the crisis was on both in coal and power sector. Unfortunately, the crisis in power sector was not as recognized as the coal sector. But ultimately, they came up with Uday, which was a brilliant policy, very good policy. So we must understand what is required in this country. It is not set of policies, and I hope they don't waste time on policies, because you will have a lot of time discussing those policies here, with ultimately 10 years down the line, nothing would have happened or not much would have happened. So what we need is a real action plan. And in an action plan, we must understand if a thing is not happening, why is it not happening? We don't really address those issues. What we discuss is policies, policies, and policies. Even today, you will discuss policies, not going into the details of it. Let me give you an example. This power sector has been by and large sorted out in Gujarat. Now, my question in 2015 and even now is, why can't the Rajasthan government sit with Gujarat government and work out a clear-cut action plan? Because the terrain is similar on both the states. So we will end up discussing policies here.
Yeah,
we will not discuss the action
no,
plan.
Mr. Swarup,
My suggestion to you would be...
That point is absolutely valid. That we have to take
why are we wasting
successful
time here
examples.
discussing policies?
But
no, let me clarify.
Yeah.
Since you called me here, let me clarify. The objective of any discussion should be to move ahead. And my contention is very clear. We are trying to correct things sitting here in Delhi. We are sitting here and discussing policies in Delhi. The problem lies in the states. And if you compare why coal happened between 14 and 16 and power did not, Uday, the sun did not rise, because everything was being done here in Delhi. What really needs to be done is go down to the states, sit with the states, understand the problem, work out a clear-cut action plan, and I hope there is no wastage of time in coming up with another policy.
Okay, fair enough. That having no policy is also a policy, and we have to see whether any action plans will come through. That need not come as part of the budget at all. But Mr. Bhargava, I was asking you whether you expect any announcements on, privatization, for instance, of DISCOM. very, uniquely and importantly, the Uttar Pradesh government has announced privatization, I think, of one of its discoms. That's big news, and we have some breaking news today that Tata Power could be in the fray. Your thoughts, do you think that something can come as part of the budget or along with the budget on discoms?
No, Ms. Lata, I think you need to understand that distribution is a state subject. So any news regarding, if any news regarding privatization of discom has to be at the state level. But one more thing is important, that I think this has been established largely clearly, that privatization or not, that is not the point. The point is that there has to be accountability and responsibility at the discom level, and which, if I may add, Anil sir mentioned about Gujarat, but we have seen now that happening at many other states. So many states have actually improved their losses significantly. They've come down dramatically. A couple of them are actually making profits also, and I'm not talking about the private discoms. It's the government discoms which are doing very well. So
Yeah,
it
I
can
take
be
your
done.
point, sir. But the RDSS was a centrally mooted, plan, and that was intended at the distribution scheme. So, is it possible that, as part of the policy, if there is one, something can be done for encouraging privatization or discouraging losses?
No, discouraging losses, the central government has always done, and you rightly mentioned RDSS, and there were a couple of schemes earlier as well. But if privatization has to happen, and as you mentioned, UP, I also read that report that they're looking at Kanpur to take it forward. So that's ultimately the decision of the government. I would say it's also political will, and if they feel comfortable taking it forward, why not? But I must say, it doesn't mean that privatization is the panacea.
Yeah.
It can be, we have examples where it hasn't worked very well. And like I said, state governments have worked very well as well.
Okay. Well, I think in more cases, privatization appears to have worked, but I take your point in UP. I believe there are some union issues as well. Nikhil, to come to you, you don't have to stick to distribution, but broadly, if there is a policy and if it includes distribution, what will you expect or what will you want?
Sure, Lata. So from a policy standpoint, see, distribution is the Achilles heel of the sector. Absolutely no doubt about that. I think everyone will agree to that. In terms of the solution, it can be multifold. One, obviously, the RDSS scheme with the central government has run, that continues as part of the next year's budget as well, those expenditures to improve health of discom. That seems business as usual. The second thing, my view is AT&C loss reduction. Private discoms we have seen in cities, and now Odisha is one good example where a private entity, Tata Power, is transforming the distribution business. It might not always happen, I agree, in the right direction, but at least till now, we have more cases in favor of private entities transforming discoms for the better. And the UP instance, the two discoms actually are being considered for privatization. Should be a positive from a discom health perspective as well, is what we feel. From a policy standpoint, if one asks, see, if you look at countries abroad, in many countries, you have a multiple power retailer model. In India, for example, only Mumbai is the only place when we have multiple distributors selling power. So if you could have sort of a competitive space in distribution as well, which is monopolistic in most parts of the country except Mumbai, through multiple licensees or, segregating the line from the retail bit, that could help improve health of discom and the
maybe that could be placed as a goal. Okay, let's move away from distribution. Sabyasachi, is there anything else that you can expect, say, either in terms of nuclear or, green energy, renewable? Is there anything where a policy intervention is even needed?
So to answer that question, basically what we can expect from the budget is maybe something in the line of additional funding, either for the grants, continuing with the grants component for RDSS, or maybe some viability gap funding for various schemes like hydrogen or green hydrogen or nuclear, etc. But by and large, as Mr. Swaroop points out, most of the action will have to happen at the state government level, beginning from the discom side, because once the discoms are financially viable, they are able to afford all kind of solutions. For instance, the solutions that we have, like batteries or anything, all these are expensive solutions. So, and it boils down to the fact that many of the discoms don't have the financial muscle to, use all these solutions for meeting their power requirements on a 24/7 basis. So really, it really boils down finally to the discom sector.
You know what? I'll tell you, the recent policy interventions have gone against discoms. For instance, rooftop solar, that has taken away their best customers. They're able to fend for themselves. Or solar cells, you want to protect the country from cheap Chinese goods. But who pays more expensive solar modules? The discoms. So, what you want to help elsewhere, it seems to be hurting the discoms. But let me digress for just a minute. The power sector is on fire at this point in time. As I speak to you all, I think the very presence of all of you has given some wings to power stocks. So I just need to attend to that for a minute. Nikhil, what part of the power sector, is worth buying at this juncture? I'm only asking because NTPC up 3.3%, BHEL up 3.2%, Power Grid 3.2%. I think we need to address, are these stocks good value for money? What is the positives in this space?
So for the broader space, if you look at the themes playing out, number one is acceleration in power demand. Although the near term it's been soft. In the medium to long term, we expect power demand to grow at 1x GDP. The second theme playing out is a tight demand-supply situation in the evening hours when the sun is not out, which aids the thermal story for NTPC and even BHEL for that part. The third theme is the grid, which is, the heart of it all. And grid becomes the challenge as we look to add a lot of renewables that do in remote locations in Rajasthan and Gujarat, which aids the story for power grid. And fourth is energy transition, which is well understood, an aspiration to reach 500 gigawatt renewable from 200 today by 2030. In terms of space we continue to like the public sector names, actually, NTPC, Power Grid, and even the lenders to play this CapEx story in India. They've been a bit soft over the last few months, largely as demand has been a bit tepid. Power demand has been a bit tepid. But our medium to long-term outlook remains the same. Okay. And our preferences in terms of stocks also we retain.
Okay. REC and PFC. Okay. In case the discounts are not able to muster up enough money to pay back, there may be a problem for these two. But as you say, at the moment, things are going good. Sabyasachi, to you as well, and then I'll come on more policy questions. Which looks like the healthier part of the system?
So right now, if you look at, traditionally the three legs, the way as a rating agency we have looked at is typically we consider the transmission to be the safest leg in the sense that typically the risk factors are relatively moderate compared to the others, followed by generation and followed by the distribution. So more or less over several years, I have not really seen the inter-se, risk, but what has happened very lately, of course, is that the thermal, there was a point in time where we would have considered thermal, most rating agencies would have considered thermal to be much more risky than renewable. But right now we are seeing because of the, supply-demand mismatch that, Nikhil has alluded to, the things have really looked up for the thermal sector, and we expect that to continue at least for the next 2-3 years, if not beyond that. Okay. See, what is happening right now is that, if you have to divide the whole day into solar hours and non-solar hours, so during solar hours, given the capacities that we have right now, obviously even in the peak hours, let's say we are looking at FY26 about 270, around 27 we're looking at about 285 to 290 gigawatts.
We are running out of time, Sabyasachi. So which is the healthy part? You say thermal still is positive. What else would be positive?
So renewables, of course. Renewables, of course, will remain increasing part of the pie. So obviously they will be, but obviously ultimately all of these depend upon the distribution sector. Ultimately the final cash flow comes from the customer to the transcos and discoms, transcos and gencos from discoms. Okay. So ultimately, that still sector has to be.
That still is the Achilles heel, as Nikhil said. Well, I have lots more to ask in terms of what can the government announce on nuclear, what can it announce on batteries, storage, the area that is, the cutting edge. All those questions to my guests after the break. Bazaar viewers, you will get to see the entire show after market hours.
Shoppers Stop climbs more than 5% on the back of strong third quarter numbers. The company reports double-digit growth in revenue and EBITDA. Higher other income also boosts profit.
HDFC AMC shares surged nearly around 4% after the net profit grows 30% on a year-on-year basis in the third quarter. Nomura issues a buy call on the stock. Nuvama too has a buy rating and raises its target price to 5,200 rupees per share.
BSE sees more than 4% surge after brokerage firm Nuvama initiates coverage of the stock, a buy rating and a target price of 6,730, citing derivatives segment to grow despite regulatory challenges.
Auto stocks, Maruti as well as TVS climb higher after BofA upgrades both stocks. Maruti is upgraded to buy from neutral rating with a target price of 14,000 rupees, while TVS is upgraded to neutral from underperform with a target price of 2,625 rupees a share. Hello and welcome to Chartbusters. I'm Nigel and with me is Manglam. And Manglam, I think we're the good luck charm. The markets are at the high point of the day. You know, even on down days, Manglam, at around 10:30 a.m., it seems the bulls, they try to get their act together. And as we speak as well, it's not the headline index so much, but actually the broader markets as well that have gained strength. And the mid-cap index from being down close to around 0.2%, that's pulled back in the green. Hopefully, the bulls can hold on to this footing, and in fact, we can see further uptrend from here.
I don't mind taking the credit for us being the good luck charm for the market. But interestingly, what has happened today is that in the first hour itself, the Nifty has managed to cross yesterday's high. Yes, there was a bit of a sell-off yesterday, but after 9 trading sessions, is the first time that the Nifty is made a slightly higher high. So that is something that, will give bulls some sort of happiness after the big fall that we've seen. So maybe some comfort that may come by in today's trading session. And tomorrow, of course, we'll have the weekly options expiry play out for the Nifty itself. The Nifty Bank doing well. The broader markets as well have seen good moves in today's trading session, following up on yesterday's 2.5% up move as well at the index level. Among those stocks which are gaining, one of them which is buzzing around is Shoppers Stop, on account of its third quarter numbers. And remember, the third quarter obviously is seasonally strong for all these retail companies, and in that, led by festive season, the companies reported an 11% growth in their revenues and also close to around 13% jump in their EBITDA. So as a result of which, the margins have improved by about 20 basis points. If you look at the net profit, there's a 40% jump, reported jump from 37 crores all the way up to 52 crores. What explains that is the other income, which is gained from about 3.5 crores to about 22 crores because the company got some money which it put aside for its sales tax, which is now recognized in the other income as the matter was closed. So as a result of which, the net profit moved higher, but some of the internals are fairly strong as well. What am I looking at in terms of premiumization, premium products doing extremely well, overall volume-led growth of 9%, like-for-like growth of 4% as well. The only fly in the ointment was the beauty business, which grew just about 3%. The street thought that it would see a much bigger growth because of the company's thrust out there. Fragrance in that has been growing fast, and that's something that all the other players have been calling out as well. Fragrance as a category has been doing well, and this time around for Shoppers Stop grew by 14%. The other thing I'm looking at, with the success of Trent, a lot of these companies have gone ahead and put out their own value fashion chains, and as a result of which, Shoppers Stop started this business called Intune, which now has 63 crores in revenue, so growing very fast for that. And the street is betting on some growth in the Intune business itself, perhaps replicating something like what Zudio has done. So we'll keep an eye out on Shoppers Stop. Of course, stock hasn't moved much over the last 12 months or so. So maybe on the back of underperformance as well, the stock has seen a bit of an up move.
All right, Manglam, big up move is what we're seeing in today's trading session. But the markets, as we mentioned, they're holding with decent gains and seeing some kind of follow through. Are we good for more? To help us out with that, Chandan Taparia joins us on the show. Hi, Chandan, what will you do? Buy into the Nifty? Do you expect this, bit of a pullback, mild pullback to extend on the way up?
Good morning, Nigel and Manglam. Thanks for having me. So the Nifty is holding from last 2 trading sessions, even after the absence of follow buying interest. The good part is that somehow it has been moving in between 23,000 to 23,333. But the conviction will come only if holds about 23,333 zone. Because earlier in the month of November, when it formed the bottom, it witnessed a recovery of more than 1,500 points. So the same sort of level near 23,333 would give the strength for the upside. So we have to play the range between 23,000 to 23,333. About 23,333, one can add the long position for further 500 to 700 points move. Talking about Bank Nifty Index, it witnessed decent recovery on the last trading session, but on the weekly chart, it has broken a rising channel, which is working well from last 2.5 years. And support was earlier at 50,000, that could act as a hurdle. So we have to play the broader range in between 48,500 to 49,500, and above 50,000 only. The fresh leg of rally could be there, or the negative move will nullify to start the next leg of rally. So in both the indices, we are witnessing the range bound move with capped upside and support based buying. And I believe that sector and stocks will do better than getting the more sense on the index wise. Looking at the stock, first there is buy on Indian Hotel. One of the strongest counter which has completed its corrective move of last 6-7 weeks. Major trend is positive. It has taken support at its 50-day exponential moving average. It managed to hold 750 zone. Put writing is visible at the lower side, so up move could be seen. Recent corrective move provides the better risk-reward ratio, so one can buy with support of 790, and Indian Hotel can head towards 840. Second trading idea, that is buy on Escort. Positive on the Maruti and Escorts from the auto peg with bottom out approach. Escorts has seen a consolidation breakout of last 30 trading session. It surpasses 50-day exponential moving average after a long time, which is getting a bullish crossover for bullish stance. So with support of 3,400, one can buy for an upside target towards 3,650. Last trading idea, that is buy on BSE. We have positive view on the entire capital market theme, whether be it exchanges, depository, broking, and AMC. And Bombay Stock Exchange is one of our preferred trading ideas, where we are expecting 15 to 20% up move on the positional point of view. On immediate point of view, we are expecting 5 to 7% up move. The major trend of the counter is positive. It has completed its negative price stance and turning upwards with major price reaction. So positive price pattern can take it towards 6,000. One can buy with support of 5,600 in BSE.
Okay. Right. BSE and Indian Hotels. Do you have a view on names like Strides Pharma, Indus Towers, and Aarti Industries? All of them are spiking currently at the high point of trade, Chandan.
Yeah, so let me first comment on the Indus Tower. The stock has bottomed out with some short covering activity. We have noticed that double top kind of formation is visible on the weekly chart, which indicates some uptick in the counter. Just 9 weeks back, it made the bottom near 315. 3 days back, also the same bottom is processed. So I believe up move could be there with support of 342. Your Indus Tower can head towards 375 kind of level. Apart from Indus Tower, Star and other counter could be in focus. Talking about Star, it has taken support near 590 zone and negated its lower top, lower bottom. So with support of 635, this counter can head towards 680 kind of level. So both the stocks looks good, expecting 3 to 5% surge in the price with some recovery in the broader market.
Okay, all right. Thanks a lot for that, Chandan. Well, let's shift focus then to our special segment. We get a few ideas for profit from Money Control Pro. Madhu Chandra Dey of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu?
We are talking about Tata Consultancy Service, or TCS, that reported a tepid revenue performance in the quarter gone by, impacted by seasonality. The revenue in terms of reported currency decreased by 1.7% sequentially, and in constant currency it was flat. All other markets except for regional markets decreased in the quarter, and in terms of industry verticals, all the 8 industry verticals showed a degrowth. However, despite the tapered revenue performance, the company managed to improve its operating margin by 40 basis points sequentially, thanks to productivity gains, improvement in utilization, and pyramid rationalization. And these factors are expected to contribute to margin gains going forward as well. The quarter saw a very strong improvement in order inflows, and this was the best Q3 in terms of order inflows for the company. The management alluded to order gains from all the verticals and also gave a very optimistic outlook on the pipeline. However, what stole the show for TCS was the commentary that CY25 is expected to be much better than CY24, riding on demand recovery, especially an improvement in discretionary spending. We see limited downside in the stock given the improving environment for technology spending and a very decent dividend yield that the stock offers.
We take that point. Thank you for joining in. With that, take a short break, come back on the other side. We get you more on the markets and a lot of stock-specific action. You don't want to miss it. Stay with us.
2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on.
Welcome back. Well, the broader market seemed to have got its mojo back after a lot of selling that we saw in the previous few trading sessions. Yesterday as well as today is quite good. And that's the reason why the mid-cap index is now at the high point of the day. Pull up a few stocks. You have Stovecraft. Big up move is what you're seeing on that stock. Remember, it was an underperformer after its listing, but now it's pulling back. Zomato as well, from around 300 rupees, it corrected to 235 rupees. Now that one as well is seeing a bit of an uptick, and we'll be looking for the Nifty review, in the next 1 month or so. Maybe, in fact, Zomato could make its way into the Nifty, so we'll have to keep an eye out on that one as well. But let's focus on a couple of numbers that came in late in trade. HDFC AMC, it's buzzing post a strong quarter and some positive brokerage notes. Vamakshi joins us to dissect that for us. Vamakshi.
Well, Nigel, HDFC AMC reported their numbers yesterday, and it was a good set, better than what the street was expecting. And a couple of brokerages have, covered the numbers for us. HSBC has a hold rating on this counter with a target price of 4,350. They say that rationalization of commission payouts and control on operating costs led to a strong PAT growth in the third quarter, but the market share has stagnated in the equity AUM part, and SIP flows could, keep punchy valuations under pressure. They've also gone ahead and raised their FY25 to 27 EPS estimates by 0.4% to 4.1%. There's another note that has come in from Nomura. They have a buy call, target price of 5,250 rupees per share. They've gone ahead and raised their FY25 to 27 estimates by almost 2 to 3%. They're building in strong operating profit CAGR of nearly 20% over the same period, and they're expecting it to largely track average AUM growth. Lastly, keep an eye out on a note that came in from Nuvama as well. They've got a buy rating. They've raised their target price from 5,150 to 5,200 rupees per share. They say that the company is steady sailing despite choppy markets. Yields are expected to improve quarter on quarter. The operational metrics this time around were quite steady. They're building in improved yields, and therefore they've gone ahead and lifted FY25, 26 and 27 estimates for net operating profit by 3.4%, 4.1% and 3.5% respectively. So overall, a thumbs up coming in for HDFC AMC from brokerages as well.
Thumb and stock both up. Thanks a lot for that, Vamakshi. Well, let's tell you about Welspun Corp, and that one's gaining in today's trading session. Before that, let's tell you what happened in November 2024. The company had intimated about the board's approval for setting up a 350,000-ton greenfield LSAW pipe facility in Saudi Arabia. Now, and yesterday, the management has given clarity on this. They say that Saudi Aramco and Welspun Corp, well, they have signed a strategic MOU. The company has also gone on to add that this plant will commence operations from the middle of 2026. The question is, if they're already given a heads up in November, why is it positive? A couple of points out here. The MOU with Aramco, it gives comfort of the buyer support, and also most of the production can be picked up by Aramco themselves. And this could also mean that they get approvals on a rapid basis. So that's one good news, because a big name coming in there, signing an MOU out of that 350,000, maybe 50% or more, goes to Saudi Aramco itself. Additionally, from Saudi to the United States or even to Canada, there is an FTA. So that means that even if Trump comes out with duties, well, they are not subject to that. And as it is, there are duties in place which they'll not be subject to as well. So in fact, Trump's policies could be good for Welspun Corp because he's been talking about drill baby drill, which bodes well for them. And also if he puts additional duties, then they'll be exporting from Saudi Arabia to United States. So they will not face the heat of Trump's policies. Finally, analysts they expect payback from this particular plant to be roughly around 3 to around 4 years, going by a rough back of an envelope calculation. So put all this together, they had announced this in November, but the follow-up that came in yesterday with Aramco getting included, the street has read it positively, and that's why the stock has come up from the low point of the day. In fact, it's sitting with a gain of close to around 5%.
All right, Nigel, that's about Welspun Corp. We were talking about Shoppers Stop as well, right? And taking cue from that, a lot of other retailers are doing well too this morning. So we have something like a Raymond. Remember, this has been one of the stronger wedding seasons, and this year itself, as against last year, there are a lot more weddings, wedding dates. So we have Raymond, which is picked up. We have names like Siaram Silk Mills, also beneficiary of the wedding space, and Kumbh is talking about the hospitality pack. We have Indian Hotels, which has moved to the high point trade off trade as well. Microfinanciers, they are the stocks in focus, following notes coming in by brokerages Jefferies and Goldman Sachs, both of them. Abhishek joins in to tell us more about that space. Abhishek.
Data released by CRIF is what these guys have been speaking, that is Jefferies and Goldman Sachs, and it is a back-ended data for Q2 FY25. So data suggests that, lenders have cut disbursements by 29% YOY, which has led to weakening of AUM by 4% on a sequential basis. So Jefferies also says that the number of borrowers and ticket size of loans have fallen after many years. So overdue loans have risen from 2.7% in June 24 to about 4.4% as of now, led by leveraged ones. So asset quality may take some time to normalize and loans may unwind, leading to pressure on the earnings front. With respect to Utkarsh small finance banks, Spandana and Credit, they have higher share of more than 4 loans per borrowers, which can impact them negatively. Bandhan Bank, as per them, can fare better. Now Goldman Sachs has written on Credit Access Grameen, they have a sell rating and a target price of 577 per share. They say that they have analyzed bureau data to see any signs of recovery in MFI industry, where they don't find any encouraging point at this point of time. So incremental bureau data points that 37% of MFI borrowers do over leverage or overlap with retail borrowers as well, and that delinquency over there has been increasing on both MFI as well as retail loans by the same borrower. This represents about $18 billion of retail loans and about $10 billion of MFI loans. With respect to stock prices being off low, if you take a look, Equitas, Credit Access Grameen and Spandana Spurti, they are off lows anywhere between 12% to 20%. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, time to slip into a short break. We'll get you more on markets as well as on stock-specific action.
And that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the macro, the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned.
sharp insights in the political arena to all the excitement from the world of sports.
We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
At the high point of trade, as you can see, the Nifty led higher by a couple of heavyweights, HDFC Bank and ITC. That's the one which has moved to the high point of trade as well. But let's move on and let's talk about the government looking to sell stake in 5 PSU banks, while the street is expecting potential divestment in other PSU companies as well. Hormaz, you've compiled some data on the government shareholding in some of these PSUs. Can you give us some more details?
You know, when we last revisited this piece last year in January, that stake was valued somewhere around 2.5 lakh crores. But now, as of yesterday's closing, that stake has gone down to 2.1 lakh crore rupees. And that's also because of the correction that we have seen in a lot of these PSU names as well. Now, as of date, there are 16 PSU companies, including those 5 PSU banks where the government shareholding is in excess of 75%. 8 of those companies where the shareholding is in excess of 90% and the others is between 80 to 90%. Now, in some of these PSUs, at that point of time, at its peak, if you would consider, that stake was valued at over 3 lakh crore rupees. So from that peak, it's down to almost by a third as of yesterday's closing. Now, some of the companies where the stake is valued at the highest, LIC is a case in point. That's also where the government still holds around 96.5% stake. So that excess 21% stake is valued at well over 1 lakh crore rupees. Other companies include the likes of Indian Overseas Bank, IRFC, UCO Bank, and all these PSU banks that were in question yesterday with values of anywhere between 8 to around 20,000 crore rupees. Now, all of these companies have corrected anywhere between 25 to 40% from their peak, and that is showing in the decline in the government shareholding value as well, because at its peak, LIC's excess stake was valued at over 1.6 lakh crore, and same is the case for stocks like IRFC, Indian Overseas Bank as well, which was well over 30,000 crore rupees. As you just mentioned, it was yesterday's CNBC-TV18 news break that had sent all of these 5 PSU banks soaring up to 20%. Now, the DIPAM has also been mandated to bring an offer for sale route for a further stake sale in these PSU banks, and the street is also abuzz over a potential offer for sale coming in companies like Mazgaon Dock, which has been part of our D Street chatter as well, where the government still owns an 84.8% stake, and that excess stake is valued at over 4,500 crore rupees. So Mazgaon Dock in focus, a lot of these PSU banks are in focus as well, but the value of the government shareholding definitely has come down.
Okay, all right, Hormaz, thanks a lot for that. Well, you know, just a couple of more names. If you can pull up Paytm, the stock has seen a sharp correction from 1,000 rupees all the way to around 800 rupees. That one's seeing a bit of an uptick, and Chandan told us about Indian Hotels earlier. Well, that one as well has moved to the high point of the day. But we've completely run out of time on Chartbusters. You stay with us. Trading Hour comes up next.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Vivek Iyer, and the rebound in the markets continues for the second day in a row. The Nifty is up 100 points, now inching towards the 23,300 mark. But even better is the performance in the broader markets. The mid-cap index, small-cap index surging nearly 1%. The mid-cap index has recovered almost 2,000 points. From the low, just in a span of about 2 odd days. Stocks on the way up include banking names. So banks are doing pretty well. PSUs are higher, and you've got strength in some of the oil and gas names. Hi.
Good morning, Reema. Like you mentioned, second straight day after the kind of very weak session we saw on Monday. It's been a good bounce back that the markets have seen. Quite a few stocks on the radar. First up, from the auto pack is Maruti. Maruti is doing very well in the session. There's a BofA Sec upgrade that's come in. The stock is high by almost 2% today. Exchange stocks, something that been doing very well, all through this particular year. BSE as well as MCX are both of these stocks doing quite well. In fact, today Nuvama has initiated coverage on BSE and they have a positive stance on the stock. The other set of stocks, like you mentioned, you did mention utilities doing well, but within utilities, the power utility space is something that's doing very, very well. What's actually transpired over the last 3 to 4 trading sessions is the fact that there's been a lot of news flow, number one regarding stressed asset resolution, and also an important development regarding DISCOM privatization, something that markets as well as private power players have been waiting for. On the back of that, have a look at some of the power financiers that tend to gain once as resolutions come through, something that Sudarshan, our colleague, pointed out. PFC RSE doing quite well in the session today. This is after the 7 and 6% up move that both of them saw yesterday. And also Tata Power, JSW Energy on the back of news flow doing very, very well.
In fact, let's call Gautam Baid, equity advisor at Complete Circle's Stellar Wealth PMS on the show now. Gautam, thank you very much for joining in. Before we get to the markets, any thoughts on the power stocks and how they're positioned right now?
Well, Reema, first of all, wishing you and Vivek and the entire team at CNBC TV18 a very happy 2025. Coming to your question about the power stocks, I believe we are in a decadal upcycle for power, primarily driven by the artificial intelligence boom across the world. AI is very power intensive, and that's leading to a lot of investments in the power sector across the world. So the natural beneficiaries of such an upcycle in power is going to be the power financiers. And in India, we have PFC and REC, the pure play listed companies in this space. So I think they should do well for many years to come.
Okay, Gautam, very good to see you, and thanks for your views as far as the power space is concerned. Now, Q3 results, this just started trickling in. What is it that you're anticipating as far as Q3 is concerned? Any specific sectors that you are particularly positive or negative on?
Well, Vivek, first of all, I think this is the time to really be a bottom-up stock picker and to be a risk manager, because global volatility, not only in India, but globally, volatility is about to pick up sharply. driven by the surge in the global bond yields and the dollar index, and the upcoming imposition of tariffs across the board by Donald Trump once he takes oath next week. So I think we really have to focus on those stocks which are going to have sectoral tailwinds and earnings growth visibility. So in Q3, I would look out for the capital market players, the wealth management players. I would look for companies in the manufacturing sector, in the power and power ancillary sector. I think these are the pockets where you can see sustained growth in Q3. And generally, if you speak about the broader market, I think the broad-based rally in the mid-cap and small-cap space is largely behind us. From here on, the market is expected to become very narrow, and only select few stocks will outperform while the rest of the market stays in a broad range. So I think in Q3, you want to focus on those sectors where good earnings growth is expected.
So let's talk about some of the stocks that you like. Shilchar Technology. It's a small company. Market cap is about 2,000 crore rupees. So first, tell us what the company does. At what price did you enter in? And what drives the upside in this stock?
Rima, Shilchar Technology specializes in inverter duty transformers that are used in association with renewable energy generation projects like solar and wind. As we all know, the government of India is planning to raise renewable energy generation to 500 gigawatt by 2030, including an additional 260 gigawatt of solar and wind. So that is Shilchar's target market. And recently, the company completed a capacity expansion at its transformer manufacturing facility in Gujarat from 4,000 MVA to 7,500 MVA, entirely funded by internal accruals. The company maintains a healthy demand outlook from both its domestic and export markets. And its key export markets are the US and the Middle East, where the power infrastructure, which was created in the 50s and 60s, is now being retired and replaced. So the replacement demand is very high in the export market for Shilchar. The key risk in this particular business is that intensifying competition from peers can happen, as they can easily pivot towards manufacturing inverter duty transformers. There is a lack of entry barrier in this particular industry. However, like I discussed a short while ago, because of the decadal tailwinds in power transmission and renewable energy, I think Shilchar should continue to grow its earnings at a healthy clip. We bought this stock for our PMS clients at around 5,000 levels recently, a few months ago.
Gautam, just to take at this particular point, Shilchar with other, players as far as capital goods backward integrated players are concerned, there's been a bit of a worry in terms of not having enough raw materials, and also there's been a shortage as far as transformers are concerned. So how is Shilchar placed? And number one, raw material prices, how do they manage that? And number two, what is the kind of order book and demand trends they're seeing?
Well, firstly, I think you answered the question in your question itself about the shortage of transformers. Right now, there is a lead time of 2 to 3 years in the US for transformer orders. So basically, right now there's a big demand supply gap in the market, which will last for at least the next couple of years. I think where Shilchar really differentiates itself is that unlike many other domestic transformer companies, which are, like you mentioned, facing raw material shortage, Shilchar in its most recent conference call actually clarified on this point that they are facing no shortage of raw materials. Their suppliers are supplying them on time. So I think that's why in Q3 you'll notice, compared to other players, Shilchar should report very robust margins. I'm not about the exact order book size right now, but the management has guided for a 25% revenue CAGR over the next 3 to 5 years, and that earnings growth visibility is what is leading to our positive take on the stock.
And Zentech, it's had a 180% rally in the last 1 year. Is there enough juice in the stock to continue to move up?
Well, Rima, Zen Technologies is a leading beneficiary of the surge in drone warfare worldwide. And Zentech is among the few players which supply critical defense simulators to the armed forces, which beef up their readiness and capabilities. The key differentiator for Zentech is its in-house design capabilities. The company has got more than 75 plus patents, and the US currently is one of the biggest export markets for defense exports from India. And recently, Zentech signed an MOU with Florida-based AVT Simulation to gain an entry into the US market. Coming to the question about whether the stock still has legs to it, the management is guided for a revenue CAGR of 50% plus over the next 2 to 3 years, with an operating profit margin of 35% and a net profit margin of 25%. So at the current levels of 40 times FY26 earnings, expected earnings, I think the stock is fairly priced for the growth visibility that it offers. However, the key risk to the investment thesis for Zentech is delayed payments from the Ministry of Defense, because that can adversely impact its working capital cycle. So that is something to keep an eye out on. Again, a standard disclosure, we hold both Silchit Technologies and Zentech in Stellar Wealth Partners India Fund and Stellar Wealth, a PMS in Complete Circle.
Gautam, Zen Technologies, like you said, we also had the management a couple of days ago on the channel where they reiterated what you said. One worry as far as defense players has been concerned is that H1 ordering was very weak, especially in the domestic market. H2 is expected to be better. So do you worry a little bit about some of the targets in terms of execution maybe postponed to FY26 rather than Q3 and Q4 of FY25?
Well, that's the risk with any EPC company or any project related business like these defense companies and other power sector related companies. That risk will always be there. But if you look at the recent defense policy announced by Rajnath Singh, it's very clear that the government is going to put a lot of emphasis on defense spending. I think railway expenditure will have the emphasis on Kavach spending, but defense sector overall in various parts of the defense sector will get an increased allocation, most likely in the upcoming budget. So we remain very positive on the defense sector overall.
This fall that we had in IT stocks, particularly something like an HCL Tech, post its numbers. Were you surprised by it? And where do you stand on IT in general going into 2025 after the run-up that we've seen?
Well, HCL Tech management guidance was actually pretty decent, so I don't know why the stock sold off. But see, Rima, India is a growth market. You want to basically invest for high growth, because when the foreign portfolio investors invest in the Indian market, we are taking on various risks associated with an emerging market like currency risk and geopolitical risk and other forms of risk. So unless you target stocks and businesses which are having at least promise of 20-25% growth, the risk, honestly, the risk reward is not favorable. So that's why we avoid IT services stocks, both in our PMS and in our India fund. We would rather focus on those product-based IT companies or the SaaS companies, software as a service companies, which have promise of much higher growth. And I think that is the area to focus on, because these legacy IT services players, they are lacking innovation and they are not really showing that high top-line growth. These gains because of temporary currency depreciation, those are not sustainable. And those kind of gains are not given a high multiple by the market, because the market is very wise to see through the near-term uptick because of rupee depreciation. So unless you get organic volume growth and organic business growth, I think these stocks will broadly remain in a range for a long time.
Thank you so much, Gautam, for joining us, giving us a view on your markets, your top picks, and we'll have you soon on the channel to discuss some more. Well, time now for a short break. We'll put the spotlight on auto stocks and find out why Tata Power is buzzing in trade.
Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Trading Hour. Well, one particular set of stocks that's doing quite well is the entire auto pack. Sudarshan is standing by. There's a report from BofA Securities on the auto pack. Sudarshan is here with key details from that particular report.
So BofA Securities has today come out with a note releasing key theme for this sector. But before talking about that, it has said that for the auto sub-segments in CY25, growth is likely to be in the range of 5 to 7%. But for PV and truck business, after slow FY25, it expects growth to make a minor pickup, with growth coming in the range of 4 to 5%. But for two-wheeler, it sees growth coming down. For FY26, it sees growth in the range of 6 to 7% versus 11% that segment recorded in FY25. For tractor segment, though, it sees mid-single digit growth for second consecutive year, because in FY25 also sector is expected to see a mid-single digit growth, and even FY26 BofA Securities believes tractor segment will see mid-single digit growth. Now coming to the five growth sources that BofA Securities has mentioned, in that first is exports. It says exports are well poised for low to mid-teen CAGR for both two-wheelers and passenger vehicles, and Africa and Latin America will be boost for two-wheelers, and that will be positive for both Bajaj Auto and TVS Motor. Coming to the second, it's electric. As per BofA Securities, 2025 can be an inflection year for electric for passenger vehicles, and M&M's launches are looking promising as of now. Third is economy. It says mass segment recovery in passenger vehicles is long overdue, and affordability is starting to ease now with softening car prices. Fourth is alliances and value unlocking. It says India is a rare growth and scale auto market globally, and it sees global tie-ups strengthening further. Also, after Hyundai India's listing, it believes that there can be more listing by global players in the Indian market. Last is, it says global exposure to weigh down for supply. It says EU weakness, that is European weakness, China EV competition and tariff are major uncertainties that can be for auto ancillaries. Amongst the stocks, it has upgraded Maruti to buy, and target is rupees 14,000 per share. It has basically increased target to 14,000 from earlier target of 13,000. For Bajaj Auto, it's a key buy amongst two-wheelers, and here target is rupees 11,000 per share. Amongst auto ancillaries, it has downgraded Bharat Forge to underperform, and target is rupees 1,100 per share.
Thank you very much for that, Bajaj. For Bajaj Auto in particular, even as domestic economy is slowing down, their exports business is doing very well and now contributes about 45 to 50% of their overall volumes as of December, Jan. But Vivek, we are looking at Tata Power.
Well, that's right. This is a very important, interesting development as far as the entire power space is concerned. So what's actually happened is that on Jan 12th, there was a tender that was issued by Uttar Pradesh, or the UP Discom. What was this particular tender for? They've invited bids for advisors, and this is for a PPP JV model for 2 Discoms out of the total 5 Discoms that exist in UP. Now, what is it? This particular tender aims to go ahead and enable public-private partnerships or privatization of 2 Discoms. Remember, in this particular bid, the indicative manner in which the JV will be formed is that 49% stake will be held by the UP Power Discom, and the remaining 51% will be sold to the partner or the private partner. Now, what we are understanding, or what we are picking up from our sources, is that Tata Power has evinced interest, likely to bid, and has submitted bids for the privatization for both of these 2 Discoms. We reached out to Tata Power, to go ahead and get a confirmation on this particular development. At this point of time, they did not offer us any comments. But remember, Tata Power is already a strong player as far as supplier of electricity is concerned. They operate Discoms in Delhi, Mumbai, Ajmer, and Odisha. And especially recall, Odisha is the recent Discom that Tata Power took control over, and there has been material as well as significant reduction in AT&C losses as far as that particular Discom is concerned. So Tata Power, is keen. Remember, this is still, developing story. There will be more bids, there will be more tenders. And remember, there is already quite a lot of backlash that this particular tenders, the entire Discom privatization process will undergo, given the fact that this is a politically sensitive subject as well.
Okay, thank you very much for that. Get into a break. On the other side, we'll get you excerpts from our conversation with Jahangir Aziz from JP Morgan.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Welcome back. The Nifty is struggling a bit to cross the 23,300 mark. The high today was 23,293. We went there at about 11 o'clock, but from there, we've moderated a tad bit and now back to levels of 23,250. Tata Steel, M&M, BPCL, Sun Pharma, HDFC Bank. These are some stocks where we've seen a little bit of profit booking or a correction in the last 10-15 minutes. But let's get to the macro view. Now, earlier today, we had a chat with Jahangir Aziz, head Emerging Market Economics Research at JP Morgan, to get his view on the change in tariff and immigration policy, as well as the impact on the dollar after Trump takes charge. Listen in to that conversation.
It is possible that President Trump comes out to be very different from his rhetoric during the campaign. I'm neither brave nor imaginative enough to try and second-guess President Trump. So we are taking him literally. And as far as taking him literally is concerned, we think that the tariffs and immigration will be changed dramatically. And then later on, both tax policies and deregulation. So on tariffs, our view is that China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Why 60%? That's because President Trump, during his campaign, mentioned 60% several times. As I said, we are going to take him literally, and not try and second guess. I think, though, the news reports, etc., that has come since the election suggests that that may not be the only objective of the tariffs. Tariffs could also be driven by the objective of raising revenue, such that the tax cuts that he is proposing can be funded. Now, if that's the case, then our sense is that on January 20th or that week of 20th, you're probably going to get many, many more countries under the tariff umbrella than just China and Malaysia and Vietnam.
Jahangir, you're saying that Chinese imports will be tariffed at 60%. I just wanted to make that clear. So
that's a baseline. That's a baseline. Its current effective rate is 20%. We expect 20% to go to 60%. But as I said, that was our view back probably in December. I think the news flow since December suggests that perhaps it may not be 60%, maybe a tad less, but many other countries will be brought under that tariff umbrella. So tariff will be imposed on many of the countries, simply because that's the only way in which you can actually raise any reasonable revenue.
And you're saying other countries may also see these countries, especially from where China was using as points from where to send things into the US to avoid this tariff, right? Mexico, etc.
That was Malaysia and Vietnam. Okay. So this is going to be, our suspicion is that if you're going to raise revenues, you have to now impose tariffs on countries which were seen to be alternatives to China. You need to block that off. And therefore, many more countries will be brought under the element.
So Jahangir, I mean, I'm hearing you loud and clear. You're not in the camp that's expecting, this will ease out, and maybe it's all been a rhetoric and more a bark than a bite. Take your point, take your caution on board. But my question is that hasn't much of this, even if it plays out literally as what he's been saying, hasn't this been priced into the market with the dollar rushing to 110? I mean, have we already seen the worst of the market interpretation in the mayhem?
Really?
There's more to go.
I mean, you can at best take dollar euro, for example, or DXY. You at best can get about 6-7% of tariffs being priced. That's it.
Oh.
6-7% of tariffs is, I mean, any kind of FX arithmetic, if you break it down between the growth differential between US and the rest of the world, the interest rate differential, even after, especially after the change in the Fed call that we have done after the non-farm payroll came out last week. If you take those two factors, which are the usual drivers of dollar strength, at best you can say that the market is pricing in maybe 6-7% of tariff increase. That's the extreme.
Oof.
The 6-7%
tariffs could easily be significant.
On what? China? On China? On China?
No, the
average effective tariff increase.
Tariff increase by the US. So the tariff right now is about 2.3%. Right? So 2.3%, you add about 6-7%. That's about all that the dollar is pricing in this point in time. It could easily be significantly larger than that.
This is scary, but we need to understand, I mean, the full import of what you're saying, Jahangir. So you're saying average tariffs are 2.3%. The markets have right now with the dollar at 110, they've priced in maybe 6 to 7% increase. So China may be at 60%. What is the average overall increase that you're expecting, taking him literally, taking Donald Trump at face value at what he's been saying? And how much more than for the dollar to go? I mean, 115 more? The DXY.
I mean, you can easily add another 10 to 20% tariffs on the rest of the world. So 10 to 20% tariff on the rest of the world, that's the number that he's talked about, along with maybe not 60% of tariff on China, maybe slightly less tariff on China. That could well be what we see in next week.
Okay.
So what does it mean for the dollar then?
Index,
the DXY?
I don't think any of my strategists are willing to price that.
Okay.
See some very interesting insights coming in from that particular conversation. But time now for a short break. We find out why stocks like HDFC, AMC and BSE are buzzing in trade today.
So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
There are going to be nearly 250,000 ticketed guests attending the inauguration. In addition to that, there will be folks that are showing up to participate in a number of demonstrations that will be in the downtown area. The biggest threat, I think, for all of us remains the lone actor. Just in the past week, while President Carter was lying in state, we had 2 lone actors show up at the Capitol, one trying to bring in knives and a machete, another one who was trying to, what I believe, to disrupt the proceedings by setting their car on fire down in the Peace Circle area. U.S. Capitol Police were able to interdict these folks before they had a chance to do any harm. But that threat of the lone actor remains the testing.
Welcome back to Trading Hour. Well, HDFC AMC is buzzing this on the back of strong quarter and positive brokerage news. Vamakshi is here with more details.
Well, Vivek, it was a good quarter for HDFC AMC. They reported their numbers yesterday, and today we have a couple of brokerages giving their outlook on how the company performed this time around. First one is HSBC. They have a hold rating on this counter with a target price of 4,350. They say that rationalization of commission payouts and control on operating costs led to a strong PAT growth in the third quarter, but the market share for the company has stagnated in equity AUM and SIP flows, and therefore this could keep punchy valuations under pressure. They've gone ahead and raised their FY25 to 27 EPS estimates by 0.4 to 4.1%. There's another note that has come in from Nomura. They have a buy call, target price of 5,250 rupees per share, and they say that they've gone ahead and raised their FY25 to 27 EPS estimates by nearly 2 to 3%. They're building in very strong operating profit CAGR of almost 20% from FY25 to 27, and they're expecting it to largely track the average AUM growth. Lastly, there's a note that has come in from Novama. They have a buy rating. They've gone ahead and raised their target price on this counter from 5,150 to 5,200 rupees per share, and they say that the company has a steady sailing despite choppy markets. Yields have improved on a sequential basis. The company is also posting very steady operational metrics in their opinion. They're building in improvement in yields, and that is reflected in their EPS estimates and their net profit estimates, because they've lifted their FY25, 26 and 27 net operating profit estimates by 3.4%, 4.1% and 3.5% respectively. So overall, brokerages are giving a thumbs up to HDFC AMC.
Thank you very much for that. Minda Corp is another one, that's up close to about 4 to 5% in trade. Remember, the company announced a joint venture with Flash Electronics. So Minda Corp will acquire a 49% equity in Flash Electronics for a cash consideration of 1372 crore. The acquired company last year had revenues of about a little more than 1300 crore rupees. It's EBITDA positive according to reports, with margins of close to about 14%. The street is quite excited with this potential joint venture, 4.7% higher. But let's get to BSE, Bombay Stock Exchange, a bullish note by Nuvama. Hormus is here with the details.
Up and about in today's session is BSE, and that has been the case for most of the last month and a half, where the stock has been on an absolute tear. And that's also because Nuvama has initiated coverage today with a buy recommendation, a 67.30 rupee price target. There's another 24% upside from yesterday's closing levels. What they're saying is that key derivative segment for BSE, despite the regulatory challenges that it is undergoing currently, the changes that are taking place, it will continue to grow and it will act as a key growth driver for BSE going forward. And they are forecasting a revenue and an adjusted profit CAGR of around 40% and 71% over FY24 to 27. And they are also saying that once the lot sizes increase, the clearing charges will subsequently come down, and that will provide a big boost to BSE's margins going forward. And as a result, they also say that they also have multiple streams in place to boost top line growth despite the challenges that they are currently facing. So a bullish call on BSE, 24% upside is what Nuvama is saying. This is also a slew of brokerage notes that have come in the recent past as well. Goldman Sachs recently initiated coverage, neutral rating of 5060 price target. And Jefferies too upgraded the stock yesterday and raised the price target to around 52.50. Interestingly, the stock is well above both of those price targets as well.
Thank you so much, Hormaz, for taking us through those particular details. Well, before we go back once again to Hormaz, a couple of stocks, these are life insurance companies, both HDFC Life as well as Max Financial. Both of these stocks have seen a sudden sell-off, and both of these stocks now trading near the day's lowest point. But now, the government is looking to sell stake in 8 PSU banks, while the street is expecting a potential divestment in other PSU companies. Hormaz, you've compiled some data on the government shareholding in some of these PSUs. Give us those details.
From when we last revisited this piece in January of 2024, the current excess government stake in PSU companies was close to around 2.5 lakh crore rupees. It currently stands at 2.1 lakh crore rupees as of yesterday's closing. And now we have around about 16 PSUs where the government shareholding is 75% in excess of that figure, and 8 companies where the shareholding is in excess of 90%, and those include most of those PSU banks that we'll be talking about, and the other 8 where the shareholding is anywhere between 80 to 90%. Now, in value terms, well, at the peak value, the excess stake at one point of time was valued at well over 3.1 lakh crore rupees, and so now it's down by a third, but still continues to remain above that 2 lakh crore rupee mark. Now, some of the companies in which the excess government stake has a very significant value, LIC is a case in point, where that 21% excess stake that the government owns is valued at well over 1 lakh crore rupees. Same is the case for companies like IRFC, Indian Overseas Bank, and these smaller PSU names like UCO Bank and Central Bank of India as well, anywhere between 8,000 to 25,000 crore rupees. Now, at one point of time, at the peak, as I was just mentioning, the stakes were significantly higher. Most of these stocks have corrected anywhere between 25 to 40% from their peak, and as that shows in the decline in value as well, because LIC at its peak in February last year, that excess stake was valued at well over 1.5 lakh crore rupees. Same is the case for Indian Overseas Bank, IRFC, where that stake was almost 30,000 crore rupees each. And yesterday we made this news break about the government approving stake sales through QIPs and OFSs in these 5 PSU banks, and the street is also abuzz, which is as part of our D-Street chatter as well, that there is a potential OFS lined up for Mazgaon Dock, where the government owns around 84.8%. That excess stake is valued at well over 4,500 crore rupees as well. So PSU banks in focus, and that puts the spotlight on the other PSU names as well.
Thank you very much for that. That's the big story that we're tracking. But let's now head across to Mitesh for a quick technical check on the market. Mitesh, that pickup, that recovery is not holding. The Nifty is down to 23,200, and we've slipped nearly about 100 points from the day's high.
Well, that's right. Actually, this still looks like a market which is trying to bounce back, but the structure on the larger time frame on intraday basis, like 2-hour chart, hasn't changed. So the 15-30 minute charts were good, and we got a pullback. Now, this is still not suggesting any change of trend on the upside. So ending close to about 23,350 is what I suggested would be very difficult to get past, and we got a high of around 23,294 to 95. So it looks like the market bounce back might be coming to an end. It still be choppy. Not sure of a declining trend starting immediately, but I think getting past 23,350 would be asked and turn positive only once that happens. So till then, I think a trade with a mild cautious or a negative bias.
What about stocks, Mitesh?
Yeah. So on the stock side, CG Power is something which I would recommend to go short upon with a stop at 633. Look for targets of around 590, and Coal India is showing first signs of reversals, so keep a very tight stop at about levels of 373 half and look for a target of 395.
Thank you so much, Mitesh, for joining us, giving us a view on the markets as well as stock-specific recommendations. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Play Store or Google Play Store, or just scan the QR code on your screen.
Biggest justification for us being on at this heightened state of alert throughout the next week.
More than 30 miles of anti-scale fence will be used for the inauguration, more than any other NSSE ever before. The Secret Service's comprehensive security plan will continue to use drones as part of our protective posture. Do not be alarmed if you see these assets during the inauguration or in training in the days ahead. The Secret Service will bring agents and other specialists from field offices across the country to provide a full slate of visible and invisible security measures. We work side by side with our partners throughout the process as everyone plays an equal part in safeguarding this event.
Welcome back. Now, the fifth edition of the CRISIL India Infrastructure Conclave is currently underway, and this year's theme is Navigating India's Decarbonization Journey. To talk more about it, we have Rahul Prithani, Senior Director and Global Head of Energy Sustainability and Consulting at CRISIL, now joining in. Rahul, thank you very much for joining in. This is Rima here. First, if you could share the key findings of your report. This is the fifth edition, the fifth year, I believe, and what has changed from last year to this year?
Good morning, Rima. Pleasure to be interacting with you and all the viewers. So I think this year, what we do is every year we come out with a key theme in the infrastructure space, which is driving overall investments. And given where we are in terms of the energy consumption and growth journey and India's emissions, we are the third largest emitter globally. And going forward with our urbanization drive, investment in infrastructure, push towards manufacturing, our overall emissions are only likely to increase. And given that there'll be global pressure on India to act, decarbonization becomes very, very critical area. And given government's focus on, trying to drive decarbonization through various measures, we are expecting over the next 5-6 years till 2030, an overall investment of roughly 31 lakh crores in green investments, which will provide huge amount of opportunities for players in the renewable space, the EV ecosystem, players with emerging technologies such as green hydrogen and CCUS. Of course, there are significant policy challenges, but significant amount of opportunity going forward.
So you're saying, by 2030, we will require investments of 31 lakh crore in green energy?
Yes, it's all green investment,
All
not just
green,
energy.
investments. And what is the current state of funding right now? How easy will it be to get this 31 lakh crore? And outside of, say, renewables, energy, utility, and EV, in the other sectors, which may be carbon intensive also, like agriculture, manufacturing, we haven't seen too much by way of investment. Do you see that picking up?
No, so I think as per our understanding and what we have kind of, analyzed for established technologies where, we've seen where cost economics is working, like renewables, and renewables as well as, EV ecosystem. I think there clearly funding does not seem to be a constraint where, again, we'd see more and more debt funding coming through the banking channels, through DFIs going forward. And also from an equity standpoint, I think we'll see a lot of, operational assets getting monetized as we move ahead. So with those monetization of operational assets, there'll be adequate equity to invest in future projects. But as far as some of the emerging areas are concerned, like CCUS, like green hydrogen, like battery storage or advanced cell chemistry, now in many of these areas, I think funding will be a little bit more difficult. Here, I think the government has to play an important role through a mix of, incentive grants from their side, plus work a lot with multilateral banks as well as foundations to get in blended finance to ensure there is adequate equity and de-risk projects going forward. And also at the same time, we will have to do a lot to kind of continuously attract climate funds going forward, so that there is enough investment opportunity in emerging technologies, which is what we can fund going forward.
Understood that, Rahul. Rahul, you've mentioned clearly about the kind of opportunity. If I could, ask you to break down within the renewable energy value chain, which segment do you expect to see the most amount of spends in? And on that particular basis, which sector or which particular part of the value chain will you be most excited on?
So if you look at the entire renewable space, over the next few years, we are saying almost, 19 lakh crores of investment will go in this space. So primarily, it will be generation on the solar and the wind side, which will see good amount of investments going forward. Also, there is a concomitant projects which are linked to storage. As 24/7 green power takes more and more prominence. So storage related areas again will see a good amount of investment as we move ahead. So those two elements within the renewables, plus there are also areas such as smart meters as well as transmission with the green energy corridors coming in, which collectively will drive the overall investment. And on the EV side, again, it is the manufacturing capacity itself, and again advanced battery as well as cell capacities, which would again storage capacities, which would drive the overall investment.
You said that there is a significant opportunity for financial investment over here, but it has to make commercial sense. What are the kind of returns investors should expect, or what is the kind that they've already made by investing in our green economy and sustainability and climate change, circular economy?
So, Rima, the picture here is mixed, as I said. In some of the established areas, such as renewables, I think there is good amount of opportunity for EPC players. I think there's good amount of ordering, there's manufacturing, etc. that is going on. So I think we will see good, healthy returns like what you would see in their normal EPC businesses. As far as a project implementation is concerned on the renewable side, I think typically we see returns in the range of about 12% ROC kind of returns, and again depending on how you financially leverage and the cost of your funds, you can have higher returns also going forward. In some of the other areas with respect to, EV batteries, I think it's a more longer term play. As you expand capacities and achieve scalability, I think you will start seeing a bigger expansion in returns going forward.
Understood that, Rahul. Rahul, a couple of concerns also have come up as far as the renewable space is concerned. Recently, a bid that was won by JSW Energy, in a reverse bidding auction process for a battery energy storage system. The tariffs were not approved by CERC. So, do you consider this as a risk, as far as adoption of green hydrogen battery energy storage and the renewable space is concerned? How should investors look at this particular space? And would you look at it as a fixed return space, or there are so many hurdles to actually go through?
No, I think clearly in the entire green investment space, there is a lot of a very strong role that policy has to play, and policy flexibility is one of the key fulcrums on which this entire space is going to rely on going forward. So clearly, offtake mechanisms to ensure that there is adequate offtake is absolutely critical. So timely availability of PPAs for DISCOMs, extremely critical. I think the government is facilitating incentives, etc. But some of these offtake agreements, the on-ground nitty-gritties at state and center level will be very, very important.
In terms of funding, Rahul, what we understand is that at the very early stage, when checks are being cut out for 2 to 3 crore, at the lab stage, innovation, there is money. And then you've got it right, when the PEs come in, or much larger, $100 million, 115 EV renewables, etc. But the problem is that missing middle. So what are investors, what is your conclave doing about that to catalyze that financial investment in that missing middle?
So I think the missing middle has to do a lot with, areas such as blended finance, a stronger role of multilaterals, foundations, as well as, government helping in de-risking projects through policy, through their support in terms of, capital. So we are looking at kind of, channelizing thought process in that area, which can, collectively kind of, help sort issues. And we have seen cooperation, and there is willingness both from multilaterals also to come in for emerging areas such as CCUS, support industrial decarbonization, which is a very large challenge that everyone faces. Also to support energy efficiency related initiatives. The government on its own, you've seen, has kind of is supporting the DISCOMs through smart metering under the RDSS program. So many of those initiatives have been undertaken. It's just that we have to accelerate and mainstream some of them to a much larger scale.
Thank you so much for joining us. Thank you so much for sharing, the key highlights of the very good report that you've come out with. Well, moving on, time now for a short break. We'll tell you what the street expects from HDFC Life and L&T Tech Services ahead of their Q3 numbers.
The fire is 23,713 acres with 14% containment. 5,123 personnel that are assigned.
Welcome back to Trading Hour. Well, HDFC Life is expected to report its Q3 numbers today. The stock currently is trading near the day's lowest point. Yes joins us now to tell us what the street is expecting.
Well, Vivek, as far as results for HDFC Life are concerned, most likely they're expected post-market hours today. And as far as the action in terms of the results are concerned, it's expected to be a modest quarter for HDFC Life. Not much action expected in terms of gross premium. That is expected to grow by about 12% at about 7,954 crore rupees. Total APE or total annualized premium equivalent, that is expected to see a single digit growth of about 9% at about 3,488 crore rupees. Retail APE, again a single digit growth of 9% expected at about 3,051 crore rupees. Importantly, VNB, that is expected to see a very muted action, just up about 2% at 869 crore rupees. Margins on the negative side are expected to see some compression, down 188 basis points at 24.92% is what is expected, as against 26.8% on a year-on-year basis. The only saving grace is that in the last 1 month, the stock has corrected significantly. In the last 3 months, it's down 17%. In the last 1 month, it's down 6%. In the context of the results, being as the poll suggests, there might not be a lot of reaction on the stock, but results expected to be muted as far as the third quarter is concerned.
Thank you very much for that. We're also watching for L&T Technology Services in terms of numbers, and numbers come out post-market hours. So quick run through of the key numbers. Dollar revenue growth seen up 2.3%. Constant currency revenue growth should be a little more than 3%. Margins likely to expand 40 basis points to 15.4%, and profits are seen up 3 to 4%. But the key here will be, does the company hold on to its guidance? Its guidance stands for a revenue growth of 8 to 10% with EBIT margins of 16%. Kotak believes the company is likely to lower the guidance to 7 to 8%. So the key will be the FY25 guidance, and is there a revision lower? In fact, L&T Technology Services has also been an underperformer. So last year, the stock was down 12%, or in the last 1 year, the stock is down 12%, while the Nifty ID index is up 15%. And the key reason is growth for the company has slowed down. This is a company which was seeing growth of 15-20%. Last year also at 17.9%, but that's on account of that acquisition that they did. On an organic basis, growth was just about 7%. And again this year, we're talking about growth of 8 to 10% as the company is guided, or perhaps even lower as Kotak estimates. So the stock has been an underperformer, and now does it get back to the growth path? Not perhaps in this quarter, but what the company has to say about it.
Thank you so much, Reema, for taking us through what exactly to expect from LTTS. Well, a few stocks on the radar. Tata Power now near the day's highest point. Idea is another stock that's seen a very sharp up move in the last few minutes of session. And there's some follow-up buying activity that's seen on HDFC AMC after the results were declared yesterday. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Over the last 36 hours, we have seen very little fire growth on this incident, which is a positive. However, it's important to remember, as was just stated, we are still under a red flag event, and we will continue to surge resources to the priorities around this fire.
Mid-caps lead as the market notches more gains. Utilities and energy are the big gainers, even as healthcare and consumer durables are the big drags.
Morgan Stanley's Jonathan Garner tells CNBC-TV18 that India is poised to become the largest emerging market, and index heavyweights like Reliance Industries could see serious global investor attention.
Tata Power is likely to have submitted bids for privatization of 2 power distribution companies in Uttar Pradesh. The state is looking at a PPP model with 51% private holding, for which it has invited advisors.
The board of Aditya Birla Fashion clears a preferential issue of shares to raise nearly 2,400 crore rupees to trim its debt, while promoters will bring in about 1,300 crore rupees. Fidelity Group will infuse over 1,080 crore.
JP Morgan's Jahangir Aziz tells CNBC-TV18 the rupee needs to depreciate to bring the exchange rate back to normal. He, however, sees RBI staying its course on easing with a rate cut in February.
Good afternoon, you're watching Halftime Report on CNBC-TV18. I'm Hormuz Fatakia. With me as always is Manglam Malu. We needed some follow-up buying from yesterday's recovery, and that is exactly what we are currently witnessing on the screen. The benchmark indices are in the green, the broader markets are in the green, so it's good going for the bulls so far. 23,250 is where the index is, off the highs of the day, but still holding on to gains, and that is the bigger takeaway from the Nifty, at least as of now. The mid-cap index is up another percent after gaining almost 2.5% in yesterday's trading session, so it has nearly or thereabouts recovered everything that it had lost in Monday's trading session. So, and the small cap index too at the highest point of the day now, 1.25% higher for the small cap index as well. So good going for the broader markets, and there are plenty of movers as well. There were PSU banks that were moving yesterday. They are the ones that are seeing a bit of a cool off, but otherwise it's been a fairly good session so far.
Fairly good session, and in a way I would call it a remarkable session. Wouldn't rule out a possibility of a melt up in the second half of trade as well. The reason why I call it a remarkable session is because after 9 trading sessions, the high of the Nifty today is actually higher than yesterday's high as well. So that's an important mark. Yesterday was the Nifty Bank which crossed its previous day's high after many days of making lower highs and lower lows as well. So the bulls are attempting a bit of a recovery, and the FIIs in the index futures and options space also consolidating their positions, not going further short than what they were already. So all these factors point towards some stability, and if there is some stability, there will be absence of further selling, and maybe as a result of which we may see a bit of an up move. How long that up move lasts is something that we'll have to keep an eye out on, but for now the possibility of support at lower levels is keeping the mid-cap index well bid, because that typically is the high beta name. We have around 1,700 stocks advancing for just about 700 stocks which are declining. Look at the stocks which had seen a big decline earlier and now attempting a pullback. Trent, yesterday we had a technical analyst join in and say that they are looking for targets closer to 5,500 for Trent. Turns out the Trent's defied that. It's up nearly 3.5% today. Dixon Tech is another stock which has been under severe pressure but currently trying to attempt a bit of an up move. So Dixon Tech is up around 3.5%. And even something like an RBL Bank, which has already been a big underperformer, currently looking like benefiting from the lows of trade and at the high point itself. But the PSU banks are in focus because the government, we understand, is looking to sell stake in 5 PSU banks, but the street is expecting potential divestment in other PSU companies as well. Hormaz, you have compiled some data earlier. The government's stake in all the public sector companies was close to 2.5 lakh crores. Now it's come down.
It's come down, and that is because of the correction that you've seen in a lot of these PSU stocks, right? When we last visited this piece in January of last year, that stake was around about 2.5 lakh crore rupees, and since then we've had a lot of divestments as well, a lot of QIPs, a lot of these PSU banks, so that proportionately as well, and of course the correction in the PSU banks. So currently at 2.1 lakh crore rupees. Now there are 16 PSU stocks where the government shareholding is in excess of 75%, which is the mandate for the minimum public shareholding norms, and 8 of them is where the stakeholding is over 90%, and most of it is in those 5 PSU banks that we were talking of yesterday and the stake that they have, and the others range between anywhere 80 to 90%. Now, which are those companies where there is a lot of, before that you see 2.1 lakh crore as of closing of yesterday, but at its peak when all of these stocks were at their respective highs, that excess stake was well over 3.1 lakh crore rupees. So it's down by almost a third. as of now. It's also because of the correction that we have seen in the second half of 2024 in a lot of these PSU names. And look at this, LIC is a case in point. Now, the government stake almost around 97% as of now, and the excess 21.5% that they have is valued at well over 1 lakh crore rupees. So that is one. The others, of course, are those PSU banks that we spoke of yesterday, and IRFC finds a mention in this list because that 11.36% excess stake, and that is valued at close to 17,000 crore rupees. Now, all of these names have corrected anywhere between 25 to 40% over this last few from their respective peaks, and that shows in the decline in the respective shareholder value as well for the government, because at the peak that LIC had made in February of last year, that excess government stake was valued at over 1.6 lakh crore rupees. IRFC is down 40% from its peak. At its peak, the government stake, that excess government stake, was valued at close to 30,000 crores. Same is the case for Indian Overseas Bank and for the other names like UCO Bank and Central Bank of India as well. Now, we spoke of those 5 PSU banks that would hit that upper circuit limit in yesterday's session because of that CNBC-TV18 news break, where they had mentioned about that 2,000 crore QIP each for these 5 names, which includes the likes of Bank of Maharashtra, UCO Bank, Central Bank, Punjab and Sindh Bank as well. And that unsold excess stake for the government in these 5 names is almost close to 50,000 crores. So that needs to be kept in mind. There are also other names like Mazagon Dock, where the street is buzzing about. Mazagon Dock has been a rank outperformer among these shipbuilding companies. There also the street is abuzz about a potential offer for sale. We have had this conversation in the D Street chatter as well with Nimesh. He also mentioned that, and that excess government stake, the government currently owns around 84.8% in Mazagon Dock, and that excess stake is valued at around 4,500 crore rupees. So PSU banks in focus, but that has now put the spotlight on other PSU names as well, where the government stake is over 75%.
All right, we take that point. Let's keep an eye out on the screen. At the bottom of your screen, we have Sky Gold, which has onboarded Aditya Birla Jewelry to expand market presence and diversify into new jewelry segments. So basically, there will be suppliers to Aditya Birla as well. The stock has seen a bit of an improvement, but though we keep an eye out on this development. It's a B2B development more than a B2C development itself, but a good big client, big potential client, given the sort of thrust that Aditya Birla Group has on the consumer space, in particular the jewelry business itself. They've onboarded Aditya Birla Jewelry as a client itself, and now the stock seems to be moving higher, up around 1%. But Tata Power is the stock which is in focus. Vivek joins in. Tata Power, Vivek, has likely submitted bids for privatization of 2 UP discoms?
Well, that's right. So it's an important development as far as the entire power sector is concerned. Privatization of discoms, something that's been the ask of both the discoms, power financiers, as well as private utility players, is back in focus. On January 12th, the UP state actually went ahead and invited tenders. This is to go ahead and call for transaction advisors to help in PPP JVs or in the privatization of discoms. Now, out of the 5 discoms that the UP state government holds, they have invited bids for 2 of these 5 discoms. And what we understand from our sources is that Tata Power is interested, evinced interest, also looking to go ahead and submit bids as far as acquiring these particular discoms are concerned. Now, how will this particular PPP JV work? 49% will continue to be held by the UP state government or the discom. Another 51% will be held by the eventual winner of the entire bidding process. So 51% part of the JV will be held by the private utility player. So an important development. It's a development that will most likely take quite a bit of time to fructify, given the fact that this is a sensitive topic, especially in terms of both unions as well as enough votes coming through for going ahead and getting votes on board for the entire privatization process. It's an important development in the power space, and we'll keep track of this particular development. We reached out to Tata Power. At this point of time, they haven't given us any comments yet.
The importance of the development is evident from the gains that you are seeing in shares of Tata Power, building on to the gains that were seen at the start of the session. And since the news break, the stock has now surged to the highest point of the day, 3.75% higher now at around 370 is where Tata Power is. And that has had a cascading effect on a lot of other power names as well, be it the likes of NTPC, BHEL, and a lot of these names that too are trading with healthy gains in today's session. NTPC now trading with gains of 4%, BHEL too gaining a similar quantum. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Welcome back. Just pull up the intraday chart of Nykaa. Nyka's seen a big surge, and from the lows itself, the stock has seen a rally of almost 20-22%. They've reported a good performance in the third quarter when it came to the quarterly update as well. And this is further accentuated by the numbers that came in from some of the peers. So Shoppers Stop reported its numbers yesterday. Shoppers Stop's beauty business grew just about 3%. And in light of that, Nykaa's own beauty business growth, beauty and personal care business growth of upwards of 25%, has the street, looking at it a lot more favorably than what the peers are saying, because obviously when you have a peer comparison, your number looks a lot better at 25% when the others are doing just about 3%. So keep an eye out on this space. Very, very interesting. Fragrances is the business that grew very well for both Nykaa as well as Shoppers Stop. Nykaa currently spiking to the high point of trade. But speaking about the fashion and apparel space itself, we have Aditya Birla Fashion, which has approved nearly 5,000 crore rupees worth fundraise via a QIP preferential issue. Vinny joins in with more details. Vinny, they've raised funds to alleviate stress on their balance sheet.
Absolutely, that's the main reason for that. Now, this is around 5,000 crores is what they're raising. When you look at it, there's a QIP as well as a preferential issue. Now, preferential issue, one is to the promoter group entity, that's Pilani Investments. The preferential issue is of around 4.08 crore shares, which is at a price of 317 rupees per share. So, total aggregate of that is 1,297 crores that the promoters will be putting in the company. Now, post that, Pilani will hold 3.9% stake. Now, other one is to Fidelity Group. There are a couple of Fidelity groups that they invest that will be investing in the company. This is at around 3.9 crore shares and that is going to be at a price of 272 rupees per share, and aggregate consideration is around 1,081 crore rupees. And Fidelity Group will now almost hold 3.45% stake in the company post this investment that comes in. Now, do not forget that when you're looking at it, both the prices of Pilani as well as Fidelity seems a bit different, right? 317 and 272. So Pilani, that's a promoter group, is investing at a premium of 16.5% versus what Fidelity is investing in terms of a pricing. So yes, that's an important update coming in there, because this surely is signaling a strong conviction that's coming in terms of value creation potential for ABFRL, clearing out their balance sheets, paying off the debt that is there. So an interesting one. An average price for the preferential issue, you could say, is around 295 rupees per share. Now, other than that, obviously, there is a QIP that is there of 2,500 crores as well. So 5,000 crores in total is what they're raising. And do not forget that they've had a lot of fundraisings that they've had in the recent times post-COVID that you look at it. Starting in June 2020 was a right issue. Moving on, there was a preferential issue in 2021. 2022 also saw a preferential issue of 595 crores, as well as warrants of around 1,900 crores were raised in March 2024. And moving on, September 2024, there was a share swap which took place of around 1,755 crores. And then now is the recent raising that's of today that we're watching out for, in total of around 5,000 crores.
Indeed, trying to deleverage the balance sheet is Aditya Birla fashion. Vinny, thanks a lot for that. There's no significant reaction in the stock, though. It continues to trade around about the flat line, as has been the case for a better part of the trading session. But the index, as of now, still holding on to gains of around 50 points. The broader markets, though, are doing fairly well for themselves, and it's a good time to give you a sense of what the F&O scheme of things are looking like. And Mangalam, what is the data indicating now?
Well, the data is indicating good recovery from yesterday's low. In fact, after the big fall that we saw 2 days ago, there has been 2 days of consolidation on the way up, led by the Nifty Bank, which is up almost 2% in the last 2 trading sessions with an up move today. The Nifty 2 holding up with gains of almost 50 points. Like we pointed out at the start of the show, it's important because the Nifty's finally made a slightly higher high, and we're still below that. But, the good part is that it's a start. At day's high, Nifty today was 23,293. Yesterday was 22,3,265. And that's the first time in the last 9 sessions where the Nifty has actually gone ahead and made a higher high. That brings us to the other point. Because the Nifty has made a higher high and the Nifty Bank is doing well as well, could the street be believing that there is support at the near term? Why do we say that? Because the mid-cap index typically does well when the broader markets see support at the lower levels itself. And that's why the mid-cap index has consistently moved higher from yesterday's lows, up around 3.5–4%. And we have more stocks advancing than the number of stocks which are declining. So those are a couple of factors that we'll keep in mind. And even if you look at the breadth of the market, the top mid-cap gainers, the top F&O gainers, they don't belong to one particular sector. If you look at, the top gainers in the F&O space, they are the likes of Persistent Systems, there is Indus Towers, there is MCX, there is Indus Hotels. Now, as we speak, a big spike on Vodafone Idea and HDFC AMC as well. So it's broad-based, not particularly one sector itself. So we'll keep an eye out on that. But having said that, there is put writing which has come back. 23,300 call writers are still active. We need to cross past that 23,350 mark for further up moves in the market. Tomorrow is the Nifty weekly options expiry. 23,300 call has almost 1.5 crore shares in open interest. So the Nifty, it's imperative to cross 23,350 for it to see further short covering. But at the lower levels, we have seen writing at the 23,200 put, telling you again 23,150 to 23,200 thereabouts could be a support zone. We're currently at 23,250 odd itself. The one stock that I'm watching out for is ABFRL. We've just heard Vinny speak about their fundraise, etc. With the kind of open interest build up, the stock may enter F&O ban, and we'll keep an eye out on it.
Keep an eye out on it indeed. It's a big, massive day tomorrow, right? Weekly expiry earnings, we have Infosys, we have Reliance Industries, and we'll be reacting to the US CPI numbers as well that come in later this evening. So there is plenty to track for our markets tomorrow. But before that, we need to conclude today's session as well. And moving on, then, we are expecting foreign investors to be very engaged in the Indian market this year, and that's the view of Morgan Stanley's Jonathan Garner. Now, he also added that the earnings slowdown is a 2 to 3 quarter phenomenon before it recovers. Listen in.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past. What's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong. So whereas we're overweight India, for example, we're underweight Korea and Taiwan. So in Korea and Taiwan, tech means tech hardware, semiconductors. And there you've shifted from what we call the AI enabler or infrastructure rollout phase to what's now the adopter phase. You are going to see a slew of tariff and non-tariff actions, and that's going to be an issue for the more trade-dependent and US-exposed markets in Asia.
Jonathan Garner there and his views on the Indian markets. But Pritesh Mehta, who is the Senior VP Research at Yes Securities, is joining in now for a quick chart check. Pritesh, good afternoon. Thank you for joining in. You know, we did break this streak of making lower highs after almost 9 odd days, but we have not sustained at the highs as of now. Do you see a recovery on the index in the second half? Some key levels that you are anticipating and the stock recommendations this afternoon as well?
Yeah, good afternoon. See, it is good to see a bit of green on the screen as of now. But since our last interaction, Nifty broke below the November low. But good thing to observe is that Nifty is now consuming time rather than witnessing follow through. So that's a good sign. Apart from that, when I look at my broader markets, this is Nifty 500, Nifty Mid Cap, Nifty Small Cap 100 Index. This indices, if I look at the breadth of this indices, they are reversing. And in fact, our customized breadth has given a positive bullish crossover. So what we have seen historically, whenever, when from extreme pessimism zone, the breadth reverses, we tend to see follow-through moves, even in price. So I think we are done with the correction in the broader markets. It's time for the Nifty benchmark index to consume time and stabilize, and then we can see reversal move coming in. So I think it will take some time before Nifty participates on the upside, but I think broader markets, we are done with correction.
All right, we're done with the broad market correction. Then what about individual stocks? What are you playing? Are there any long ideas?
Yes, of course. This first stock is LTF. So this stock is reversing of the pre-COVID highs. It is holding on the GAN number of 121, and now we are witnessing a pullback moves on the upside. So buy for a target of 152, and the stop loss would be around 126. Second one that we like is AU Bank. The stock has bounced back and witnessing follow through after a bullish anchor column. So buy for a target of 640. The stop loss would be around 560.
All right, Pritesh, thank you for joining in and sharing with us your views on the index and on specific stocks as well. L&T Finance, one of his recommendations. Mind you, the stock is in the F&O band today, so we'll keep an eye out on that as well. Time for a short break. We get you more on the markets on the other side. Stay tuned.
Thank you so much. And your son's sailing, I believe. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years.
Welcome back. Let's talk about Blue Dart. It's launched India's largest integrated operating facility at Bijwasan, Delhi. To discuss this in detail, on the facility launch, we are joined by Balfour Manuel, who's the MD at Blue Dart, and also joined by Tobias Meyer, who is the CEO, DHL Group Global. Thanks a lot, gentlemen, for joining in for this exclusive conversation. Mr. Manuel, let's start with you first. This new facility that you've launched, if you could, you know, quantify the expected impact on Blue Dart's performance due to this facility.
Well, this is the first integrated facility of this type. What this means is it allows us to enhance our multimodal capability. So it's very close to the airport. So we can palletize goods and move from here. It has e-commerce. It has some part of ground, and it's an air site. So this is the first integrated kind of a facility that we have seen in the country. And what it means, it's also located very close to the economic corridor, Dwarka Express. So it's a very strategic facility for us.
All right, a strategic facility for you. Mr. Mayor, coming to you, how does DHL plan to expand its offerings and presence in India through this facility?
So we have been in India for many, many years. We have been here through DHL Express, DHL Global Forwarding, DHL Supply Chain, in the international transport space, and with Blue Dart, a domestic express provider. We have upgraded capacity in all segments. We have added aircraft for Blue Dart here to enhance service, but also increase capacity. That's one investment we have just recently taken. We're here today near the airport in Delhi, opening a new facility, 25,000 square meters, to particularly cater to the interconnection between air transport and surface transport. And we have more plans for this year, for the year of 2025, but also for the years to come.
Right, but Mr. Manuel, how does Blue Dart plan to capture the changing needs in the logistics segment now with the advent of quick commerce and other fulfillment channels as well?
Blue Dart is the only player who works in all the verticals, small packages, air, ground, and also international express. So we've quickly moved in, with the growth pillars of ground and e-commerce. That segment is growing. So our adoption is very encouraging, and we are in line with our projections.
All right, in line with your projections, Mr. Mayor, what are the potential synergies between DHL and Blue Dart beyond the current scale and efficiency? If you could give us more sense, because you've just said that you will continue to invest in India.
So the most important thing is, as we as DHL want to serve our customers comprehensively when it comes to their logistics needs. But we also want to do that with the respective expertise in the logistics. And nobody knows India like Blue Dart. I think this is what we can honestly say. So we have a specialist for the local environment, but we combine that with the strength of DHL globally, with our presence across the world, with our expertise when it comes to international transport. That's the most important synergy. Operationally, we also do things together. We collaborate on aviation. We provide aircraft, for instance, through our DHL aviation infrastructure. Blue Dart carries some shipments to remote areas for our international customers as well. So we also collaborate on the operational side.
Right. Now, Mr. Manuel, can you offer any comments on the competition within this space?
No, we don't make any comments on competition. Yeah.
All right. You don't make any comments on competition, but it's imperative given the sort of, activity that is taking place in the listed and the unlisted space as well, the new age competitors, etc. I would like your thoughts on that. But let's go back to Mr. Mayor then. What kind of investment have you lined up in India? You said that you are looking to do a little more.
We want to continue to lead in the international express space. We have upgraded infrastructure for Blue Dart, particularly for surface transport, as well as for e-commerce. We see a lot of potential. We have seen good growth, and we will make the funds available to continue to expand infrastructure here in India. So we are very excited about the opportunities that the country has, particularly now that road infrastructure has really taken a step forward to help our customers leverage that. That's part of our investment strategy.
All right, we take that point and wish you good luck for the remainder of this year. More importantly, growing in India at a time when things are looking a lot competitive, and it's changing as well. So you've put your money where the mouth is. You have integrated this facility, which lines in with the Gati Shakti corridor itself. So we'll try and wait by to watch any sort of proposals or any sort of improvement that comes in on your business on account of this itself. Thank you so much for joining in. With that, we'll slip into a short break. On the other side, we focus on a lot of stock-specific action. Stay with us.
Come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. Wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember, which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think, I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
even
harder.
I think the belief is very, very important. Just believe in yourself.
BB, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90.
Welcome back. Vodafone Idea is now up 10% in today's trading session. It's been a very sharp surge that the telecom service provider has seen, but still below the FPO price of 11 rupees. So it's currently reached that mark of 9 rupees now after the correction that it had seen. So good going for Vodafone Idea, at least in today's trading session. Keynes Tech is seeing a bit of a rebound after some profit booking that it had witnessed over the last few days, 6.5% higher there as well. And of course, Devyani International is another 6% higher after Macquarie's coverage initiation in today's session. But microfinanciers are the ones in focus today, following notes by brokerages like Jefferies and Goldman Sachs. Abhishek is here to tell us more on those. Abhishek.
Released by CRIF is what these guys have been speaking, that is Jefferies and Goldman Sachs, and it is a back-ended data for Q2 FY25. So data suggests that, you know, lenders have cut disbursements by 29% YOY, which has led to weakening of AUM by 4% on a sequential basis. So Jefferies also says that the number of borrowers and ticket size of loans have fallen after many years. So overdue loans have risen from 2.7% in June 24 to about 4.4% as of now, led by leveraged ones. So asset quality may take some time to normalize and loans may unwind, leading to pressure on the earnings front. With respect to Utkarsh small finance banks, Spandana and Credit, they have higher share of more than 4 loans per borrowers, which can impact them negatively. Bandhan Bank, as per them, can fare better. Now Goldman Sachs has written on Credit Access Grameen, they have a sell rating and a target price of 577 per share. They say that they have analyzed bureau data to see any signs of recovery in MFI industry, where they don't find any encouraging point at this point of time. So incremental bureau data points that 37% of MFI borrowers do over leverage or overlap with retail borrowers as well, and that delinquency over there has been increasing on both MFI as well as retail loans by the same borrower. This represents about $18 billion of retail loans and about $10 billion of MFI loans. With respect to stock prices being off low, if you take a look, Equitas, Credit Access Grameen and Spandana Spurti, they are off lows anywhere between 12% to 20%. Back to you.
All right, we take that point. Thank you, Abhishek, for that. HDFC AMC is the other stock which is buzzing on a strong quarter and positive brokerage notes. Vamakshi gets us more. Vamakshi.
Well, good afternoon, Mangalam. HDFC AMC reported its numbers yesterday, and it was a good set. And we have a couple of brokerage notes that have come in today. The first one is from HSBC. They have a hold rating on the counter with a target price of 4,350 rupees per share. They say that rationalization of commission payouts and control on operating costs have resulted in strong growth in the company's net profit in the third quarter. But the market share has stagnated in equity AUM and SIP flows, which can keep punchy valuations in check. They've gone ahead and, however, raised their FY25 to 27 EPS estimates by 0.4 to 4.1%. Nomura is the other brokerage that has come out with a note on HDFC AMC. They have a buy rating. They have a target price of 5,250. They've gone ahead and raised their FY25 to 27 EPS estimates by nearly 2 to 3%. They build in very strong operating profit CAGR of almost 20% from FY25 to 27, and they expect it to largely track average AUM growth. Lastly, there's a note that has come in from Nuvama. They've maintained their buy call on this counter and gone ahead and raised their target price from 5,150 to 5,200 rupees per share. They say that the company is steady sailing despite choppy markets. Yields have improved sequentially. Steady operational metrics have been witnessed across segments, and they're building in improved yields, and therefore they've gone ahead and lifted their FY25, 26 and 27 net operating profit estimates by 3.4%, 4.1% and 3.5% respectively. So overall positive brokerage notes coming in from HDFC for HDFC AMC, and therefore the stock is up in trade.
6% higher now for HDFC AMC, continuing to go from strength to strength. Vamakshi, thanks a lot for that. At the highest point of the day now, as much as an underperformer it has been over the last 1 month, today is turning out to be a good day for HDFC AMC. What is also turning out to be a very good day for is BSE, and that is after a brokerage note that came in from Nuvama, where they have initiated coverage on the stock and they have a price target of 67.30 is where Nuvama is for BSE, and that is a potential upside of around about 24% from yesterday's closing levels. Now what Nuvama is saying is the fact that the derivatives segment for BSE, which is a key segment, that will continue to grow despite the regulatory challenges that it is currently facing with all the changes to the F&O norms that we have made by market regulator SEBI, and that the impact that it has had. And Nuvama is now forecasting a revenue CAGR of almost 40% over FY24 to 27, and is also forecasting an adjusted profit CAGR of almost 70% over this same time frame. Now what they also say is that as the lot sizes will increase, as and when that happens, that will lead to a decline in clearing costs, and once that happens, that will lead to a boost in margins for BSE, is what Nuvama is saying. And what they also say is that BSE has multiple streams in place in order to boost growth. So that is some positive commentary from Nuvama, and Nuvama is not the only one, and that's because over the last few days there has been a slew of brokerage commentary that has come in for BSE, and Goldman Sachs initiated coverage with a 5,060 price target. Jefferies upgraded the stock yesterday with a price target of 52.50. The interesting bit is that the stock is now trading well above both these price targets. So a good day for BSE. It's been a good week as well so far for the stock.
All right, a good day, a good week for BSE as well. Had seen a bit of a correction from the top on account of these regulatory fears, but brokerages over the last couple of trading sessions saying that those regulatory fears are unfounded. In fact, BSE stands to gain from that. Another stock which is surging now as we speak, Persistent Systems at the high point of trade, and Indian Hotels too reports its results later, in the next 10 days or so. And remember, the third quarter is extremely strong for the hospitality industry, and you also have the Kumbh which is playing out right now, so a lot of travel and tourism attracted in this space itself. Indian Hotels continues to do well. But take a short break, come back on the other side, we tell you what a couple of numbers that are expected and what the street is expecting from the likes of HDFC Life and L&T Tech Services.
Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support, or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues,
Welcome back. The Nifty suddenly picked up pace after a bit of a cool off at the start of the show. 70 points higher now on the index, so some recovery that we are seeing. The dips are being attempted to be getting bought into. We spoke of gainers before going into the break. There's some losers as well, and all of those PSU banks that were the high flying names in yesterday's trading session that jumped anywhere 17, 18, 20% after the CNBC-TV18 news break. They are the ones that are seeing a bit of a cool off now in today's trade, after beat the likes of Central Bank of India, Indian Overseas Bank, UCO Bank, all of them trading with losses of 6.5 to 7.5% in today's trade. Although the PSU Bank Index is doing well for itself, but most of these low float names are the ones that are seeing some bit of profit booking after yesterday's surge. But moving on to some results that are anticipated in today's trading session, L&T Tech is one of them, and Rima is joining in with what the street is expecting from the company. Rima.
Thanks so much for that. So first, let me give you the key expectation. In terms of numbers, dollar revenue growth up 2.3%, constant currency revenue growth seen higher by 3.2% on a sequential basis, margins expanding to 15.5%, and a profit number of about 330 crore. But here the key will be on their guidance. For the full year, the company is guided for 8 to 10% revenue growth. But Kotak believes the company could lower its guidance to 7 to 8%. So does the company hold on to its guidance, or will there be a downward revision? Also remember, because growth for most of these ER&D companies have slowed down, L&T Tech also as a stock has underperformed. So in the last 1 year, the stock is down 12%, while the Nifty IT index is up 15%. So it's underperformed. So for the stock to do well from here on, it needs to show a beat, or it needs to deliver on numbers and hold on to its full year guidance. Back to you.
All right, Rima, thanks a lot for that. On the other side of this short break, we focus on stocks like Minda Corp, which is buzzing after acquiring nearly 49% stake in Flash Electronics.
Thank you so much.
And your son's sailing, I believe. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
Recognition in terms of, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leaks that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
"2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing.
Welcome back. We have a bunch of stocks which are buzzing around right now, and they are from the QSR and QSR support space. So we have Devyani International, which is up around 7%. Zomato is buzzing from the lows on hopes of inclusion in the Nifty in the next rejig whenever that happens. Zomato, remember, in the last rejig of the F&O stocks was included along with a bunch of stocks, around 30, 40 stocks which were added in the F&O space. That makes it eligible to be included in the Nifty, so we'll keep an eye out on that one. The other stock, because Zomato is buzzing, is Swiggy. So look at Swiggy. Now Swiggy is moving a couple of steps harder than Zomato, up around 6%. And that's largely because of the valuation differential that most on the street believe should narrow, given an almost equal position in the food delivery space and perhaps some improvement in the quick commerce space for Swiggy coming in on the operational front of the big discount that it is trading with when it comes to Zomato itself. So those are a bunch of stocks which are buzzing around the broader market, even as the Nifty holds with a gain of almost 60, 65 points. Minda Corp is the other stock, which is up around 4% in today's trading session. That is after the company has acquired 49% stake in Flash Electronics for about 1,400 crore rupees. Sudarshan joins in with the details of this one. Sudarshan.
So Minda Corp today has announced an acquisition of 49% stake in Flash Electronics for a value of rupees 1,370 crore. It's done at an enterprise value of rupees 3,100 crore and at an equity value of rupees 2,800 crore. It's an all-cash deal, and company expects the deal to be completed by the end of this month. Talking about Flash Electronics, it's manufacturer of powertrain and EV components to auto OEMs in India and overseas. Overall, it has 8 plants. Of that, 6 are in India and 2 are in Europe. Key clients include Audi, Bajaj, BMW, Ducati, Harley-Davidson, M&M, Royal Enfield. Now talking about the earnings in FY24, its revenue was 1,340 crore, which company expects to increase to 1,590 crore in FY25. That would be a growth of almost 20% year-on-year. EBITDA was rupees 185 crore and margin was around 14% FY24. Now talking about the contribution to the revenue, India currently contributes 76% and from overseas contribution is around 24%. Two-wheelers currently form 76% of total revenue. Now, product-wise, if we talk about the contribution to total revenue, electricals and electronics forms 45%, EV forms 20%, and another 20% is formed by metallic segment. Now, Minda Corp has talked also about synergy. So, in the synergy, it says both the companies have adjacent portfolio, both the companies are Pune-based and have similar product profile, and that will help in the synergy once the acquisition is completed, and that's the reason you are seeing a 4% rise in Minda Corp stock.
All right, Sarshan, thanks a lot for that. From Minda Corp, let's move on to HDFC Life. As promised, the company is expected to report its third quarter numbers today. Yash joins in to tell us what the street expects from this one. Yash.
Well, Mangalam, numbers from HDFC Life expected post-markets today, and as far as the quality of the numbers are concerned for the third quarter, they're largely expected to remain soft. Here are 5 things that, as a CNBC-TV18 poll, one should watch out for HDFC Life. The first one is gross premium. That is expected to grow at about 12% in the third quarter to come in at about 7,954 crore rupees. The total annualized premium equivalent, or AP, that is expected to see a single-digit growth of about 9%, expected at about 3,488 crore rupees. Retail AP also seeing a similar growth as total AP of about 9% at about 3,051 crore rupees. Importantly, 2 numbers, value of new business, that is expected to see a very soft growth this time, just about 2% at about 869 crore rupees. And the margins, VNB margin, that is expected to compress by about 188 basis points on a year-on-year basis to come in at about 24.92%. Important to, understand what the stock has done in the recent past, considering the numbers that are expected. The stock is down 17% in the last 3 months and about 6% in the last 1 month, trading at about 2.3 times FY25 estimated price to embedded value.
All right, Yash, thanks a lot for that. There's a wave of up move in the market as we speak right now. Reliance, the intraday chart should come up for you. A big move is what we're seeing on that stock at the high point of trade, surging away from the lows, reports its numbers tomorrow, and that is also causing an up move on the Nifty itself by virtue of its weight. So pull up the Nifty and you'd see it's at the higher end of today's trading range, if not the high point of trade. So once the big boy starts moving, we see an up move, a concomitant impact on the Nifty itself. The intraday chart of the Nifty comes up for you 23254. The high today has been 23265, so just about 10 points away from that. The other stock which is seeing a lot of buying is Trend. So wave of buying in a couple of these retail names, especially after Shopper Stop's numbers. So you have Trend, which has moved 6% higher from lows. Remember, the stock has seen a correction of almost 25% from its highs. The other one is Nykaa. We pointed out earlier in the day that Nykaa's numbers, now that we have Shopper Stop's beauty sales as well, looks a lot better. So Nykaa has moved to the high point of trade, and giving it company at the high point is Polycab as well, which has only seen a bit of a spike in the last 10 minutes or so, currently at the high point for Polycab too. With that, we wrap up on this edition of this edition of Halftime Report. Business Lunch, the theme of that will take all the market action ahead after this break.
They have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned.
you sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Midcaps lead as the market notches up more gains. Utilities and energies are the big gainers, even as healthcare and consumer durables are the big drags. Morgan Stanley's Jonathan Garner tells CNBC-TV18 that India is poised to become the largest emerging market, and index heavyweights like Reliance Industries could see serious global investor attention. Tata Power is likely to have submitted bids for privatization of two power distribution companies in Uttar Pradesh. The state is looking at a PPP model with 51% private holding, for which it has invited advisors. The board of Aditya Birla Fashion clears a preferential issue of shares to raise near 2,400 crore rupees to trim its debt, while the promoters will bring in about 1,300 crore rupees. Fidelity Group will infuse over 1,080 crore rupees. The QIP to raise 2,500 crore rupees is also on the cards. JP Morgan's Jahangir Aziz tells CNBC-TV18 the rupee needs to depreciate to bring the exchange rate back to normal. He, however, sees RBI staying its course on easing with a rate cut in February. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch with me, Vinny Motiwala. A quick look at what the market is doing this afternoon. Not a bad day coming in, right? We were expecting a subdued start right now. Also, what we're seeing is the similar expectation that we had in the morning. So 60 points uptick is what we're seeing coming in for the Nifty, managing to hold on to 23,238 levels. One point of time, it was below the 23,200 mark, but we've seen it move in the green region today. It's not slipped into the red. Normally, in the second half of the trading session, let's wait out for what happens in that second half. You know, if it manages to actually sustain to this levels, that will be something interesting to watch out for. As of now, 0.3% of gains, almost near the day's highest point. Around that mark is what we're watching out for the Nifty 50 as well as the Sensex. That is also managing to hold on to green today in trade. Almost 0.3% of gain is what the Sensex is seeing as well. 0.4%, 76,789 is what we're seeing the Sensex at. Broader markets, that's where the outperformance is coming in today also as well from the markets. So mid and small cap, that continues to do well. We're seeing the Nifty mid cap at the day's highest point, Nifty small cap also at the day's highest point. And remember, in the morning, both these had actually slipped into the red, and now they're coming back to the green at the day's highest point. So good recovery coming in the mid and small cap. Let's look at some of these outperformers in terms of sectors. Nifty Realty, that's managing to hold on to very strong gains. Top sectoral gainer today. So Brigade Enterprises, DLF, Phoenix Mills, all of them are managing to hold on to gains. And we have Nifty Energy. That is also managing to hold on to good gains in trade today. So these are two top sectoral gainers in trade. While in terms of big movers that we should talk about, or stocks that are seeing some good traction today, is one, Devyani International, BSC, Welspun Corp, as well as Keynes Technology, and do not forget Trent also is seeing some good action in trade. So these are the top movers in terms of stocks that we're seeing coming in, either on the back of some news flows coming in, or even there are some of them who have brokerage notes as well, and some of them seeing good volumes in trade. But yes, that's how the market setup is looking like. Mid and small cap is doing pretty well, and that is what we're watching out for in the second half of the trading session. But today's show, let's get started with that. And we're going to start today's show with the CNBC-TV18 exclusive. Now, Tata Power is likely to have submitted bids for privatization of two Uttar Pradesh discoms. Vivek is joining in with us to tell us what is he picking up on this front. Vivek.
Well, that's right. So it's an important development as far as the entire power sector is concerned, privatization of discoms, something that's been the ask of both the discoms, power financiers, as well as private utility players, is back in focus. On January 12th, the UP state actually went ahead and invited tenders. This is to go ahead and call for transaction advisors to help in PPP JVs or in the privatization of discoms. Now, out of the 5 discoms that the UP state government holds, they have invited bids for 2 of these 5 discoms. And what we understand from our sources is that Tata Power is interested, evinced interest, also looking to go ahead and submit bids as far as acquiring these particular discoms are concerned. Now, how will this particular PPP JV work? 49% will continue to be held by the UP state government or the discom. Another 51% will be held by the eventual winner of the entire bidding process. So 51% part of the JV will be held by the private utility player. So an important development. It's a development that will most likely take quite a bit of time to fructify, given the fact that this is a sensitive topic, especially in terms of both unions as well as enough votes coming through for going ahead and getting votes on board for the entire privatization process. It's an important development in the power space, and we'll keep track of this particular development. We reached out to Tata Power at this point of time. They haven't given us any comments yet.
Okay, Vivek, thank you so much for the latest update coming in on Tata Power, and we'll keep you all more updated with any news flow that we have around this one. But moving on, now foreign portfolio investors have sold over 25,000 crore rupees in January so far. Speaking to Shireen Pan at the CNBC-TV18 Global Leadership Summit on November 14th, Uday Kotak had already warned about FPI moving out of India and stressed for the need to be ready for global shocks this year. Listen in.
I think these are cycles. We have to respect markets. You want demand and supply to determine, of quality paper, of course, to determine how valuations happen and how the marketplace develops. But the market is getting larger. You're getting more and more supply, more and more demand. That's the way to go for the future. But we have to be ready for a global shock. A $900 billion stock of FPI is not a small number. And we have to be ready to be able to absorb that if that moves. And the supply of paper has to be commensurate with the supply of money.
You're saying the probability of that kind of an exit is a real one today?
No, I don't think $900 billion.
No, obviously not 900 billion, but a significant part.
But can a few $1 billion go? Can 5-10% go? We should be ready for it.
But earlier on in the day, we spoke to Jonathan Garner, Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley, who is bullish about India as an investment destination compared to the other Asian markets. Listen into what more he had to say.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past. What's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong. So whereas we're overweight India, for example, we're underweight Korea and Taiwan. So in Korea and Taiwan, tech means tech hardware, semiconductors. And there you've shifted from what we call the AI enabler or infrastructure rollout phase to what's now the adopter phase. You are going to see a slew of tariff and non-tariff actions, and that's going to be an issue for the more trade-dependent and US-exposed markets in Asia.
Also, earlier on in the day, we managed to speak to Jahangir Aziz, Head of Emerging Market Economics Research at JP Morgan, to get his views on the change in tariff as well as immigration policy, as well as the impact on dollar after Trump takes charge. Let's listen in to that conversation.
China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Then our sense is that on January 20th or that week of 20th, you're probably going to get many, many more countries under the tariff umbrella than just China and Malaysia and Vietnam. Any kind of FX arithmetic, if you break it down between the growth differential between US and the rest of the world, the interest rate differential, even after, especially after the change in the Fed call that we have done after the non-farm payroll came out last week, if you take those two factors, which are the usual drivers of dollar strength, at best you can say that the market is pricing in maybe 6-7% of tariff increase. That's the extreme. So the tariff right now is about 2.3%, right? So 2.3%, you add about 6-7%, that's about all that the dollar is pricing in this point in time. It could easily be significantly larger than that. We have already taken out all rate cuts for the first half of the year. We just have 2 more rate cuts, one in June, the other in September, and that's it. I think a 3% depreciation is enough to take away that rate cut, but our depreciation higher than that, yeah, possibly the February rate cut gets pushed up, but we do have a rate cut in February. In fact, we have 100 basis points of rate cut in 2025 price for the RBI.
Okay, on that note, we're going to slip into a very short break. But when we return, Prime Minister Narendra Modi is in Mumbai and has dedicated 3 new ships into the Indian Navy. We get you more on this news on the other side.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing.
Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Let's move on, and now the RBI has announced reshuffle of Deputy Governor portfolios following the retirement of Michael Patra. M. Rajeshwar Rao has been appointed to lead the critical department of monetary policy just ahead of the upcoming Monetary Policy Committee meeting scheduled on February 5th to February 7th. The Financial Market Operations Department has been assigned to Deputy Governor T. Ravi Shankar, and the RBI said that the distribution of portfolios among the deputy governors will be with effect from today. Let's move on. And what sources are telling CNBC-TV18 that NARCL has emerged as a loan suitor to acquire JP Associate loans from its lenders. Ritu is joining in with us to give us more details of this one. Ritu.
Thanks for that. The National Asset Reconstruction Company, or the NARCL, has emerged as the single suitor to acquire the stress loans of Jayaprakash Associates from its lenders after a Swiss auction that was conducted by its lenders did not see any participation from any other potential suitors. Now, we have been reporting that NARCL had offered about 12,000 crores to acquire the loans of Jayaprakash Associates from its lenders, and that had triggered a Swiss auction process whereby lenders had invited counter bids, keeping 12,000 crores as the base price. But we've been given to understand from sources that given one, that lenders had required 100% upfront cash payment in this auction, and two, the account itself is quite complicated and undergoing insolvency and bankruptcy proceedings, led to no real suitors coming forward, even though initially as many as 6 ARCs did show an interest. So that leaves the NARCL as the single suitor. As the next step, we've been given to understand that banks will seek individual board or committee approvals as required to sell the loan to NARCL to transfer this asset. And this offer of 12,000 crore would translate to about a 23% plus recovery, but not all of it will be in the form of cash. About 15% will be the upfront cash payment from this 12,000 crores if approved, and the remaining 85% is going to be in the form of security receipts. Remember, Jayaprakash Associates is undergoing insolvency proceedings and is facing claims of more than 52,000 crores from more than 2 dozen lenders led by State Bank of India.
Thank you so much for that, Ritu. But speaking at CNBC-TV18 and EY's AI Forward Summit, the Secretary of the Ministry of Electronics and Information Technology revealed that it had been receiving feedback from electronics and industry players that import of capital goods from China was being constrained and held up at the Chinese ports. Now, companies like Foxconn have had capital equipment being held at the ports in China for several months now. Industry feedback also says that revealed that while there was a delay right now, that were not hampering the production further. Production as of now, further disruptions could actually jeopardize future production and expansion plans. Let's listen in to what he had to say on terms of this.
So this is what companies are telling us, that export of capital goods in some senses is getting constrained, and so far, I mean, the issue on visas and so on is that there's a process of approval of visas for people coming from China, which we are following. Companies are telling us that they sense certain restrictions being placed on them.
And now moving on, over the past few years, innovation in generative AI has progressed at an extraordinary pace, and innovation in AI surged in 2024, marking a transformative year for the technology. EY's recent report, which was unveiled last evening, offers a bird's eye view of India's AI adoption and implementation journey. The report, titled AI Idea, was launched by Mahesh Makhija, technology consulting leader at EY India, Secretary of the Ministry of Electronics, and CNBC-TV18's Managing Director Shireen Bhan. The EY report estimates that the adoption of generative artificial intelligence has the potential to reshape 38 million jobs in India, delivering a 2.6% productive boost to the Indian economy through gains in organized sector. Okay, let's move on from that, and news coming in from Mumbai, where we have PM Narendra Modi, who has dedicated 3 new ships into the Indian Navy: INS Surat, INS Nilgiri, as well as INS Vaksher, that were all made in India. They are expected to not only boost India's blue water capabilities, but also help countries' local defense manufacturing. Hailing the historic commissioning of ships, PM Narendra Modi said that it is the first time that a destroyer, a frigate, as well as a submarine have been commissioned together. PM Modi will also inaugurate a new temple in Navi Mumbai and meet the Mahayuti MLAs later on in the day. And moving on to some news coming in from the national capital now, Aam Aadmi Party convener Arvind Kejriwal is set to file his nomination from the New Delhi Assembly seat today. Ahead of the filing nominations, he paid a visit to a popular temple in the area before proceeding on to march with several women supporters. Arvind Kejriwal, who served as the Chief Minister until September, has won the New Delhi seat thrice since 2013. Moving on, and in key highlights for the history books, Congress Parliamentary Chief Sonia Gandhi, along with Congress President Mallikarjun Kharge, inaugurated the party's new headquarters, the Indira Gandhi Bhavan, located at Kotla Road in New Delhi. Before this, the party operated from the old headquarters in Akbar Road, was in function for the past 47 years. The party had earlier stated that the new state-of-the-art AICC headquarters symbolized the Congress is a continuing mission to uphold the vision of its stalwarts. On that note, we're going to slip into a very short break, viewers. Don't go anywhere, because when we return, we'll get you the latest update that is coming in on the Los Angeles wildfire, so don't go anywhere.
Celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back to Business Lunch on CNBC TV18. Quick look at the market. In just 20 minutes that we started the show, we were seeing the market holding on to 23,200, and now look at it, it's just slipped into the red, almost at that flat line, flip-flopping between the red and the green. So, you know, very muted day. Like we were saying, we should watch out for the second half of the trading session. Normally, we see a change coming in there. So, yes, 23,170 around that mark is what the Nifty is at. Let's see what that happens and what happens in the second half of the trading session. Let's pull up the mid and small cap. Have they also given up gains? That's going to be important to watch out for with that, because mid and small cap also seems like a slight bit of a decline that has come in from the day's highest point for the Nifty mid cap as well as the small cap, though still outperforming the benchmark indices. But yes, that's the market as of now. Let's move on and into some international news that we have coming in for y'all. Now, US securities regulator sues Elon Musk over purchase of Twitter shares. According to SEC, Musk's $44 billion purchase of Twitter, which is now called X, violated securities law by amassing a large stock position in the social media company without filing the proper notification. The complaint also said that he had waited 11 days before filing the required disclosure with the SEC. And moving on to some more updates, Israel and Hamas are inching closer to a ceasefire deal, even as IDF continues to pound Gaza. Incoming US President Donald Trump has hinted at a truce deal by the end of this week. CNBC's Dan Murphy has the latest update on this.
Negotiators are optimistic that a Gaza ceasefire deal may be closer than ever. They're now thrashing out the details of a final agreement after a marathon session of talks. Qatar's foreign ministry spokesperson saying they are now in the final stages. Hamas says it is hopeful but is waiting for Israeli maps on troop withdrawals. An Israeli official said talks had reached a critical stage, but they are not there yet. US President Joe Biden also spoke with Egypt's President al-Sisi by phone and said he would continue to keep in close contact in the coming hours. They both emphasized urgency. There's been no let-up in Israel's offensive in the enclave, with medics saying over a dozen more people were killed in fresh strikes on Tuesday.
And some more international news updates coming in. This time it's from South Korea. The South Korean authorities have arrested the impeached President Yoon Suk-yeol over insurrection accusations related to his martial law declaration. Earlier during the day, more than 3,000 police officers and anti-corruption investigators had gathered at his residence to detain him. He is the first sitting president to be arrested in the country's history. Millions of people across South California faced new wildfire warnings on Tuesday as strong winds blew across the region in Los Angeles. Meanwhile, reports suggest that Oscars could be postponed or cancelled this year, and this is due to the fires that are happening there. CNBC's reporter Brewer is joining in with us from there.
I'm on the command center here, Carl, for CAL FIRE and other first responders. It's along the Pacific Coast Highway right next to the ocean. And this is where officials are working to make it clear there are no raging flames right now in the Palisades fire nor in the Eaton fire. Those containment percentages mean how much of the land firefighters have cleared, going in, mopping up hot spots, checking for heat pockets and for underground areas where flames might reignite. And of course, that's a real threat with the winds picking up again. Any coals create the potential for sparking raging flames again. The public information officer told me they won't call it 100% contained until the crews feel comfortable walking away. Meanwhile, the damage to the infrastructure is so extreme. You see here Verizon and AT&T, they're setting up mobile towers across these areas to try and get cell service. But even without the residents back, the demand from first responders is so great that the signals are often spotty, as you might have seen from our live shots, or in some cases non-existent. Verizon told us this morning one of its engineers actually figured out a way to connect the mobile towers to underground fiber network, increasing the capacity by 100 times. Gotta love those engineers. One more note here. I want to show you the charred hillsides right behind us. Again, this is along the beach in Pacific Palisades, which saw the flames racing down the hillsides, charring it. It's called a burn scar, and it becomes extremely vulnerable to mudslide. Now, this is supposed to be the rainy season in California. Governor Newsom has ordered state agencies to come up with mitigation plans to try and reduce the threat of those mudslides. It would be a real problem here, as you can see, because this is a major thoroughfare, the north-south thoroughfare from Malibu to Santa Monica.
Okay, and with that, we're absolutely out of time on this edition of Business Lunch, closing it with Nifty below the 23,200 mark. But don't go anywhere. Midcap Radar is up next to take you through the action.
Thank you so much. And your son's sailing, I believe. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in four Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence level.
Good afternoon, you're watching Midcap Radar on CNBC-TV18. I'm Hormas Vatakia, with me is Vivek Iyer, and the markets have cooled off and it's been a dramatic U-turn from the highs of the day. At one point it looked like we were going to build on to yesterday's gains, but it seems like that is not the case as of now, Vivek.
Good afternoon, Hormas. That's right. Monday, steep sell-off. Yesterday, a bit of a recovery. Hoping today that recovery sustains, but it's not been the case so far. But we have quite a lot lined up on the show. Let's start off with the top headlines. Benchmarks give up all intraday gains, dragged by banks and financials. The Nifty currently swinging between green and red, and the mid-cap index too falls over 400 points from the intraday highs.
Dixon shares have surged after brokerage MK initiates coverage on the stock with a buy rating and a 20,000 rupee price target. Interestingly, MK is now the fourth brokerage to predict the stock to cross the 20,000 rupee mark.
Minda Corp shares spike after the company announces that it will acquire 49% stake in automotive products maker Flash Electronics. The acquisition will cost Minda Corp rupees 1,372 crore.
QSR player Devyani International has surged over 6% after Macquarie initiated coverage on the stock with an outperform rating and a 230 rupee price target. The brokerage says that it is confident on KFC and McDonald's formats along with the read-through from Yum China, making them the preferred stock.
The board of Aditya Birla Fashion clears the preferential issue of shares to raise near rupees 2,400 crore to trim debt, while the promoters will bring in close to 1,300 crore. Fidelity Group will infuse over 1,080 crore. A QIP to raise up to 2,500 crores is also on the cards.
Just before we get to the markets, some important flashes on your screen, and you pull up both Bharti Airtel and Indus Towers. Both of them are seeing a surge from the lows of the day. The Delhi High Court has decided a tax appeal in favor of both these companies, Bharti Airtel and Indus Towers. Indus Towers too trading with gains of around 4.5%. At one point was up almost 5 to 6%. But a positive news nonetheless coming in for both these companies. Now the Delhi High Court has granted relief to tower companies. They're saying that they are now eligible for input tax credit. So it's an important development for companies like Indus Towers and a cascading effect on Bharti Airtel as well. With Bharti Airtel, not a significant stock reaction, 0.5% higher there, but important developments coming in there for both Bharti Airtel and Indus Towers. There, the Delhi High Court ruling a tax case in their favor, and they have quashed the show cause notices that were issued to these companies denying the input tax credit. So important developments there coming in for Bharti Airtel and Indus Towers. The Delhi High Court has also said that it is wholly untenable for towers to be termed as immovable, and they've also said that tower companies too can be eligible for input tax credit. The Bharti Airtel there 0.5% higher, and Indus Towers trying to recover after that slight bit of a cool off that the stock has seen from the highs of the day. But the markets though have cooled off so far. The Nifty is now slipped into the red. We'll get to more on that, but we have corporate conversations lined up, Vivek.
That's right, Hormaz, a very important development for the entire telecom space, like you just highlighted. Well, the company in focus today is Shoppers Stop. The stock shares have surged today after the company posted a strong set of Q3 earnings. The company posted a double-digit revenue and EBITDA growth. To discuss this and more, we are now joined by Kavindra Mishra, Managing Director and CEO at Shoppers Stop. Thank you so much, Mr. Mishra, for joining us. First up, Q3 has been a strong quarter. 9 months consolidated revenue for you has grown by close to 9%. What are the early trends suggesting for Q4 so far, and early targets, if you've set any, for FY26?
So, Vivek and Hormuz, thank you for having me here. I think Q3 obviously has been very good for us, and what we are seeing is that the trend lines for Q4 should be similarly on lines of Q3. We are guiding for a 5% kind of a like-for-like growth for Q4 as well. Too early to comment on FY26, but I think directionally we are on the right way. So I think a lot of work on whether we are working on the IPs or premiumization. I think a lot of work is happening to ensure that customers come to our stores, and in our journey of premiumization, we have been able to drive that. So I think it has been quite a good quarter for us, and we expect a similar thing in Q4 as well.
So by similar thing, Kavindra, good afternoon. First of all, thank you so much for joining in. By similar, do you also mean that your like-for-like growth, which was only at 4% this quarter, despite it being the festive season, would stay as is? What's your outlook on that front? What do you expect to end the year with, if you could share a number on that?
So I think Q4 would be close to a 5%. That's what we are looking at, and that's what we are also guiding in our calls. Yeah.
Understood that. Let's move and speak about the beauty business. Beauty business for you has seen around a 3% growth. Players like Nykaa, online players, have reported a little over 30%, gross merchandise value growth. So clearly, when you're comparing it to them, of course, they will be off a lower base too. Why is there such a stark underperformance, and what are the early trends suggesting for Q4 and FY26?
So beauty, actually, if you look at it, and if you look at a larger spectrum for the year till date, beauty is the highest performing categories for us. So if we look at the way we operate beauty, which is more on the premium segment, that continues to do well. In fact, fragrances has led this quarter's growth by 14%. I think we have faced some issues in the masstige segment, But the call for shoppers is always the beauty is driven more around experience and less on the value offering. And we'll continue to work on that. And my sense is that Q4 should be, again, beauty should be one of the leading categories for us.
So by leading categories, would you aspire to go back to double-digit growth in the beauty segment?
Yes, definitely.
And what are you also targeting from the First Citizen members and the private brands, Kavinder? Is there a target share of revenue that you have in mind?
Yeah, so I think we are around 18% in the apparel space on private brands. And what we have been seeing is that it has become very profitable, because what we have done is over a period of time, we have been able to rationalize the brands and put the brands which are right for the business. And that should continue. So this 18% over a period of time should be anywhere between 22 and 23%. And that's a journey which we are on. A lot of correction has happened in the last 3 quarters. And I think we are on the right zone right now.
Mr. Mishra, one thing which we want to understand from you is the average transactional value. We understand that it is now up almost 6% on a year-on-year basis, closer to the 5,374 rupee mark. Now, the average spend or the average selling price too has inched up. Given that, are you now mainly targeting premium customers? And how do you see this particular trend play out Q4 as well as FY26? What are the targets over the ATV as well as ASP?
So I think the good thing is that while the ASPs and the IPT has gone up, the volumes continue to stay. So for example, in Q3, we have seen that trend continues. And my sense is that this 5,300 should be growing on a similar 5%, 4 to 5% quarter-on-quarter kind of number. Because we are changing the mix, we are getting more premium brands. And for Shoppers Stop, the strategy is very clear. We want to be the strongest premium omni-channel player in the country.
Kavinder, you had planned on opening, you have around about 109 department stores, if I am reading it correctly, and you opened around 16 during the quarter. How many do you plan on adding this quarter, and what's your store addition target for FY26 if you have set that up as well?
Yeah, so we should be close to, we should see close to 6 stores opening in departmental store format in Q4. And our guidance for the next year is anywhere between 12 to 15 stores, large format stores.
And if you could split that up as well across various segments?
No, so I'm purely talking about the departmental stores. On the other hand, we have a format called Intune, which is our value format. We are close to 59 stores right now. We should open 26 stores this quarter. So we should be ending the year at 85 stores. And our guidance for the next year is anywhere between 90 to 100 more stores.
Mr. Mishra, just moving on to that particular point, private brand sale actually went down 2% on a year-on-year basis, forming close to 12% of gross sales and around 18%, and for apparels around 18%. How do you see that particular trend panning out, especially when you're talking about private brands? It's inched slower. Is that a bit of a concern?
No, it is not. Actually, what has happened is that when we looked at our entire portfolio, we have rationalized the private brands and said, let's have the brands which have got the right to win. And it is not only driven by increasing the value as a business, but whether they are contributing more in towards the margin. So I think we have taken a profitable growth as a strategy and not only looking at a top line. And what we are looking at that we have clearly seen the needle move in Q3, and we expect that to move in Q4 as well. So my sense is that this 18% apparel mix of PB will eventually be settled around 20 to 23% over a period of time. But all that should be very, very driven by premiumized private brands and also driven by high profitability and margins.
Mr. Mishra, last couple of questions from our end. First up, you've launched a new beauty brand called Joyology. So what are the internal targets you've set for yourself over there? What kind of segment does that particular brand target? Secondly, First Citizen, we understand that you saw a significant amount of repeat sales. So what is it that you're targeting as far as First Citizen is concerned?
So I will answer both of them. So Joyology is for Gen Z. It is for a much younger customer. It's so while we have a brand called Arcelia, which is more fragrances, this is more on the skin and beauty, and we have just launched it across 40 stores in this quarter, and we will see a journey of that. It's too early to give you an exact number, but the initial traction is very good on that. First Citizen customer and the way we have been driving that particular piece is phenomenal. We had the best ever quarter in terms of the black cards, in terms of silver card signing repeats. So my sense is it will keep on growing, and we should be anywhere between 80 to 83% on a stabilized basis from the first citizen customer base, with a 68% coming from repeat customers, 65 to 70, and the balance coming from new customers who become a first citizen customer for us.
All right, Kavinder, thank you so much for joining in, sharing with us the views on the road ahead. Wish you good luck for the rest of the year as well. The management there of Shoppers Stop. The stock significantly off the highs of the day, but still holding on to gains of just about 1%. It's time for a short break. The Nifty continues to remain choppy, but what are the charts indicating? Jay Thakkar from ICICI Securities joins in on the other side to answer just that and share some trading strategies as well. Stay tuned.
But there are a lot of other players in the market who seem to be wanting to bet on this opportunity, the likes of Zomato, Swiggy and others.
It's almost like starting an airline but not having an airport. When we do one Lollapalooza, we're creating a city overnight and then tearing it down. It shouldn't be like that. You need public parks, you need arenas, you need venues, you need stadiums.
There are a lot of other players in the market who seem to be wanting to bet on this opportunity, the likes of Zomato, Swiggy and others.
Yeah, but I don't think just putting big bucks is going to cut it. I think you've got to be really careful. When there are more players, there's more money that comes in. You have the ability to go out into the market, to use some leverage with government.
Are you looking at the possibility of going public?
It's not a priority. Bankers come and approach us every day. I'll show you a whole list of these. They love these books. I don't know, I've got these books lying here. They're like weapons of mass destruction.
On quote are very important, and I think as a person, when you ride there, when you stand, and people, when they look up to you, they also need to understand that yes, she has done a lot for the country, and that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare, and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right. Yeah. When you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you've been very successful, what else you need in life? But I think to get till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion, so I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So, just the way you handle a victory, how do you come over?
Welcome back to Midcap Radar. Well, this is the show Midcap Radar, so we will be focusing on midcaps. Vamakshi today is standing by the wall to take us through all of the midcaps that are moving around in the session.
Well, good afternoon, Vivek. Let's first look at some of the stocks that are gaining momentum in trade today. Vodafone Idea is one such counter. That stock is up nearly 6%. Keynes Tech has seen a good recovery. It had been under pressure since the beginning of the year, and the stock has finally started to recover, up nearly 6%. Devyani International, look at the surge coming in on that one, 9.89% higher. And Anantraj is another counter that has slightly come off from the day's highest point, but is nevertheless trading with gains of somewhere around 5%. Apart from that, we have a lot of counters that belong to the capital market theme that are a buzz in trade today. 361 WAM up nearly 5%. HDFC AMC reported a good set of numbers yesterday. We have a couple of brokerage notes that gave a thumbs up to this counter. That stock is up nearly 5%. UTI AMC and BSC has been in focus over the last couple of days. Lots of brokerage notes have come in, and therefore the stock is up in trade. Apart from that, lots of realty stocks are gaining momentum in trade today. Let's look at Oberoi Realty, that's up 1%. There are some other counters like Phoenix Mills, Mahindra Lifespace and Sobha. They're also surging in trade today. But there are some stocks that are losing momentum in trade today. Keep in mind that all of these counters were abuzz yesterday, especially in the last hour of trade. All of these counters have corrected somewhere around 7%. Apart from that, there are stocks that are gaining on the back of strong volumes as well, and that includes Persistent Systems up nearly 4%, Wellspan Living up nearly 3%, Minda Corp and Indus Towers. Of course, there's a news flow out here. All these counters are up in trade.
Mamakshi, thank you for that. By the way, before we go to Jay Thakkar, just quickly pull up the rupee, and that has seen a very, very sharp appreciation in today's trading session. Suddenly, from levels of 86.60, the currency has now moved back to 86.37. So a 0.3% appreciation seen there on the rupee in comparison to the dollar. Mind you, the dollar index has now cooled off for 2 days in a row now. That one was at one point was at 110.2. That has slipped back to 109 now. So that too is benefiting the rupee, and a lot of the other emerging market currencies. Also aiding this is the fall in the crude oil prices as well. So sharp appreciation in the rupee, 86.35 now as we speak. But the markets continue to remain choppy, and Jay Thakkar of ICICI Securities is joining in for a quick chart check. Jay, good afternoon. Thank you for joining in. You know, we at one point it did seem as though we did break that lower highs streak on the charts, but we're just not able to sustain that and move on to higher levels. What are the charts indicating now? And couple that up with your stock recommendations as well.
Sure. Good afternoon to you, Hormaz and Vivek. On a Monday, we saw, weak momentum, Nifty breaking its previous crucial lows of 23,263 Hormaz, and that is what we had witnessed last Monday as well. There was a sharp sell-off last Monday as well. Tuesday we did see a recovery. So for a day or two, there is some sideways momentum, like we've seen last week. We are seeing this week as well. So this Tuesday as well, we saw some bounce back and a sharp bounce back in many of these sectors, and the beaten down names wherein there was huge short piled up. And now we are seeing some consolidation. Also, the kind of weakness which we have been seeing in dollar index since past 2 days is helping rupee to strengthen, as well as India VIX to cool down a bit. The main answer, I would say, Hormaz, lies in the India VIX, which we are anticipating to inch towards 18 or so going forward in this particular month, because of couple of events lined up, like US president likely to swear in on Monday, and thereafter budget as well. So I think it's likely to inch towards 18 and is currently trading around the levels of 15.5. It's generally paused around 16.1. So it has taken a pause there this time as well. Once it takes off those levels, I think the next round of sell-off should resume, and I think thereafter Nifty can be seen at 22,800 is what I think in the short term. At least in the Gen series, we are targeting 22,800. Unless 23,600 levels aren't taken off. So the reversal is quite far. It's just not 23,300, 400 Hormaz. It's 23,600 according to us. And if those levels are taken off, yes, Nifty seems to have formed a bottom, else the consolidation and thereafter one more correction down. So I've got two sell ideas since we have a sell on rise strategy right now. So the first sell recommendation is on Emphasis Futures. It's currently trading at around the levels of 27.76 right now. I'm expecting the stock to fall until 26.50, 2600 going forward. One can place a stop loss at 28.25. The Nifty IT has cooled off, and I think the sideways consolidation seems to be a distribution pattern, as well as we are seeing some short getting built up in Emphasis as well. CG Power is the next stock which I recommend to sell. It's trading around the levels of 612. Is a new entrant to the FNO series last month, and I think from these levels one can sell it. One can sell on rise as well, on the rise at around 620.22, placing a stop loss above 630, and one can target 585 positionally.
All right, Jay, thank you so much for joining in and sharing with us your views on the index and on specific stocks as well. By the way, just before we take that break, pull up Axis Bank as well, and that has slipped to the lows of the day now ahead of its results tomorrow, and that too is a big contributor to the Nifty cooling off from the highs of the day. Almost 3% lower is Axis Bank. Take a short break, more on the markets and specific stocks on the other side. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that. And for me, it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember, which was very close to your heart and was difficult to get over.
Yeah, recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning. And obviously, I just gave my 200% and I got that bronze back. So,
right, just come back harder. Just come back even harder.
I think the belief is very, very important. Just believe in yourself.
Bibi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj.
Welcome back to Mid-Cap Radar. Well, the news is that we've seen quite a bit of a sell-off from the day's highest point. The Nifty at this point of time very near the flat line, but threatening to go into the red territory. The Nifty bank is the one that's underperforming. Most of the large cap banks are actually near the day's lowest point, and that is what has drank the Nifty bank low near or down almost 0.2%. What's holding out in the green still is the mid and small cap indices, but they too have seen quite a bit of a sell-off from the day's highest point. But with that, it's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.
If you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support, or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Kho-Kho, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity, or not able to have that platform where they can prove themselves. So leagues like these will definitely help them to come up and think that yes, we also have something to actually look up to.
2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record.
Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks with me, Vinny Modiwala. I'm coming in from the Mumbai studio. A quick look at what the market is doing. Gave up all those morning gains that we had seen coming in. At one point of time, it did move to the red territory as well. As of now, just back to the green. So it's flip-flopping between the red and the green in the last half an hour is what we're seeing for the trading session. So Nifty is below the 23,200 mark. Keep an eye out on where that is headed. Similarly, Sensex also is off the day's highest point and trading almost between the red and the green. Not much of an excitement that's coming in for the benchmark indices. Sensex still a bit more on the positive side as of now, holding on to 0.1% of gain. Let's pull up what the broader markets are doing as well. The Nifty mid and small cap, they were also off the day's highest point, but still are managing to outperform those benchmark indices. So keeping an eye out on that. Just a few names that I want to highlight in terms of the top drags that are coming in for the Nifty 50 today are mainly for the banking side. So Axis Bank, ICICI Bank and HDFC Bank are among the top drags. And other than that, we have Bajaj Finance and M&M that are among the top losers and top drags coming in for the Nifty 50. So surely keeping an eye out on that. But on that note, let's get started with the show for today. And this is a show where we solve all your stock-related queries. Our experts for today, we have Saumil Mehta, Head of Alternative Research and Capital Market Strategy at Mirae Asset, Sher Khan, as well as Sharad Avasthi, Head of Research at PCG at SMIFS, joining in with us on the show this afternoon. Good afternoon, and thank you so much, gentlemen, for joining in with us on the show. And, let's get started with the first query for today. today quickly then. We have the first query coming in is on two stocks today. We have Mushir Sheikh, who's writing to us from Pune. He's holding 375 shares of NMDC. This is at a price of 88.75, so making a loss here because NMDC currently is trading at 63 rupees. Also, he's holding 50 shares of Tata Motors at a price of 942 rupees per share. So that also has seen a fall, specifically in these recent months coming in. He wants to know whether he could continue to hold both these stocks or look to sell them at the current levels. Let me start with you, Sharad. Good afternoon.
Yeah, good afternoon. I think NMDC, the valuations are attractive at the current levels. The long-term plan is to substantially expand the mining output, and I don't think they would face any kind of big troubles there. But the only flip side could be, the recent regulatory overhang on mining, which is roughly what on an industry level, it's probably somewhere around 2 lakh crores to be spread over 10 years. And then the state directives also coming in. So that's an overhang on NMDC. But I think at 7-8 times, most probably most of the negatives are already priced in. So I think we can continue to hold, hoping to see some recovery there if he's a long-term investor. But I think 1 or 2 years might be a tough time to get money out of NMDC, considering the China overhang also. But if you extend your horizon to say 4 to 5 years, when the fresh mining capacities also start contributing to the top line, bottom line, I think then NMDC could be a decent bet. And since the valuations are offering you a margin of safety, I think continue to hold, but extend your horizon to 4 to 5 years, maybe 1 to 2 years. It would be very hard to find profits out of this because of particularly the overhang on the mining issue. On Tata Motors, I think the JLR turnaround has worked very well for them on the domestic side for the first time in a lot of years. Maybe Tata passenger vehicles are finding traction. Commercial vehicles, I think, will continue to do well with the type of growth we are talking about in terms of reducing logistic costs, improving highways, the advent of EVs. I think all this should work out very well for Tata. And in valuation terms also, I think within the auto stock, four-wheeler stock, this is the cheapest available to you, obviously, because most of the earnings right now are contributed from JLR. But I think Tata Motors is something because of the PV and, CV cycle being better. There could be more weightage on the domestic numbers, particularly based on the EV side also. So I think conservatively, if it trades at around, say, 15, 16 times, I think you should continue to hold for a target of somewhere around 1,050 on Tata Motors.
Okay, that's a view coming in on the fundamental side as well. But Saumil, good afternoon and thank you so much. I think this is the first time you're joining in with us. So thank you so much for joining in with us on the show. Tata Motors, NMDC, what's your view? And specifically, when I'm looking at Tata Motors also, last 6 months, it's seen almost 25% fall. So, how does both this shape up in terms of technicals? Does it merit, actually averaging something like a Tata Motors or NMDC? Or would you suggest maybe selling the stock right now for the viewer?
Thank you so much for inviting me on the show. Tata Motors, I generally don't believe in averaging out on the losing side. Tata Motors is a good stock. It's a long-term story, very good, but in the medium term and in the short term, the trend is down. It is going down, and the levels in the short term, I would say, would be 693 is the support, and the next support is 619. So still a long way to go. On the upside, I think the resistance is 819, 820. Low top, low bottom formation. We may see a bounce back, but I don't see a medium-term trend to change very soon because the higher time frame momentum indicators have gone into sell. So I think I would see the stock close to around 620 levels for sure in next 20 in the medium term outlook. And in NMDC,
yes, Saumil.
NMDC is the same thing. NMDC is the same thing. A big head and shoulder pattern has broken down, and I think in the short term, medium term, both negative. I'm looking at least 53 levels for NMDC in the short to medium term outlook. On the upside, I think the resistance would be around 65 and 68.
Okay, those are the levels that you should be keeping an eye out on both the stocks. But let's move on to the next query. We have Gundeep Singh, who's writing to us from Punjab, and he's holding 200 shares of Sagility India at a price of 54 rupees, while 25 shares of Zomato at a price of 275 rupees. He's a long-term investor and wants to know whether he should continue to hold this or maybe look to sell the stock. What is your view coming in on this, Sharad?
Yeah, so I think Sagility, he can continue to hold. They cater to the healthcare segment, US healthcare particularly. Growth rates have been decent. Even the industry would grow at a very decent clip for the next few years at least. For Sagility also, you can expect, the top line to grow around 13-14%. And the bottom line would grow around 30% CAGR over the next 2 years, 26-27. So based on that, I think the only risk you could look at is basically a client concentration risk that they have on the books, which I believe most of the recent IPOs, smaller companies have that problem on their board. So I think that's the only risk that we can see. And obviously, being a tech-oriented thing, tech disruption is another risk that you could look at. But other than that, I don't think there's much risk on it. And considering the type of growth, I think getting 30x kind of multiples would not be very difficult for a company like Sagility. So hold on to it for a target of around 60 rupees. I think that's something possible. And Zomato, we think that probably at 8.5, 9 times 1 year forward, I don't think much is left on the table, EV to sales basically. So I don't think Zomato has much left on the table. And as we have been seeing, there are a lot of incumbents that are trying to come into the market. So I think if you're getting a Swiggy at maybe, 6 times 1 year forward EV to sales, I think that's a better idea to switch into. So rather than Zomato, I would be happier buying into a Swiggy just because of the valuation comfort, nothing else, if you want to stay within the same space. And I think competition is something that will keep happening. So most probably the type of re-rating we have seen on the back of Blinkit, etc. Maybe Swiggy would repeat it better rather than Zomato getting re-rated from here.
Okay, let's move on to the next query. We have Namrata Rao, who's writing to us from Tamil Nadu. He's holding 200 shares of Bharat Electronics at a price of 250 rupees. They want to know whether they should continue to hold this as well, or what is the future prospect of this one. What is the view coming in on this stock, Bharat Electronics, from your side, Somel?
Bharat Electronics, I think I'm long-term I'm bullish on Bharat Electronics because it has been in the consolidation phase since the start of 2024, I think, and it's been consolidating in a broad range. The higher time frame momentum indicators are still oversold now. So I'm looking at a short-term correction, definitely till 240, 230 levels, but in the medium term to long-term outlook, it's looking really nice. Once we get a positive monthly close around 230, 240 levels, I think that will be the right time to buy the stock for a medium-term outlook. But in the very short term, the resistance would be around 273, 275, and 240, 230 would be the target in the very short term.
Okay, keep an eye out on those levels over there for Bharat Electronics. But on that note, we're going to slip into a very short break. But after the break, we'll come back with a special segment, The Growth Code, an initiative by Grow and CNBC-TV18, where we will answer and address the viewer questions on how to navigate the market and make informed trading decisions. So stay tuned in.
Highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the macro, the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked.
Welcome back, and it's time now to focus on the Growth Code, a special initiative by Grow and CNBC-TV18. Whether you are new to trading or a seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. We still have with us our experts for today, Saumil Mehta of Mirae Asset Sharekhan, as well as Sharad Awasthi of SMIFS. Thank you, gentlemen, for waiting by with us. Now, let's start with this segment's first query for today. We have Riju Prasad, who's writing to us from Mumbai, and she's saying that she has heard stories about people doubling their money in just a few months in the market. She's asking if that is even possible actually in the equity market, and what should she be doing with such suggestions that come in. Saumil, I beg your pardon. Let me take it across to you first.
Doubling the money in a few months is not realistic at all. I think it is possible in a very rare case where you have a very high risk and a very high reward scenario. But I think that investing and having a discipline with a plan, having a consistent return of 12 to 15% is achievable, but doubling the money in few months is definitely not realistic.
Absolutely, it's not a reality. And Sharad, your view coming in on this query, what would you suggest to the viewer?
Yeah, I think occasionally, as Saumil rightly said, that once in a while you can have that kind of thing that maybe you buy something and it just goes up haphazardly. But obviously, you have to understand a very simple logic in the markets, that higher the risk, higher the return. It's as simple as that. This kind of returns, I think on a long-term sustainable, scalable basis is not problem. Once in a while, luck and everything, all the stars align and you get that's a different thing. But regularly, I don't think that's a possibility.
It's not a regular phenomena that will happen in the market and that one could be watching out for. But long term, yes, maybe it's possible. In the long term, you're holding a good stock, then you could see maybe doubling your money as well. But let's move on to the next query. We have Simran Singh, who's writing to us from Noida. Now, she's asking whether it is reasonable to expect 20 to 30% growth and return every year if she invests in stocks. Sharad, let me take this across to you first.
No, I think you can't expect linear kind of numbers from the stock market. By virtue of it, it's investing in a business. A business goes through cycles of highs and troughs. So I think it's not reasonable to expect 20 to 30% every year. But yeah, over a period of time, you could expect, connected to GDP growth. So ideally, as Saumil rightly said in the earlier question, 12 to 15% is what you should expect on an annualized basis. That is if you average it out over a larger period of time. But point to point expecting every year to give you 20 to 30%, I think that's not the way you should look at it. And a larger alpha, maybe 12 to 15%, you might have 4-5% alpha because you have invested in mid caps, small caps, because there the alpha is better over the longer term. But linear relationship, you can't expect year to year, point to point kind of returns from the equity markets. They will be a bit haphazard, not linear in nature. And expectation, if large caps, it's 12 to 15%, mid caps, small caps, maybe you have a 3 to 5% alpha above that.
Okay. Saumil, I believe you also concur with the view, right?
Absolutely. It'll be extremely challenging to have consistent return of 20 to 30%. It can be like a few years up and a few years would be negative as well. So overall, if you calculate like 5 years time frame, then you can probably get 12 to 15% achievable in annually. That too annually is not. It won't be possible to have 20 to 30% every year annually.
Right. This next query we have is coming in from Shweta Tiwari, who's writing to us from Pune. She's asking how she can manage her expectations when everyone is boasting about making huge profits around us and around her. So normally, how do you handle such a situation then? You know, because I think this is that FOMO feeling we always talk about. Saman?
That's the feeling for us as well, like amongst us as well. But overall, I think just focus on your own plan. You should have your own financial goals. You should have your plans. Keep updating your knowledge. Keep reading research reports so that you can update your current knowledge about the stocks, equities, commodities, etc., etc. So yeah, disciplined approach is definitely better for the long-term investing.
Absolutely. Disciplined approach is very important, Shweta. So keep an eye out on that and always be set your goals and keep yourself disciplined on that. But Sharad, your view also coming in on this one.
Yeah, I think largely similar. Everything works in a different time frame. Like every individual cannot excel at the same time. Different people excel at different times. Similar is the story for stocks. So not every business will go through the same cycle. Some businesses will go through a down cycle. Some might be good. So stick to a process. Do not compare across businesses, across companies and think that everything needs to go up in the same fashion. And decide on your process and stick to it. It's about what you are comfortable with, whether you are a trader, investor, what kind of investor or trader, and design a process around it and stick to it rather than haphazardly switching between processes and styles and ultimately, maybe on average losing money across the board.
Okay, this next query we have is coming from Rahul Sharma, who's writing to us from Pune. Now, he's saying that he keeps hearing about stock tips and, words coming in like sure short gains. And I think this does a lot of WhatsApp forwards or Telegram is where you see all these words coming in. He's adding that should he trust them or they're too good to be true? How do you judge this situation, Sharad?
Yeah, I think certainly too good to be true. And I think you have to understand the basic underlying is that you are investing in a business. And every business has n number of variables which are internal and external, both to the company, which we call macro and micro risks. So I think nothing can be sure shot in a business. There are probabilities, but nothing is sure shot. And certainly if someone is sending to you free of cost on a WhatsApp, I think he or she would do better making money out of it rather than telling the idea to you. So they are basically distribution statistics developed by some shrewd people. So it's better you avoid such stories, go in for a good advisor, do your own research. I think that is it. And anything and everything you do with stocks has a perceived level of risk depending on the kind of stock you or business you are going in for. So nothing is sure shot and nothing is risk free. Be very clear about it.
Absolutely, nothing is sure shot. I think, Saumil, you will also agree to this, right?
Of course, because it's absolutely a lie if somebody is telling you that they give you stock tips and it's sure shot gains. It's absolutely a lie. Please don't get into these kind of setups and get into trouble. It's definitely a scam, probably. So stay away from these kind of things.
Absolutely. Nothing is sure shot, especially in the equity markets. For sure, nothing is sure shot. So please do not fall for such things as well. Be very careful. Do your own research as well before you actually get into anything. But let's move on to the next query. We have Shiv Jain, who's writing to us from Kolkata. He says that he is a new investor, wants to know what kind of return should one aim for when they're starting out. This is the first time they're investing. So what is it that they could look out for, Sharad?
Yeah, I think ideally just look for around 15% per annum, but that's also when you stagger it over a period of 5 years. So the compounded return, that simple compound interest formula, you should expect somewhere around 15%. That's a realistic expectation. And if you are a new investor, ideally you should go in for large cap oriented funds or, ETFs basically, so that your risk side is lower, so that in case volatility does come into the market, you are not unnerved by it because you are invested in top-notch stocks.
Absolutely. Saumil, your advice to a new investor who's just entering the equity markets?
I think for the new investor, the first thing probably is to is capital preservation. When you aim for capital preservation, you'll start to get into large cap stocks, quality stocks. You'll start investing in quality stocks, dividend giving stocks and all those. So I think that will be the first aim. And then once you get a little more experience, then you start trying to expect 8 to 10% returns annually. Probably after 5 to 10 years, you start getting a hang of it, and then you have a good knowledge about the markets. Then you can start expecting 12 to 15% of returns, that too annually, and after 5 to 6 years probably.
Okay, this next query is coming in from Chandigarh from Ridhima, and she's saying that she had heard that people should never expect more than 10 to 12% return from the market. She asks if that notion is true. What is your word on this? Sharad, you mentioned 12 to 15%. So I guess this is true what she's expecting, right?
Yeah, I think frontline investing, and the logic for this 10 to 12% that people tend to talk about is basically related to the nominal GDP growth, which is your GDP growth plus inflation. And generally in the longer cycle, what will happen is that at what rate companies grow, they would really align with the GDP growth. They can't grow beyond that as a wholesome game. So I think that is the logic why it is said, and I think it holds true in the long term. Maybe occasionally you have companies, the likes of the Nykas and the Zomatos, they can grow phenomenally, but it usually lasts for the initial 3, 4, 5 years maybe. And beyond that, that stagnation over a longer term, 5-10 year period, you will have that. So I think, yeah, it's logical to expect that kind of return on a diversified large cap portfolio.
Okay, that's a word coming in from Sharad on the last query for today. So thank you so much, Saumil, as well as Sharad, for joining in with us on the show and helping our viewers solve their specific queries related to the stock market, helping them understand how to invest better. Thank you so much for that, Sharad, as well as Saumil. But with that, we are absolutely out of time on this edition of Your Stocks on CNBC TV18. Remember, you can always email us your queries and we'll address them with our experts. Up next, you will have Closing Well to take you through the last hour of trade and what's happening in the market.
Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Taiwan index is down almost 0.5% on trade. You're seeing Hang Seng also that's very, very muted in today's trading session.
The DPDP rules provide for children to access online services only after getting parental consent.
And then 49,227 is the next level on the upside.
The market is pricing in maybe 6-7% of tariff increase.
30% higher start, 23,256.
India's knocking on the door of around 2% now at a global level.
When the technology matures, more innovations take place and the cost starts coming down. That is exactly what is happening in this space.
Tata Power has evinced interest participating in the privatization.
A lot of these PSU banks are in focus as well, but the value of the government shareholding definitely has come down.
After the kind of very weak session we saw on Monday, it's been a good bounce back that the markets have seen.
It's expected to be a modest quarter for HDFC Life.
Steep sell-off, yesterday a bit of a recovery. Hoping today that recovery sustains, but it's not been the case so far.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell. I'm Nigel and with me is Rima as well as Surbi. And if you look at the headline index, you'll say, well, we didn't miss anything because the Nifty is as flat as can be, but plenty of action from the broader markets. I think a day of consolidation is actually not so bad, though we had our moments for the bulls earlier today.
Bit disappointing, right? We almost went to 23,300. So there is no upside momentum, and that faded as the day progressed.
Absolutely. And even in the large cap space, we've seen a fair amount of profit booking on banks and on stocks that have had a good run. I mean, a case in point would be Mahindra and Mahindra, perhaps. Financials as a pack have been quite weak, not just banks, actually. Let me extend that to, stocks like Shriram Finance, some of the, Bajaj names as well, Bajaj, Finserv Finance, SBI Life. So BFSI beyond banking is weak, not really lending too much of a support. Power has been a very strong theme, and we'll talk about that as we go forward, including, of course, the story on Tata Power, the exclusive that Vivek got us later. But otherwise, range-bound session, let's see, important one now.
I just want to spot two aspects. One is the positive aspect, that is the rupee is stabilizing a little bit. So we pull up the intraday chart of the rupee, we'll see that it's pulled back a little bit. And the dollar index is well behaved after a while. So maybe Trump will not be as feared or as bad as feared. So that's one good sign. The rupee is stabilizing, the dollar index as well stabilizing. But the problem is stocks like Kalyan Jewellers. The stock has corrected 40% in a matter of 8 trading sessions. And that's a big worry. It's down close to around 10%. The management has come on our channel. They've tried to clarify. They did a con call yesterday and they tried to clarify. But still the stock is falling. I'll tell you what, this mark is very important, 535 rupees. Why do I say that? In August, September, the promoter came and bought 2% at 535 rupees from Warburg Pincus. So if they're going to walk the talk, and if they believe that, in fact, that things are pretty much okay, and the stock is just falling on mere speculation, which is unlikely to be the case going by the volumes, then they'll have to come in there and show some skin in the game, and maybe in fact did what they did earlier last year as well. But that was the start of that rally, which we saw, that brisk rally from around 500 all the way to around 800 rupees on, and all of that has got given away. 535, I recall, they bought 2% stake in August, September.
PSUs are also under pressure. And quite sharply down for, say, a Central Bank of India, that's down 8%, IDBI, UCO Bank, a Bank of Maharashtra. So some of these mid-cap banks are selling off very rapidly. And even in the mid-cap space, a stock like MobiKwik, it's 12.5% down on MobiKwik, and it's fallen on very large volumes. On the way up, BSE is shining 5.5% up. You've got Nykaa, Swiggy, Paytm. So some of the other new age tech companies are higher in trade. And Minda Corp, which made that acquisition, Nimesh had hinted to us about it. Flash Electronics, they're paying about 1372 crore for a 49% stake. It expands their portfolio in EV and ICE. Minda Corp is higher in trade. So lots of action in individual stocks.
Absolutely, it is literally about some of these individual moves and shakers. So the dip in PSU banks is fairly noticeable because it's happening on large volumes as well. Remember yesterday, a clutch of PSU banks moved higher because of the story on possible divestment. Today, and especially now, I mean, in the last 1 hour or so, the decline has been fairly rapid. UCO, Central Bank of India, IDBI Bank, name it. Bank of Maharashtra is down about 3.5% as well. So this is no doubt the weak pocket of the market. Zomato, Swiggy both doing pretty okay. Some of the QSRs are doing quite well thanks to some positive brokerage commentary. So we'll talk about these trends as we go forward. Let's get started. We've got our technical experts joining in, talk about the positioning now for the last hour. Mitesh, good to have you as always. So what do you make of this very range-bound trading action on the indices? On the Nifty or the Bank Nifty, do you have a trade?
So earlier in the day, I talked about a bounce back which could be sold into, and I gave a range of about 23,350 on the Nifty, and we got a high of 23 to 94. So I think ending around 23,300 is a selling zone, though I think, we were waiting for the 30 points higher to go short. That didn't happen, but that's okay. But yeah, I think as long as you don't cross 23,350, I think the structure will be on the negative side, on the weaker side, and only after that, we'll trade and take a long position. Otherwise, our stance is to at least have some put spreads, if not direct short. And direct shorting should be done when the risk reward is slightly favorable. So on a pullback, I think that can be done. And similarly on the Bank Nifty also, I think, it was important to get past 49,000 and stay above it. The Bank Nifty did manage to cross that level, but it's not staying above it. So for the timing, avoid or, wait for a bounce back to play out if somebody wants to take a short position. On the stock side, I think Granules is a sell. Keep a stop at 578, look for a 550 kind of a target to begin with. Maybe, eventually the stock can test lower levels as well. And on the buying side is Eicher Motors, which I would recommend buying with a stop below levels of 5,000 for targets of 50,200.
By the way, updates coming through. Positive for TVS Motors. It's become the #1 player in the two-wheeler market share. I'm not sure if this is the EV two-wheeler market share. It should be EV.
Yeah, that battle between Bajaj, Ola and TVS has finally topped the charts.
Yeah, so in electric two-wheeler, yeah. So in the month of December, it was Bajaj on top, followed by TVS, and then you had Ola Electric. And now, as of January, it's TVS Motors on top, followed perhaps by Bajaj Auto, and Ola Electric continues to maintain its third position. We'll try and get more numbers out for the other companies too. But let's get to Mangalam now. He's joining in with a Macquarie note on Devyani International. They've initiated coverage on this stock. Mangalam?
Yes, so Macquarie actually has looked at all the trends coming in from the QSR space, and even looking at the Jubilant Foodworks third quarter update, all the trends are pointing towards recovery in the QSR space after many quarters, 8 or 9 quarters of weakness that we're seeing, and that's what their channel checks are indicating as well. Macquarie has actually created a proprietary restaurant tracker index as well, and in that the top 2 names which have done well are KFC as well as McDonald's, and as a result of which the KFC franchisor, which is Devyani International, is among their top picks. They've initiated coverage there, and they also believe that maybe if there are some sops which come in for the middle class during this budget on Feb 1, we will see the industry, see improved same-store sales growth as people will have a little more money in their hands to go out and indulge in these quick service restaurants itself. In order of preference, on account of growth prospects and valuation of stock price move already, they like Devyani International first, thereafter Westlife, then you have Sapphire Foods, and Jubilant Foodworks comes last, because Jubilant Foodworks over the last 3-4 months has outperformed all the above peers, and Devyani International actually has been a bit of an underperformer there.
Okay, all right. A big move on Devyani, 9.5% up. Mangalam, do stay on. We have a lot of other stocks to discuss with you as well, including Trent, and maybe we'll try and get in a word on Kalyan as well. But let's ask, Siddharth Khemka what he thinks about QSR. Siddharth, welcome to the show. Thanks for joining in. It's interesting, this note, obviously the market's definitely, sitting up and taking notice of it. And probably at an interesting time. We're talking about urban consumer slowdown. So obviously there's some kind of down trading happening. Maybe instead of going to the fancy fine dines, you go back to your QSRs on a lighter note. But anyway, what do you think of the, the listed entities here? Does Devyani fit the bill for you? If not, maybe the others like Westlife?
Yeah, good afternoon. I think, yes, if you look at, there has been a lot of debate around the consumption theme this time around. And definitely we are seeing at the margin some contraction in terms of the spending, especially from the urban areas. And our channel checks also suggest that while the quick commerce, which was also seeing a strong uptick until now, at the margin, again, they are also witnessing some pressure with a lot of expansion that they are doing. If you see most of the top 3 quick commerce companies, they have raised funds to expand, and that is putting them on a lot of pressure to deliver on the numbers. Coming back to the QSR, I think yes, some of the players are definitely showing the uptick in terms of growth, and Devyani is something that we also like compared to a Jubilant, which has done well in the recent past, and a Westlife again, which has done well, and now with the valuations, we believe Devyani could catch up. The company is definitely focused on the long-term growth, particularly through the expansion in the smaller towns, diversifying its brand portfolio across QSR as well as the casual dining space. So we've seen that if you look at they've continued to expand, focus on the value-driven offerings at the KFC, Pizza Hut, which is expected to drive the transaction growth. And hence we are expecting a recovery in both in the operational performance as well as in terms of growth. So looks good as of now within the QSR space. Devyani looks good with the improvement in growth, valuations comfortable. We recommend a buy, and we currently have a target price of 215.
Okay, all right. Siddharth, let's hear out from Mangalam as well, yet again about Trent. That stock is in focus. It's the top winner on the Nifty. Mangalam, you want to fill us in with the IC note that came out?
Yeah, Trent had been on such a one-way tear that brokers were left wondering at what point do we initiate coverage. And thereafter, after a 25% downtick that we've seen on the stock from its highs hit in October of close to around 8,200 odd rupees, maybe this was the right time that brokerages looked at the business. No real difference when it comes to the business, because the thesis is pretty simple. Irala has initiated coverage of the buy. Their target price is 8,500. And what is their thesis? That Zudio will grow ahead of peers despite intensifying competition because of their successful private label strategy, robust transaction led by differentiated fashion, and also prudent focus on both quality at a reasonable price. Things that some of the Zudio customers are pretty sanguine about. They expect Zudio to grow at 31% CAGR, and they expect Westside to deliver steady growth. So steadiness in Westside with additional growth coming in from Zudio is what the thesis on Trent was. After a 25% correction, maybe Elara believes that this is a good time to enter, because they do expect the company to do about 27% revenue CAGR over the next 4 years with 38% net profit CAGR. But just keep an eye out on the valuations. They are ascribing 57 times EV to EBITDA based on September 27 expected EBITDA to their core business, and 4 times EV to sales on Star Bazaar. The only risk factors that they have are slower than expected store additions, price war among value players, and perhaps some sort of failure to gauge fashion dynamics. So these are the risks on the board. Stock down 25% from the highs, maybe a good entry point as per Elara.
Okay, all right, Mangalam, thanks a lot for that. Well, Sid, I want to ask you about two names. I recall you all were very positive on two names. One was Trent, and you all got it bang on, from very, very early on. The stock went dancing away. It's come down a little bit, but I think you'll maintain your positive stance. So what's the view out there? And also Kalyan Jewellers. That's another one that you all were quite positive on, I think. We've discussed that in the past as well. The stock has come down to 535. It's 10% down, got smacked in the last 7 trading sessions. What's the view? What should investors do? Because it's clearly creating a lot of panic.
Yeah, Nigel. I think yes. So thanks a lot for the compliment. I think yes, we continue to like Trent. The stock has corrected because of the growth rate kind of coming down from that 40-50% plus to now. What even we are expecting is that going forward next 2 to 3 years, Trent should be able to deliver a 30% plus earnings growth, and that is a good enough earnings growth because we believe that is an industry-leading growth, best-in-class operational efficiencies, store additions, and I think the brand talks for itself. So pretty steady. I think the correction is only offering an opportunity for people who had left out or could not jump in to get into a quality name like Trent. We maintain a very positive view on Trent with a target price of almost 8,300, a significant upside from current levels. So we believe that the outperformance from Trent should continue, and that should help the stock price. Coming to Kalyan, I think that's a difficult one to take in the current market. As you rightly said, the management not only did a con call, they went on most media channels, refuting the claims of what the rumors are going on in terms of the income tax raid or something else. I think there is no smoke without fire. The market definitely seems to know something that we as analysts are yet to know. I would suggest that while the core business, even the Q3 business update that came, pre-quarterly business update was pretty strong for Kalyan, which makes us positive on the business. But purely looking at the stock price, I think one should wait for a couple of more days for the clarity to emerge and then only take a call on this stock at this juncture.
We'll have to wait by for that because, just to give one more observation out there, the promoter entity came and bought around 535, but I'm looking at the holding at 62%. Out of the 62%, 20% was pledged.
Exactly.
So we just need to keep that in mind as well. The promoter entity needs to come out there, tell them what are your intentions. We backed up the stock at 535. Are we interested yet again? Point number one. Point number two is that pledge intact. Now that's going to be important as well because clearly, very, very nervous looking screen.
No, absolutely. Because in that call yesterday, there were multiple issues that were raised, and they dismissed almost everything, including allegations of bribery and so on and so forth. There's so many audit issue with auditors. They said nothing is wrong, audits are fine.
They joined on HTRO here and they clarified everything, and even after that the stock came down. Mangalam and Hormuz, I recall, they asked them everything, whether it's the aeroplane, whether it's the pledge, whether it's the inventory, everything they asked them. And after that the stock saw further downtick. Yesterday they had a call, still the stock is down. So now I think something needs to be done.
Absolutely. You need to keep those pledges in mind for sure, considering that out of 62%, 20% is pledged. Now, whether someone's selling those pledged shares in the market, who's to say, but perhaps some more disclosures will help. That's Kalyan Jewellers. Let's quickly move on and look at some of the other stocks that are moving around as well. On the brighter side of things, there's, by the way, HDFC AMC reported numbers yesterday. The numbers were good. The stock was reacting during market hours, but today, of course, a lot of notes have come through, and it seems the market's liking the story and lapping onto it. One of the issues that has been highlighted is that generally, they've tightened the leash on operating costs, and also the fact that the manner in which commissions are being paid out, that's getting rationalized. So that seems to have kind of tied into the profitability this time around. So Siddharth, what do you think? I don't know if you have coverage on this particular asset manager, but HDFC AMC or in general, the listed mutual fund universe, do you like it?
So yes, we definitely have coverage on AMCs. We recently covered a lot of names in our theme report covering the capital market sector. So while our top preferred name in the AMC would be Nippon Asset Management, but HDFC did come out with very strong numbers. We have a positive view and a target of 5,200. What we see is that the management commentary saying that while market seems to be chasing a lot of new products, they are focusing on market leadership in the existing products, and we are seeing good inflows into the equity AUM, which is kind of improving the yield. So I think that strategy from a house like HDFC, focusing on their long term funds and making a leadership out there, that stands out clearly in a market where we are seeing flood of NFOs and you don't have a track record. So definitely differentiates HDFC. With the market improving, I think flows continues to be strong and they are gaining market share. That should also help in the overall growth. So we maintain a positive view. We believe that increasing share of equity in the overall AUM, 30% CAGR in equity AUM versus an overall AUM CAGR of 24%, that should help in improving yields, and hence we maintain a positive view with a target price of 5,200.
Absolutely, take that point, and especially on the NFO bid, because I track this from a personal finance standpoint as well. I think a lot of people are saluting HDFC AMC that in a market where others were launching defense funds, they have an old defense fund. They actually stopped taking subscriptions because, this is an asset manager that felt that this is getting a little too overheated, not the time to be chasing defense as a secular sort of segmental play. Today, of course, the stock's doing really well.
Well, TVS Motors has pretty much moved to the high point of the day on the back of the two-wheeler data for the month of January. The stock is up nearly 1%. Reliance Industries is higher ahead of its numbers tomorrow. It's expected to be a good showing, an improvement in the company's EBITDA led by the oil to chemicals business because Singapore GRMs recovered in Q3 versus Q2. For the telecom business, expected to be a steady quarter, a growth quarter after the July tariff hike. So Reliance Industries is seeing buying. And MobiKwik, a stock that we spotted earlier, well, the 30-day lock-in has come to an end today, and about 4.6 million shares are tradable from today. And the stock, remember, has had a fantastic run-up from its issue price of 279. So perhaps that's weighing on MobiKwik.
Yeah, that explains this big decline, 12% down on MobiKwik today. By the way, Bank of Maharashtra numbers on your screen. The NPA picture seems to be stable. Stocks down about 1.2%. Remember, this is one of the banks where at least the in-principle approval seems to be in place to divest some of the government's stake. And yesterday it had a big rally, and right now also a little bit of a spike up coming on the stock. But by the way, we were discussing the capital markets theme in the market and stocks that you can still bet on or not. We had a conversation with Dinesh Thakkar of Angel Broking this morning. Angel came out with numbers yesterday, numbers a little subdued. He sort of gave out his view on how Angel is now dealing with the impact of the change in a lot of regulations, including the true to label norms. And of course, the change in the F&O market regulation itself, with now the number of expiries, weekly expiries, coming down to just 2 in a week. Hear out what he has to say, and then we'll ask our guest about it.
In a digital kind of industry, there's a fixed cost. And if we get additional customer on the same fixed cost, and if we are able to improve our margin based on increment in customer base, there is no need for a price increase. So we will wait for 1 or 2 quarters before we decide on any price hike if it is needed. But my gut feeling is that looking at the growth that we are seeing in this industry and looking at kind of participation from customer, we would be able to recover our cost and maintain this margin of OPM of 50%. So we will take 1 or 2 quarters to decide whether further price hike is needed or not. If you look at this quarter, all kind of worst thing which can really dampen sentiment and reduce volume had happened, which includes FII selling, US election, our government spending being low, economic growth being low. So if I remove all that noises, I think we would be fairly in the range of all-inclusive impact of regulatory changes to the tune of 18 to 20% impact on our top line. But now over here, what is important is that growth that we are seeing in customer base, that is not slowing down. So our customer base is growing at the rate of 40-45%. So this impact, what we are seeing, it is just a one-time temporary impact.
Okay, so that's Mr. Dinesh Thakkar saying that Angel One is going to get through this. In fact, even without a price hike, they'll take their margins back to 50%. Siddharth, what do you think? I mean, the market's definitely believing that view. Look at the way the stock's done today, almost 6% higher.
Yeah, Survi, I think yes. So if you look at some of the levers that they have in terms of pricing, they would use the timing of the usage is now, as the promoters have highlighted, remains uncertain. But we believe that things would fall in place. Margins, as they highlighted again, should improve. What we also see is that the investments in new business segments, that is keeping the cost structure elevated, and there is still some time to see the fruits of some of the new businesses, be it wealth management, AMC business, to start contributing meaningfully to the overall numbers. But nonetheless, given the current uncertainty, we see that Angel is managing the situation well and is demonstrating the ability to protect its profitability. So that is something which the market is liking. But as I said again, there are near-term challenges, be it on the cash segment, be it on the F&O regulation impact. So that could keep the upside in check. Nonetheless, we remain positive on the long-term story. We have a positive view and a buy rating. We have revised our target a bit lower to about 3,200.
Thank you very much for that, Siddharth. We need to slip into a very short break. But as we do that, here is some good news for all our viewers. India's business news leader is now just a click away, introducing the CNBC-TV18 all-new app. Get instant access to breaking news, in-depth articles, financial world updates on your fingertips. Download the app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
And your son's sailing, I believe. Yeah. So, talk about all the lessons and all of that. Are we on the cusp of a breakout moment for the experience economy in India?
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yes.
We live in 4 Indias. We live in the London of India, which is about 5 million people. And then there's about 50 to 60 million Indians, which I call the United Kingdom of India. Then there's 400 million Indians, which I call the Brazil of India. And then you've got about 300 to 350 million Indians, which I call the Africa of India.
Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities.
I've got a clean conscience. My karma is good. I sleep well.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more.
Welcome back. You're with us on Closing Bell, and the market, at least at the index level, is managing to hold its ground. The Nifty's managed to swing back into positive territory, about 40 points higher right now. So let's move on and welcome in our next guest. Jitendra Gohil, Chief Investment Strategist at Kotak Alternates, is with us now. Jitendra, great to have you. Thanks for joining in. I think the bulls are just heaving a sigh of relief, right? We've got 2 green days on the trot, if today is also a positive close. What's your best guess? I mean, first market-wide view, have you been nibbling in to this fall, or have you been keeping your powder dry waiting for lower levels?
Hey Surbi, hi. Thank you for inviting me on your show. So a couple of things that we are observing right now, and we are a little cautious as of now, and we have been deploying for sure, but with a gradual deployment plan. That's what we are doing as of now. There are a few things that we are observing very keenly. One is the US bond market. If I look at from September onwards, the US yields have gone up by almost 120 basis points, and even the dollar index is up almost 8-9%. In these kind of scenarios, generally the emerging market tends to underperform. But what we feel right now is that there's too much hope is built into US markets. So most of the investors have concentrated all the bets in the US market. There are some reasons to believe that this market is going to do well. However, there's too much of optimism, as we believe, that is now baked in the US market. And the moment we start to see some kind of slowdown in US. And remember, it's not everything so all right in US, right? So the debt to GDP is running at almost closer to 130%. They're talking about cutting government spending, which might lead to domestic market slowdown. And US cannot be seen in isolation because it generates a lot of revenues, a lot of profits outside US also. So if other markets are going to see economic concerns, then even the US market will have to slow down. The moment that we see that these kind of factors starts to show signs, I think we will see US market will take a breather and money will come to emerging market. But till then, I think the Indian market, given some minor slowdown that we saw in the previous quarter, and obviously the earnings cuts that we saw in the previous quarter, has led to some sentiment deterioration. And hence we are a little cautious. We think that the worst part of the macro slowdown is over in India, most probably. And from here onward, we might see some acceleration. And given our view that US market is now coming to a very stretched kind of levels, we feel that in the next couple of months, there should be some stability. So we are using this correction as a buying opportunity.
Jitendra, hi, afternoon. So what exactly are you buying? How's your portfolio constructed right now?
So Rima, so we are taking a balanced approach. Earlier, it was a very, it was very clear that, look, government spending is improving, investment to GDP ratio is improving, and government was very clear that they want to do all the supply side reforms to control inflation. And that's the kind of view for the past 10 years since 2014 that, there's a huge focus was on infrastructure. But slowly, gradually, if you see, a couple of years, we have been talking that, look, spending 11 lakh crores by the central government is not easy. And to expect that every budget, this capex spending will go up another 10-20%. I think that's very tough ask. So we feel that government spending in infrastructure will go higher, but the pace of growth in infrastructure will slow down. And that leads to some more headroom to improve the consumption part and where the economy really needs that. So we think from a portfolio perspective, now we are balancing the portfolio. Earlier, it was highly tilted towards most of the domestic cyclicals in all these sectors. Now, slowly, we are moving towards the consumption part. I'm not saying consumption pain is over. But we feel that sooner or later we will see some consumption recovery, and there are some green shoots visible, right? So if I look at the rural side, the monsoon has been pretty okay. This time the Kharif output is expected to be somewhere around 4% and also the Rabi season is expected to be good. Inflation in food has started to ease, and I feel that look, this is a good time to look at some of the stocks which have battered down really bad in the previous cycle. So I think consumption recovery is going to take place. So there we are a little bit more constructive. Slowly we are building exposure there. Structurally, we believe that pharma is a sector because looking at the inflation in US, the healthcare cost in US has been concerned. And I feel that some more business opportunities might come to India. Some of the CDMO players, contract manufacturers have started to perform really well. And we are concentrating our bets on the pharma sector as well. And lastly, from the financial side, we are a little bit cautious here. The growth is slowing down, margins are under pressure. So we feel that there are certain pockets in the financial sector, such as CV financiers, we have been accumulating. We also believe some PSU banks which have corrected. So there also some buying opportunity might emerge.
Okay, all right, Jitendra, let's focus on the consumption part first. What will you be looking to buy? Staples?
Hey, Nigel. Consumption staples, staples could be a kind of a short-term play in our view, looking at the rural recovery that we are talking about. But structurally, we feel that staple companies are going to see margin contraction. Last 7-8 years, if I look at the kind of EBITDA margin expansion these FMCG companies have seen, now is the time when the demand is not picking up and government is reluctant to go for a massive consumption stimulus. It's very obvious that these companies will have to reduce their margins and improve their volumes. So in the near term, probably a nice 10-15% bounce expected. But from a structural perspective, we are a little cautious. In terms of other consumption or driven sectors, we are really positive on travel tourism kind of a sector. I think airline companies, because 10% rise in oil, companies have corrected. I think these sectors are looking pretty okay. Somewhere, if we go one step forward, real estate, there also we feel that the interest rate cut outlook has now changed, and central banks have become a little bit hawkish, looking at the strength in the U.S. economy. But we feel that India might want to go for slightly easier monetary policy in 2025, and given these kind of correction that has happened in the real estate, including the mall operators. So we are also very positive that consumption is going to rebound, and real estate segment will remain pretty resilient in the current year. And the stocks have also corrected. So these are the pockets in consumption that we are bullish on.
Okay, got that point, Jitendra. So now let's talk about the other end of the spectrum, right? You were talking manufacturing and you mentioned CDMO. So let's get back to that. Just expand on that, given that we are in the budget, and if you are expecting some sort of a further push to manufacturing, capex, how would you play it? And also, some of the stocks now have cooled off in this correction. Some of the valuations have come down. So what would you pick?
So, Surabhi, it's very clear that last 9 months or so, I would say that the government spending has slowed down materially, right? And recently there was some announcement that the government is handing over more cash to the state governments, and government is clearly struggling to spend. It's not easy to spend so much amount, and we think that government spending might accelerate. And I think power sector is a structural story in India. So if I get stocks which are down 30-40% and outlook is positive, we are a little bit positive on the power infra space, where we feel that there's still good headroom for the next few years to look at having a little higher outperformance. The second story that we feel is the railways, but I think there we are really concerned about the kind of valuations. So while we feel that government spending might be okay and good, but I think the stocks are extremely overvalued. Defense
and
is
what
the
about
story
defense?
that we are bullish on. Yes, defense we are bullish on, but barring couple of stocks that we are very confident, we think that most of the stories are already pricing in 3, 4, 5 years of outlook. So we are cautious about the valuation. Government spending in infrastructure, defense will remain elevated. However, the acceleration we are not expecting, and hence I think most of these stocks which have 4x, 5x, we are avoiding it. We are only going for some of the very key stocks that we are confident about their valuation and margins.
Quick word on IT, because on one hand they're sitting on large gains over the last 2 years, but this is a sector which, at least for the large caps, is only growing at mid to high single digits. But then on the other hand, it's also seen as a bit of a macro trade with the rupee depreciation and acting as a bit of a defensive. So where do you stand on IT?
IT, we are neutral, so we are not underweight at all. We think that, US is doing pretty good. The commentary from IT companies in the next couple of quarters have actually improved, right? So we feel that from here onward, IT QoQ basis, on a quarter-on-quarter basis, we think you will see some more improvement. Hiring outlook has also picked up. So we are actually more positive on hiring companies or manpower companies compared to IT in the first place. And large cap ITs, yes, we believe that it will be a 10-12% story, but looking at the global tailwinds that US is going to see because of tax cuts, because of higher growth, we feel that sector one should stay invested. Coming to mid-cap IT, I think it's a different ballgame altogether, and there we feel that there are plenty of opportunities. I think the stocks have corrected, outlook is strong. So I feel that IT overall neutral, but we will go for some mid-cap IT names over large-cap IT names, at least in the IT space, which will also give you some hedging from depreciation in rupee and stronger US economy than expected.
Okay, all right, Jitendra, appreciate you joining in and giving us all of those cues on market as well as sectors and themes that you like. We look forward to chatting up with you rather soon.
Thank you.
Thanks a lot. Well, before we slip into that short break, guys, just want to pull up a few stocks. Paytm saw a bounce in the lows, and but that selling pressure continues on the stock. It's back down. It's at around 550 rupees odd. It bounced back nicely. Kalyan Jewellers first. Let's focus on that one. That moved up, and then in fact it did see a bit of a sell-off in the last few minutes yet again. So keep an eye out on that one. Paytm is the one. Just take a look at that beautiful looking screen. It saw a sharp correction, 1,000 rupees to 800 rupees. 800 rupees, and the volumes are very, very large, particularly in the last 90 minutes. So just keep an eye out on that stock. And the one at the bottom of your screen that our ticker team has been flagging off is ICICI Lombard as well. What a sharp spike on that name, and that's one of the top volume traded stocks. So keep an eye out on that stock as well. ICICI Lombard, yeah, big uptake out there.
Oh, yeah. In the last 10-15 minutes, a spike on good volumes. Get into a break. On the other side, we'll get you a few BTST calls from our expert. We'll also get in a check on the dealing rooms.
To go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
What's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong.
We have already taken out all rate cuts for the first half of the year. We just have 2 more rate cuts, one in June, the other in September, and that's it. I think a 3% depreciation is enough to take away that rate cut, but our depreciation higher than that, yeah, possibly the February rate cut gets pushed up, but we do have a rate cut in February. In fact, we have 100 basis points of rate cut in 2025 price for the RBI. China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Then our sense is that on January 20th or that week of 20th, you're probably going to get many.
Welcome back. Well, I think you'll have to say that it's an encouraging last half hour or so. When we started off the show, we were more or less flattish. You've seen a bit of an uptake. You have the Nifty Bank as well that's been seeing dips all through the day, but at least it's along the flat line. Remember, we saw a one-way slide from around that 51,500 all the way to around 48,000. So, at least some kind of stability. I think the bulls will take that. Mitesh Thakur is back with us. Mitesh, I'm trying to look at the positives, but from a trading perspective, what do you suggest on the Nifty? 23,200 is where we are at. Do you think the next move is towards the upside, or do you think we'll go back to test the recent lows?
So, Nigel, I think, maybe the declining force is, kind of waning, because I've seen the 30-minute and the 1-hour indicator start to, normalize and go sideways, but there's no sign of an uptrend. So I think it could be a choppy range for the next couple of days. And the idea is that try to sell around 23,300, 350 zone, because that's where the pivots come in, supply pivots coming, and the structure is weak. And if we start breaking below the earlier lows, which is yesterday's lows, then I think we'll have a continuation on the downside. Now, it could be 1-2 days before that kind of movement kicks in. So that's the way we'll approach the markets.
Okay, what about individual stocks?
So we'll suggest, some trading calls for tomorrow. One of them is an STBT on HPCL with a stop at 366 for targets of 355, 352. And a BTST on ICICI GI with a stop at about 1884 for targets of around 1925.
Okay, thank you very much for that. Let's get to Aditya Birla Fashion that's approved a near 5,000 crore rupee fundraise via a QIP and a preferential issue. Vinny's here with the details. Vinny.
Yes, so two-part fundraising that has come in. The first one is preferential issue. The second one is QIP. Now, 5,000 crores in all what they will be raising. Let's talk about the preferential issue first. They'll be giving shares of around 4 crores, 4.09 crores to the promoter group that is Pilani Investments. And this is going to be at an issue price of 317 rupees. The aggregate consideration for that is around 1,297 rupees. And post this, Pilani Investment share will now increase to 3.9% stake in the company. The other one in terms of preferential issue is Fidelity Group, where they'll be giving 3.96 crore shares to the company, to Fidelity Group, and this is going to be at a price of around 272.37 rupees per share. And aggregate consideration for that is 1,081 crore rupees that they'll be raising from Fidelity Group. Now, when you look at it, the pricing for both Pilani as well as Fidelity Group is different. So Pilani Investments, they are getting it at a premium of 317 rupees. That is a 16.5% premium versus the price which Fidelity Group is going to be buying the shares at. So this is indicating, that promoters have confidence in the company, and this is signaling a strong conviction that is coming in from the promoters in terms of a value creation potential that they see for ABFRL. Other than that, obviously, we have the other highlight that is coming in is a QIP of 2,500 crores. Now, do not forget that the company in the con calls previously have mentioned as well that they want to strengthen their balance sheet. They will be paying out debt, and they've spoken about fundraising as well. So this all is going to be used to pay debt as well as grow the company further. And they've had a lot of fundraising that has been done in the recent time as well. But this is an important one to watch out for.
Okay. Thank you very much for that. Let's get to the other mover, and that's Minda Corp, which has acquired a 49% stake in Flash Electronics for a little more than 1,370 crore rupees. Sudarshan is here with the details of this acquisition.
So Minda Corp is buzzing in trade, and stock is up currently 5% after company announces an acquisition of 49% stake in Flash Electronics for rupees 1,372 crore. It's done at an enterprise value of rupees 3,100 crore and equity valuation of rupees 2,800 crore. It's an all-cash deal, and company expects to complete the deal by the end of this month. Talking about Flash Electronics, it's manufacturer of powertrain and EV components to auto OEMs in India and overseas, and total it has 8 plants. 6 of them are in India and 2 are in Europe. Key clients include Audi, Bajaj, BMW, Ducati, M&M, Royal Enfield, Suzuki and others. On the earnings front, in FY24, company has done revenue of 1,340 crore. In FY25, company expects a growth of 19%, and revenue it's expecting of rupees 1,590 crore. Talking about EBITDA, in FY24, EBITDA was 185 crore and margin was 13.8%. Now, talking about the contribution to revenue geography-wise, India forms 76% of total revenue and overseas forms 24%. And as far as the products are concerned, electricals and electronics form 45% of total revenue, and EVs and metallics form 20% each. Minda Corp also has talked about synergy between both the company. It says both the companies have adjacent portfolio, and both the companies are Pune-based, and similar product profile and customer base will help in the synergy, and expect the deal to be completed by the end of this month.
All right, got that. Thanks very much, Sudarshan, for the details there. So that is Minda in the news. Let's move on. Like we were telling you earlier, another stock that's done really well post numbers this season so far is HDFC AMC. The stock is up almost 5%. The brokerage commentary has been fairly optimistic after the results came in. Let's ask Vamakshi what has worked for HDFC AMC this time around. Vamakshi.
Well, Surabhi, the company reported the numbers yesterday, and we had a couple of brokerage notes that have come out with their take on the numbers. First up is HSBC. They have a hold rating target price of 4,350. They say that the rationalization of commission payouts as well as their control on operating costs led to a strong net profit growth in the third quarter. However, the market share has stagnated in equity AUM and SIP flows, and therefore this could keep punchy valuations under pressure. But nevertheless, they've gone ahead and raised their FY25 and 27 EPS EPS estimates by 0.4% to 4.1%. The next note that has come through is from Nomura. They have a buy call, target price of 5,250. They too have gone ahead and raised their EPS estimates for FY25 and 27 by 2 to 3%. They're building in very strong operating profit CAGR of nearly 20% over the same period and expect it to largely track the growth in average assets under management. Next note that has come through is from Nuvama. They have a buy rating on this counter, but they've gone ahead and raised the target price from 5,150 to 5,200 rupees per share. They say that the company is steady sailing despite choppy markets. The yields have improved sequentially and the operating metrics for the company were quite stable across all segments. They're building in improved yields and therefore they've gone ahead and increased the net operating profit estimates by 3.4% for FY25, 4.1% for FY26 and 3.5% for FY27. So all of these brokerages are giving HDFC AMC a big thumbs up.
Got it. All right. Thanks a lot for that, Vamakshi. Well, let's get in Mayuresh Joshi from William O'Neill. Hi, Mayuresh. Good afternoon. Good to see you, Ben. Give us, one stock pick. Anyone.
Afternoon, Nigel. So again, I think with the kind of price damage that we've probably seen over the last couple of days, we've obviously downgraded our markets in terms of macro concerns and some micro concerns emanating from earnings as well, along with Hong Kong and China as well. So I think the three major emerging markets outside India have also got downgraded. And therefore, we are in the process of creating a watch list. If we do get a rally attempt over the next couple of days, the market holds up to the intermittent bottom that had got created, and after that we get a follow-through day, I think there might be a base case scenario building in that the bottom probably might be in place for the market, at least as this cycle is concerned. But again, I think on the watch list that we're probably creating or have started to create, healthcare or hospital-related stocks probably stay at the top of that. And therefore, stock like an Aster DM is something we've kept on our watch list. Obviously, I think, as I mentioned, you probably need that follow-through day to probably come through. For Aster, again, I think the merger acquisition that is happening with Quality Care, they'll get in excess of 10,200 beds. They'll become the number 2 in terms of revenue, with a combined revenue in excess of 7,300 crores, with a combined EBITDA margin of close to 19.5%. A good geographical spread will probably happen across with 9 to 10 states now getting represented as a combined entity. And along with that, you will see the combined entity also post a significant amount of ROC accretion as well. So our take is that healthcare probably looks like a safe bet if the market comes out of this slumber or the bottom that it probably creates. And within healthcare, I think a few hospital stocks like Aster DM is something we are keeping.
Okay, all right. So those are some names that you are liking, some picks. Let me actually, throw some stocks at you as well. Very high afternoon, Surbhi here. Today there was a note in the market on Dixon. I think Lara wrote, and they think 20,000 is possible on the stock. It's been noticed. Dixon is doing okay. Some of the other EMS players like Keynes are also up and about. I think Keynes, let's get the stocks up on the screen as well if we can. Dixon's seen some green. Keynes is up about 3-4% as well. Yeah, Dixon another 4% higher. But you just look back at the last 2 or 3 year chart on these stocks and see the kind of massive wealth creation they've done. Mayuresh, would you agree? You think there's still more juice left on the upside? Dixon, Keynes, Sirma, any of them?
So afternoon, Surbhi, I think I'll add Avalon as well, because Avalon has also been a very, very strong outperformer in this entire EMS space. And obviously, as we see it in markets with India, I think the EPS ratings, RS rating, institution holding, most of the parameters we track at CanSlim, I think are matching for most of these players. So obviously, from an industry construct perspective, the industry is expected to go fourfold from 20-odd billion in the Indian context, almost 70 to 80 billion over the next 5 to 6 years. And there are a lot of opportunities mushrooming and coming up. You've obviously got semiconductors as a space, which might be the biggest space where these guys can deliver. And obviously, I think with a large part of their market gains perspective coming through the ODM part, if that probably translates into better margins and better numbers, I think the numbers might still keep on coming through on the balance sheet. The second aspect, obviously, is in terms of the industry mix that they've probably got. Obviously, industrials, automation is a large part of their industry mix. Avalon, to a certain extent, has a large part of the industry mix towards clean energy. And therefore, I think these industries will obviously ramp up their capacities to a large extent, which means there will be sufficient amount of order wins and the order books would be sufficient in for the next few years for these players to execute. Now, the only two risks that I probably see, Surabhi, is one, if the ODM component does not increase significantly and they still remain on the outsourcing component, the margins remain extremely low. And therefore, to justify such high valuations will then become a little bit of a high ask. The second aspect, obviously, is in terms of the core growth itself. I think if that stagnates for some reason or the other, the premium valuations for which the sector is trading and at which stocks are trading even now will make it a very difficult proposition to justify if earnings don't come through for both these reasons put together as risk factors and valuation still remains sky high. Yeah. As a disclaimer, I think at higher levels, we have booked profits out of Dixon and Avalon. Therefore, I think we'll wait for declines on these stocks or these stocks creating a good lower base, probably at lower levels, will valuations become a little bit more stable.
Stay on, Mayuresh. We need to slip into a very short break with the news that it's green for the benchmark indices, 40 points up on the Nifty. Mid-caps outperforming with a gain of about 0.4%. It's been a quiet, consolidatory kind of a session today. We'll come back with more.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC.
Under the tariff umbrella than just China and Malaysia and Vietnam.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past.
Welcome back. Well, let's address a few more stocks. Mayuresh is still with us. Mayuresh, very quickly, if you could tell us a view on a few of these stocks that are moving around, L&T Finance, First Source. Do you have a view on any of them?
So, Nigel, I think mid-cap IT generally will do well. The sense that we are getting from Q2 numbers is that the commentaries have been extremely supportive in terms of earnings growth in dollar terms. You're also seeing expectations from the management in terms of order wins itself. So the order wins are decent enough. There is no pricing pressure probably seen from these order wins as well. And therefore, I think the margin performance should be relatively better for a whole host of these mid-cap IT companies. The second aspect, obviously, is in terms of expected management commentary. If one really goes by in terms of what is expected out of the US or the large expectations which have been laid out, order wins should be reasonably enough, strong enough going into FY25 as well, with decent margins. And therefore, I think the earnings trajectory and the specific areas that these companies are working in, ER&D, AI, Gen AI, I think a lot more will come through with better orders and better margins, which will probably mean that earnings might just sustain for the premium valuations that these stocks are deriving. So again, I think a large part of the mid-cap IT has very strong EPS ratings as we see it, a very strong institution holding. Obviously, valuations are a tad bit higher. In fact, sky higher for a few companies, which are exhibited by late-stage basis, which we avoid. But we are being very, very selective. I think mid-cap IT, Nigel, will selectively outperform large-cap IT in this results.
Okay, all right. Tomorrow we'll hear from actually two more companies, LTI, Mindtree and Infosys. Tomorrow's a big day for earnings. Several Nifty companies also reporting. Mahesh, let's talk about the biggest one of them all, Reliance Industries. I think everyone's waiting for Reliance to wake up, right? And for that value unlocking to happen and the separate listing of the two businesses. What base case are you going with for the near term, for the numbers and, of course, the immediate foreseeable future on Reliance?
So I think there will be a period of consolidation because I think the RS ratings have obviously gone down as we see it. But again, I think if you look at the core businesses, the retail business is expected to show a steady state performance. Obviously, the new store additions, which have probably happened specifically in the case of Reliance Retail, that will take some time to ramp up. And because the fixed cost absorption will be relatively higher for new stores, I think the overall numbers might be a tad bit lower. But if you probably have the vintage store comparison done, I think it should be a reasonable performance as far as the retail operations are concerned. Obviously, there have been some concerns in terms of the Jio subscriber base coming off for the last 2 to 3 months. But again, I think the weeding of that is probably happening for lower price subscribers. The general trend for this quarter and the next few quarters is that the revenue market share and the subscriber market shares for the telecom operations should be stable, should get maintained. And obviously, one is awaiting the demerger news as well. On the upstream part, again, I think what probably goes through in terms of GRMs relatively better to what Singapore GRMs will be because of the feedstock options that they probably got. And the new projects that they're probably going with, I think a calibrated approach to that in terms of what timelines we're probably looking at, because they're taking a very, very calibrated approach in terms of leverage on balance sheets, which also should play positively. But again, I think we'll wait out for numbers, but I think the stocks RS ratings, as I said, badly beat down. I think it's going through a period of consolidation. Let's see how the numbers play out.
All right, Mahesh, just running into the close. So sorry, I'm rushing you over there. 50 points up on the Nifty. So the bulls have managed to prevail. A second day running. There's some green on the screen. The bank Nifty is very, very flat, but even there, the gain is about 50 odd points. So let's talk about the big winners. Trent, NTPC, Power Grid, there's Kotak Mahindra Bank, Maruti has done well, there's L&T, there's Eicher Motors, there is Reliance. So you can see the participation is across different lines, different hues. Tech has pulled back as well today. HCL Technologies, Infosys, TCS, most of these stocks are up and about, and Infosys ahead of numbers is up about 0.6%. So largely speaking, that's the gainer side of the screen. On the losing side, some profit taking on Mahindra and Mahindra, 3% lower over there. Axis Bank is approaching its numbers rather nervously, 2.5% down. Bajaj Finance and FinServ, along with Shriram Finance and SBI Life. So the non-bank space has been fairly weak today on the Nifty at least. Even HDFC Life is down about 1%. And some profit taking in Tata Consumers and Tata Motors. So flat, but with a positive bias on the Nifty. But the much bigger story and the excitement is really beyond the Nifty in the mid-caps.
Well, that's right. The mid-caps, plenty of stocks moved around in trade today. You had Welspun Corp. They've done that MOU with Aramco, and the street liked it very, very much. One would have thought that they'd already indicated about setting up a capacity in the Middle East, but the street liked it, so that stock was flying away in trade today. Zomato as well did very, very well. That stock was up and about in trade. BSC, wow, from strength to strength. I recall the stock had corrected 30% from the top, and now it's bounced back big time. And this week itself, it's up close to around 13%. So solid move is what we saw on that one. Giving it company on the upside was Angel One. Management coming out there saying margins will be maintained, market share will be maintained as well. Street liked it. So that's where we saw a lot of green on the screen. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. Our special offering, Outlook 2025, comes up with Morgan Stanley's Jonathan Garner and JP Morgan's Jahangir Aziz. Don't want to miss this conversation.
Hello and welcome to our special show, Outlook 2025. Joining us today are some very special guests. We have with us Jonathan Garner, Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley. Jonathan, welcome to this special conversation. And we have been in the midst of a time where there's been a FPI exodus of sorts from India. The market's been correcting. So the first question to you is, do you think the FPI selling is going to continue, at least in the near term?
The Indian market has been outperforming other EM quite dramatically in the last 3 or 4 years, and particularly outperforming China. And so what's happening is the weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. And so what you're seeing actually is that the selling that foreigners are doing is just simply about that maintaining a quite large holding in India into a market that has been performing well. It's not some kind of problem that's going on here. It's actually a problem of success. And if we're right, our target for Sensex is 93,000. We're overweight the market. We're well above consensus on earnings growth. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past. And we see that a lot, being asked to arrange the first investor trips for global investors who really haven't looked at India historically. Historically, it's obviously been large within the EM bucket, but not for global investors. So it's quite a complicated situation that's unfolding.
So just to complete that point, and you look at this data very closely, so India's weight in MSCI Asia ex Japan is about just under 20%. FII ownership of India is now, I mean, there's a significant underweight, right? Relative to that 19.8, I think should be closer to 16%, Jonathan. I mean, what's the number now? And
it's actually quite close to benchmark weight, but I think the reason that you're so aware of this, let's say, and people in India are aware of it, is that if you go back a decade ago, global EM investors were double weighted India. Double weighted. In other words, they realized that India was about to do very well, which is what we've seen. So this is this selling into strength story that I'm trying to get across to you within the EM investor group. But what has yet to take place, and we're so excited about, is truly global investors. Now these stocks are so large. We think about names like Reliance Industries or ICICI Bank, those two like mega caps, names we tend to like, they stand a chance of finding their way into global portfolios, which is a much, much larger superset, the entire global equities universe. And if you think about the US, that's ballpark, let's say 75% of all country world index, India's knocking on the door of around 2% now at a global level. Okay, so 2% of global equities. Once it gets to 3 or 4%, you can't ignore it anymore as a global investor.
What will get that FPI interest back? Because they've just been rushing to the exit door, not checking anything. Are valuations still the biggest sort of impediment? Is it growth? When earnings revive, is that when you expect the buying to return?
Yeah, again, I wouldn't describe it as rushing to the exit door at all. I mean, if you look, for example, at market that performed very poorly, that's also a large EM market last year, Korea, the Indian market dramatically outperformed the Korean market last year. So you have to look at the totality of the situation, but to try to be looking forward here, what's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. That interest rates, we get 2 rate cuts in our view, and that we get this kind of compounding of earnings at 15 to 20% per annum in rupee, which the market is able to do, way above earnings growth everywhere else. And as that happens, India will continue to rise in the EM index, in the global equities indices. It'll continue to outperform. And the domestic bid is going to remain strong. And as I've said, at the margin, we're going to get a different type of investor in India, the truly global investor, rather than just the dedicated EM investor.
The earnings, Jonathan, that's what really stands out, because you folks have remained with the earnings projections being rock steady, like you said,
Yes.
15 to 20% compounding earnings. A lot of people here, domestic sort of, money managers also are kind of questioning that, at least in the near term. So do you see this whole debate around a slowdown in India? I mean, how do you view it from your standpoint?
We're well aware of that and have written extensively on it. And we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong. But we don't think we are. So our colleague Ridham and then Upasana, who's our economist, fairly sure that they've identified the cyclical factors behind the downturn late last year. And, next up is, of course, the budget, where we expect the primary deficit essentially to be set around 0. And I do think that with the strength of the US dollar and the uncertainty over the Trump administration, that will gradually resolve itself. And as it does, I think it'll be dramatically in India's favor relative to some of the other markets we cover, most notably China. India has a lot of optionality in the Trump administration, which some other large EM geographies lack.
Jonathan, you gave us your upside target on the Sensex. I think that's close to around 18% away from current levels post the recent correction. On the downside, what do you think? At worst case, do you expect the markets to pull back maybe 10% from here at worst?
Well, we always publish bull, base, bear targets. I don't have the bear case right in front of me at the moment, but I would say that you could expect in a scenario where, for example, the S&P 500 enters into a bear market, some kind of early US recession, then you would get that kind of decline and maybe even larger than that. But I would say that at the moment, we're quite confident in the base case forecast that we have. I mean, bear in mind the backup in yields in the US is to some extent because nominal GDP growth remains very strong in the US.
Okay.
And though the Indian market is not as correlated with the US as in the past, ultimately, all markets have some degree of correlation to the US market.
Jonathan, slightly pulling back a little bit, right? Bringing in the new incoming sort of president and the implications of that. You guys at Morgan Stanley over the years have published a fair bit about how we're moving to a multipolar world, etc. For an economy like India, I mean, we export very little to the US. Services, of course, aside. Import, in terms of from the US. So in that sense, we're kind of insulated, all this tariff talk, etc. Not completely. There will be some effects, or second order, third order. But on the external side, does India, is 2025 to you looking a lot more adversarial? Or you think one should kind of keep that aside?
Yeah, we've made multipolar world yet again a key theme for the year at Morgan Stanley, and you are going to see a slew of tariff and non-tariff actions, and that's going to be an issue for the more trade-dependent and US-exposed markets in Asia. We actually have a theme of liking domestic demand in places like India and Southeast Asia that are more like ring-fenced from that and more influenced by underlying domestic economic growth. And so that's an advantage. However, all that said, one other aspect of multipolar world dynamics is that corporates are relocating manufacturing out of China, and India's benefiting from that. And private equity and portfolio equities, but particularly private equity flows, are much more diversified than they used to be. And there is a boom in private equity interest in Japan and also in India. And so actually within the multipolar world framework, we often make the point that India is probably the most advantaged geography, the way that things are panning out between the US and China in particular.
Okay, all right. Just quickly, final word. We're approaching the budget. You are extremely optimistic on the economy and the markets here, Jonathan. What are you expecting from the RBI over the course of the next couple of months? And would you want to see anything more decisive by the government? Your budget expectations or recommendations for India?
Well, to some extent, monetary policy tightened, arguably, from the mid-year last year. We think some gradual easing is appropriate, but obviously that depends on the inflation outlook. And then on the budget side, we'll see, but there's been a very big focus on capital expenditure and infrastructure delivery. Maybe there's some opportunity to loosen elsewhere. We are in a cyclical slowdown in India, but India has plenty of firepower on the monetary and fiscal side to lean into that cyclical slowdown. So it's not something to be concerned about.
Got that, Jonathan. Appreciate your views. Thank you very much for taking out the time, and we look forward to more conversations during the course of the year. With that, we need to take a very quick break. On the other side, we'll have with us a view from JP Morgan. Jahangir Aziz, Head Emerging Market Economic Research at JP Morgan, joins in to talk about the increase in higher tariffs and the currency conundrum that we seem to be in the midst of.
Jahangir, good to have you with us here. Thank you very much for your time. I don't know if you saw, but incoming President Trump has posted on the social media platform Truth Social. He's saying that, well, there is the Internal Revenue Service in the US collecting taxes from Americans. He's going to create the External Revenue Service, it's going to come alive on the 20th of January, responsible for keeping tabs on tariffs and who owes how much to Americans and essentially, a collection agency from the outside, for the outside world. Maybe one should, it's kind of what we're seeing now, and till the 20th of January is kind of peak Trump, and things perhaps will settle down once he actually is in office. Is that too much of a stretch to expect, Jahangir, or you think it's possible?
Look, the way we are looking at our, we've been tracking this since, the election was over. And, it is possible that President Trump comes out to be very different from his rhetoric during the campaign. I'm neither brave nor imaginative enough to try and second guess President Trump. So we are taking him literally. And as far as taking him literally is concerned, we think that the tariffs and immigration will be changed and changed dramatically. And then later on, both tax policies and deregulation. So on tariffs, our view is that China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Why 60%? That's because President Trump, during his campaign, mentioned 60% several times. As I said, we are going to take him literally, and not try and second guess. I think the news reports, etc., that has come since the election suggests that that may not be the only objective of the tariffs. Tariffs could also be driven by the objective of raising revenue, such that the tax cuts that he is proposing can be funded. Now, if that's the case, then our sense is that on January 20th or that week of 20th, you're probably going to get many, many more countries under the tariff umbrella than just China and Malaysia and Vietnam.
Okay, Jahangir.
So just one thing. Jahangir, you're saying that Chinese imports will be tariffed at 60%. I just wanted to make that clear. So
that's a baseline. That's a baseline. Its current effective rate is 20%. We expect 20% to go to 60%. But as I said, that was our view back probably in December. I think the news flow since December suggests that perhaps it may not be 60%, maybe a tad less, but many other countries will be brought under that tariff umbrella. So tariff will be imposed on many of the countries. Simply because that's the only way in which you can actually raise any reasonable revenue.
And you're saying other countries may also see this, countries especially from where China was using as points from where to send things into the US to avoid this tariff, right? Mexico, etc.
That was Malaysia, Vietnam. Okay. So this is going to be, our suspicion is that if you're going to raise revenues, you have to now impose tariffs on countries which were seen to be alternatives to China. You need to block that off. And therefore, many more countries will be brought under the amendment.
So Jahangir, I mean, I'm hearing you loud and clear. You're not in the camp that's expecting that, this will ease out, and maybe it's all been rhetoric and more a bark than a bite. Take your point, take your caution on board. But my question is that hasn't much of this, even if it plays out literally as what he's been saying, hasn't this been priced into the market with the dollar rushing to 110? I mean, have we already seen the worst of the market interpretation and the mayhem?
Really?
There's more to go.
I mean, you can at best take dollar euro, for example, or DXY. You at best can get about 6-7% of tariffs being priced. That's it. 6-7% of tariffs is, I mean, any kind of FX arithmetic, if you break it down between the growth differential between US and the rest of the world, the interest rate differential, even after, especially after the change in the Fed call that we have done after the non-farm payroll came out last week, if you take those two factors, which are the usual drivers of dollar strength, at best you can say that the market is pricing in maybe 6-7% of tariff increase. That's the extreme.
Oof.
The 6-7%
tariffs could easily be significant.
On what? China? On China? On China?
No, the average effective increase in tariff increase by the US. So the tariff right now is about 2.3%. right? So 2.3%, you add about 6-7%. That's about all that the dollar is pricing in this point in time. It could easily be significantly larger than that.
What is the average overall increase that you're expecting, taking him literally, taking Donald Trump at face value at what he's been saying, and how much more than for the dollar to go? I mean, 115 more, the DXY.
I mean, you can easily add another 10 to 20% tariffs on the rest of the world. So 10 to 20% tariff on the rest of the world. That's the number that he's talked about, along with maybe not 60% of tariff on China, maybe slightly less tariff on China. That could well be what we see in next week.
Okay.
So what does it mean for the dollar then?
index,
the DXY?
I don't think any of my strategists are willing to price that.
Okay. All right, Jahangir, hi.
These are scary numbers.
I can
Obviously,
imagine.
nobody's going to price.
Indeed. Let's look home at our own currency then. The Indian rupee has weakened. We are at around that 86, 87 odd. Many were projecting by the end of this year we'll be at 87, 88. We're already there. We're 15 days into the calendar year. What happens to the Indian rupee? If you could, tell us how do you see that move? And also, what are you pricing with regard to the RBI, Jahangir? Because, earlier we were factoring that maybe in February we see some kind of action, which could get pushed back a little bit. Your take?
Yes. So I think, there are two parts to it, right? The one part of it is that the real effective exchange in India has gone up significantly over the last 2 years. So there is the need for the exchange rate to depreciate in order to bring back the real exchange rate back to more normal levels. So that's one driver of that. Obviously, oil prices, current account deficit, etc., are the other driver. The outflow of foreign portfolio outflows is the other driver. But I think that in the event we do get these kinds of tariffs being imposed, we really don't know what it is. If you go literally by what President Trump has said, it is going to be a pretty large number of pretty high rate on the rest of the world as well as on China. So it would what happens in the Indian rupee depends almost entirely how dollar CNY reacts. If dollar CNY reacts by, let's say, depreciating another 5% or more from here onwards, then the rupee is appreciated even more against its biggest trading partner, which means the real effective exchange rate gets appreciated even further, making the need for a nominal depreciation even that much greater. Therefore, the pressure on the rupee to depreciate becomes even greater.
Right.
Look, I won't be able to tell you what the number is, but the direction, that is the direction of travel.
So, I mean, if tariffs on Chinese imports are not 60, but even 40, whatever, I mean, dollar CNY goes to 8, and then currency here in India, which also, I mean, I think, as you say, depreciates, right? Will have to.
That's correct.
Just a couple of things I wanted to clarify, Jahangir, if you can. One is, there was a report which said that, and there was no pushback to it. Usually, I mean, press reports something and Trump tweets or something and says, well, this is all rubbish. But there was this report which said that gradual tariff increases, not at one go.
Right.
If that were to, so far 48 hours we've not seen any pushback. If that were the way it is implemented, do you think that is more desirable?
I mean, look, it depends on what is the objective, right? If the objective is, I'm going to use euphemism over here, to improve U.S. competitiveness, right? Then you can talk about a gradual increase in tariffs. You negotiate, things from the other side so that U.S. competitiveness, quote unquote, improves, right? If that's the sole reason, which was the reason as to why we said only China and the transshipments through Vietnam and Malaysia would be targeted. But if the objective is to raise revenue, then then there is no real negotiation. Right?
Yeah.
Then there is no reason for you to have a, sliding scale.
Yeah.
You want $250 billion of tariffs. U.S. imports is about 3.6 trillion. To get that, you need a tariff rate pretty much around that, 8, 9, 10% rate. And I'm talking about the average effective tariff.
Got it.
Now, how you distribute that across China, across other countries, that's a matter of choice.
Got it. Now, let's talk about impact on, say, tariffs go up. So average tariffs, so imports into US is 2.3%. You're saying that goes up to what in your base case?
So we don't have that. We do not
let's
have
say-
a baseline where we say we just had a baseline which says that only China will be targeted.
Okay.
The risk is it's going to be far more extreme than that.
Okay. What is the, so I'm just trying to see what's the feed through to inflation. And then...
on the US?
On
the rest of the world?
US inflation. And
So
then
the-
what happens to,
The interest rates,
in
yeah.
the US?
Right. So you're asking a very difficult question. Okay, let's start with the first question, inflation. In order to minimize the impact of inflation, chances are that whatever increase they have, this universal tariff increase, is not going to be uniform across all goods. Consumer goods, the tariff will be less. Intermediate goods, the tariffs will be much higher. So in order to get, let's say, a 10% average effective rate. That minimizes your impact on inflation. So that's the way we think it will be played out, if indeed you're getting a universal tariff. It's not going to be uniform 10% on everything. Consumer goods less, intermediate goods more. So I think that's such a move can, at least in the first rounds, before the second round effects take place, that can minimize or limit the amount of increase on inflation in the US.
So pragmatic in that sense, Jahangir, at least in terms of effects on inflation, US inflation.
Right.
So just to complete that point, what does the Fed do then? Rate cuts, bets have disappeared. Is there a chance that there could be a rate hike, or you think that's extremely unlikely? One of your sort of.
So we think the rate hike is extremely unlikely. You really need the core PCE to move above 3 and remain there and things like that, which looks unlikely.
Quickly, a move on India, because everyone's trying to second guess now what the RBI will do here, given the external environment and our local issues. I mean, we had an inflation print that came down, CPI inflation, but look at what crude is doing. It raced away 5% thanks to these sanctions. So just quickly, your expectations on the US 10-year as well as the path ahead for the RBI.
So on the US 10-year, I think the business cycle part of it has already been priced in, i.e. that the Fed is only going to go at best to 4, and that you're not really going to get a rate cut more than 2 rate cuts for the rest of the year. I think that part has been priced in. What has not been priced in is the impact of tariff on inflation, the impact on immigration on inflation, and more importantly, the size of the tax cuts and therefore the size of the fiscal deficit. Those haven't been priced. So I think that if you have negative shocks on those 3 things, you could see the 10-year move up, and 10-year has been moving up.
Yeah, got it.
So that's on the 10-year. On India, look, very quickly, we have been arguing about a rate cut for a long time, given that we had expected growth to slow down significantly, inflation to come down. Core inflation already has been languishing for a very long time. So there is no reason not to have a rate cut. We do have a rate cut in February, and we're still sticking with that there will be a rate cut in February. Obviously, if there is a turmoil in the FX market, then the rate cut gets pushed off. So far, I don't think a 3% depreciation is enough to take away that rate cut, but a depreciation higher than that, possibly the February rate cut gets pushed up. But we do have a rate cut in February. In fact, we have 100 basis points of rate cut in 2025 price for the RBI.
All right, Jahangir, got that. Interesting times and complex times that we live in today. Let's see how this plays out once the inauguration is over and done. Thank you very much for joining us on the show today. With that, it's a wrap on this special.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end in the green after a range-bound session. The Nifty manages to hold above 23,200. Mid-caps outperform the blue chips. The rupee regained some lost ground against the dollar after a dramatic rally. Indian currency gains more than 26 paise but remains above the 86 mark. Crude oil prices remain near 5-month highs with Brent hovering around $80 a barrel. India's trade deficit declines to a 3-month low of just under $22 billion in December. Exports remained largely steady even as they declined marginally year on year. The trade deficit is up 14% in the first 9 months of this financial year. Tata Power is likely to have submitted bids to acquire a majority stake in 2 state-run power distribution companies in UP. The state government had invited bids earlier this week. That's an exclusive. The Union Secretary for Electronics and IT says critical equipment meant for manufacturers in India and global companies like Foxconn is being held up at Chinese ports for several months. The electronic industry fears any further disruption could jeopardize production and expansion plans. Prime Minister Modi commissions 3 Navy warships in Mumbai, says India has become a major maritime power and is being recognized as a reliable and responsible partner. This is the first time in the nation's history a destroyer, a frigate and a submarine, all made in India, have been commissioned together. TVS Motors leads Bajaj Auto in the electric scooter race in the first 15 days of the new year. Ola Electric remains in 3rd place and announces fresh discounts to bolster its sales. Hopes for a ceasefire in Gaza rise as negotiators say Israel and Hamas are at the closest point to strike a deal, but Israel continues to bomb Gaza, killing 24 people overnight. 5 days before he takes office as US President, Donald Trump announces he will create an external revenue service to collect tariffs from foreign countries, as other nations will finally pay their fair share. The US securities market regulator sues Elon Musk for failing to properly disclose his Twitter ownership. The regulator alleges Musk amassed Twitter shares in secrecy that allowed him to buy the microblogging company at artificially low prices. Former Delhi Chief Minister and AAP Supremo Arvind Kejriwal files his nomination papers from the New Delhi constituency. He will take on Congress's Sandeep Dixit and BJP's Parvesh Verma. The Home Ministry gives ED the go-ahead to prosecute Kejriwal over alleged irregularities in the liquor excise policy case. All of that and more coming up for you in just a bit, but on to the market action of the day. The Lal Street ended in the green for the second day in a row in what was a range-bound session. The Nifty and the Sensex ended mildly higher, with the Nifty managing to hold on to levels above 23,300. So that is where the Nifty closed, flat but in the green. The Sensex up by 200 points. The Nifty Bank again in positive territory, but an absolute flat close. Mid-caps higher by about 0.5% or so. So that's the story as far as the markets go. Now, Jonathan Garner of Morgan Stanley is bullish on India when compared to other Asian markets, even as he believes valuations are high. Take a look.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past.
Well, that's a positive outlook on India, despite the fact that we've seen FIIs selling over the last few trading sessions. On to the money market action. After days of continuous decline, the rupee edged higher against the dollar in today's trade, and this was largely on account of a fall in the dollar index. However, $1 US still costs more than 86 rupees. As per dealers, that is the dollar rupee for you. Now, as per dealers, speculative traders unwound their long dollar positions to book profit. The Indian currency got some reassurance as the Indonesian rupiah remained steady, even as the country cut interest rates in the face of a strengthening dollar. Dealers said that boosted confidence that the RBI too can cut rates. In fact, speaking to CNBC-TV18, JP Morgan's Jahangir Aziz said he expects the RBI to cut rates by 100 basis points in 2025. He also believes that the US dollar has so far priced in only 6 to 7% of the potential tariff increase by the US, and this could add more pressure on the rupee. Take a look.
Any kind of FX arithmetic, if you break it down between the growth differential between US and the rest of the world, the interest rate differential, even after, especially after the change in the Fed call that we have done after the non-farm payroll came out last week, if you take those two factors, which are the usual drivers of dollar strength, At best, you can say that the market is pricing in maybe 6-7% of tariff increase. That's the extreme. So the tariff right now is about 2.3%, right? So 2.3%, you add about 6-7%. That's about all that the dollar is pricing in at this point in time. It could easily be significantly larger than that.
Well, that's Jahangir Aziz saying he expects the Reserve Bank to actually cut rates in February and do 100 basis points in terms of cuts through 2025. Here's all the action from the commodity markets. Oil prices rising, trimming yesterday's losses. And this as the focus is back to potential supply disruptions from sanctions on Russian tankers. However, the gains were capped as the market waits for more clarity on the impact. Now, India's trade deficit has declined to a 3-month low in December, according to the Commerce Ministry's data. Export remained largely steady at just over $38 billion. This is a marginal decline year on year. Imports stood just under $60 billion, leaving the overall deficit at under $22 billion. However, the trade deficit is up 14% in the first 9 months of this financial year. 5 days before he takes office as U.S. President, Donald Trump has announced the creation of an external revenue service to collect tariffs from foreign countries. In a social media post, Trump said the agency would take effect on the day he assumes office, which will be the 20th of January. He also said the new organization will make sure all nations finally pay their fair share. Back home, Aditya Birla Fashion's board has approved raising funds to the tune of 5,000 crore rupees. 2,500 crores will be raised via qualified institutional placement. The company will also issue preferential shares worth about 2,400 crores to promoter Pilani Investment and Fidelity Group. The fashion retail firm has said it will use the funds to pursue the growth ahead of its proposed vertical demerger into 2 separate listed entities. Minda Corporation's shares surging in trade after the company announced that it will acquire 49% stake in automotive product maker Flash Electronics. The acquisition will cost the auto component manufacturing company 1,372 crore rupees. The company said that the all-cash deal will be complete by the 31st of January. The National Asset Reconstruction Company has emerged as the sole bidder in the resolution process of bankrupt Jaiprakash Associates. Now, this company was admitted at the bankruptcy court last year, facing claims from 22 lenders. The NARCL has made a 12,000 crore rupee offer, which includes 15% payment of cash upfront. The company is facing total claims of more than 52,000 crore rupees. Another exclusive tonight, Tata Power is likely to have submitted bids to acquire a majority stake in 2 state-run power distribution companies in UP. The state government invited bids earlier this week. Vivek standing by now with more. Vivek, tell us more about the privatization of the 2 UP discoms.
Well, that's right. So it's an important development as far as the entire power sector is concerned. Privatization of discoms, something that's been the ask of both the discoms, power financiers as well as private utility players, is back in focus. On January 12th, the UP state actually went ahead and invited tenders. This is to go ahead and call for transaction advisors to help in PPP JVs or in the privatization of discoms. Now, out of the 5 discoms that the UP state government holds, they have invited bids for 2 of these 5 discoms. And what we understand from our sources is that Tata Power is interested, evinced interest, also looking to go ahead and submit bids as far as acquiring these particular discoms are concerned. Now, how will this particular PPP JV work? 49% will continue to be held by the UP state government of the discom. Another 51% will be held by the eventual winner of the entire bidding process. So 51% part of the JV will be held by the private utility player. So an important development. It's a development that will most likely take quite a bit of time to fructify, given the fact that this is a sensitive topic, especially in terms of both unions as well as enough votes coming through for going ahead and getting votes on board for the entire privatization process. It's an important development in the power space, and we'll keep track of this particular development. We reached out to Tata Power at this point of time. They haven't given us any comments as yet.
All right, Vivek, many thanks for joining us. Now, the $235 million security breach at WazirX has now been linked to Lazarus Group, which is a North Korean hacking organization. US, Japan and South Korea have released a joint statement confirming that the group orchestrated the cyber attack on the Indian cryptocurrency exchange in July of 2024. Responding to the statement, WazirX founder Nishchal Shetty urged swift international action and support to recover the stolen assets. So this was rumored, but today it is official, with 3 countries, the US, Japan and South Korea, linking North Korea to the attack on Wazirex. The UN Secretary for Electronics and IT says critical equipment meant for manufacturing in India by global companies like Foxconn is being held up at Chinese ports for several months. Speaking at the AI Forward, a joint initiative by CNBC-TV18 and EY, S. Krishnan said that electronic industry is not facing any impact of production just yet, but he did warn that any further disruption in procuring the key components could jeopardize production and expansion plans. Take a look.
This is what companies are telling us, that export of capital goods in some senses is getting constrained, and so far, I mean, the issue on visas and so on is that there's a process of approval of visas for people coming from China, which we are following. Companies are telling us that they sense certain restrictions being placed on them.
And at the same event, EY released a report on the adoption of artificial intelligence across India, Inc. The report says AI is set to impact 38 million employees in the organized sector by 2030. EY expects a productivity boost of more than 5% in the next 5 years. The productivity in organized sector is likely to improve by over 2.6%, and in the unorganized sector could see a boost of over 2.8%. MeitY Secretary Krishnan said the government has received overwhelming response from the private sector to set up graphic processing units and promised several AI initiatives in 2025.
In 2025, I think there's a fair amount of work which needs to happen in the AI mission, and this would probably be the most exciting year. I already mentioned briefly about what is happening on the AI compute story. That RFP has done well, and that would be a rolling sort of process where every 3 to 6 months we will keep adding newer companies who come in and newer capacity which comes on stream. And we'll keep updating it.
How much capacity will we have on stream in terms of compute in 2025?
As I told you that the initial offer from the 19 companies put together is north of 20,000 GPUs. This year, this calendar year, is going to be the year where a lot of these initiatives under the India AI mission, you will see the maturation process and you will see them actually in full-blown action.
Well, that's the MeitY Secretary S. Krishnan there. On to the electric vehicle space. TVS Motors is ahead of Bajaj Auto in the electric scooter race in the first 15 days of the new year. Ola Electric remains in the third place as it continues to lose market share. The EV company has now announced fresh discounts to bolster its sales. Parikshit is standing by now with more details. Parikshit, it's obviously fiercely competitive in the EV space at this point in time, but Ola announcing fresh discounts ostensibly to try and stem the market share fall.
By all accounts, 2025 will be an inflection point for electric vehicles in India. And as you rightly said, Ola Electric has been losing market share, not just since last month, but since April last year. At the start of 2024, they had almost a 52% market share, and that has significantly dropped now. Let me just talk about what they've sold in the month of January. They've sold 6,655 electric scooters in the first 15 days of January 2025. Their market share has dropped to 18%. Ola Electric has also launched a 72-hour discount offer between the 12th and the 14th of January. They're offering the S1 scooter at 60,000 rupees with a 24,000 rupee discount offer and extended battery warranty as well. TVS Motor Company sold 9,800 units. Bajaj Auto sold 8,694 units in January 2025 so far, and they occupy the top two positions. The market share of both companies, that is TVS, is about 23% and Bajaj Auto is about 25%. So that's a total market share of about 48% with just these two EV players. Ather Electric sold 5,360 units in January and has gained market share by 0.6%. Ather's market share currently stands at 14.2%. For some time in January, Ather and Ola were also neck to neck. Now, overall, in December, Bajaj Auto sold 17,431 units in December with a 25% market share, and TVS sold 16,301 units with a 23% market share. So for 2 months now, we're seeing both TVS and Bajaj Auto lead the EV race. Ola Electric was number 3 with a 19% market share and 13,000 vehicles sold. But overall, in calendar year 2024, Ola Electric was at the top spot at 4 lakh units with a 52% year-on-year growth, but impressive growth from both TVS and Bajaj Auto, which are now in the process of ramping up their electric vehicle production and getting new models to the market. And we'll see some of that in the Auto Expo as well. TVS was a close second at 2.2 lakh units and Bajaj Auto at 1.93 lakh units.
All right, Parikshit, many thanks for joining us. We will head to a break. But up next, US securities market regulator sues Elon Musk for failing to properly disclose his Twitter ownership. That and more when we return. You're watching Business 360. Israeli forces have stepped up their attacks on Gaza, bombing a school turned shelter and several homes across the strip. At least 24 people have died in the region today. This as hopes for a ceasefire in Gaza rise. Negotiators say that Israel and Hamas are at the closest point to strike a deal. Israel's Foreign Affairs Minister said that a majority in the country's government will be in support of a deal that involves the release of hostages, but he also added that Israel is not in favor of creating a Palestinian state.
I believe that if we will achieve this hostage deal, we will have a majority in the government that will support the agreement. In the current situation, establishing a Palestinian state will surely be a Hamas state. There is a reason why the Palestinian Authority didn't handle or didn't make elections since 2005, already for 20 years.
Meanwhile, in the U.S., outgoing Secretary of State Anthony Blinken was interrupted by pro-Palestine supporters in his farewell address. Blinken was elaborating on the Biden administration's roadmap for post-war management of Gaza when protesters heckled him.
You have the blood of hundreds of thousands of innocent people on your hands. We have spent
Thank you. I respect your views. Please allow me to share mine. Thank you.
Appeal to your humanity.
For over 450 days, Israel has committed genocide against the Palestinian people. We have sent over $25 billion to Israel.
How do you do all that and then sit here and tell these people, civilized people, that you are doing what? Kill your policy for the Middle East? Kill.
Ukraine has launched its largest missile and drone attacks on Russian territory since the start of the war. The Ukrainian military reportedly hit the Russian towns of Saratov and Engels with 140 drones. Russia said it would retaliate to the large-scale air attack. The country's defense ministry also said its troops captured 2 Ukrainian settlements in the Donetsk region. Impeached South Korean President Yoon Suk-yeol has been arrested by law enforcement officials. Yoon has become the first incumbent president in the country's history to be taken into custody. The arrest followed a failed attempt earlier this month. This came as Yoon faces charges of imposing martial law for a brief period last month. His arrest represented a dramatic escalation in the political turmoil that's gripped South Korea since his impeachment. The U.S. Securities and Exchange Commission is suing the world's largest man, Elon Musk, over his alleged failure to properly disclose his stake in Twitter. The lawsuit claimed that Musk cheated Twitter shareholders out of more than $150 million by buying shares at low prices before the acquisition and delaying the disclosures.
Elon Musk was sued on Tuesday by the U.S. Securities and Exchange Commission. The SEC accused the world's richest person of waiting too long to disclose in 2022 he had amassed a large stake in Twitter, the social media company he later bought and renamed X. An SEC rule requires investors to disclose within 10 days when they cross a threshold of owning 5% or more of a company. The agency said that at the expense of unsuspecting investors, Musk instead waited 21 days to disclose his initial purchase of 5% of Twitter's common shares at artificially low prices. The SEC said Twitter's share price then rose more than 27% once Musk disclosed his stake. Tuesday's lawsuit seeks to force Musk to pay a civil fine and give up, quote, unjust profits. Alex Spiro, a lawyer for Musk, called the suit the culmination of the regulator's, quote, multi-year campaign of harassment against his client. He added the lawsuit addresses a mere, quote, alleged administrative failure to file a single form, an offense that, even if proven, carries a nominal penalty. The filing against Musk comes 6 days before Trump's January 20th inauguration, when SEC Chair Gary Gensler will step down. Trump's nomination to succeed him, Paul Atkins, is expected to review many of Gensler's rules and enforcement actions.
Well, that's Elon Musk being sued by the US SEC. In national news, Prime Minister Modi commissioned 3 Navy warships at the Mumbai dockyard today. This is the first time in India's history that a destroyer, a frigate and a submarine, which have been made in India, have been commissioned together. Speaking at the event, the Prime Minister said India is becoming a major maritime power. Aam Aadmi Party national convener Arvind Kejriwal has filed his nomination papers for the upcoming assembly elections from the New Delhi constituency. Kejriwal will face the sons of 2 former Delhi CMs, Sandeep Dixit of the Congress Party and Parvesh Verma of the BJP. Ahead of filing his nomination, Kejriwal led a march along with his party supporters and visited Hanuman Temple. Delhi will go to the polls on the 5th of February. And speaking of Kejriwal, the Home Affairs Ministry has granted its approval to the Enforcement Directorate to prosecute Arvind Kejriwal and former Delhi Deputy Chief Minister Manish Sisodia in the excise policy case. The ED can now frame charges against the two under the Prevention of Money Laundering Act. The ministry's decision followed the Delhi Lieutenant Governor V.K. Saxena's approval. The Congress Party has moved to a new office after 47 years. Congress leader Sonia Gandhi and Mallikarjun Kharge inaugurated the new headquarters, Indira Gandhi Bhavan at Kotla Road in New Delhi today. The previous headquarters at 24 Akbar Road in Lutyens, Delhi had become synonymous with the party. It became the Congress office when Indira Gandhi sought a new political base in the wake of the emergency. Speaking at the inauguration, Congress leader Rahul Gandhi slammed RSS chief Mohan Bhagwat for saying that India got true independence after the consecration of the Ram temple in Ayodhya.
Mohan Bhagwat has the audacity to inform the nation every 2 or 3 days what he thinks about the independence movement, what he thinks about the constitution. In fact, what he has said yesterday is treason, because it is stating that the constitution is invalid. It is stating that everything, the fight against the British was invalid. And he has the audacity to say this publicly.
Residents of the Delhi NCR woke up to dense fog blanketing the city today. Over 200 flights were delayed at the Delhi airport due to zero visibility. According to Flight Radar, as many as 18 flights were cancelled. Nearly 300 flights departed with an average delay time of 45 minutes. 26 trains bound for Delhi were also running late. The Met has issued an orange warning for the city. Meta India has apologized for Mark Zuckerberg's comments during a podcast where he said several incumbent governments, including the one in India, lost the elections in 2024. The Meta CEO had attributed the losses to citizens losing trust in incumbent governments due to their poor handling of the pandemic. Union Minister Ashwini Vaishnav had slammed Zuckerberg for spreading, in his words, misinformation. In a tweet addressed to Vaishnav, Shivnath Thukral, Meta India's Vice President of Public Policy, apologized for the comments and called it an inadvertent error. The apology comes after BJP MP Nishikant Dubey said the Parliamentary Panel on Communication and Information Technology would summon Meta over Zuckerberg's comments. Dubey is the chairman of the committee. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Stay right there. We're back in a moment.
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. The realty sector saw a strong revival in 2024 with sales and development being driven by pretty strong demand across categories. Now, if you are looking to buy a new home or if you're looking to invest in property this year, then this particular episode is just for you. We have with us Anuj Puri of Anarok and Ravi Shankar Singh of Colliers India to help us decipher how to look at real estate as an asset class, as an investment avenue in 2025, and of course, how to get ready to get our dream home if that's what you're after this year. Thank you very much, gentlemen, for joining in. Of course, the year is still young, and I hope 2025 is off to a good start for both of you. So I want to start with sort of getting a broad brush idea of trends. We know that the realty upcycle is continuing pretty strong. Where are we in the cycle and what can we expect, broadly speaking, this year? Anuj, let's open the floor with you.
So first of all, it's always a pleasure to be on your show, Surabhi. So thank you for having us. Realty sector is doing exceptionally well. I haven't in the last 30 years seen this kind of a rally. It's been going on, for the last 3 or 4 years, beautifully. Looks like the sun, moon, stars, earth, truth, everything is aligned across all the segments of the realty sector, whether it's residential, which is nearly 85% of the Indian real estate market, whether it's offices, retail, data center, industrial, logistics, across the board. And more so, I would say, is residential in the sort of during COVID and post-COVID scenario, doing exceptionally well on all parameters. The consolidation and maturity has led itself to increased sales. And the second is that the increase in the prices have meant is that better quality products are coming in from very mature, consolidated, largely listed developers. So to answer your question, fantastic time. Haven't seen it in the last 30 years, such times when all segments of the real estate are fully aligned and firing all 4 cylinders.
Well, it's the post-COVID boom as life has gotten back to normal. I take that point, Anuj. Ravi, your thoughts, opening views, and if you could also throw in some numbers, just so that we have a sense of what has been the absorption, what are the pricing trends. How do you sum up where we are in the real estate cycle overall? Ravi?
Surabhi, thanks for having me. It's literally been a bull run, like Anuj rightly says. And post 21, 22, we have literally seen all markets almost double in terms of pricing. Compared to last year, 23 to 24, the increase has been a little subdued. I would say about 10 to 12% what we have witnessed so far. I think the pricing is going to hold going forward. But exciting times. What encourages me is bulk of the demand is coming from end use. People are actually looking to buy homes to live in them rather than just looking at it as an investment product.
I'm glad you mentioned that, Ravi, because sometimes, and I guess that's what happens when you've been doing this for a long time. Because when I hear the announcements of flats sold in one day, or demand was so high that inventory was taken up in like a couple of hours, and flats for 5 CR, 7 CR were all taken up. Sometimes the journalist in me worries whether we are starting some sort of a period of excesses or not. But Anuj, I know your firm has been tracking a lot of data, and I was going through your notes, which is telling us how I think the supply and the demand are kind of keeping up. The absorption is pretty good. So do run us through the numbers and tell us if you're at all worried from that standpoint now.
So first of all, Surabhi, being on your show, I'll let out a secret. So, you're right, it does worry when you see, sales of 500 crores, 700 crores, 1,000 crores in a single day. That is happening. And then you worry, are these speculators, are these investors? Because unlikely that an end user can, immediately come in and write a check. So it is a valid concern, but I'm going to let a trick out here on your show. Actually, there is a lot of work done by the developers before they say is that, today is the launch. In many, many cases, the checks are already picked up.
Yeah.
That is the day when they bank the check.
Yeah.
So actually, it's 8 to 10 weeks of work. So literally 2.5 months work is done with the end users. And, over the period of time, those checks are picked up and they're actually banked on a particular day. And that's when the news comes out that, you've had this kind of a sale. So rest be assured what Ravi is saying is that this demand is coming in largely from the end users. I would also say is some part investors that have started, but not speculators. And investors, I'm actually quite okay, Surabhi, for investors to come in because these are long-term investors who are holding it, either for income yield on the office or for capital appreciation on the residential. To answer the second part of your question is that how the numbers have been is, So 2024 has been a delightful year. About 550,000 crores worth of new inventory was sold in the top 8 cities. So, fantastic from that perspective. I would say about 45% of that, Surbhi, is just MMR. So MMR is like very, very instrumental in being able to drive, the bull run. As Ravi put it, we're seeing on the residential side nearly 45% sales coming in from MMR, followed by NCR and then Bangalore. Between these 3 cities, about 70% of the new home sales that you see in the top 8 metro cities comes in. The balance 5 cities actually produce 30% of the new home sales. Now, going into 2025, we're hoping that this bull run, continues. Although we'll see is that what the sentiment stacks up with the stock market, coming down. But I do feel is that where the solid delivery from the developers is coming in, and you also mentioned about the inventory and the supply that is coming in, we're very well poised because there is very little excess inventory in any of these cities. So in a way, my concern, if you were to ask Surbhi, is that I need supply to come in far more quicker than what it has been coming up. Because if it doesn't and demand continues to remain the same, we run the risk of prices going up very, very quickly. So unsold inventory at its almost historic low, sales at its historic high in 2024. As we step into 2025, I do feel the momentum will continue, but I do want more supply to come in from tier 1 developers.
Okay, fair point. That you don't seem too perturbed about this, about the whole demand supply situation. Anuj is saying it's fairly evenly balanced at this point in time. But gentlemen, I want to now come to the key question for anyone who's watching the show is that, is this a good time to buy my dream home? I know both of you will say that any time is a good time if it's a home that you want to buy to stay in. But still, there are 2 key factors that people look at, right? One is pricing. And you have to take that into consideration to decide your cash flows, etc. And the second is obviously the rate cycle, interest rate cycles. So I want to get your views on both. Because the expectation is that gradually over the course of this year, we will be in a lower interest rate regime. So Ravi, come in on this. First of all, on pricing. Now, I'm talking about someone who's looking to buy a home for end use, either the person himself or herself or their family. Is this the right time and how should one go about it?
Surbhi, we have seen a tremendous price rise in the last 3 years. And I personally feel the price is here to stay. And in my 20 years in real estate, I really haven't seen real estate prices come down. So what a consumer should look at now is, how most cost effectively he can acquire real estate. And I think largely that is going to be backed by new deferred payment plans, which the developers are looking to launch in time to come. Coming to interest rates, we are seeing it soften across the globe. And today, most financial institutions are operating on a variable rate of interest. So as and when how the market behaves, the interest rates are adjusted accordingly. So my suggestion, if you're looking to buy, there is never a wrong time. You should go ahead. And, just to add to what Anuj was mentioning earlier, we have a huge demand for real estate in India, especially residential. And when I say that, if we look at top 8 cities in India today, we are selling close to about 5 to 6 lakh units a year. And if I look at some of the developed countries in the world, UK today sells about 4.5 million units every year, at 1/3 the population base. China at its peak was selling 9 million homes every year. So that is the quantum of sales we can look at getting into. And Anuj, the way he has said it, we need more supply coming into the market for people to actually go out and execute transactions.
Yeah, no, absolutely. The problem with some of the markets, for instance, probably Mumbai, is that 5 is the new 2 and 10 is the new 5, you know, where you thought, okay, if you can stretch your budget for about 2 CR, you'll get a decent house in the MMR region. Now I think those numbers are just going up, which brings me to a viewer question, Anuj, and this one's going to be for you. It is on pricing and on buying that house. The query is from Sagar Bhanushali. He's written in to us on Instagram. He is saying, you know, if it's feasible to buy a property in Mumbai at current prices, would it be a decent investment as well, along with, of course, an option to live in? Anuj, the Mumbai market, yes. What do you see ahead? And give us some numbers here, because like I'm saying, the numbers for the mass affluent are also getting a little baffling.
Yeah. So Sagar, it is possible to buy in Mumbai. And I must also say is that maybe 10 years ago, it was difficult to buy in Mumbai. Actually, over the last 10 years, Surabhi, contrary to the thought that the prices have only sort of just gone up and it's becoming unaffordable, Mumbai has become more affordable. And the reason is that there is better quality infrastructure that has been put in. As a result of which, you know, the very far-flung areas have got superbly connected with the CBDs. You know, if you were to talk about Navi Mumbai, Panvel, Dombivli, Kalyan, there you are going to be able to get in good quality home from a very reputed developer at 40-50 lakh rupees. So, you know, if you were to ask me 10 years ago, would you be able to get in a house of 40-50 lakhs? I would say, is, you know, it'll be very difficult. Yes, you can, but it'll be more like in Karjat. And you wouldn't be able to commute every day coming into the workplace. Today, I would say there are several areas that you'll be able to get in a 1-bedroom, you'll be able to get a studio in an integrated sort of township development, which will have facilities, which will have better quality infrastructure within the township, and which will be well connected to your place of work. So Sagar, it is possible to be able to own your dream home in Bombay better than what it would have been 10 years ago, of a good quality developer, well connected. If you are asking me as an investment, I'm not sure that you're going to see that kind of price appreciation in residential going from here onwards. So as an investor, unless you're going to be long-term, Sagar, then you may wish to hold it up. But if you're looking at a speculator short-term, then I would suggest is do not enter the market, because I don't see price appreciation of double digits. Ravi's right is that price will be will not come down, will go up as per the inflation rate. But it is not a product that I would recommend that this should attract investors. It is a product, certainly on the residential. When we talk about commercial, it may be a different view. But on the residential, it's a product which is really for the end users and not really as much for the investors.
Okay, that's interesting. And so there you go. Perhaps Mumbai real estate, residential real estate, more for end users, not so much for speculators and investors. However, are there some other investment opportunities in real estate? That's what we'll discuss after a quick break.
Let's talk money.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely, yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week it's all about real estate. Should you look at this asset class from an investment perspective in 2025 and, of course, beyond? We are in conversation with Anuj Puri of Anarock, as well as we have the experts here from Colliers India joining in. So let's, gentlemen, go on to talk about for the investor, what does real estate have in store? Before I want to come to your picks and choices, let's just put some ground rules in place. What all should investors keep in mind before they're taking that call on real estate, where obviously the capital values could be a lot higher? Ravi?
I think the commercial side of real estate offers better opportunities, Surbhi. And we have seen the maximum absorption in office and warehousing in the last 2 years. So going forward, I think that's the more lucrative option that we should evaluate when it comes to investments. And with that, the investment opportunity has quite become regularized with REITs and micro REITs coming in. So people should evaluate those options, which are now regularized by SEBI, and look at the commercial side of real estate for investment purpose.
Okay, so we'll talk a little more about that in more detail, commercial real estate. But Anuj as well, again, I go back to first setting some ground rules in place. And let me actually throw in residential as well. I mean, there are a lot of people who want to buy residential property as an investment as well. So whether it is a small ticket commercial or residential or maybe REITs, whatever form of, whatever the instrument or the physical asset might be, what are the key rules that you should keep in mind or the key things you should ask or check before making a real estate investment?
Absolutely, Survi. So I would say there are lots of them, but I will classify it in three main buckets. First is when do you want this liquidity? If you are looking at a short term to say, look, I have some excess money, I'm going to park it over the next 6 months, 9 months, 12 months, I may need this money back, then I would say is hard asset within real estate, complete no. It is an illiquid asset. It has a lot of friction costs in terms of brokerage, stamp duty, registration. So I would suggest is then don't go for that. And if you do want to still play into real estate, then it is more like REITs that you do it, or more like getting into the shares of listed developers. The second is what is the quantum that you have is if you have a larger quantum and you want to play hard real estate asset, then I would say commercial. If you have smaller quantum, and by larger I mean is like the ultra high net worth individuals, 10 crore plus. But if you have smaller, you may say is I want to do 40, 50, 60 lakh rupees, then plotted developments. I would encourage you to have a look at it. And the third is, are you playing this real estate investment game for capital appreciation or for rental return? If it is capital appreciation, then I would say it will be more towards the residential. If it is a rental income that you're really looking at it, then I will say is on the hard asset, it will be more for commercial and more for retail. That is the three things that one should look at it. What is the criteria? Capital appreciation, rental appreciation, liquidity. What's the horizon for the liquidity, and what is the quantum that you're wanting to invest?
Okay, both of you mentioned REITs as a vehicle to also obviously play the real estate story. We have a question on this. This query is coming in from one of our viewers, Sam. who writes in on social media. He's saying, is fractional ownership in commercial real estate units a prudent and viable investment option? Great question there, and I think both our guests are indicating that you could look at this. So let me ask them about it. Ravi, come in on this. Now, instead of just pure REITs, you also have the small and medium REITs, right? So just quickly run us through what has changed, what is the entry barrier, what is the minimum investment, and if this is a way to play maybe commercial real estate.
Surbi, REITs earlier had a cap of 500 crores, okay, which the government has now reduced to 50 crores. And, now it's targeted at ready assets, which are going to, which will have rental yields going forward. And the minimum investment for these small and medium REIT is an entry investment of 10 lakh rupees. Okay, so it is a slightly higher yielding asset class than the traditional REIT, because it has ready to occupy assets under operations. Whereas REITs, you have assets which are in acquisition as well and in development. So it's being a smaller size, it is slightly more riskier than traditional REIT, but at the same time offers a slightly higher return.
Anuj, quickly comment on this and also tell us, so like Ravi mentioned, the minimum threshold, the minimum you need to invest as a retail investor is 10 lakh rupees. What is the kind of return I can expect if I get into a small and medium REIT, and what's the risk I'm running?
So, small and medium REITs have just come in, Surbi. So it is less than 12 months ago that SEBI allowed. I think there are one or two of them that have come into the play now. It is an interesting concept, as Ravi said. I'm still a big fan of the bigger REITs, the larger REITs. I do feel they have a lot more stability. They have diversity as well, Surbi, of the cities. They have larger portfolios. They have also got larger REIT managers who have ability to be able to lease, some of these buildings. Having said that, the SM REIT is a new phenomena. We will see is that how this plays out over the next few years. It is true, is what Ravi said, is that it can list one single asset of up to 500 crores, as a result of which, if you want to subscribe to units of lesser value, then SM REIT does offer that. Usually, SM REIT provides a higher return than the main board REIT, and the returns are in the range of 8 to 9%, just on the 8 to 9% dividend. But there is a capital appreciation as well that you will get at the time of the exit.
Gentlemen, I'm very sure next couple of weeks or maybe a little later down the year, I'm calling both of you back on, because we need a full classroom on this new, asset class, this new option of the small and medium REITs. We need to understand the dynamics more closely. But for now, before we wrap up, this is a quick last, 10 seconds answer. You both said that residential real estate for end use now is as good a time as any to buy your dream home. But from an investment perspective, if you were to say, and take a pick, any pick across India, any market, whether it could be land, commercial, give us the specifics. Which city, what kind of, product? Ravi, which one would you go with? The best real estate investment for 2025?
I would still go with Bangalore.
And what in Bangalore?
There is lots of opportunities. Like Anuj had mentioned earlier, I could look at plots. I could look at, because the infrastructure development in the city is so huge, and it is going to show its color in the next 3 to 4 years. Okay, so I would evaluate connectivity to CBDs, and I would have a strategy around the future development for my investment.
Bangalore gets your top billing. Anuj, final word with you. Best investment idea, real estate 2025.
It's a tough question to answer, Surbi. I'll go with Bombay, Navi Mumbai. I just believe is that the MTHL, the new airport, the social fabric, the CBD, which is relocating there. I mean, it's a good opportunity for one to invest.
Whether land there, commercial, residential, what within new, Navi Mumbai?
I would do residential apartments within Navi Mumbai and wait till the new airport sets up and enjoy the capital appreciation.
Well, well, well. Now, that's a thought that our viewers are definitely going to keep in mind and do some more homework on. Thank you, gentlemen, very much. This was a good session, a very, very useful and helpful one to help our viewers decipher how they can look at real estate in this new year. Thanks for joining in. Well, with that, we're completely out of time. Thank you very much for tuning in. Keep sending us your response, feedback, queries, all of that and more. We'll see you again with a brand new theme. Let's Talk Money. Always here, same time, same place.
Let's talk money.
Of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion, so I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, I was feeling bad, where if I have to think I lost an opportunity, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
even
harder.
I think the belief is very, very important. Just believe in yourself.
Hello and welcome. You're watching News Center and I'm Parikshit Luthra. India marked a pivotal advancement in its defense capabilities as Prime Minister Narendra Modi commissioned 3 Navy warships at the Mumbai dockyard today. This is the first time in the nation's history that a destroyer, a frigate and a submarine have been commissioned together. The combatants were built at Mazgaon Dock Shipbuilders, India's top warship manufacturer. The commissioning of the warships is significant because of 2 reasons. First, it bolsters India's thrust on self-reliance in defense production. Secondly, the warships are a testimony to India's growing naval influence in the Indo-Pacific region, also referred to as the Global South. Speaking at the event, Prime Minister Modi said that India was becoming a major maritime power and was being recognized as a reliable and responsible partner. He said India has always supported an open, secure, inclusive and prosperous Indo-Pacific region.
आज भारत पूरे विश्व और खासकर ग्लोबल साउथ में एक भरोसेमंद और जिम्मेदार साथी के रूप में पहचाना जा रहा है। भारत विस्तारवाद नहीं, भारत विकासवाद की भावना से काम करता है।
All right, let's go across to our guests right now. We're joined by Lieutenant General Sanjay Kulkarni, former Director General, Infantry and a Siachen pioneer. Also on the show with us is Navy veteran Manan Bhatt. He's also the author of a book on Balakot airstrikes. Manan Bhatt, if I can begin with you, what does the launch of these 3 naval platforms do for our maritime security? How do they strengthen our Navy and our overall defense?
For me, and in particular for India, as the sole security provider of the Indian Ocean region, and as the Prime Minister has rightly said, of the Indo-Pacific in a broader view, simultaneous launch or together launch of 3 major platforms, 3 major naval platforms means a lot in the present security scenario, as we are seeing the situation that is arising out of how these attacking the naval vessels in the region, and the situation that America has, US is trying to take over the Panama Canal, and there Trump is showing some kind of intent towards that. So the situation around Panama Canal is growingly bad, and in this scenario, when Indian naval warships are continuously forward deployed to fight, to combat the terrorism, ocean terrorism that is happening around those areas due to the Houthi attacks and strikes. So it is of utmost importance that Indian Navy is showing its intent, and as Navy has always been the builder's Navy. Indian Navy has always, since let me say 30-40 years, Indian Navy is becoming the builder's Navy and building ships by a very good intent. So it does mean a lot in the present security scenario.
All right, General Kulkarni, is this a message to China as well? The Prime Minister himself visiting Mumbai, launching 3 naval platforms at a time when there is competition, coercion in South China Sea. The global geopolitical environment is very uncertain and volatile. Is it an important message from India as well?
Thank you, Parikshit. At the very outset, a very happy Army Day to everybody. And on such an occasion, the Prime Minister has dedicated 3 warships, a frigate, destroyer, and a submarine to the nation. It enhances the maritime power. You know, we mustn't see always in every time as something as a wanting to counter China. Definitely not. But yes, from the point of view of the way China's expansionism, the way China is trying to sort of assert itself in the Indo-Pacific, an area which is approximately about 8,000 by 8,000 kilometers, touches about almost 39 countries, has 2/3 of the world economy passing through. From Malacca to Madagascar, it's something which is absolutely important for us. We are part of the various exercises that take place with many countries, the Malabar exercise, for instance. And then we are also a part of the Quad. In keeping all this in view, it's essential that the Indian Ocean region, we have an interest. And an interest in which the Prime Minister very rightly said, a rising power, but a responsible power, ensuring freedom of navigation. And therefore, with India's presence and India's strong naval presence in the Indian Ocean, definitely makes you feel, that it enhances maritime security, it strengthens maritime operations, it enhances maritime domination of India, not with the view to counter anybody, not as a threat, but to ensure that, yes, we are here and we ensure freedom of navigation. And that is something very important, because over the years we find slowly and steadily China has. We see what China has been doing in South China Sea, what China has been doing along the Taiwan Strait, even China's assertiveness in the Himalayas. We've seen Eastern Ladakh, what China has done. Right. So keeping all that in view, if China is looking at expansionism, we also have to be able to assert ourselves in something not with a view to threaten anybody, but as part of Global South. Okay. If we have to be leading the Global South, yes, a maritime power which the world can trust, a world can be assured of a responsible maritime power.
Yeah. General Kulkarni, but also does the construction of these warships in India, does that also show that India has now taken several steps forward in terms of defense production of naval platforms in Atmanirbharta in the real sense?
100%, because all of these, be it frigate, be it the destroyer, be it the submarine, they are high-tech technologies, cutting-edge technologies, ensuring the complete warfare, I would say, changes the warfare concept in the maritime domain. Keeping that in view, the indigenization, if the destroyer has 75% indigenization, that itself shows. It also gives feeling that, yes, Mazagon Dock can manufacture and make such absolutely state-of-the-art, even if it's a submarine which is diesel, but it's absolutely still. The frigate is absolute state-of-the-art. So keeping all this in view, when you get these niche technologies in India and we are able to manufacture this, it enhances self-reliance, it gives confidence to our own people, and that we know something that matters, the Navy, the maritime, is all that we can do it ourselves. We don't have to be dependent. And most of it comes from the war, the design bureau of the Navy. Navy has been always ahead in all matters when it comes to architectural, when it comes to designing, when it comes to indigenous manufacturing, and Mazagon Docks have taken a lead, all of it. It's not easy. And not just this, if you see in the overall context, in keeping in view the Prime Minister's visit, even to forthcoming visit to France, in which about 26 of the Rafale maritime aircrafts have to be taken, another additional 3 more Scorpion submarines have got to be signed for. So all this does give a feeling that, yes, we are a rising power, that we are capable of manufacturing high-tech and cutting-edge technology, whether they're frigates, whether they're destroyers, whether they are the submarines, and all of it. Not just that, in part of the net-centric warfare also, there's still it's not, all these technologies are very, very difficult to get. And once we are part of it, I'm sure this will lead to the world looking at us as a maritime power in the Indo-Pacific. Yeah.
All right. Manan Bhatt, if I were to ask you about the kind of technological advancements we've made with these warships, could you give us a sense of certain cutting-edge technology features that we see there?
The largest advancement that Indian Navy, in particular Mazagon Dock, has made is building the ships from modular technology. Due to as they are using the modular technology nowadays, when you get some new technology, when you get some new missiles into the ship, it will be very easy to just modify a particular part of the ship and build it. The shipbuilding has taken leaps and bounds because due to advent of this technology, the shipbuilding process has become very, very much faster and much more safer. What they are doing is they are building different parts of ship in different dry docks, and they are bringing them together and assembling them. So it has become a very fast process, and which is very much needed, because the way China is building its ships, its warships, is way ahead of anybody in the world. And to surpass them, to equal them, let us accept it. As the general has said, that we and China, we might not consider them as an enemy, but they are our adversary in the Indo-Pacific. So shipbuilding has to be sped up, and I'm very happy that a defense PSU like Mazagon Dock Limited is taking the steps ahead and building ships this fast. It is a great advancement for us.
All right, General Kulkarni, where are the other gaps in our defense preparedness, be it the Army, Navy, Air Force? Where do you think we need the urgent attention of the government, both in terms of localization, and if there is international collaboration, where do you think we need to put our energies together at the earliest?
See, first and foremost, I think as regards the Navy is concerned, we are on track, and we are ensuring at least the cutting-edge technologies are coming in, and this Atmanirbharta would help us. because it's absolutely essential. Because if India is going to be the third largest economy in the world, it requires a strong military. It requires, only then can you grow economically, only then can you grow technologically, only then can you have a diplomatic clout. Keeping that in view, you find in the army also the way we are going about, whether the light tanks are concerned, whether the artillery pieces are concerned, whether the small arms are concerned, all of it are on way. In the Air Force, definitely there is a requirement. I think somewhere down the chain, we have not been able to get the right amount of engines. And that may be one of the impediments that we are not able to get Tejas Mark II the way we would want to. Because if we have got Rafales, which are 4.5 generation aircraft, and we are looking at 42 squadrons and maybe even going up to 50 squadrons, then definitely this is one place. Because capacity building takes time. Intentions can change overnight. And we've seen that all what has happened in Galwan. So therefore, for capacity building, it's very essential that Air Force also now needs to really keep pace with it. If you have got 4.5 generation, we should be able to start manufacturing. An engine is one thing that we do need, because we were to get it from US, but somewhere down the chain it's got delayed by over a year plus. And we need now to focus on that part so that at least we are able to manufacture 5th generation aircraft. And that is where it's very, very important. Slowly and steadily, whether it is in terms of the helicopters are concerned, drones are concerned, all of it, we are subsequently even into cyber warfare, space is concerned, computing is concerned, all these technologies, all these aspects of modern warfare are very essential, because until and unless if we are the third largest economy soon to be, then we need to have a strong military also, not with a view to get involved into a fight, but to deter anybody from fighting. Like what the Chinese always been saying, the supreme art of war is not to fight, is to subdue the enemy without a fight. And therefore, we are not there to be able to fight. We to deter. We don't want to fight, but we want to prevent anyone getting into unnecessarily warfare with India. Therefore, the preparation is required. And only then can we stay and sustain ourselves as the third largest economy and grow economically. In that context, I think, yes, these defense corridors that are coming up, indigenization that is coming up, indigenization not just manufacturing, but even designing. It's very important that we design in India, we make in India, so that even the backup and the repair facilities, upgradation of it, all of it can be done in India. Because all of it, all these technologies can be imported, but then they're subsequently very expensive to maintain it. And therefore, even transfer of technologies, even absorption of technologies, be able to sustain it, retain it, maintain it, all of it, if it is done in India, then we'll slowly and steadily find a lot of people will start looking at us for repair of their equipment. So in that context, I think this Atmanirbharta, self-reliance, defense corridors are a very essential part for us to be militarily strong.
General Kulkarni, I'm running out of time, but I'd like to thank you for joining us. It was an absolute pleasure talking to you, and Manan Bhatt as well. We'll have to leave it there, but definitely a big step in the direction of defense Atmanirbharta in India. We're taking a short break, but with an eye on China, the outgoing Biden administration is restricting exports of AI chips. How will this impact India? We discuss this up next with Ashok Chandan, the president of the Indian Electronics and Semiconductor Association. We'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is, I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening so that, you know, there are...
Welcome back to News Center. The US government is restricting the exports of high-end chips used in the development of artificial intelligence. The final days of the outgoing US President Joe Biden administration has capped the number of AI chips that can be exported to most countries. It also blacklisted countries like China, Russia and North Korea, saying they'll not get any access to high-end chips. Interestingly, the new regulation allows unlimited access to the US technology to countries' closest allies if they approach through verified companies. What does this mean for India, which is only getting restricted access to these chips? To take this forward, I'm now joined by Ashok Chandak, President at the Indian Electronics and Semiconductor Association. Thank you for joining us on the program today, sir. Let me begin by asking you, these new rules, which are going to come into effect in 120 days, what do you see as the immediate impact on AI development and AI applications in India?
Thanks, Parikshit. Happy to be with CNBC. And I have gone through this almost 168-page document, which is put up by Department of Commerce, Bureau of Industry and Security, United States. And it's pretty much clear that the AI is becoming very central to the security as well as economic strength of the country. And US is decisively trying to do the complete control so that they retain technology leadership as well as avoid these chips in the hands of their adverse countries. But in the process, the way it has been formulated, it looks to me a double-edged sword. And I'll come to India topic, obviously. While on one side, they are trying to protect the US national interest and technological superiority, but also there is a risk of economic and geopolitical consequences. Last few days, we have already seen several US technology companies also objecting and raising major concern on the rules, the way these are being framed at this moment. Though there is a 120 days time period which is provided to put the comments, but this is, I would assume, done after a lot of homework by the government and the administration. Now coming to India portion, surely, as you mentioned in short, they have divided this approach into a tiered approach, tier 1, tier 2, tier 3. Tier 1, there are 18 countries, so-called friendly countries for US. They get access to everything, including the chips as well as the AI model development. There are two topics there, actually, chips and the model developments. Both, they get access. But there are also some restriction there. We can come to that if time permits. And tier 3, fully restricted. Some of those countries, like you mentioned, Russia, North Korea, there are some Gulf countries, including Syria and other stuff. There are, I think, 23, 24 countries in that list. And there are remaining 120, which India is part of. That's more of, they would need the national end user license. So India would need a national end user license. And there's a restriction on number of chips, what India could get in 2 stages. Number 1, the total chips, what we could get in a year. And they have defined chip as a performance of that. But let's call, in simplicity, call H100 equivalent. That is most commonly used word in the industry. So up to low volume, there is an exemption. If somebody wants to import 1700 GPUs of that H100 equivalent, it would be allowed to import based on the end user validation license. But there is a country cap, which is defined, and this is where it gets interesting. And from the India tier 2 country, this national validated end user license is limited, capped to 100,000 units for 25, 270,000 units for year 26, and 320K units for 27. And this is where we have a concern from India perspective. So for a small development, some experiments, some academic institutes, startups, it would be okay that you import, you do the work, obviously, after the end user license and do the work.
But Mr. Chanda, do you expect the Indian government to take this up with Donald Trump administration? Is this something that you've appealed for to the Ministry of Electronics and IT, the Department of Commerce in India, the Prime Minister's office?
This would be taken up surely. We have already, in fact, because yesterday only we started to work on this topic actually. So one representation has already been made to MIT, and it will take some time because right now it is a 120 days comment window which is open, in which several those technology companies, particularly US-based companies, they are allowed to put their comments and feedback. But surely from the government perspective also, because India is running an AI mission where we are going to spend about 10,000 crores on AI development, and there are about 10,000 chips, GPUs to be installed actually for development programs. That may be a small number, but in case Indian corporates, and this is likely, we are a 1.4 billion people company, and there is also ambition to do a leapfrog into the AI domain.
Yeah.
So several Indian corporates and big conglomerates would have desire expand the development and deployment of the AI-related engines into the country. And this limit would soon become a deterrent going forward.
Okay. Mr. Chanda, how would the procurement costs go up as a result of this new rule?
So, it's the bureaucratic procedure that would get applied. You need to apply for those licenses. And because there are limitations going, then you are at a so-called blessings of the other party who is exporting these units. So there would be an impact on the procurement cost because of the procedure delays, the impact on your development efforts. Those costs would get added up. I am not referring to the price of the chip. I'm referring to the cost, which is finally everything you add up together with regards to whether if there are any delays and you are getting it, and then you have to struggle for it. So this is what is going to happen actually, as we see. But the
which are some of the companies you think would be most impacted in India, if you could name a few?
I think one of the things we have heard is Jio, that's Reliance, has an ambition to do this AI-related topic deployment. They also did some arrangements with NVIDIA, one of the key GPU makers, and which is also under this export control program. And I would expect there are several other companies, including the defense-related requirement would also come up actually for this kind of a chips requirement. And you see, India is IT capital, and there are several IT conglomerates. They have not specified their intention so far. It's just possible they would have interest to do their AI development, and also large-scale data center requirements in the country that will also come in effect. So even if the global companies, for example, Microsoft or Amazon or Google, they would get a universal license, they could export and do their data centers in India. Just an example, but there is a limit and cap. They could do maximum 7% into any one particular country. And they have to limit to 75% of their consumption into United States and friendly allies. So you will see as the time progresses, if this rule remains as is, it will create a deterrent on India's ambition, as well as the global companies also expansion into India. So that would keep impacting.
All right. Okay, thank you very much, Mr. Chanda, for joining us. Clearly, there is a problem here for India. Our own AI ambitions are going to be impacted with these new rules, which put a cap on the number of chips that we can import into the country for such high technologies. We leave it there for the moment. Let's see what happens in the days to come. Thank you for watching. Goodbye.
Who are doing really well, but not able to prove themselves. I think leagues now, if you see there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
"2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned, and after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
The importance of infra safety in India has been emphasized as a foundation for building a safer and more sustainable future. In line with this vision, Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future, was hosted to bring together industry leaders, experts and policymakers. The proceedings began with an opening address by Rajshekhar Reddy, Vice President of Marketing at Polycab, who underscored the critical role of electrical safety in driving India's infrastructure and economic development.
Good evening, ladies and gentlemen. It's truly inspiring to see such a varied personalities here today. So let me set the context for tonight's conclave. We are calling it aptly as Infra Safety, powering India's electrical future. Every day we come across various media reports wherein we see electrical mishaps happening across the country. Let me also share some statistics, and the statistics are alarming. I am quoting a report from NCRB, which is the National Crime Records Bureau. It states that around 35 fatalities occur daily due to fire incidents, with approximately 20% of these are caused by electricity. Additionally, CEA, which is the Central Electricity Association, they recorded over 10,000 electrical accidents in FY 2020. Almost 55% are attributed to electrical installations. So there's no doubt in saying that electrical safety is a topic that we need to discuss and discuss more and more. So it's imperative to raise awareness on electrical safety with the consumers. So as part of this conclave, we would be traveling across various cities of India. The idea is to spark conversations with various stakeholders across the country. And we need to see how we increase the safety quotient in our infrastructure. We are confident that with this initiative, which is supposed to reach to millions of people through CNBC-TV18, it will play a pivotal role in educating and empowering consumers.
This was followed by a compelling keynote address by Rajiv R.A., former Metropolitan Commissioner of MMRDA and Director at Urban World Consulting. His insights on urban infrastructure and electrical safety offered a forward-thinking perspective on the challenges and opportunities in shaping the future of India's cities.
The first thing which comes to my mind when I read about the infra safety is that as such, we lack the safety culture in this country. It's not only the policy makers or the government, but at the same time, the industry, which is rightly talking about, Polycab is talking about training electricians, but as well as the consumers, the developers, the government, everybody should have to come together and think about this safety culture. How many houses in the kitchen do you have a small fire extinguisher available? No, ladies are sitting here. Why have you not asked that question? That if there is some freaking fire accident in the kitchen, you should be able to douse the fire yourself by using a small fire extinguisher. Why can't we have that in every family, every house? I think the electrical industry representative like Polycab who's sitting here, it should be their role also to argue on these lines that we need to define certain standards in this regard at different levels, be it the commercial, be it the industrial, or be it the residential levels. As we power India's electrical future, let safety be our guiding principle, a principle that illuminates not just our cities, but our collective vision for a brighter, safe tomorrow. Thank you so much.
The first panel discussion, titled Fortifying Mumbai's Skyline, Enhancing Electrical Fire Safety in High-Rise Buildings, was moderated by CNBC-TV18's Mangalam Malu. Panelists explored key challenges in ensuring safety in high-rise constructions and shared actionable solutions for mitigating electrical fire risks.
When it comes to fire standards, where does India stand when it's compared to, say, some of the other developed countries? Because if we're looking at India as a developed country, all our standards, especially fire safety standards, should also be at par.
When we are talking about the standard, nobody is talking about the standards. But whenever we are talking about US, UK, there are some regulations, there are some laws that the people have to follow, whether it is the fire alarm system, whether it is water sprinkler, whether it is emergency exit, whether it is a training, whether it is awareness, whether everything. If anybody will bypass these systems, they are resulting into a big penalty. So in India, we are still, maybe I will say this is becoming a Viksit Bharat, but I will say it should be the Surakshit Bharat. I think this is the area we should focus. That is why we just join hands with the CNBC to make more awareness with such kind of events, and we can speak more how we can make this India as a Surakshit Bharat.
Let's go to the Deputy CFO. Typically in CNBC, when we have a CFO join, it's the Chief Financial Officer, but in this case, it is the Chief Fire Officer. And thank you so much for your services to all of us citizens, sir. But in your experience on ground, what do you think would be the top 2 or 3 reasons why fire incidents occur? What has your understanding been?
So as I was discussing over there, that during the construction period, there are 2 measures. One is passive and one is active. So during the construction phase, we are recommending some measures, and the buildings are constructed as per the recommendations. But then later, these things are not, maintained properly. We buy the property of worth of crores of rupees. We, along with our near and dear ones, stay over there. We spend crores for the flat, but we don't like to spend a few thousand rupees for the safety of our near and dear ones, for the maintenance of the things. We lack it because our mentality is not like that. We think सब चलता है. Fire कहाँ हुआ है? Where the fire has happened? इतने साल से हमारे building में तो नहीं हुआ है. So these are the things which is lacking in our society.
Before we move on, I'd like to just do an audience exercise. How many of y'all in the audience fly regularly? Raise your hands, show of hands. Quite a few of y'all. How many of y'all get scared when there is turbulence on the flight? Almost everyone who flies gets scared where there's turbulence on the flight. The statistical probability of you dying by fire in a building is a lot higher than the statistical probability of you dying on an air crash. Despite that, you get scared out there, but in your house, where you are more likely to die by fire, we're not scared. That's exactly what, the point that he's making out here. Dr. Hiranandani, I have to come to you on this one. From a real estate developer standpoint, what are the measures, what are the best measures or good practices that industry is taking? And at the same time, how is the industry putting that in the front as against the profits that they're making?
I think I'm glad that Polycab and you are actually working to educate the people. So first and foremost, when I buy a house, I should know what's the capacity of equipment that I can possibly use. Number 2. Second, when you repair anything in the house, whether it's wiring or otherwise, they just splice the wire any place and anywhere that is likely to do. Sometimes even in the main ducts, the electricals make, an electrician will come. Today there's a problem. They will splice the wire. They will connect the thing, and in the duct, you cannot have that kind of a joint. Simple thing which any common person, you don't even need to be a great electrician to understand that. We don't have skill sets or certified people who will look at the electrical jobs that we are actually wanting to do. I think it's just that we are not told. When you talked about the plane, where you say about it, every time I travel by plane, he tells me about it. But once in 10 years also, no person comes and tells me that my electrical thing is not correct. Education, knowledge disposition, not only regulation, but also the fact that the common man should be told what is it that he needs to learn. So educate the people like you're doing today, and probably multiply this by various means that we can do, and skill sets of electrical people, I think, is important.
Ashish, the question then is, now that the gaps are identified, how do, experts like you, consultants, design consultants like you, address these gaps and also ensure that these are followed? Because from a consultant standpoint, you can go ahead and give your report, but to ensure that they are followed, how do you go about doing that?
The codes and standards related to fire are one of the most stringent in India. You can compare it with NFPA, you can compare it with anywhere else. They are prepared by the fire officer, they're prepared by the industry. The National Building Code is a classic example of what we have. There are enough regulations available. We as consultants go out and specify the protection right from the point where the power is being received, where the city supplies the power, down to the last point. A simple example would be a earth leakage circuit breaker, ELCB. The equipment that we are using are also carry a certification. A much bigger issue that we are yet to address here is who's installing it and who's testing it and who's coming and redoing it. When our installer itself is an uneducated, uncertified professional, what are you going to do with all these certified equipment? We are so much enamored by an insulation tape that anywhere we cut the wire and put the insulation tape. There are connectors supposed to be used. So specifying is one thing. The bigger gap is out there in the field in terms of who's installing it, who's maintaining it, and who's retesting it after a point of time. The codes, standard, cover it amply. The implementation is the issue that we are here.
We're in this dynamic world. How do developers like you prepare for all of these things? What are the challenges that you foresee from where you are at right now? Because you're obviously at the forefront. You can see things that not everyone else can. And how do you prepare from that from now itself?
Whatever is currently your expectations of the need of equipment in the next 10 to 20 years, we can anticipate, but we can't anticipate beyond that. So when we do this, we give them all the fire standards which are the best. Number two, people in India do not believe that quality is essential. They think quality is expensive. Actually, quality is cheaper. In the case of cables, electrical equipment, and other things, if we don't look at quality as the first norm, then we are going to be in trouble sooner or later. So whether it's a developer using it, or whether it's a person carrying out interiors or repairs or further things like commercial offices that are constantly renovated, I think we need to have those norms understood and done and executed. That's why we need good people who can give us guidance relating to what are the standards that are necessary for each type of equipment.
20% of things that people are doing wrong, that is causing 80% of the problems. What would you suggest? How do they, fix those, or what are those 20% problems that they need to fix?
I have been in this construction industry for 32 years, designing buildings. I've seen a lot in terms of fire, in terms of issues. Your weakest link is the point of failure. Your weakest link here is the person who's doing the work. The installer is where the weakest link lies. A simple thing that can change the entire construction industry is, henceforth, everybody will use a certified professional who's installed. Call him a professional who's installing your electrical systems, your carpentry, your plumbing. That's all you need out there.
Right, so with that, we will now give the responsibility to you guys. Go ahead, ensure that you will not shortchange yourselves and, put your lives at risk just for a few extra rupees. Just be very sure, very careful, and be aware, because fire safety is, pretty proportionate to the safety of your own life, which we don't understand because of the low probability of such events. While they are low probability, they are high mortality. So just understand that risk reward that you're taking. That's all we have from this panel.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters? Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future.
Welcome back to Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future. After the insightful keynotes and discussions, the focus shifted to an engaging fireside chat titled Safety First, Strengthening the Electrical Backbone of Construction. In this session, Bhushan Sahani and Mangalam Malu explored the critical importance of robust electrical systems in ensuring the safety, efficiency, and long-term resilience of India's rapidly evolving infrastructure.
These things that you've seen in your life are the ones that triggered this thought of fire safety, or is there more? Because, it is quite something to, think about but it is also commendable that you're putting time, effort, monies behind this.
I will say, as off to our chairman, to the family and all, they never talk about the expenses at all. In this year and from last 1.5 years, we are doing things which are totally out of the league. We are not doing anything which is the traditional and all. I will say availability, advocacy. Nowadays, we are talking with the specifiers, please come on the board. We have 150,000 electricians. We are training them. I will say 10% and 15% will come on the board. I am the happiest person.
Let's talk a little about what else inspires you outside of Polycab. Are there any companies around the world and in India which give you a sense of inspiration that these are some of the practices that we should implement in Polycab as well to make it a further more world-class institution than what it is right now?
If we compare India with the companies, with the countries which is already on the maturity level of such UK and US, there are the standards. We have also these standards, but subjectively, how formally we people are adopting. We have to change the culture. We have to change the jugaad system. We have to change the adaptability. We don't want to be a supplier, I said. We want to be the solution provider in such way that if anybody is buying Polycab, he should have a peace of mind.
Thank you so much for this great conversation that we had.
The conversation continued with a second panel discussion, which highlighted the vital role of cabling solutions in enhancing both fire safety and the performance of modern buildings. Moderated by Gautam Srinivasan, this session delved into emerging trends, regulatory frameworks, and innovative technologies transforming Mumbai's real estate landscape.
Bharat, we'll start with you, especially when we look at the cabling industry in general. Now, for an average person in the audience, the first question obviously is going to be, all right, as we start this discussion, what are the features that we should be looking at when it comes to cabling solutions, choosing cabling solutions for high-rise buildings? So how about we start this discussion with the basics? Your thoughts on this?
See, as far as cables and wires, it's actually some part of it is very basic. When you look at two different cables or two different wires or two different brands, you don't know what exactly is the difference because they look the same. The beauty lies in the eyes of the beholder, right? So there are experts who actually understand that difference. And if you see two things in a cable or a wire, it's effectively metals and plastics. And metals and plastics, if put in the same form, will look the same. So what could be the criteria in terms of selection of a better product? First is awareness about the company. And as we sometimes call these products commodities, right? So over a period of time, many of these products get termed as commodities. And at the same time, we talk about safety. Something that keeps you safe cannot be a commodity, right? It's very important to your life. I think we should, again, have a wave of creating learning about what are the changes in the electrical conductor properties and the polymers properties, and use that as a basis of selection.
Coming to you, Pankaj, when we look at optimizing cabling solutions for safety, especially in projects with large footfalls, whether we are talking malls or hospitals or office building, or what are the sort of the approaches which are going to take center stage versus, say, a residential home? So what are the priorities that need to be looked at?
Cabling, whether it is power or networking or it is communication cabling, today has attained very important, I would say, status in building, and that is area which all of us in the consultants fraternity are looking at it very carefully. And this could lead to many disasters. We all understand that. It is very important to understand the importance given to all these aspects, and that's how we'll make our buildings much safer.
Dr. Chaudhary, your thoughts on this, especially when we look at cabling solutions for projects with large footfalls versus, say, residential home projects. What are going to be the key differences, and what can be the similarities to improve outcomes around safety and optimization when it comes to large versus small projects?
Safety-wise, there should be no compromise. When even if it is a single dwelling or it's a mall space or any commercial space where the large footfall is there. Large footfall spaces need to be covered with so many things like CCTV, access, fire things are there. So many more cablings are there. And we know that the majority of the fire occurs because of the short circuiting or that because of the cable heatings or XYZ reasons. So when we are designing the large spaces, the different care from the single dwelling has to be taken care.
Nimish, your thoughts on this? What needs to be, what are the differences in terms of these large versus small projects when it comes to cabling solutions that we should focus on?
The difference between a mall or a large commercial establishment and a single use or a residential building, safety-wise would be there are much higher risks that a high load situation will involve. A mall would have hundreds of restaurants today, hundreds of shops catering to large electrical loads. And these loads are running simultaneously. In a residential building, there are loads are there. They are designed for those particular loads. The cables are sized for the higher loads, the cable sizing would be different. For lower loads, again, cable sizing would be different. But the risk involved in a larger setup will be higher. The care which needs to be taken, the safety measures that need to be taken in a bigger setup are much stringent. So these things have to be taken into account while designing and while installing these, cables or these systems.
Son, to bring you in the real estate markets, there's builders, developers, suppliers, contractors, everyone. So we need everyone sort of on board. So in terms of the developer perspective of realizing the benefits of advanced cabling solutions, what would you have to say?
See, things have been changed now. I mean, we are not taking redevelopment or any new construction very lighter now, in terms of safety. Because safety is the key focus where everything comes in mind. We as a professional engineer, we as a head of the departments, we always focusing now on quality. We know if we are talking about 150%, then it will reach to 90% or 95%. So focus of any project, when you monetize the project, we first talk about the safety, then you talk about the quality, and then you talk about the speed. Cost comes definitely fourth. Things have changed now. There is one perception, cost always comes in picture. It definitely comes. But after safety and quality, for sure.
On that note, thank you so much. And thank you to the audience for participating.
The event concluded with an acknowledgement of the invaluable contributions made by all the speakers, panelists, and delegates. Gratitude was extended to everyone who participated in this remarkable initiative, making it a resounding success.
Polycab and CNBC-TV18 present Infra Safety, powering India's electrical future, and Chart Wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The key takeaway from Reliance's earnings this time will be the margin expansion or the EBITDA expansion. So despite a flattish revenue growth, the CNBC-TV18 poll throws up a near 8% expansion in the company's EBITDA, driving margins to 18.4% and driving about a near 7.8% increase in the company's profitability. So the key is going to be the EBITDA expansion this time. And what will be the drivers for that? One, the O2C business, led by refining margins, will see a pickup in the company's EBITDA. Secondly, this would be the second consecutive quarter where Reliance Jio, the telecom arm of the business, will do well, aided by the July price hikes. And even the retail is likely to continue to see an uptick in the EBITDA given the festive season sales. That said, the upstream EBITDA could remain under a bit of pressure, and that will offset some of the pickup seen in the O2C, the refining, Jio and the retail business. So let's talk in a little bit more detail about the O2C business. Well, the first half of the year was extremely challenging for the oil to chemicals business. We saw the overall EBITDA decline. But this quarter, we're anticipating a pickup in the company's refining margins. Look at the Singapore GRMs. Singapore GRMs went up to about $5 per barrel in Q3, which compares to a $3.6 per barrel in Q2. So there was a pickup in the refining margins, and that will reflect in Reliance's O2C business. For Reliance Jio too, this will be the second good quarter for the company. So we're working with a revenue growth of close to about 4.8%, margin expansion to about 54%, driving a 10% increase in the company's profitability on a quarter-on-quarter basis. The key reason for this, if you remember, would be the July hike. So whenever there is a tariff hike, and in the case of Reliance, it was about a 15 to 20% tariff hike, it takes 2 to 3 quarters for the full flow through. So even Q2 was a strong quarter for the company. That's the prior quarter.
Hello and welcome to a special Indianomics on the power sector and what it can expect from the budget. Actually, our sister channel CNBC Awaaz last week broke a story that the government may come with a new power policy along with the budget or as part of the budget. The key issues that need addressing in the power sector, of course, are, as always, health of DISCOMs, and then new ones like tweaking the rooftop solar scheme if needed, import duties on solar modules and solar cells, which are going to become very important because of President Trump, battery storage, that's with battery prices crashing, nuclear power, the new baby that the government will have to take interest, and green hydrogen, whether the old juices still remain. Today we have with us an elite panel to discuss what should a power policy contain, if indeed there is a new policy? Joining me are Mr. Anil Swarup, former Secretary, Government of India, handled, of course, coal, the most high profile. Mohit Bhargava, the Senior Advisor, IECC, University of California, but more importantly, a former CEO at NTPC Green Energy. Nikhil Nigania, the Director and Senior Analyst at Bernstein. And Sabyasachi Mazumdar, the Senior Director, Care Edge Ratings. Gentlemen, good morning. Thank you very much indeed for joining me. Well, you know, we are expecting that there may be a policy. These are, of course, usual pre-budget news breaks. So I don't want to give the impression there is one, but there could be one. Let me start with Mr. Mohit Bhargava. Mr. Bhargava, inevitably, distribution has to be attended to. For all the efforts of the last 30 years, the losses continue. ATC losses are actually mounting. So what would you expect if there is a policy on distribution?
Thank you, Ms. Lata, and thanks for having me. And good morning to everyone else on the panel. Yeah, policy is expected, as you said, but honestly, we really don't know because the government operates in its own ways. If you permit, I'll just take a few seconds on IECC. IECC is actually India Energy and Climate Center at University of California, Berkeley, is actually helping the top government officials and policymakers to take decisions for economic growth and make it more sustainable. And in this, we have been supporting various departments, including earlier the coal ministry also, and we continue to do so.
Mr. Swarup, in your career, not just in coal secretary, but perhaps also in Uttar Pradesh, you would have seen this unending problem of distribution. They're not going away. If there is a policy, what will you expect?
I hope there is no policy. We don't need policies now. We need action plan.
Okay.
I remember meeting Mr. Modi in 2014 when the crisis was on both in coal and power sector. Unfortunately, the crisis in power sector was not as recognized as the coal sector. But ultimately, they came up with Uday, which was a brilliant policy, very good policy. So we must understand what is required in this country. It is not set of policies. And I hope they don't waste time on policies because you will have a lot of time discussing those policies here with ultimately 10 years down the line, nothing would have happened or not much would have happened. So what we need is a real action plan. And in an action plan, we must understand if a thing is not happening, why is it not happening? We don't really address those issues. What we discuss is policies, policies, and policies. Even today, you will discuss policies, not going into the details of it. Let me give you an example. This power sector has been by and large sorted out in Gujarat. Now, my question in 2015 and even now is, why can't the Rajasthan government sit with Gujarat government and work out a clear-cut action plan? Because the terrain is similar on both the states. So we will end up discussing policies here.
Yeah,
we will not discuss the action
no,
plan.
Mr. Swarup,
my suggestion to you would be...
that point is absolutely valid. That we have to take
why are we wasting time
successful
here
examples.
discussing policies?
But
no, let me clarify. Since you called me here, let me clarify. The objective of any discussion should be to move ahead. And my contention is very clear. We are trying to correct things sitting here in Delhi. We are sitting here and discussing policies in Delhi. The problem lies in the states. And if you compare why coal happened between 14 and 16 and power did not, Uday, the sun did not rise, because everything was being done here in Delhi. What really needs to be done is go down to the states, sit with the states, understand the problem, work out a clear-cut action plan, and I hope there is no wastage of time in coming up with another policy.
Okay, fair enough. That having no policy is also a policy, and we have to see whether any action plans will come through. That need not come as part of the budget at all. But Mr. Bhargava, I was asking you whether you expect any announcements on, privatization, for instance, of DISCOM. Very, uniquely and importantly, the Uttar Pradesh government has announced a privatization, I think, of one of its DISCOMs. That's big news, and we have some breaking news today that Tata Power could be in the fray. Your thoughts, do you think that something can come as part of the budget or along with the budget on DISCOMs?
Well, no, Ms. Lata, I think you need to understand that distribution is a state subject. So any news regarding, if any news regarding privatization of DISCOM has to be at the state level. But one more thing is important that I think this has been established largely clearly that privatization or not, that is not the point. The point is that there has to be accountability and responsibility at the DISCOM level, and which, if I may add, Anil sir mentioned about Gujarat, but we have seen now that happening at many other states. So many states have actually improved their losses significantly. Yes. They've come down dramatically. A couple of them are actually making profits also, and I'm not talking about the private DISCOMs. It's the government DISCOMs which are doing very well. So
yeah,
it
I
can
take
be
your
done.
point, sir. But the RDSS was a centrally mooted, plan, and that was intended at the distribution scheme. So, is it possible that, as part of the policy, if there is one, something can be done for encouraging privatization or discouraging losses?
No, discouraging losses, the central government has always done, and you rightly mentioned RDSS, and there were a couple of schemes earlier as well. But if privatization has to happen, and as you mentioned, UP, I also read that report that they're looking at Kanpur to take it forward. So that's ultimately the decision of the government. I would say it's also political will, and if they feel comfortable taking it forward, why not? But I must say, it doesn't mean that privatization is the panacea. Yeah. It can be, we have examples where it hasn't worked very well. And like I said, state governments have worked very well as well.
Okay. Well, I think in more cases, privatization appears to have worked. But I take a point in UP, I believe there are some union issues as well. Nikhil, to come to you, you don't have to stick to distribution. But broadly, if there is a policy and if it includes distribution, what will you expect or what will you want?
Sure, Lata. So from a policy standpoint, see, distribution is the Achilles heel of the sector. Absolutely no doubt about that. I think everyone will agree to that. In terms of the solution, it can be multifold. One, obviously, the RDSS scheme which the central government has run, that continues as part of the next year's budget as well, those expenditures to improve health of DISCOM. That seems business as usual. The second thing, my view is AT&C loss reduction. Private DISCOMs we have seen in cities, and now Odisha is one good example where a private entity, Tata Power, is transforming the distribution business. It might not always happen, I agree, in the right direction, but at least till now, we have more cases in favor of private entities transforming DISCOMs for the better. And the UP instance, the two DISCOMs actually are being considered for privatization. Should be a positive from a DISCOM health perspective as well, is what we feel. From a policy standpoint, if one asks, see, if you look at countries abroad, in many countries, you have a multiple power retailer model. In India, for example, only Mumbai is the only place when we have multiple distributors selling power. So if you could have sort of a competitive space in distribution as well, which is monopolistic in most parts of the country except Mumbai, through multiple licensees or, segregating the line from the retail bit, that could help improve health of DISCOM and the
maybe that could be placed as a goal. Okay, let's move away from distribution. Sabyasachi, is there anything else that you can expect, say, either in terms of nuclear or, green energy, renewable? Is there anything where a policy intervention is even needed?
So to answer that question, basically what we can expect from the budget is maybe something in the line of additional funding, either for the grants, continuing with the grants component for RDSS, or maybe some viability gap funding for various schemes like hydrogen or green hydrogen or nuclear, etc. But by and large, as Mr. Swaroop points out, most of the action will have to happen at the state government level, beginning from the DISCOM side, because once the DISCOMs are financially viable, they are able to afford all kinds of solutions. For instance, the solutions that we have, like batteries or anything, all these are expensive solutions. So, and it boils down to the fact that many of the DISCOMs don't have the financial muscle to, use all these solutions for meeting their power requirements on a 24/7 basis. So really, it really boils down finally to the DISCOM sector.
You know what? I'll tell you, the recent policy interventions have gone against DISCOMs. For instance, rooftop solar, that has taken away their best customers. They're able to fend for themselves. Or solar cells, you want to protect the country from cheap Chinese goods. But who pays more expensive solar modules? the discoms. So, what you want to help elsewhere, it seems to be hurting the discoms. But let me digress for just a minute. The power sector is on fire at this point in time. As I speak to you all, I think the very presence of all of you has given some wings to power stocks. So I just need to attend to that for a minute. Nikhil, what part of the power sector, is worth buying at this juncture? I'm only asking because NTPC up 3.3%, BHEL up 3.2%, Power Grid 3.2%. I think we need to address, are these stocks good value for money? What is the positives in this space?
So for the broader space, if you look at the themes playing out, number one is acceleration in power demand. Although the near term it's been soft. In the medium to long term, we expect power demand to grow at 1x GDP. The second theme playing out is a tight demand-supply situation in the evening hours when the sun is not out, which aids the thermal story for NTPC and even BHEL for that part. The third theme is the grid, which is, the heart of it all. And grid becomes the challenge as we look to add a lot of renewables that do in remote locations in Rajasthan and Gujarat, which aids the story for power grid. And fourth is energy transition, which is well understood, an aspiration to reach 500 gigawatt renewable from 200 today by 2030. In terms of space we continue to like the public sector names, actually, NTPC, Power Grid, and even the lenders to play this CapEx story in India. They've been a bit soft over the last few months, largely as demand has been a bit tepid. Power demand has been a bit tepid. But our medium to long-term outlook remains the same. Okay. And our preferences in terms of stocks also we retain.
Okay. REC and PFC. Okay. In case the discounts are not able to muster up enough money to pay back, there may be a problem for these two. But as you say, at the moment, things are going good. Sabyasachi, to you as well, and then I'll come on more policy questions. Which looks like the healthier part of the system?
So right now, if we look at, traditionally the three legs, the way as a rating agency we have looked at is typically we consider the transmission to be the safest leg in the sense that typically the risk factors are relatively moderate compared to the others, followed by generation and followed by the distribution. So more or less over several years, I have not really seen the inter-se, risk, but what has happened very lately, of course, is that the thermal, there was a point in time where we would have considered thermal, most rating agencies would have considered thermal to be much more risky than renewable. But right now we are seeing because of the, supply-demand mismatch that, Nikhil has alluded to, the things have really looked up for the thermal sector, and we expect that to continue at least for the next 2-3 years, if not beyond that. Okay. See, what is happening right now is that, if you have to divide the whole day into solar hours and non-solar hours, so during solar hours, given the capacities that we have right now, obviously even in the peak hours, let's say we are looking at FY26 about 270, around 27 we're looking at about 285 to 290 gigawatts.
We are running out of time, Sabyasachi. So which is the healthy part? You say thermal still is positive. What else would be positive?
So renewables, of course. Renewables, of course, will remain, increasing part of the pie. So obviously they will be, but obviously ultimately all of these depend upon the distribution sector. Ultimately the final cash flow comes from the customer to the transcos and discoms, transcos and gencos from discoms. Okay. So ultimately, that still sector
that
has
still
to be
is the Achilles heel, as Nikhil said. Well, I have lots more to ask in terms of what can the government announce on nuclear, what can it announce on batteries, storage, the area that is, the cutting edge. All those questions to my guests after the break. Bazaar viewers, you will get to see the entire show after market hours.
revenues. Their ARPUs went up by nearly 7.5%, and this would be the second quarter as the full pass-through takes place. So we're working with the ARPU expanding to above 200 rupees this time. But what you need to watch very carefully would be the subscribers, because last quarter the overall subscriber base declined by more than 10 million on a sequential basis, perhaps as the telecom tariffs became a lot more pricier, some people dropped off. So does the subscriber base come down again? That's something that the street will watch. But remember, the stock has been a bit of an underperformer. So last year, Reliance Industries share price declined for the first time in 9 years, and it underperformed the Nifty in 2024. Brokerages increasingly over the last couple of days have started turning bullish as valuations are now looking attractive. They expect the oil to chemicals business to show an uptake. Even the telecom business is likely to see telecom, stable tariffs. Retail is showing a pickup. So brokerages are increasingly turning bullish on Reliance Industries. But will the numbers match up or beat? Time will tell.
For the third quarter for Reliance's retail business, because of muted consumer sentiment and the company's own pace of growth, there is some moderation and consolidation likely. What we're looking at is sequentially growth in revenue would be led by pickup in festive season and the overall third quarter seasonality, which would improve their revenues. But year on year, there would be moderate growth in the business, largely because of the big acquisitions that the company had done. B2B business itself is in the base. So if you look at the last few quarters, quarter 4, quarter 1 and quarter 2, the revenues have been around that 76,000 crore mark itself. In the third quarter, we're expecting it to be pretty flat year on year itself. The key to track, however, would be the margins, and we're also looking at 7% increase in retail revenue per square foot as per Nuvama's estimates. Now, talking about the margins itself, analysts would be pegging in anywhere between 1 to 2% year-on-year growth in the EBITDA.
Welcome back to Indianomics. We've been discussing the power sector and what it may get from the budget or from an expected power policy. I've been speaking with Anil Swarup, former Secretary Government of India, Mohit Bhargava, former CEO, NTPC Green, Sabyasachi Mazumdar of Care Ratings, and Nikhil Nigania of Bernstein. Gentlemen, thank you very much for your patience. Okay, let me now look at the non-distribution expectations from policy or action plan, as Mr. Swarup said. Mr. Bhargava, what would you expect that they can say about batteries or about solar cells, simply because solar cells has become contentious with the coming of Trump?
Yeah, it's not exactly contentious for us, but let's focus on batteries and solar cells, and maybe if you permit, I have a couple of other sessions also. So battery, yes, I mean the recent bids by SECI and other renewable implementation agencies have shown a very, very exciting trend in terms of the lowering of the prices. So definitely, I mean, it goes without saying with RE intermittency, storage is the most important thing. Couple of quick points here. One, while battery is definitely good, but a lot of import challenges there. So I hope the government keeps that in mind while framing a policy and does not add any additional duties. Because right now, the domestic manufacturing capacity, particularly on the lithium-ion side, is very, very limited. Having said that, we need to support both battery and any other alternatives like pumped storage. So there could be, and this is a pending issue with the government for quite some time. For example, one, the finalization of the pumped storage policy. Number two, the exemption of GST on storage, which could actually lower the prices. Point you made earlier that ultimately discoms have to pay for that. So that's very, very important. And one quick thing which we have also discussed with the government, and I believe there is some traction in the government, is if they can actually come out with a sustainable data center policy, which can actually rely on supplying green power using both solar and storage, either of the kind. So we should actually be pursuing storage on a technology agnostic basis with lowest possible GST and no additional customs duty, etc., at least in the near foreseeable future.
That will need to be seen in an integrated fashion across ministries. Mr. Swarup, would you want to add to that? I mean, anything that comes to the mind on nuclear, where are the policy gaps, even on import-export? Like, for instance, high cell import duties is a problem for someone else.
No, I would like to develop on the point made earlier. It is very good to promote solar energy in India, and that's very natural occurrence that is happening. But we must understand the implications of promoting solar energy in India, and I have been saying that for quite a while. Now, when there is a back down to be done, who suffers on account of that? Whether the thermal sector is paying a price for promoting solar. Now, this aspect needs to be looked at very closely. Though when we end up promoting solar, we will kill the thermal sector. They are paying a very heavy price for it. There are other aspects. You alluded to the rooftop solar panels that the government has advocated. Very good. But who's paying the price for it? And that is why right from the beginning, I've been advocating a more comprehensive, if you say, an energy policy, which accounts for variety of sectors, including nuclear. So when you talk of back down, in case it was being noted earlier that can gas replace at that point in time when solar is not available, gas could be used. Now, this switch on, switch off is not possible in thermal, so they are paying a price. So my suggestion would be, if there is to be a policy, take all sectors. Last year I had gone to IIT Mumbai and they had set up a group to look at a more comprehensive nature of the policy. And one way of going about it was, and this I had noted in 2015, was why is hydro sector sitting with power ministry? It should go to the renewable sector. Because that's where the balancing can come about. But of course, things don't happen that way, and we discuss other policies. So we have to look at the entire energy policy in a more comprehensive manner as to the impact of bringing about a change in one part, its impact on the other.
No, absolutely. Decisions taken earlier, those who are first off the cuff often end up suffering. For instance, the battery issue, the early bids which are expensive are now being questioned or perhaps being protested by those who made the bids. We saw that even in the thermal bids, when they were, for 4 rupees per unit, and then you had solar coming in at 2.5 and 3, and then discoms refused to pay, or governments, state governments are refusing to pay, saying that cheaper power is available. Here the legal system itself is in question. The respect for contract, which is a much larger issue.
Sorry for coming in here. I just wanted to make a point here. Intensive engagement with the state governments is absolutely imperative. That doesn't seem to be happening. There are diktats being given by the central government. And if you recall, the coal story happened in 2014-16 because not a single meeting was held in Delhi in the coal sector. Every meeting was held at the state headquarters. Engagement with the states is critical for making any policy happen. No one seems to be
absolutely golden words, Mr. Swaroop. And incidentally, Suresh Prabhu had said this in 2003, that, the Electricity Act, its real implementation should be in state capitals and not in Delhi. So, everyone realizes this, but the political will for it has to be mustered. Nikhil, since we are running out of time, last suggestions on any of them? Solar, nuclear, anything which is your ask?
Sure. I think I would agree to most of the points Mr. Bhargava and Mr. Swaroop said. I think on the solar side, the import duty, I mean, it's especially the restrictions on cell imports, which seem to be coming in, we think would raise the tariff and slow down commissioning actually for the sector. We think we are a bit early in implementing it. Maybe we need to do it a few years out. Similarly on batteries, as Mr. Bhargava said, if restrictions do come in on imports, it would be too early in our view as well. Thirdly, on nuclear, it's an excellent solution for dispatchable power, but a key challenge there is land acquisition due to this 1 kilometer buffer zone condition which is there, leading to 10 years to set up a nuclear plant. If any support comes in to reduce the buffer zone or expedite the timelines, would be a big help. And lastly, on rooftop solar, as we have discussed, it's a great solution, but some tweaks need to be made. For example, net metering is free right now, which is further burdening the discoms. So their restrictions should come in, as we have seen that happen in California and other countries where rooftop solar has high penetration. So those are the points.
Yeah, no, I absolutely take your point about nuclear and need to crash it. But after Fukushima, I don't know whether these liberties will be taken. Sabyasachi, last few seconds, what would you want for any part of the power space?
So basically, I think continued investment and particularly viability gap funding for certain sector segments where things may appear to be a bit expensive right now, but possibly where by bringing in economies of scale, we could bring down the costs and make those solutions viable. So we need to look at some of those areas, then continue support for the transmission expansion, because renewable energies, we are looking at about 50 gigawatts eventually. So continued support to the transmission sector would be very important.
Okay. Well, gentlemen, thank you very much for all your suggestions. It's impossible for me to wrap up and give a summary. But the key takeaways is have cooperative federalism in the first place. On the power sector, it is absolutely necessary. And the other important point, when a cutting-edge sector comes in, it cannibalizes the legacy sectors, and therefore policy will have to be integrated even across ministries and across decades. Unless we're able to get that kind of integration, policies will always have more, fallouts, negative fallouts, as they will have positive. Wise words. We hope all this is kept in mind if and when the new policy is announced. Thank you very much for joining us on this edition.
8 to 9% growth quarter on quarter due to the festive season itself. Put all the estimates together and we have the CNBC-TV18 poll, which throws up a Reliance retail EBITDA for the third quarter at close to around 6,400 odd crore rupees itself. But apart from reported numbers, what we're looking at is some commentary on festive season pickup, growth in their new formats, the likes of Tira, Ustar and Swadesh, and finally their FMCG business as well. Aggressive rollout led by the beverage business Campa are all these factors which would lead the next leg of growth for Reliance Retail.
What's important, I think, is that GDP growth is over 6%. We're forecasting 6.3% and then 6.5% this year and next, the year ending March and then the following year. That inflation remains moderate, a little over 4%. The interest rates, we get 2 rate cuts in our view, and we think it's a 2 to 3 quarter phenomenon. If we're wrong, if it's a 2 to 3 year phenomenon and earnings growth falls away substantially, then our call on the market will be wrong.
We have already taken out all rate cuts for the first half of the year. We just have 2 more rate cuts, one in June, the other in September, and that's it. I think a 3% depreciation is enough to take away that rate cut, but our depreciation higher than that, yeah, possibly the February rate cut gets pushed up, but we do have a rate cut in February. In fact, we have 100 basis points of rate cut in 2025 price for the RBI. China and Malaysia and Vietnam, through which Chinese transshipment goes through, will be targeted. We had 60% tariff on China, so China and tariff is 20% at present. We expected it to go to 60%. Then our sense is that on January 20th or that week of 20th, you're probably going to get many, many more countries under the tariff umbrella than just China and Malaysia and Vietnam.
The weight of India in the EM index has actually been going up. And with the domestic bid very strong, valuations are relatively elevated. I wouldn't say they're extreme, but they're relatively elevated. We expect foreigners to be very engaged in the Indian market this year. Over time, it's on its way to being the largest market in EM. And that means global investors are going to pay a lot more attention to India than they have in the past.
welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. SaaS-focused venture capital firm Cornerstone Ventures completes the first close of its targeted $200 million second fund at approximately $40 million.
3D automotive visualization startup Eccentric Engine has raised $5 million in a pre-Series A round led by Xfinity Venture and Arkham Ventures. The firm plans to use the funds towards product development and international expansion.
Space tech startup Orbit Aid raises $1.5 million in pre-seed round led by Unicorn India Ventures with participation from Tanzim, Government of Tamil Nadu. Orbit Aid is developing a cutting-edge fuel station in space designed to extend the lifespan of satellites by enabling efficient refueling and maintenance.
Sustainability-focused SaaS platform GreenStitch has raised $1.2 million in a seed funding round led by Equirus Innovatics Fund with participation from IvyCap Ventures, Warmup Ventures and Sika Ventures.
The Union Secretary for Electronics and IT says critical equipment meant for Indian manufacturers and global companies like Foxconn is being held up at Chinese ports for several months. Electronics industry fears any further disruption could jeopardize production and expansion plans.
Those were the headlines from the startup space. Tomorrow will be National Startup Day. India's startup ecosystem has rapidly evolved over the past few decades, fueled by IT giants like Infosys, Wipro, which paved the way for a new wave of innovation and entrepreneurship. This environment inspired some young and brilliant minds to recognize the growing need for new services and products that meet global demands. This dynamic shift has led to the rise of what we now call the startup culture in India. Arundhati Ramanan is here with the startups that have changed India's startup ecosystem. Arundhati.
It's National Startup Day on January 16th, and it's time to take stock of all the firsts that kick-started India's startup journey. Founded in Bangalore in 2007, InMobi is a mobile-first platform that allows brands, developers, and publishers to engage consumers through contextual mobile advertising. Why is it important? InMobi became India's first unicorn way back in 2011. Over a decade later, unicorns are no longer rare. In May 2022, neobanking startup Open raised $50 million to become India's 100th unicorn. In 2025, and in India now, it is home to 118 unicorns. From unicorns to decacorns, Flipkart galloped into the decacorn stratosphere in 2014, and 3 more Indian startups have managed to achieve this feat: Swiggy, Nykaa, and PhonePe. Way back in 2006, InfoEdge, the parent company of Naukri.com, Shiksha.com, and Jeevansathi.com, took to Dalal Street. The firm became one of the few profitable pure-play internet companies in the country. In 2021, we saw Falguni Nair become India's first self-made female billionaire after the initial public offering of her e-commerce company, Nykaa. Swiggy's initial public offering of 11,327 crore rupees was the 6th largest in India's history. It was also the biggest tech IPO globally in 2024. And in the same year, we saw as many as 13 startups go public, from the likes of MobiKwik to Ola Electric, and 2025 promises to be even more electrifying. From domestic to global shores, Make My Trip became India's first startup to list on the Nasdaq way back in 2010. Meanwhile, Freshworks became the first Indian origin software startup to list on the Nasdaq Stock Exchange following a $1 billion initial public offering. The company raised over $1.03 billion in its IPO with a mission to extend India's SaaS industry to the world. India's SaaS opportunity is projected to be a $70 billion one by 2030. The other key milestone in India's startup ecosystem was the advent of the quick commerce boom. That is being hailed as India's Internet Moment 2.0. The now defunct Dunzo that shut shop started this trend way back in 2014, and Blinkit, Instamart, and Zepto have taken it to new heights.
Well, continuing with our focus on India's startup ecosystem, the space has seen rapid advancement in the last decade. The ecosystem has generated 16 lakh jobs and attracted over $147 billion in 8 years. Aishwarya Anand is here with a wrap on India's startup ecosystem on the eve of National Startup Day. Take a look.
It's National Startup Day on January 16th, and let me take you through how the space has fared in the last decade or so. India's startup economy has been booming, with new businesses mushrooming rapidly across the country. India boasts of over 157,000 startups registered with the Department for Promotion of Industry and Internal Trade, or DPIIT. Indian startups have received over $147 billion in funding between 2016 and 2014, which has resulted in creation of over 16 lakh jobs as per DPIIT. After nearly 2 years of funding winter, the startup ecosystem in India regained the heat in 2024. Startups raised over $11 billion in 2024, up from $9.4 billion in 2023, according to data from Venture Intelligence. Fintech, e-commerce and enterprise tech have continued to attract most capital in the last 5 years. In 2024, these sectors accounted for more than 2/3 of the total funding. And this is likely to get better as VC funds are currently sitting on $9 billion worth of dry powder. When Startup India launched 9 years ago, India had 10 unicorns. Today, the country has 118 unicorns or companies that are valued at over $1 billion. Just 5 years ago, India didn't have a single venture-funded startup that was publicly listed with over $10 billion market cap. Today, we have 5 companies over that number, including Zomato at $30 billion market cap, InfoEdge, Make My Trip, Swiggy and Policy Bazaar are all over $10 billion public market cap. Just in 2024, a record-breaking 13 startups went public. Looking ahead, 2025 is set to continue this momentum with an even bigger IPO pipeline. At least 25 startups, including Zetwork, Meesho, Bluestone, Urban Company, Zepto, Grow and Pine Labs, are preparing to hit the public markets. 2025 also brings opportunities, especially in artificial intelligence. AI is at the cusp of democratization, empowering startups to disrupt traditional sectors like healthcare, education and fintech.
Thank you, Aishwarya, for those details. Moving on, India's startup ecosystem has undergone a remarkable transformation, evolving from a quiet backwater in the late 2000s to a global powerhouse that raised about $150 billion between 2014 and 2024. Just 2 weeks into the new year, startups have already raised $330 million, with the first unicorn sighting imminent.
And despite global economic challenges, India's startups showcase remarkable resilience. According to data from Venture Intelligence, Indian startups raised a total of $11.2 billion in funding throughout 2024, as compared to $9.4 billion secured in 2023. Giving a boost to the ecosystem in July last year, the government announced the abolishment of the angel tax on investments in startups, providing a more conducive environment for growth.
As we celebrate India's National Startup Day tomorrow, we bring you a special discussion with 2 eminent VCs. Joining us now are Deepak Padaki, President at Catamaran Ventures, and Anurag Ramdasan, Partner at 314 Capital. Deepak and Anurag, welcome to Startup Street. Let me start with you, Deepak. The startup ecosystem is clearly maturing and focusing on sustainable growth. A striking trend in 2024 was IPOs outperforming unicorns, as 13 startups went public as opposed to just 6 new entrants to the $1 billion club. What excites you about 2025?
Thanks for having me on, Shruti, and great to be here, and happy Startup Day in advance. I think on the, where our principle for our venture fund comes from, and there's a deep ethos of entrepreneurship. Infosys was the original OG, I would say, of entrepreneurship in the country, and so that ethos flows through for us. We do believe that entrepreneurship is the big means by which we can create jobs, and I think some of the data that you published here today is testament to that. So what excites us today, I think, is that we are seeing an evolution in the kinds of startups that are coming in. When entrepreneurs come to meet us today, we are seeing more of IP-driven, original, deep tech ideas compared to the last decade, which was either business models that were adapted for India or a lot of Me Too kind of startups that had come in. So clearly, IP-driven, original ideas is what is exciting us in the startup world today.
Okay.
And in some sense, Shruti, I think it's a tale of 2 stages. What's happening in the early stage startups in the country versus what's happening with some of the growth and pre-IPO stage. And the growth side is where you're seeing a lot of these cohorts of the consumer and fintech that's coming up, and many of the IPOs that went public recently.
All right.
Versus early stage is more deep tech, I think, today.
Absolutely. While Deepak, you mentioned the tale of 2 stages, Anurag, coming to you, while late-stage startups continue to garner the bigger checks last year, mopping up $5.1 billion, early-stage startups came second with $3.4 billion. Do you see this trend continue? How are you viewing 2025 at 314 Capital?
No, definitely. I think it was a great year for early stage startups. And just, adding to what Deepak also mentioned, I think we've gone through enough phases in the early stage startup ecosystem now, where even some of the larger companies that you mentioned earlier, if you look at Zepto, if you look at Rebel, if you look at PhysicsWallah, they're all interesting models where their global counterparts may not have worked out as well as the Indian counterparts have, right? So the Indian counterparts have been able to innovate in ways that have made them more sustainable, more exciting, and more fast growing. And we are seeing that sort of DNA shift happen very much in the early stage. We are seeing fewer Me Too companies. We are seeing more, IP-led differentiation. We are seeing more deep tech endeavors. And, on top of that, because this is now an ecosystem that's been around for close to 2 decades, we are seeing an incredible jump in the quality of the founders that we see, in the quality of thought process, diligence, etc., on how they are building out companies. And look, the data stands for itself, right? Like you mentioned, over $3 billion of capital went into early stage. I mean, if you look at early stage where the average check size may be 1 to 2 million, 3 billion is a vast number, right? This is also fueled by the kind of late stage promise that we've been seeing. I mean, 13 startups going IPO in 2024. That's one tech IPO a month. And it's projected to become 2 tech IPOs a month in this coming year. That gives a lot of confidence to early stage founders, early stage investors on the promise of this ecosystem. And if you look at, obviously 2021 and 2022 were slightly anomalistic years, but
Right.
if you take that out of the equation, throughout the history of the ecosystem, the amount of capital that has gone into startups has only grown. Even 2024, I think early stage contribution of funding was about 20-25% more than 2023.
Absolutely.
So I think we're poised to see a very good 2025. I think the trends are very positive and we're super excited.
Right. So trends are very positive and poised to see an extremely good 2025. Deepak, if I could bring you back into the conversation, Catamaran Ventures has over 45 portfolio companies, right? So what kind of conversations are you having with them for this year? What are going to be the big trends to watch out for in 2025?
Yeah, I think there's a shift. If I look at trends broadly, and this is the new set of companies that we have been looking at to invest in, I would pick 2. One is, of course, the whole AI space, especially on the application layer. I think application and tooling in AI is something that's becoming hot. In some sense, I think the playing field has been leveled. Today, you can innovate on AI applications in India as well as you can do it in the Bay Area, for instance. Because the foundation models are the same. So we're seeing a lot of interesting ideas, whether it's in health tech, diagnosis, and of course, SaaS and automation of services. So that's one area. The second area that we're looking at really is around manufacturing. We have a deep thesis in Catamaran over manufacturing, really looking at how we can grow the supply chain within the country using our patient family office kind of capital. And especially in areas of precision manufacturing, electronics, aerospace manufacturing, these kind of items where, we need to build up this supply chain within the country. So these are 2 areas that we are focused on. And the conversation we're having with our existing portfolio companies, of course, is on improving profitability, on getting to a profitable path so that we can ride some of the exit waves and IPO numbers that you had shared earlier.
Right, absolutely. And Anurag, if you could quickly tell us, the overall funding trend reflects a cautious yet optimistic approach from investors as they navigate a more selective funding environment, right? So what is your investment thesis going to be this year? And what are your top bets?
Yeah, so a great question, Arundhati. Look, we come in early stage, right? So that's a slightly different journey because while late stage investors may want to look at profitability, want to look at IPO potential, etc., you cannot have a similar lens in the early stage. In early stage, what we want to see is newer, exciting ideas, strong differentiation from what existed before, and a very, very clear right to win. And like I mentioned earlier, that is where we are the most excited. We are seeing true homegrown innovation play out. We are seeing companies across, biotech, specialty chemicals, precision electronics, agriculture, etc., tackling problems in a new way, in an IP-led way, in a way that we've not seen being done before. Obviously, due to the overall funding crunch, they are also trying to do this in a much more capital efficient manner.
Okay.
And we think that will lead to a new class of, startups which are high growth, but also relatively frugal.
All right, Anurag, before we get to and ask both of you your budget expectations, there's one question that I want to ask the both of you. There's a noticeable rise in women entrepreneurs, signaling a positive shift in inclusivity and diversity within the startup ecosystem. To the both of you, is there a conscious effort to invest in women founders? Deepak, if you could go first.
No, we do meet a lot of women founders. And also, I think the other trend, Shruti, is that there are a lot of funds that are being, anchored by women investors. And so naturally, there's a fit there that they're trying to, invest more into the women's side of things. Look, our approach is that, we do believe in diversity. We think, diverse funds and diverse companies will bring in a lot more innovative ideas. But our primary goal is, of course, to look at investments that will generate good returns. And so it's a kind of combination of the two is what I would say, Shruti.
All right. Anurag, your quick comment on this.
So, Shruti, there was a report recently which said, in 2024, women-led startups getting funded went up by 93%, which I think is phenomenal. Deepak mentioned that there are obviously funds that are, focused on women founders, but I also think this is a sign of maturity in the ecosystem. Today, if you look at the startup ecosystem, you will find several women at leadership -1 position, which puts them in a great place to move out and start their own startups, right? So we're seeing that development of very good talent across industries in women in startups, and that's leading to just a higher contribution of women-led startups, which is very encouraging, and we think that will continue, and that will lead to more women founders getting funded throughout this year.
Absolutely. And, Deepak, the union budget is just right around the corner, right? So what's your big ask from budget this year?
Yeah, I would think, the angel tax thing was a big thing in the past that benefited the industry. But I would really look for in the budget more things around what can drive consumption. I think we are seeing some kind of pause in consumption story today. We want to see whether that can be improved. The second is, of course, since we are focused on manufacturing, we'd look for continuation of some of the incentives for our portfolio companies and prospective portfolio companies around the whole manufacturing incentives so that, we can push that part of the industry forward as well.
All right. Anurag, coming to you, while the government has abolished angel tax, do you hope to see changes around ESOP regulations as well, addressing the outdated rule prohibiting promoters and founders from holding ESOPs? And apart from that, what is your big ask?
Yeah, I think definitely. I think, ESOP needs to be a bit more streamlined and a bit more incentivized. Eventually, that's what leads to higher quality innovation. So we would want that to happen. Deepak mentioned consumption. I think that is another big trend that we would want to see play out. And lastly, I think it's also been an interesting evolution of Indian startups where they've started to go global much more aggressively. They're starting to enable other manufacturers to go global. So, better ease of doing business for manufacturers and exporters will be another thing that we would love to see.
All right. On that note, we'll have to wrap up our conversation. But thank you so much, Deepak and Anurag, for giving us time and joining us on Startup Street today.
Thank you, Shruti.
Thank you. Thanks for having us.
So 2025 also looking to be a positive year for the startup ecosystem. But on that note, it is time for us to slip into a short break. But coming up, Indian skincare brand Foxtail has backed $30 million in a Series C round. We bring you a special conversation with the company's founder on the other side. Stay tuned.
Welcome back to Startup Street. D2C skincare brand Foxtail has raised $30 million in a Series C funding round, which saw participation from Japanese multinational cosmetics and personal care company Kose Corporation. This funding gives Kose a 10% stake in Foxtail. In addition to the fundraise, both companies have also entered into a strategic partnership to expand Kose's presence in India. My colleague Shilpa Ranipeta spoke to the founder, Romita Mazumdar, to discuss what the funding means for Foxtail and their plans with Kose for the Indian market.
We are very excited to have them as a partner and contribute significantly, not just in capital, but also in the legacy and the knowledge that they have and globally for the last 80 years of building in BPC in particular. They are not just a Japanese multinational, they're the second largest beauty company in Japan. They are amongst the top 10 globally in terms of both size and the years that they have been around. And they also have access to one of the most leading state-of-the-art facilities when it comes to R&D. So we are excited to be able to elevate R&D for India and bring a lot more advanced technologies to India and solve for the Indian skin type. And of course, with the additional capital, it gives us a lot of, like the war chest box to be able to build further, to grow further, and penetrate deeper in India.
Right. So how is the partnership also going to be? There's a strategic partnership also that will be there with Kose. Just run us through that.
So the strategic partnership is actually very separate from the Series C fundraising. The Series C happened first and it was independent of the discussion. But as we spend more time together during the Series C fundraise, we realize, that we can do more with this partnership and with this cultures coming together. And that's when we partnered together to build Kose's presence in India. So Foxtail and the team together will work with Kose's team to build their market share. And I think it's extremely exciting because those who know the brands that they have some of the best brands in skincare and makeup globally.
Just overall wanted to understand what's the growth been like for the company since we've last spoken. As we speak currently, what's the kind of run rate that we're looking at, and any targets that you have set for the maybe for FY25 or for the next 2-3 years?
So even we're just a 3-year-old company, so this is our third fiscal year. We've grown 2.5x between fiscal year 24 and 25. At a gross revenue level, we would close fiscal year 25 closer to 300 to 330 crores in revenue. Right. That's at gross revenue. So and I always like to say this, we've done on the back of 18 SKUs. So it's not that we have multiple SKUs. We've grown with the same SKUs that we brought the brand to the consumers in India. So in 3 years, we have become a 300 crore brand, and it's been extremely humbling as experience. We've also profitable post all our marketing expenses, and fiscal year 26 we do expect to work towards EBITDA profitability and get to that in a very smooth and safe landing manner. In terms of goals, I have always said this and I say it quite publicly because we feel very confident. We are here to build a 1,000 crore company, and the goal is to build that in the next 3 to 4 years, and we are looking forward to doing that.
Right, wonderful. And most recently your foray, or rather expansion, was going into the body care segment. How's the response been? I think 6 months since the launch. I think around June, July is when you forayed, right? So it's roughly about 6 months. Run me through how it's done. And you launched with mainly 2 shower gels that you did. So as we speak currently, are you looking at further expanding this range? And how's the response been?
It's been outstanding. I think we were amazed at the kind of response that we got. Today, if I look at gross level, we are roughly a 40 crore ARR business when it comes to body care within 5 months. We actually launched late July, and within 5 months we've hit. But most importantly, it's profitable. So it's a subcategory that became profitable from its 4th month of operation. And that means that none of the capital raises, none of the extra equity or capital raise from the company is going into the business. The business is self-fulfilling and growing from a 0 to 40 crore in 5 months of existence. presence.
So are you expanding the body care range further? And also, are you any new segments that you're eyeing? Because now that you also have, Kose on board, which is also a very big player in makeup, and more segments of skincare also might open up for you. So is makeup something that should look at? Is more things within body care like shampoos, conditioners, any other segments? Like, are you looking at expanding that?
Answer is yes. We are looking to expand into more categories, and I think we are very well prepared because Foxtail today is very comfortably at 300 crore with a clear path to profitability. And I think the team is very well set. I have an outstanding team that is going to take it from 300 to 1,000. So I think playbook's been set. So we do see ourselves doing another category very soon. What category? I think it will be there. Hopefully you will see it as a user very soon out there in the market. Yeah.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates coming up on the other side. Stay tuned.
Bet on this experience economy before it became the experience economy.
It's like the analogy from Formula One. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy.
Yeah.
And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you.
Yeah. You know, there are a lot of other players in the market who seem to be wanting to bet on this opportunity.
Yeah, but I don't think just putting big bucks is going to cut it.
You know, there's a lot that requires work at this point in time, and plenty of it is.
It's almost like starting an airline but not having an airport, right?
Is it that bad?
It is.
Still.
When you tell me today, what are the venues and where is the infrastructure? When we do one Lollapalooza, we're creating a city overnight and then tearing it down.
how large this opportunity is in the near to medium term.
You and I have spoken about this 20 years ago. We spoke about this 10 years ago. We're still around, right? Doing the same thing, which is to say that we have reasons to exist.
What about M&A yourself? I mean, I brought up Paytm.
More companies suffer or die out of indigestion than starvation.
Not a bad thing. Let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay.
I've got a clean conscience. My karma is good. I sleep well. People abused us, called us black marketers, called Book My Show, said cancel Book My Show. It's this cancel economy, right? You have nothing to say.
What are the 2 or 3 things that have helped you find that resilience?
Having that balance, which Vedanta teaches you, burning your ego every day when you come in.
Hello and welcome to this edition of Young Turks Reloaded. I'm Shireen Bhan. The guest that I have with me on the show today has been around the block quite literally. He's been there, done that, worn the t-shirt, and is one of the people within the Indian startup ecosystem who has survived many boom and bust cycles. And he's lived to tell the tale for the last 25 years. He bet on India's experience economy before it became a thing, and today is looking at the future for Book My Show, which is, of course, India's largest ticketing platform online. Ashish Hemrajani, what an absolute pleasure it is to have you back here on Young Turks. You know, your Instagram bio says, I hope to arrive at my death late, in love, and a little drunk. It's quite appropriate for the way that the business started 25 years ago, isn't it?
I live life every day with that motto. And that Instagram account actually is I don't know who activated it.
It's not actually you.
It's me. But what had happened is that I had disconnected my account, discontinued it, and then somebody posted a Gillette, meme or something, and I don't know who took control of my account. So I changed the password. I've forgotten it. So it still exists, but I don't do anything on it.
So that is that your mantra or not?
It is my mantra. It is my mantra. That is my account, but I don't see it. I don't post, and I haven't seen it in the last 7 or 8 years.
Oh, isn't that odd in the world that we live in today, and especially in the business that you're in, that you're off all social media?
Off social media, I have a LinkedIn account, which I haven't seen. I don't have a Facebook account, and I have over 450,000 emails. So I'm like your grandmother. If you send me an email, if you send me a WhatsApp to tell me, go check your email. That's what happened with one of my board members this morning.
Okay, so you know, what is that about? You're a tech company, and you're so far removed from tech yourself?
Not in that sense. Personally, yes, because I just think we are so consumed all the time on looking at our devices that we forget to see the situation or the human or observe things around. And that's always been my motto, that I hate it when we're sitting in a meeting and everybody's on their phones and someone's typing and checking their phones. I just want, if we're doing a meeting, let's keep it short, but let's keep it about the humans in front and ideate and creatively brainstorm and all of that, and we can always get back to our devices. So it's just one of those things that it's become second nature now, and I don't miss it. I don't see it. I've never felt the need to want it,
and no FOMO about it either.
No, I don't. I get all my updates from other people on what's happening in the world.
Of what's happening in the world. But let's talk about what's happening in the world. And, it's been a 25-year journey for you. And in many ways, as I pointed out at the start of the program, you were ahead of the curve. You bet on this experience economy before it became the experience economy. As you look at where things are today, are we on the cusp of a breakout moment for the experience economy in India?
It seems like that. And I'm not so sure whether it's a good thing to be before your time or not. It's like the analogy from Formula 1. So the car that's in front of you is cutting through and creating the slipstream and using more power and energy. And the guy who's behind you is using 25% less. And he can press the DRS and get ahead of you. And so sometimes you want other players and other people to come and do the heavy lifting as well, to be able to create the market, to be able to spend money, to be able to get new users and consumers and get people used to this experience economy. So we've done all the heavy lifting for many years alone. And I think it's important to have this come together as an industry. So I think you're right that I think this is the starting of what we think is going to be the next 10 years of a change in how people consume and view entertainment. It's a change. I'm not saying it's a good or a bad thing. But there's a lot.
Why are you being so circumspect? Because clearly, there are a lot of other players in the market who seem to be wanting to bet on this opportunity. The likes of Zomato, Swiggy, and others. I mean, they're putting big bucks into this business.
Yeah, but I don't think just putting big bucks is going to cut it. I think you've got to be really careful. And when I look at the entertainment chunk, it's about people going out to, with their spare time. What do they do? To go out for a drink or a meal. You've got TV and OTT platforms at home. You want to spend time there. There's movies, going to a movie theater. How regional is playing a very important role in shaping up India's entertainment economy. Look at the films from the southern part of the country. Look at Marathi films. Look at what's happening with Punjabi music, right? There's a big change. And there's a lot of pride. And there's a lot of connection. So I think why I'm being circumspect is that there's a lot of other catching up to do. I think between single window clearances and licenses on venue, city infrastructure. Look, when you build a venue or there is a venue in any other part of the world, which is 20 miles away, that's 20 minutes from home. 20 miles in India is 4 hours away. And that's not sustainable. You can't do an event every weekend. We have 3 months of the year, which is really hot. And you can't do anything outdoors. A city like Bombay has about 4 months of monsoon. So that takes away 7 months. So you've got 5 months, right? It has to match the global calendar on when artists are touring. Because otherwise it's not feasible. It's not economically viable for them or us. So the reason I'm being circumspect is that consumers have woken up to this. Because the Facebook of India is Facebook. The Instagram of India is Instagram. The YouTube of India is YouTube. Unlike China, where everything is closed.
Correct.
We have a large English-speaking population, and also there's this pride of our own culture and heritage in the music that you see. And when you have these social media platforms, kids are now listening and waking up to this, and you're getting data and analytics. So the consumers have woken up. They're far ahead of the time. We're happy to match up to their needs and expectations. But I think there's a lot of catching up to do on policy, on infrastructure, city infrastructure, just not entertainment infrastructure. So the reason I'm being circumspect is, while this is the start of something big, how big can it get? How will you approach it? How will we succeed and do it well? Because you're one bad news cycle away from something going wrong at an event.
I'll get to the bad news cycle in just a bit, because you've gone through plenty of that, and more recently so. But I still want to delve a little deeper into this economy that's opening up. And as you pointed out, there's a lot that requires work at this point in time, and plenty of it is.
It's almost like starting an airline but not having an airport, right? I mean, where will you land?
Is it that bad?
It is. You tell me today, what are the venues and where is the infrastructure? And when I'm telling you, when you do a venue build-up, when you do stage infrastructure, you do lights, sound, you don't have enough. When we do one Lollapalooza, we're creating a city overnight and then tearing it down. And overnight means it takes us a 1 month build. It shouldn't be like that. It shouldn't be like that. You need public parks like Hyde Park. You need Central Park. You need public parks. You need arenas. You need venues. You need stadiums. I mean, I'm very thankful to the stadium in Ahmedabad, and it's Mr. Jai Shah and the BCCI and the Gujarat Cricket Association that really took a bet on this and said, look, for the first time in the history of India, we're using an active cricket stadium and the world's largest cricket stadium to put up a show there. Hasn't happened before. Why should it take 75 years? Is my question. Anywhere in the world, it happens every day.
So let me address this. How many permissions and approvals does it take for you to put on a show today in India?
I can't even count. It's just ridiculous, because there's excise, there's police, there's traffic, there is fire, there is health and safety, and then there is venue permissions, and then there's a lot, right? It's all ambiguous. Like, for example, the public infrastructure in Bombay is just phenomenal now. Like, just the center ground at Mahalakshmi, because of the coastal road and the development that has happened in the city. The metro lines that are terminating there, the new connector, which is north-south connector. just allows you to do a weekday show. It allows you to get cars in there.
Yeah.
It allows people to go
so
home
the
safely.
economics, have they gotten better?
It's getting better. Like, I'm being circumspect because it's evolving on a day-to-day. Like, after the 26th of January, you can put 40,000 people in that venue on a weekday because the connector will start after the 26th of Jan. Until the 26th of Jan, you can only put 15,000 people there. So it's evolving on a day-to-day.
So what is your forecast and what is your estimate of how large this opportunity is in the near to medium term? Because there's all kinds of numbers that are doing the rounds on the back of what we've seen happen in 2024, which in many ways has been a sort of breakout moment as far as the live gig economy is concerned. What's your own estimate? What are you forecasting?
Look, the good thing is that we're private and we've always stayed private. All these
you don't intend to change that?
For a while. All these estimates and this big talk and numbers have to be given by the public guys. And the reason they need to do that is because they're playing the stock game. Let's be real over here. We don't need to do that. We're real. This is not some up in the air, come up with a big number, create some plan, say something big, go to the analyst, and then don't deliver. We're delivering every day. And the point is that there's a lot that is dependent on others and not so much on us. And so you've got to work with the local administration, law enforcement, venues, venue infrastructure, infrastructure for sound, light. There is no quality lifts for which go into the stage for a global artist to come. And if you want 10 lifts, they don't exist. You need 20, you need 2-ton pulleys with cable, which you need. And for a stage of our size, which is 230 tons of steel, you need about 40 of those pulleys. Doesn't exist in India. You don't have ground cover, which covers the ground so that the turf doesn't get spoiled. So when you have a pitch, let me finish this. You should be interesting. The work that we've done for both these cricket pitches for the Coldplay concert is the pitch in the middle is haloed ground, right? The 6 pitches or 7 pitches. It's not one pitch because you have practice pitches and you have spare pitches. So in some stadiums, it's 7, some are 11. It's a large piece of real estate in the middle that you have to be very careful about. We've got work that we've done with risers. So you cut a space in the ground and you create base plates.
So leave the pitch intact.
And it has this base plate where you're growing grass on that base plate in the same flora and fauna in the vicinity of the stadium using the same grass, which is a spare piece of patch which goes on top. On top of that, when you create this riser, we have grow lights which mimic the sunlight for those 4 days. So it mimics so that the grass can grow, and it has pinholes where you keep watering the pitch so that it doesn't destroy the pitch. This R&D was done by us for the last year and a half, 2 years, to be able to use a cricket ground. And then you cover the ground and you have to replenish it and get it back in a working condition.
So this is your moat. This is, in a way, the moat that you're hoping will keep the new players in this space at bay.
No, I'm not hoping. I'm just saying that I've got to do a job to put on a show in a stadium, and this is the job at hand.
Yeah.
I mean,
I'm trying to understand that, you've got now guys with deep pockets who are entering this space, who are doing big deals. I mean, I don't know whether you looked at Paytm and thought that there was any value in that, for instance, or not. But, what will be the big differentiator as far as Book My Show is concerned as this space starts to get more competitive?
Look, I think we have a lot of consumer love. We've got a large base of consumers that come to us specifically for a reason, which is to get entertained. We're not confused about the fact that we're going to do 20 things. You and I have spoken about this 20 years ago. We spoke about this 10 years ago. We're still around, right? Doing the same thing, which is to say that we have reasons to exist, and we want to give our consumers something which we can offer. And we go deep into understanding things like ground, music preferences. What are the trends? We have 40 artists that come for Lola, and only the people talk about the headline. But then they discover bands like Cass, which we did in Lola 1, and now we're doing a 3-city tour with this year, which is in 2025 now.
Yeah.
So I think for us, it's about waking up every day, seeing, what are we excited about? what are the trends for our consumers? What are the new things that we can do? What are the trends in entertainment and the economy, which is the experience economy? We always looked at it as movies and plays and concerts. Now it's called the experience economy. And we wake up every day saying, how can we make it better? What is it that we can do better? What is it that we can do which is different? Can we make it safer? Can we make it, more pleasurable? How do we look at ingress and egress? How do we get people in safely? How do we get them safely out?
Yeah.
I'll tell you what bothers us or keeps us awake or excites us all in one go. When we do an event in Bangalore, what excited us is that at Bandland, we had 14,500 people, which exited our venue in under 6 minutes. Now, that is high for all of us at Book My Show. And that's because we worked with Nama Bangalore, the metro authority. They put 70 volunteers. They put 6 extra rigs. The metro shuts down at 10 o'clock at that place. They kept it open till 11. And we got everybody out in 6 minutes. Now, that excites us. Right now, I don't know, you may say it's a moat. It's a differentiator. We're trying to do it differently. We're just doing it because the consumer is at the center of our world.
Well, speaking of the consumer being at the center of the world, and you also spoke about the fact that you've never chased valuations. But, at this point in time, are you looking at the possibility of going public? Is that something that you aspire to 25 years on?
There's always a possibility, right? There's always a possibility. Never say never.
Yeah.
But at this point...
But it's a much more real possibility today than it ever has been for you.
That's because the markets are going bonkers. And now, is that a good thing or a bad thing? Again, I don't know, right? Because you can get a great listing and then
So do you want to join the party or not?
I don't know if I call it a party. I have my own parties. I don't think if that's a party, because if you break trust, and the one thing that we've done with our investors, with our relationships, including this one, with our customers, is not break trust. And I think when you list high and then the stock doesn't perform over a period of time, or is on a hold, or sell over long cycles, you're breaking that trust. Because I feel in the public markets, the first people that will subscribe to Book My Show stock, if we were ever to go public, will be our customers. And we're just going to break that trust, which we built over 25 years so carefully and curated. And we've curated that trust over a period of time. So I think when we are confident of consistent delivery and performance, where there is consistency in how we're sure on how this business can be business as usual. Yeah. Right now, it's very clunky. There's 5 months of the year. There are cities that we can work in. There are cities we can't work in. Cities that sometimes things get cancelled. There are infrastructure issues. Artists need to believe that this is a market which is sustainable. It's not an exotic market. It is a real market with 220 million English-speaking people who are on social media platforms with a lot of money to spend, with the GDP that's growing at 8%. All of that. And then that single window clearance, and you have the government sort of supporting it and looking at it as an industry. I think at that time, you can think about saying, at that time, we'll take a call whether, how do you raise more money? Do you need to raise more money? Do you need to give an exit to certain investors? So I don't think
it's not a priority for you.
It's not a priority. Bankers come and approach us every day. I'll show you a whole list of these. They love these books. I don't know. I've got these books lying here. They're like weapons of mass destruction. But it's not something that we think about. It's something that we've considered many times. But I think right now, our focus is on building this business, which we started pre-pandemic. And then we had to press the brakes. It was a hard time during the pandemic. And then again, we saw all the value that we had put in and all the time that we had put in and the effort pre-pandemic. It paid us back in good measure. Call it karma, call it relationships, call it, friendships that we built over the years across the border. In the US, in the UK, in India. And, there are some really good people who came back and paid us back in good measure because they knew that we were losing money.
You talked about books that bankers have left with you to consider the possibilities of going public. But what about M&A yourself? I mean, I brought up Paytm, and that's a transaction that Zomato finally closed at over 2,000 crores. Was that something that you considered? Did you look at it at all?
We always
Are you looking at things at this point in time?
I think it's very difficult in India to, it's like I tell people, and I've said this before, more companies suffer or die out of indigestion than starvation. How do you digest some of this? Doing an M&A is easy. And I'm not saying this is a good or a bad one.
Yeah.
I'm not casting aspersions on this one. But I'm just saying...
That's your go-to line this interview, right? I'm not saying it's a good or a bad thing.
No, because see, look, if you read Andy Grove's book, Only the Paranoid Survive, and he talks about M&A, right? And there's a lot of work. Intel grew because of M&A.
Yes.
It's hard.
Yeah.
We've done a bit of M&A. We've had Sunburn is something that we had a structured deal over a period of time. Karan, who's a great founder, works with us now, building Sunburn. We just don't talk about it, but Sunburn is something that we did. Chauvin Shah, who ran TribeVibe, is a part of the Book My Show family. We have a company called Peppo, which is Naman Pogalia, part of the family.
Yeah.
All grade 3 entrepreneurs, as we call them. They're all building their businesses as a part of Book My Show. But it's under the radar. We've never gone and made a big, tall claim that we bought something. Also, it's important to see culturally whether this fits.
Yeah.
Right? It's easy to say that let's do an inorganic sale, right? There's organic growth and inorganic.
Yeah.
Suddenly you add revenue to your bottom line, and then you can again go to the stock market and say something. For us, it's important to the first handshake. And in each one of these transactions, and many more that we've done, we've done probably about 20, which you guys don't know of.
Right.
But in each one of them, we worked with the partner over a long period of time. We got comfortable. They fit in culturally. Somebody you can break bread with, somebody you can have a drink, have a meal with.
Yeah.
We know the families, they know us. They become a part of the ecosystem.
Yeah.
And then we organically move into a transaction. Another example is if you go to any of our events, you'll see a company called Atomex, this RFID company where we do payment systems and all of that. We own a majority in that company. Again, we worked with that entrepreneur over the years. He's a Pune-based entrepreneur. We got comfortable, and he's a part of the Book My Show family. So we've got about 20 such. None of them are headline-grabbing ones, but they exist.
They certainly do exist, and you've tied up a whole bunch of them. So, finally, before I move on from the competitive landscape and the economics of this business, what would your message be to Dipi Goyal or to Harsha Majety at this point in time as they build out District and what Swiggy is doing with the live space as well?
Look, both phenomenal entrepreneurs and good friends. But let me say friends. We're in touch. We talk. We share conversations. We worked with Feeding India in the past. We worked with a lot of work that Swiggy's done in the past. Look, like I said, this needs to become an industry. When there are more players, there's more money that comes in. You have the ability to go out into the market to use some leverage with government, or whether it's infrastructure, or whether it is partnerships. And then I think with mature entrepreneurs, you then tend to share some of that, right? You have your own lane, you have your own business. You can be competitors, but you can be fair players. You can be fair competitors. And I think both the founders...
Is it a fair market today? Because I know that, you've always been someone who said that whatever you get free is not something that people value. And so you've stayed away from the discount.
I'm not asking for anything. Oh, you're saying if there's discounting that happens.
Exactly. I'm saying, is it a fairer market today with competition?
Look, if you're talking, and I'm talking about purely the entrepreneurs and the companies, I think they are fair competitors and building a business which they think is right for them. I don't think any of these entrepreneurs have lasted 10, 15, 20 years by looking over their shoulder to annihilate somebody else. They're trying to build their own businesses. And if it crosses paths with somebody else, you find your own way to working with shared values. Sometimes you'll agree, sometimes you'll disagree. Now, in terms of discounting, I have a very different view on discounting. I think if you continue to discount, you'll build a bottom feeder scraping economy, right? And there's no loyalty in that. Consumers will take that $10 or 50 rupees if they're getting it, and why not? And they'll bounce to the next guy. So I don't think there is any value in discounting, but there's value in giving services back.
Right.
And I think consumers, like we're saying, that it's become a experience economy where consumers are discerning. And we use it in the same sentence, right? That consumers are discerning. So when they're discerning and you're going to discount, how are you going to be discerning to your consumers, give anything to them?
Yeah.
And you can do it for a period of time.
Yeah.
You can't do it lifelong.
Yeah.
Right? So then even consumers are getting smarter about the fact that this party won't last. Everybody used to get 500 rupee discounts. Then it became 200 rupees. Then it becomes up to 100.
Yeah.
Then it's become up to 50. And within up to 50, only if you do this. It's stupid. Right?
Yeah.
Consumers also get it.
Yeah.
So I feel that the more we focus on, all of us focus on, and why do we like buying things in the US?
Yeah.
Right? Why is it in the US? You pay a price, but you get great service.
Yeah.
You can return something, you get great stuff, something breaks, you can reach out to a customer agent. You will get a response and you'll get feedback, or you'll get your product back, or somebody will fix it. But if you're constantly discounting, you're always going to scrounge on trying to say, how do I screw the guy? And that's not what we do. We've had so many instances where events have got cancelled or something's gone wrong. Book My Shows stands guarantee in between, where we refund all the money. And we haven't got paid for sometimes a year, sometimes 2 years, sometimes never. But we've always given the money back. And that's for us to carry. And the reason we do that is because, we think that we owe it to the consumer. And that's why we don't discount. We charge a fee, but then we give you the kind of service that you deserve.
Since we're talking about trust as well as the customer, let's address the issue that you've been dealing with in the last few months on account of what's happened with Coldplay. You've got investigative agencies, you've got the EOW, you've got the GST authorities, and so on and so forth. In your office, you've been summoned. And the allegation is that, look, there has been a scam that's happened. The tickets were sold out ostensibly, and then they were put up on resale for 3, 4, 5, 6 times higher the amounts. Now, how do you address that? Where are things as far as the investigation is concerned? You've of course been dealing with the investigative agencies, and how do you cope with this? How do you come out of something like this?
Look, it wasn't easy, but it's also something where I put my head on the bed and I sleep easy. I've got a clean conscience. My karma is good. I sleep well. Not one night of sleep did I lose on this. However, it was hard. It had to be dealt with. I must say that within the government and the authorities, there are some really good people that stood up. Friends like Nikhil Kamath, came out of the blue, sent me a text, called me and said, Ash, I've been through stuff like that. You need any help, reach out.